concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things, where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us?
गुड मॉर्निंग ऑल ऑफ यू, वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे कमोडिटी मार्केट को कल क्रूड ऑयल का ब्रेकआउट हो गया था, और नेचुरल गैस भी कल काफ़ी ज़्यादा ट्रेंडिंग में चला गया था डाउन साइड पे। लेट्स सी क्या ये ब्रेक करता है नीचे 240 के नीचे, नहीं तो फिर हम एक्सपेक्ट कर सकते हैं 230 की ओर जाने की कोशिश कर सकता है नेचुरल गैस वापस से। कल इन्वेंट्री भी बेरिस आई थी, और इन्वेंट्री की कैंडल ने सपोर्ट ही ब्रेक कर दिया था ओपन इक्वल टू हाई बना के। क्रूड ऑयल ने भी ओपन इक्वल टू लो बना के ब्रेकआउट कर दिया था। अभी फ्लैट ओपनिंग हुई है, थोड़ा वॉल्यूम कम है लास्ट ट्रेडिंग सेशन। वी विल नीड टू सी। इंडियन मार्केट आल्सो ओपन, फ्लैट ओपन है, थोड़ा सेलिंग का प्रेशर निफ्टी फ्यूचर में। लेट्स सी डे लो ब्रेक करता है कल का, या फिर स्टिल इट विल होल्ड, नीड टू सी। कॉइन को देख लेते हैं एक बार, लेट मी चेक। मेटल्स में थोड़ा बहुत सेलिंग का प्रेशर अभी भी है कंटिन्यूसली। गोल्ड एंड सिल्वर कल भी थोड़ा बहुत प्रेशर था, आज भी है। सिल्वर वापस 74 आ गया है, परसों तक 80 के आसपास चल रहा था। नाउ बैक टू द $74 रेंज। देखो ओवरऑल बुलिश ही लग रहा है कंटिन्यूसली। थोड़ा बहुत सेलिंग जितनी भी आ रही है, मार्केट जब से 74,000 के ऊपर निकला है, इट इज़ कम्प्लीटली बुलिश नाउ। चांसेस कम ही है जब तक कोई मेजर रेजिस्टेंस हिट नहीं होता। एक बार चेक कर लेते हैं कुछ है भी रेजिस्टेंस या फिर ये जाता रहेगा। डेली में क्या चल रहा है? ठीक है, 80,500 के आसपास एक रेजिस्टेंस मिल सकता है। 80,500 टू 81,000 के आसपास ये 500 पॉइंट की एक रेंज है जहाँ पर थोड़ा बहुत सेलिंग एक्सपेक्ट कर सकते हैं। मुझे लग रहा है यहाँ तक मार्केट एक लिक्विडिटी लेने शायद जाने की कोशिश करे। करंट प्राइस इज 77,700। सो एज पर दिस ठीक है, तो अगर डाउन आता है तो 77,500 के आसपास कहीं एक वापस 77,500 के आसपास स्मॉल टाइम फ्रेम पे बता रहा हूँ एक बाइंग हो सकती है प्लान। $77,500 के आसपास 77,400 का एसएल रख के 77,700 और 900 के दो टारगेट रख के बाई किया जा सकता है स्मॉल ट्रेड के लिए। मुझे ऐसा लग रहा है लिक्विडिटी लेने ही जाने वाला है ऊपर की ओर। वेरी हाई चांसेस 80,500 टू 81,000। These will be the major resistance right now। क्रूड में कुछ बनता है तो नेचुरल गैस के अलावा।
Is that a concern?
That are coming into our society. So I think that President Xi looks much more at AI like, he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. I mean, the EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
This is Horizon's Middle East and Africa, our top stories this morning. Stocks under pressure as oil rises on concerns the Iran conflict may flare up again, with President Trump ordering the Navy to fire on boats laying mines in the Strait of Hormuz. The president also announcing that Israel and Lebanon will extend their ceasefire by 3 weeks, creating space for broader talks and easing a key obstacle to ending the U.S.-Iran war. And Intel shares soar after the chipmaker delivers a forecast showing it's beginning to cash in on the massive build-out of AI. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai. The Iran war started 2 months ago. Now we are entering into day 56 and still no clear resolution in sight. But as we round up the week, let's take a look at how some of these key indices are reacting to the latest developments and the fact that the strait is still effectively shut and still effectively dangerous. The S&P futures leaning towards the red, down about 8 basis points. I should tell you, though, that so far, if you just take a look at the earnings season, nearly 80% of the S&P's firms have beaten first quarter estimates so far. It is shaping up to be a very robust first quarter earnings season. And actually, the S&P 500 is poised for its best month since 2023. So, of course, we spent a lot of time here, a lot of energy focused on the geopolitical developments. But over in the U.S., the S&P is seeing its best month since 2023. And they're really spurred on by some of the developments in AI space. And speaking of, NASDAQ this morning up 0.3%. One of the stocks that we're watching very closely today is Intel. It is up 20% in after hours. We're going to talk about what has gone down there and their very strong earnings guidance. Brent also back in focus. Look at where we're at, $106 now, so up 1% once again. As I mentioned, keeping a close eye on everything that's going down on the Strait. But then also just to flag, over the course of this week, Brent is up 17%. It feels like a really long time ago, since exactly a week. It was a week where the Iranian foreign minister put out that post suggesting that the Strait was open, and then things massively escalated over the course of the next couple of days. So Brent back to $106 now from getting as low as around $86 last Friday. And then USD seeing a bit of a bid this morning, given the risk-off sentiment. We are up 9 basis points. Now, in terms of our terminal chart of the day, I thought this one would be interesting because even though we are seeing a tremendous amount of volatility around crude, around Brent, and you can see that with Brent oil futures, as we've been talking about, they continue to move higher. The underlying volatility for interest rates and for equities has actually started to drift a lot lower. And this tells you that there is a bit of a mismatch between the volatility that energy markets are pricing in over the next couple of months versus other asset classes, including FX rates. We're not showing VIX here, but equity volatility as well. So bear that in mind, that it's almost 2 different stories being told by volatility markets. Okay, let's check in on how markets in Asia are faring now. Avril Hong is in Singapore for us. Avril, run us through the latest.
Yeah, you talk about that 2 different stories. That is in a way playing out in the Asia Pacific as well, because much of the region is lower today, and this is tracking that pressure you saw on Wall Street. But the region's benchmark is essentially flat, and it's helped along by the likes of Taiwan. Remember how earlier in the week we were talking about how as investors rotate back into the AI trade, they may be liking Taiwan as a market more because of the broader swathe of AI stack related stocks to play around with. But today you're getting further fuel for them because Taiwan has eased single stock investment cap. So throwing fuel onto already hot tech stocks. Now, the other thing I would highlight in the Asia Pacific today is, yeah, we are in the break in Hong Kong markets, but take a look at Hua Hong, chip maker, based in China. This is a stock that has gone from losses earlier in the session to a surge of about 12.5% into the lunch break. And this is thanks in large part to DeepSeek unveiling the preview version of its latest AI model. Remember how about a year ago when DeepSeek burst onto the scene, it prompted that $1 trillion wipeout in Silicon Valley related stocks. That is something to track in the session as well, Jumana.
Avril, thank you so much. Avril Hong in Singapore. Well, tensions between the U.S. and Iran are rising as both sides maintain blockades in the Strait of Hormuz. President Trump has ordered the Navy to fire at any vessel placing mines in the strait, with the U.S. military saying it has intercepted 2 oil tankers seeking access to Iran's ports. The blockades remain in place with no signs of progress towards new peace talks.
Are you willing to wait until you get a unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, and Stephen Zatinsky, who leads our energy coverage. Stuart, I'm going to start with you. A bit of an uncomfortable parallel that President Trump was drawing there between the timeline of this war and obviously reference to Vietnam. But let me just ask you, as it pertains to talks, there doesn't appear to be a lot of progress on that front, at least.
I think you're right, but also at the same time, we've got to remember what's happened in the last several weeks, where often we don't find out about stuff until it's happened. So we know that, for one thing, Pakistan, we know, is furiously mediating, and actually it's been pretty effective so far. I know we don't have a peace deal, but just to get them, vaguely on the same page. And I know that there are lots and lots of other countries too, because the stakes are so high. Every country on the planet, with almost no exception, is going to be impacted by what's happening in Hormuz. It is in everyone's interest to get some sort of resolution. So I would imagine that the diplomatic back-channeling is pretty furious right now. So we may not have seen anything. That doesn't mean nothing's happening.
Yeah, even though there's a current stalemate, it's unlikely to persist. So when President Trump over the weekend announced the extension of the ceasefire, he also alluded to fragmented leadership in Iran. Yeah. And I thought it's been really interesting over the last 24 hours that many of those Iranian so-called leaders have been taking to social media, including the president himself, Pezeshkian, saying in Iran there are no hardliners and moderates, we are all Iranians and revolutionaries. They're really trying to paint this picture of being a cohesive unit. Yeah. What do you make of that?
I don't think they've ever been cohesive, but I would apply that same characterization to every administration in every country. Right. It seems absolutely insane that you would have everyone of one mind about what to do. So I think Iran's leadership has always been far more complex than I think many in the West gave it credit for. They always sort of saw it as this completely autocratic system, and it's absolutely not. There are definitely differing camps of opinion within about what to do. But similarly, you can point to the US administration and say there are different camps there about what to do about Iran. And they've been perhaps more visible because of the media attention. But to have this idea that everyone is in accord in Iran, I think, is a folly.
Yeah, it's a fair point. Stephen, let me come out to you. Overnight, President Trump saying that he has instructed the U.S. Navy to shoot at any boats putting mines. We know the U.S. Navy also intercepted 2 Iranian vessels. Run us through the latest developments. What's going on there?
Yeah, so we've certainly seen a heightening of U.S. interaction and intervention in the Strait and the surrounding waters, especially when it comes to Iranian vessels. Not only have they intercepted those 2 ships, also said they would fire on vessels that are laying mines. Overnight, also, the U.S. boarded a ship, an oil tanker, carrying Iranian fuel that was in the Indian Ocean. That's the first time that they've done something there. As well, they've essentially pushed back or forced, according to them, over 30 vessels to return or change course that were carrying goods or were connected to Iran or were sanctioned. All of this together has led to a near halt of traffic through the Strait of Hormuz yesterday. While there are a lot of ships that are going through dark, potentially, because we weren't able to see them, what we are able to track, at least one bulk carrier that is Iranian-linked went through yesterday. Right now, it appears that there's a tanker carrying potentially Iranian oil from Karg, their export infrastructure, going through at the moment. It's unclear whether it will continue the journey or if it will turn around or if it will be stopped by U.S. forces. But essentially where we stand right now is a near closure of oil exports and liquefied natural gas exports from the region, which represent about 20% of global supply, seaborne supply for both of those fuels.
Yeah, at the top of the show, I was taking a look at where Brent is. We're obviously, back to triple digits now, $106. We're up almost 20% for the week, Stephen. Would you say that at this level, oil markets are accounting for a sustained closure of the Strait of Hormuz? I mean, what sort of timeline are people thinking here?
Yeah, I think certainly this is not a war risk premium, according to the analysts that we've spoken to. This is a physical tightening of the market. There were spare barrels in storage. There were sanctioned Russian oil on the water that is now sort of being depleted. So the amount of physical crude available is shrinking, and that is causing sort of an increase in prices. Now, in terms of the closure, actually, I would say that the market still is likely pricing in a pretty quick ceasefire or peace deal that would unwind this over the next few weeks and months. That being said, I think the one thing that the market is looking at, and the reason why we're not at that $120 level for Brent and more in that $106 level instead, is that there has been no larger attacks on infrastructure in the region. About 2 or 3 weeks ago, we were watching every day as Iran was hitting infrastructure in Qatar and Saudi Arabia and other places, and that increased the risk that this infrastructure and oil exports would be affected far longer than when Hormuz would open. So as long as we stick to this sort of ceasefire situation and there isn't strikes from the United States or Iran on other nations in the region, then potentially we won't be going back to the highs of last month. But it really depends on as well as how long Hormuz remains shut.
Stephen, thank you so much. Got to thank you both. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, and Stephen Tatinsky, who leads our Asia energy coverage. Thank you. Well, turning to markets now, investors remain cautious heading into the weekend as sentiment hinges on whether tensions with Iran escalate or give way to diplomacy. Oil is higher while global stocks waver as hopes for easing tensions fade. Joining us now is Selina Leng, OCBC Chief Economist and Head of Group Research. Selina, I actually want to start off by asking you about China and the impact that the war has had on China overall economic activity. What signals have you picked up?
Well, actually, if you look at China's growth, it did accelerate into the first quarter of this year. So the question is whether this momentum is going to sustain in the second quarter. We suspect not. I think infrastructure investments will probably moderate a little bit, given that all the front-loaded fiscal measures will probably start to fade. And barring stronger government support, it's questionable whether investments will continue to be the key pillar of growth. In fact, if you look at the higher energy prices, it's been good for the whole deflationary story. We have seen a turnaround in the producer price index for China. And as long as, high energy prices continue to pass through the system, we will expect that, both the PPI and also the CPI remains in positive territory. That said, for China, there's still a lot of domestic challenges that are in place. So this external headwinds is a little bit of a double-edged sword for now.
Yeah, and is China, do you think, still on track to achieve the 4.5% to 5% GDP target growth for this year?
Well, given that first quarter growth has come in stronger than expected, and even if we expect second quarter to moderate a little bit as the impact of the Iran war kicks in, I think nevertheless, we do expect that, for the full year, we should still be probably seeing growth average around 4.7 to 4.8%. So that's in the mid of the 4.5 to 5% official range. I think they are on track, and I think if needed, they possibly could do a little bit more heavy lifting on the fiscal side. We haven't ruled out the possibility, of a 10 basis point cut on the interest rate side from the monetary policy perspective. But for now, because the inflationary pressures are starting to pass through the transmission channel, I think there's no urgency for them to move on the monetary policy side for now.
Yeah, I was going to ask you about monetary policy responses throughout Asia. Very interesting. The central bank governor of Philippines was speaking to our colleagues on the Asia show a couple of hours ago, and he actually signaled a series of modest rate hikes to come. And I wonder how you're making the distinction between the central banks that will have to hike into this energy shock versus others. And in the case of China, obviously, they've been battling deflation for years, that will probably still maintain an easing bias.
Yeah, so it's very interesting because we're starting to see some differentiation in terms of the Asian central bank approach. If you recall earlier this month, Monetary Authority of Singapore kicked off its first tightening cycle, in more than 3 years. And this was really in response to higher energy prices because Singapore is basically a net importer, not just for fuel, but also for a broad range of goods and services. And we are starting to see probably some of the fertilizer shortage and higher prices kick in through the food inflation story as well. So the Central Bank of Philippines yesterday also hiked rates and sounded very hawkish, signaling that there are more rate hikes to come. What was interesting about the BSP meeting was that it was not a unanimous decision. And in fact, there was some discussion of a 50 basis point hike. So this is in contrast to the other central bank that met this week, which was Bank Indonesia. They actually stayed on hold. They are basically weighing, the pressures on the external front, and that's coming through in terms of the fiscal deficit and also the current account deficit forecast. But then again, the Indonesian rupiah has been seeing a fair bit of volatility. So I think for now they are, probably going to stay on hold. But I think most of the Asian central banks are cautious on the inflation front. A lot of them would prefer to think that this energy price is going to cause a hump in terms of the inflation rates. But in terms of the inflation expectations, unless they see a runaway or a de-anchoring of inflation expectations, probably they will not be pressured to move immediately. So for now, RBA, BSP, and MAS are probably the ones that are the front movers in terms of the tightening cycle.
Okay, and then, just a final one. I've got to ask you about the Fed. We do have that Fed meeting coming up next week. What is your expectations for the messaging that we might get out of the Fed?
Well, it's interesting because no one really expects the Fed to move next week, but we've had the confirmation hearing for the incoming Fed chair, Kevin Walsh, and he seems to be guiding towards a more laid-back type of Fed policy. He's also looking for less reliance on forward guidance, so that could mean that the dots plot also takes on a less dominant role in terms of shaping market expectations going forward. But if you look at the futures market, basically they have priced out hopes of a Fed rate cut this year. Our house view is still for a potential 25 basis cut some point this year, but probably delayed towards the end of the year. It's very much wait and see depending on the inflation pass-through. The US has been benefiting because they have been exporting a lot of energy products and inventory levels have been falling because of this Iran war. But I think going ahead, if inflation continues to creep a little bit higher, the Fed is going to be in a dilemma as well.
Yeah. Selena, always good to chat to you. Thank you so much. Selena Ling, a chief economist and head of OCBC Group Research. Well, coming up, President Trump says the ceasefire between Lebanon and Israel has now been extended. More details on what this means for a longer-term agreement. Next, this is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a Big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump says Israel and Lebanon will extend their ceasefire by 3 weeks to work on a long-term deal. He also says he will be hosting Israeli Prime Minister Benjamin Netanyahu and Lebanese President Joseph Aoun in the near future.
They like each other. I found that out today, and I've sort of heard about that. They actually like each other, Lebanon and Israel. And we had a great meeting with the very high officials of Lebanon and very high officials of Israel. And we think that the president of Lebanon and the prime minister of Israel over the next couple of weeks will be coming here.
Joining us now is Dana Khreish, Bloomberg's UAE bureau chief. Dana, so we got an extension of the Lebanon-Israel ceasefire. What else did we learn from those second round of discussions yesterday?
Morning, Jumana. Yes, so an extension to 3 weeks, and this seems exactly what Lebanon wanted and what it has been asking for. And that's quite the success for the U.S. that's been mediating those talks. And of course, this is the second meeting, which is quite rare and historic for two Lebanese officials, at the ambassador level to be meeting. And more interestingly, President Trump said that he will help Lebanon protect itself or protect it from Hezbollah. And for Lebanon, of course, that means bolstering the army, right? And we saw Prime Minister Nawaf Salam in France meeting with President Macron, asking for financial aid for the Lebanese army. Because we should remember that during this extension and during the ceasefire and part of the deal that led to the ceasefire is that Lebanon should show its ability and that is willing to disarm Hezbollah and deploy in South Lebanon. And we also saw Trump saying that Iran must stop funding groups like Hezbollah. And of course, this is part of the talks between the U.S. and Iran, which now seem a bit frozen. But, as from President Trump, it seems that they are still ongoing. It's hard to see how Iran would actually stop funding to groups like Hezbollah in Lebanon, those in Iraq, or, of course, the Houthis in Yemen, since they've been quite useful for Iran in the past several weeks during the war.
Donna, what have Hezbollah been saying about the ceasefire? And again, it is a tenuous ceasefire because there's still an exchange of blows taking place in southern Lebanon. Hezbollah is still firing into northern Israel. Yesterday, very notable also airstrike that killed a Lebanese journalist in the southern part of the country. Where is Hezbollah in all of this?
Hezbollah did say from the beginning that they oppose these talks, and the parliament speaker, Nabih Berri, who is their closest ally, of course, is opposing these talks as well. But there is momentum, right, from the president and the prime minister. Both are US-backed and, of course, Saudi-backed. And it seems as long as this government is intact, the talks will remain, and the talks and these ambassadors will meet again. So it seems from the previous attacks that you've mentioned, it seems that the ceasefire doesn't apply to the area where Israeli troops or the area that Israel still occupies inside South Lebanon. And that's really on the border along this 120 de facto border, 120 kilometer between Lebanon and Israel. But in the agreement, Israel has the right of self-defense, and that means that it can fire at whatever threat that it thinks is at risk for its troops or the country. And we've seen Hezbollah launching rockets and claiming attacks. And this is the risk here, as long as Israel continues those attacks. And like you said, we saw the killing of the Lebanese journalist two days ago. It might boost that excuse by Hezbollah that Israel still occupies, that Israel still attacks, so they will do the same. But let's all remember that the group is under pressure internally, right, from the government that seeks its disarmament and Israel that wants it absolutely uprooted from the border area on the other side. So the group is still under pressure, but its survival is always rests on the question of whether Iran would abandon the group or not. And for now, it doesn't seem like it.
Dana, thank you so much for the overview. Dana Kharesh, Bloomberg's UAE Bureau Chief. Now for a look at some of the other stories we're following. Intel shares gained 20% in extended trading on a strong revenue outlook of up to $14.8 billion for the current year. It signals that the company is beginning to benefit from the build-out of artificial intelligence infrastructure. The outlook also suggests that the CEO, Lip-Bu Tan, is making progress on a challenging comeback plan. Meta and Microsoft are planning job cuts and buyouts that could affect as many as 23,000 staff as they seek to streamline operations and offset heavy spending on AI. An internal Meta memo reveals plans to cut 10% of workers, or roughly 8,000 employees, with 6,000 open roles going unfilled. Microsoft issued its own memo offering voluntary buyouts that a source says could apply to about 7% of its U.S. workforce. Warner Brothers Discovery shareholders have voted to approve a $110 billion takeover by Paramount, beating out a rival bid from Netflix. The deal offers shareholders $31 per share, but still faces antitrust review in the U.S. and the EU. If blocked, Paramount would owe a $7 billion termination fee. Paramount shares traded lower in New York, with most of the dip coming before the votes. And here are how markets are faring up as we head into the open. S&P futures leaning towards negative, and this typically happens before we go into a weekend. People are always nervous about what could happen over the course of the weekend geopolitically. Speaking of coming up, the Middle East, as we know, is navigating heightened geopolitical tensions, but our next guest says despite the uncertainty, the banking environment across the Gulf remains resilient. We'll speak with Jamal Al-Kashi, CEO for the Middle East and Africa, Deutsche Bank, next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make it called ceviche, cooked with lemon juice. You never use soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make noble style.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks under pressure as oil rises on concerns the Iran conflict may flare up again, with President Trump ordering the Navy to fire on boats laying mines in the Strait of Hormuz. The president also announcing that Israel and Lebanon will extend their ceasefire by 3 weeks, creating space for broader talks and easing a key obstacle to ending the U.S.-Iran war. And Intel shares soar after the chipmaker delivers a forecast showing it's beginning to cash in on the massive build-out of AI. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. So we've had sort of a cautious handover from Asia, and today S&P futures leaning towards red. But I will tell you, and I mentioned this at the top of the show, the S&P is poised for its best month since 2023. So you have to go all the way back 3 years to get a month with as solid a performance as we got this month, which feels strange given the geopolitical developments in this part of the world. But S&P, a really strong comeback. And what we have seen as well is the earnings season has been very strong. 80% of companies so far have beaten expectations. And then once again, we've seen a lot of momentum in those AI trades, semiconductor stocks, as we were talking about yesterday. And speaking of the tech sector, NASDAQ this morning up 0.4%. One particular stock we're looking at there is Intel. It is up almost 20% in after-hours trading. So very strong set of results for a company that has been struggling over the last few years. So a bit of a turnaround there. And then Brent back to almost $106 this morning, up 0.9%. We are up 18% this week, 18%, a good $20 higher than where we got to last Friday when there was a suggestion that the strait was going to be fully reopened. Of course, that has not transpired. And if anything, the situation is still quite dangerous right now. So Brent, $106. And then USD seeing a bit of a bid this morning, up 8 basis points. And then flipping over just to show you that, yes, we've seen a tremendous amount of volatility in oil, as I just spoke about. But other asset classes seem to be ignoring. So we've got FX vol pretty low. We've got rates vol pretty low, not shown here, but VIX as well. And other asset classes seem to be looking past this and assuming that a ceasefire actually does mean the end of the war and are focused on other micro developments, whereas energy markets are pricing in for a different scenario. Okay, let's also dive a little bit deeper on how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Jumana, markets here for the most part looks like they are looking past the Iran war. You look at how Taiwan is certainly outperforming. Of course, today this has something to do in part by Taiwan easing some of these single stock investment caps. So that is propelling the tech stocks there as well. MediaTek, TSMC are outperforming today. Now flip the board. I also wanted to talk through the reaction in the markets we're seeing to DeepSeek. Preview versions of its latest AI models. You may recall more than a year ago when it unveiled its models, it caused this massive rethink on Silicon Valley and a $1 trillion Wall Street wipeout. Today, the market reaction based on what you just highlighted on NASDAQ futures is more confined, I think, to the Chinese markets. You are seeing that divergence there as well from this DeepSeek unveiling of the new models. The chip makers, the hardware names, those are the ones doing well in Chinese trade today in Hong Kong, to be specific, but the likes of Zhipu, Minimax, so these are the model rivals when it comes to DeepSeek. They are underperforming in the markets today. Just so I thought through what we're seeing in tech as well in the region. Jumana?
Yeah, super interesting, especially given how much DeepSeek shook up the market over a year ago. Avril Hong in Singapore, thank you so much. Well, the Middle East is navigating heightened geopolitical tensions, but our next guest says despite the uncertainty, the banking environment across the Gulf remains resilient. Strong government balance sheets, ongoing reforms, and continued investments are helping sustain activity, with the region still attracting global capital. Joining us now to discuss this is Jamal Kishi, CEO for the Middle East and Africa at Deutsche Bank. Really good to have you with us on the show. How has the war impacted operations and activity in the region?
We all, of course, had to cope with certain security measures, safety measures promulgated by the authorities in the Gulf. Beyond that, in terms of the way we deploy balance sheet, in terms of the way we run trading, in terms of the way we provide advice to clients, there hasn't been any meaningful change. Work from home, yes. But in terms of what banks typically deliver to market participants, to clients, there hasn't been any meaningful change in reality. As a matter of fact, as a result of the spasm of volatility that we saw, there is a lot of demand for advice. There's a lot of demand for hedging, taking certain positions, trading certain asset classes. So from a pure business perspective, the impact has not been very, very significant. There is a lag effect, of course, on portfolios in terms of credit, in terms of liquidity, in terms of the quality of certain risk positions, but we have yet to see any adverse impact on what we do.
Yeah, I mean, you're talking about some of the operations and still activities that Deutsche Bank has been undertaking. What role would you play for banks and banks in the region specifically at maintaining this element of economic stability during a time of extreme geopolitical upheaval?
Well, financial institutions in the Gulf and across the region form a key segment of our market. We are a bank's bank in the region for the most part. So in terms of providing lines, credit lines, foreign exchange lines, trading lines, and finding liquidity when needed, credit lines and credit where needed, both on the loan side as well as on the trading and trade finance fronts. That's what we do. We continue to do that. As a matter of fact, like I said, the level of activity has not diminished at all as a result. If anything, we're seeing more inquiries, more activity, which is exactly the kind of thing that we would like to see. And as expressed by our senior management over the last few weeks, we remain committed to the region. We remain committed to our clients in the region. We are here to stay. We've seen the region go through phases, and we're here to support.
Yeah. I've spoken to Deutsche Bank and several of your peers over the course of the last few years, and I know that there's also been a big push into wealth management. And I wonder whether there's some concern there about future demands and whether we're going to continue to see the momentum of money coming in to the region as we have seen over the last couple of years. And what does that do to your strategy on that front?
Well, indeed, we play a role in terms of bringing capital into the region, institutional money as well as private money. And we play a role in terms of diversifying the risk of regional investors who want to invest abroad, institutional as well as private, in terms of vertical integration for the institutions and complementary investments and so on and so forth, as well as private capital. Have we seen an impact today in terms of foreign capital coming into the region? There are increased queries, let me put it this way, as to where are the more established, the less risky propositions to go after. Yeah. Have we seen a major pullback? We haven't seen it yet, but like I said, Jumana, there's always a lag factor that needs to be borne in mind. I would not be surprised if we saw some foreign clients, foreign investors pull back a little bit, waiting to see how the situation will pan out. But in terms of a major decisive and visible theme towards pulling away from the region that hasn't been seen yet.
Yeah. And as you say, these things work with a lag.
Yes.
And I do wonder whether further down the track, we could be in for more credit stress and, a tightening of liquidity. It's become very topical, obviously. In the past couple of days, there's been reporting that there's been discussions between the UAE and the US about opening up a precautionary swap line. And I wonder from your vantage point whether you are beginning to see signs of liquidity distress or even credit distress down the track.
We have not seen that up to this point, nor do we expect to see it in a significant way. Why? If you look at the parties that actually raised capital in the capital markets or in the loan market, they tend to be GREs, government-related entities, well-heeled, well-capitalized, with significant buffers to allow them to withstand a bit of shocks. I think one thing that we need to be careful with is being alarmed at hearing that there is a swap line being discussed. I mean, swap lines have been provided to most European countries, to most Asian countries, as a means of providing dollar foreign exchange, that is liquidity, as opposed to financial aid. This is the region is very well capitalized, with solid buffers, fiscal and otherwise, and it will take a lot more before the region can be professed to be in a difficult financial situation. We're too far away from that.
Jamal, very good to chat to you. Thank you so much for coming on.
My pleasure, Jamal.
That was Jamal Al-Kishi, CEO of EMEA at Deutsche Bank. Now, for a look at some of the other stories we're following, PIMCO has lent more than $10 billion to state-backed and government borrowers in the Gulf since the Iran war began on February 28. Sources say the $2.27 trillion asset manager has been a significant buyer of privately placed bonds issued by the governments of Abu Dhabi, Qatar, and Kuwait. Bloomberg calculations show that regional borrowers have raised more than $13 billion since the conflict started. The IMF says talks with Lebanon on a potential financing program are progressing as the country grapples with the impact of Israel's war against Hezbollah. The Lebanese government says more than 2,000 people have been killed and 1 million displaced by the conflict. It is discussing options for fast-track assistance that could provide up to $1 billion for budget support and humanitarian response.
Negotiations are progressing. And they come in parallel also to the possibility of Lebanon reaching a ceasefire. And with that, I think it will be an opportunity for both the authorities and the team focused on Lebanon to accelerate the discussions.
From my interview with Jihad Azawad. Now, Emirates President Tim Clark says air travel demand is strong enough to rebound quickly from the Iran war. The airline is operating at 65% capacity, with only about 13% of the airports in its network still cut off. Speaking to an industry summit in Berlin, Clark said he was not concerned about losing ground to rivals and expected Emirates to remain the industry's most profitable airline by year end. The Saudi Arabian government has reportedly backed out of a deal with the Metropolitan Opera worth up to $200 million. The New York Times reports the Saudis cited damage to the country's economy from the war in Iran and the blockade of the Strait of Hormuz. The deal would have seen the Met hold a 3-week residency each February at the Royal Diriyah Opera House in Riyadh. Coming up, Africa looks to cut its reliance on imported fuel with plans for a new East Africa refinery. We'll bring you details next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. A new push is underway to build a major oil refinery in East Africa as the region looks to cut its reliance on imported fuel. Africa's richest man, Aliko Dangote, has pledged to help nations build the refinery as the Iran war highlights vulnerabilities in Africa's energy supply chains. Bloomberg's Jennifer Zabazaja spoke to the Kenyan president, William Ruto, and the Dangote Group CEO, Aliko Dangote, in Nairobi.
The solution to the challenges and problems we have is not out there. It is right with us. If you listen from what Dangote has said, he has said investors from out there will not be invest in our countries unless we take the lead ourselves. Why would somebody else take a risk? How is it their business to build our countries? It's none of their business, and I mean, rightfully so. First and foremost, we must realize that it is our responsibility. Others can only come to support us, but we must take the lead ourselves. And it doesn't start with entrepreneurs and industrialists like Aliko here. It starts with leaders like President Museveni and myself. Because a challenge that we have in our continent is a challenge of leadership.
Aliko, I wanted you to jump in because you have said that you have an ambitious goal for the Dangote Group and want to invest where there's a lack of investment on the African continent. When you look at East Africa, what are the policy commitments that you need? You say you're already in discussion. What is it that you need?
I think what we need, first of all, is consistency in government policies. That's number one. And also the support of the governments here. Because, I mean, if you look at it really, what we lack in Africa is quite a lot. Because we're a continent of imports and we're not really exporting much. We export raw materials, which means when you export raw materials, you are exporting jobs. And when you import, you are importing poverty. Because you are creating jobs out there, not here in the continent. So I think with the support of the government, there's nothing that is impossible. And some of us were really tired of seeing our continent going out there to be begging for anything. I mean, if you remember at the beginning of the war between Ukraine and Russia, the chairman of African Union, that was President Macky Sall, had to go and be begging for fertilizers. And since that day, I said, okay, fine, by 2028, Africa will be self-sufficient in fertilizer.
Kenyan President William Ruto and Dangote Group CEO Aliko Dangote. Well, plenty more coming up here on Horizons Middle East and Africa. Stay with us. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg News has learned that EU leaders are signaling progress on Ukraine's path to membership in the bloc, with talks on the next stage expected to begin soon. But divisions remain over how quickly it can happen and whether full membership is actually realistic in the near term. Bloomberg's chief Europe correspondent Oliver Crook joins us now from Cyprus, where EU leaders have been meeting. Ollie, talk to us about how much division there is within the EU on the pace and form of Ukraine's potential membership to the group.
So it's a really heated debate here in Europe for a number of different reasons. And you have people that are even the most sort of loyal allies to Ukraine, like Poland, who throw up issues on things like agriculture and what it would mean for Ukraine to join the European Union. But this is a conversation that is really gaining a lot of momentum within the last couple of weeks and really within the last couple of days. Ever since Viktor Orban was voted out in Hungary, it really opens a whole new realm of possibilities for collective action on the European side, particularly vis-a-vis Ukraine. I spoke to the Deputy Prime Minister who's in charge of negotiating the EU accession in Brussels earlier this week. They would like to join by next year. I spoke to the Estonian Prime Minister yesterday to try to evaluate for him how important it is for Ukraine to join the European Union and what timeline. Have a listen.
Our position is that we support Ukraine in European Union because, to be honest, there's no other way. Ukraine belongs to Europe and Europe is stronger with Ukraine.
And from his perspective and from the Ukrainian perspective, being part of the European Union is really essential for Ukraine. It sends also a signal for Russia, but it's also a vote of confidence for the European model, one that, frankly, over the last couple of years is in need of a sort of vote of confidence. And they're really fighting and dying on the battlefield for this sort of initiative to move out of the Russian orbit and towards the European one. Now, there have been a number of different ideas to try to accelerate this process. As you know, negotiating to get into the European Union is a very, very long process. It can take up to 10 years. Ukrainians want to join by next year. More realistic maybe is around 2030, but what needs to happen first is a beginning of negotiations, picking up the so-called clusters, 6 of them, to get those negotiations going. But again, something that will be very sort of difficult and sort of emotional for much of the European Union. The Ukrainians say they're willing to suspend some of the benefits of the EU, like some of the subsidies on agriculture, in order to get in faster. But again, what we're going to be trying to do here over the next couple of days, speaking to leaders, is try to really pin down that timeline.
Yeah, okay, so Ukraine was one topic of discussion. No surprise that the war in Iran was another topic of discussion, the energy situation in Europe. Did we get a better understanding on what some of the measures are being discussed to deal with this energy shock?
Juman, at the moment, the measures that are being discussed, certainly at the European level, don't seem to be sort of really emergency measures. They're not talking about the sorts of things that they were talking about back in 2022 when the war in Ukraine began and we saw the sort of halt of the Russian gas supplies. However, some of the rhetoric is saying that this is a crisis that is as bad as that. I think there is a sense here for many of the European leaders that I speak to and trying to pin them down and trying to assess the severity of this crisis. I think there's still a lot of wishful thinking in the hope that it will basically go away in the next couple of months, and by the time you get into the the winter, you won't have quite as much of a stressed system when it comes to kerosene for jet fuel and also for natural gas storage. We should say natural gas storage right now in Europe is extremely low. So right now at the EU level, it's really very sort of small measures. They want to talk about sort of tax cuts over the electricity and energy generation. There talks about state aid rule relaxation. But we heard it very bluntly from the Prime Minister of Italy, Giorgia Meloni, yesterday, saying that the EU measures at this point do not go far enough. And Jumana, the other difference between now and the war in Ukraine at the beginning of that war, the fiscal headspace for many of these European nations is just not there. Do they then need something at the European level? We're not talking yet about joint debt to deal with this energy crisis, but that's potentially something we'll be having to look at if this goes on for too long.
Yeah, so I guess it's more like energy response phase as opposed to energy crisis response phase, if I had to summarize what you just said there. Bloomberg's chief European correspondent, Oliver Crook, thank you so much. Okay, let's take a look at how equity futures are faring as we head up into the final trading day of the week. And I will say, if anything, the last month has taught us that traders tend to be cautious as we go into the weekend. And that's showing up this morning. S&P futures unchanged, NASDAQ up 0.4%. Keeping a close eye there on Intel and other chip makers as well. There's been a flurry of activity in that space. And then European markets seen opening lower, down 0.7%. And we had a data drop yesterday. Those PMI numbers for Europe, very, very weak. And so that's really hanging over the Eurozone economy as we think about all of the earnings that are coming through from both Europe and US. On the US side, 80% of companies that have reported have beaten so far. So it's shaping up to be quite a robust earnings season in the US, still early days in Europe. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with me for Daybreak Europe. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you Up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Davos, Switzerland, and this is Bloomberg. Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jumana Bersachi with your top stories. Oil heads for its biggest weekly gain since the first week of the war as Iran keeps the Strait of Hormuz closed and U.S. forces board a supertanker carrying Iranian crude. Intel shares soar 20% after hours, powered by a blockbuster sales forecast that smashed estimates. But Bloomberg learns Meta and Microsoft are planning as many as 23,000 job cuts to fund their AI plans. Plus, joining the club, we're told that talks on Ukraine's accession to the EU could get underway in the coming weeks and months. Let's get you up to speed on these markets. It's the final trading day of the week. S&P futures not doing a whole lot. We are treading on water, though I will say that yesterday we had, a bit of a dip for Wall Street, but for the month as a whole, S&P is looking at its best month since 2023. So it has been quite the comeback story over the course of the last month. NASDAQ also, take a look there, up 0.4%. This being boosted by chip makers, one in particular, Intel, trading higher than 20% in extended trade. Very solid set of results coming through from Intel. We will discuss that on the show. European markets, though, dipping a little bit today, down about 0.2%. Remember, we had a data drop yesterday. Those PMI numbers really disappointing to the downside for European markets. So weighing there on European prospects as we think about the persistent pressure that's coming through on the energy side of things. So speaking about that, Brent is trading at 105.5, up 0.4% this morning, but still notably in triple-digit territory. USD getting a bit of a bid. We are up 7 basis points today in trading, given risk-off and perhaps some cautiousness as we head into the weekend. And then 10-year yields not doing a whole lot here, but I will say that the trend for the U.S. curve has been one of flattening in the last couple of weeks. Now, in terms of risk events to watch out for today, 7 a.m. in about an hour's time, we got UK retail sales figures. 9 a.m., you get the German IFO survey. It will be interesting to see what businesses and consumers have to say about the outlook and expectations, especially after those weaker than expected PMI numbers that came through yesterday. And then in the U.S., we've got University of Michigan sentiment, and there equally we're watching out for how U.S. consumers are feeling about the state of the economy with the backdrop of higher energy prices. So that is at 3 p.m. UK time. And with that, let's get the show started. All right, well, we talked about some cautiousness for U.S. equities. Let's see how Asian markets are faring as well with Avril Hong in Singapore. Avril, walk us through some of the price action today. I see it's a bit of a mixed bag.
It is very mixed. There is clear divergence. On the region's benchmark, you're actually seeing more losers than winners, but the benchmark itself is in the green because it's helped along by a handful of stocks. The AI trade there is loud and clear. You're seeing the TAIEX. The outperformance is also there, and this is thanks in part to Taiwan easing some of the single stock investment caps. So that's propelling the chip stocks like MediaTek, TSMC even further. Now flip the board because I also wanted to talk through the market reaction to DeepSeek unveiling the preview versions of its latest V4 AI models. And this is the biggest upgrade in a long, long while. And essentially, as you'll recall, more than a year ago when DeepSeek was unveiling its models, it caused this rethink on Silicon Valley and a $1 trillion Wall Street wipeout. This time around, the market reaction seems to be confined more to China. If you're taking it at face value on what the Nasdaq futures are pointing at, you're seeing this divergence too in Chinese-related stocks, right? The hardware names for AI, such as your chip makers, Hua Hong, SMIC, those are doing really well today on the back of their unveiling by DeepSeek. But it's the rival AI model providers that are underperforming and dragged lower. Flip the board again. Bonus eco chart for you out of Japan as we got CPI numbers, excluding fresh food. If you take a look at that, acceleration for the first time in 5 months. So price pressures are building, and that's being shown by this key inflation gauge in Japan. But BOJ next week, consensus is for it to stand pat amid this Middle East uncertainty. And you're seeing that reflected in the weakness still on the Japanese yen, around 160 against the greenback still. Jumana?
Avril, thank you so much. And we love a bonus eco chart always. Keep them coming. Avril Hong in Singapore. Well, oil prices rose for a fifth day as uncertainty over talks between the U.S. and Iran threatened to further delay flows from the Persian Gulf. President Trump's orders to shoot and kill mine-laying vessels and the blockade of Iranian ports have raised concerns that the peace talks have stalled. Trump brushed off concerns about the duration of the crisis.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
Stuart Livingstone-Wallace, our head of Middle East and North Africa, joins us now. We're just listening to some comments there from President Trump suggesting that we could be in the early innings of this war if you go by U.S. history. But that aside, I would say, one of the main questions that people are asking is where we go from here. And is there a chance of some form of a diplomatic breakthrough in coming days, do you think?
I think there's a chance, for sure. I think the previous signs of a breakthrough sort of came out of nowhere. So there's a lot of this stuff is being back-channeled diplomatically, and we get to find out about it after the fact usually. So we shouldn't give up hope. However, having said that, the context here is that in effect there's been some sort of hostility between the US and Iran since 1979. This has been going on a long while. We saw it turned kinetic last year. It's turned kinetic again this year. Yeah. What that breakthrough might be is really hard to tell. In effect, they seem to be in a war of attrition right now in Hormuz, with both sides taking each other's tankers and other ships, threatening each other. It's going to have to get to a point where the economic pain, I think, and the political pain for both sides is so high that they're going to be forced to the table.
Yeah, if I had to summarize the state of the Strait of Hormuz right now, it is effectively shut and effectively still dangerous. Yeah. That's what is keeping oil prices elevated here?
Yeah, exactly right. And the prospect of how quickly that can be fixed. But not just that, also looking at the damage that there's been to infrastructure around the region and how quickly that can come back. So it's not just oil, as you know, it's natural gas, it's petchems, it's everything. And that has this ripple effect across the planet because there is no country on Earth that is not very, very dependent on energy and all the thousands of products that come from oil and natural gas and so on and so forth. So it's having a ripple effect everywhere.
Yeah. At the same time, and this is a parallel track because the U.S. have tried to really make it be a parallel track. Lebanon-Israel, second round of discussions at ambassadorial level yesterday in D.C., and as actually, President Trump spent the time with both of the representatives of Lebanon and Israel, we got an extension of the ceasefire. Where do we go from here?
Very hard to tell because you've still got this fundamental problem that it's clear that the government in Lebanon, and by government I mean government ex-Hezbollah, really wants a settlement, but they don't necessarily have the power, that is both physical as well as other ways, in order to disarm Hezbollah and get that kind of disarm. So it's very hard to see a way forward. I know there's been discussions about what aid other countries could possibly bring to that problem. But it's a positive that they've extended the ceasefire, and we shouldn't lose sight of that. It was a difficult one to do, I suspect, but the solution isn't necessarily there just yet.
Yeah. Stuart, thank you so much. Stuart Livingstone-Wallace. Let's turn to chips now. Intel shares soared as much as 20% in after-hours trading as the company delivered a blockbuster sales forecast that shattered Wall Street expectations. The upbeat outlook signals that the long-struggling chipmaker is benefiting from the monumental build-out of AI computing. I'm joined now by Bloomberg Intelligence senior analyst Matthew Blocksem. Remarkable extended hours price action for Intel. What is their comeback plan here?
Yeah, good morning. I think there's a couple of things that are really helping here. The big thing is that as we enter the next phase of AI, that we're going from this era where all the investment was going into training the models. We're now moving into the actual kind of application of those models or inferencing. And as you move into that phase, a lot of Intel's kind of more old school products, CPU chips and the main product is Xenon, coming back in favor because those kind of chips are much more well suited for that inferencing or that kind of application of AI kind of use case. And so they're seeing really big demand for that. That's what's kind of really driving it. The second part of the strategy, which is a little bit slower to kind of evolve, but it's definitely showing signs of optimism, is their foundry business. So this is essentially where Intel basically be the kind of platform that other companies use to manufacture their own chips. And whilst right now their foundry business still largely relies on other parts of Intel for its custom, we are seeing signs that there's demand from other companies. In particular, Elon Musk said he's planning to use Intel as foundry capabilities in his own kind of chip manufacturing venture. So I think encouraging is all around. Obviously, the CEO also did a huge amount to shore up Intel's balance sheet, and that also seems to be paying off. And they announced plans to buy back part of a factory that they'd bought, that they'd sold because the balance sheet was so weak.
Yeah. Okay, a positive story for Intel. Not the case for Microsoft and Meta. Both of those big tech giants have announced significant job cut plans. How did they get to that point?
Yeah, that's right. So I think it's about 23,000 jobs across the two, skewed towards Meta, which is a combination of about 8,000 or so job losses and 6,000 or so vacant roles they won't fill. I think, honestly, this is largely a reflection of perhaps overhiring through the kind of post-pandemic era. You know, the kind of positioning this is a need to kind of right-size the business and reduce costs in parts of the business to kind of fund the huge growth and investments they're both putting into AI. So I think it's a kind of a layered story. It's easy to kind of say, oh, you know, this is kind of AI and it's having an impact on net workforce. I think this is a bit more a legacy of overhiring from a few years back.
Okay, and let me ask you about SAP as well, a European software giant, reaping the benefits of the AI boom. What did we learn from their recent earnings call?
Yeah, another old school company that's having a bit of a comeback. So yeah, I mean, SAPs have been under a lot of pressure because it's one of these software companies that people have feared will get displaced by new AI rivals. And actually, the results they announced, you know, show some encouraging signs that their own pivot into AI and upgrading their own software suite for AI capabilities is starting to get some traction. They talked about 25% year-on-year growth in their order book. Which is in line with market expectations, but I think people were worried that perhaps that would be continuing to shrink. And some positive signalling from the CEO that companies are starting to buy their AI upgraded suite of software, and that's important because they'll need that to defend from competition. There are still some question marks, and in particular, it's about their pricing model. Historically, they've been charging people on the basis of subscription to a cloud service, you know, largely an all-you-can-eat service. Now they're thinking with AI, they're going to shift to a consumption model, and I think there's a lot of question marks about how customers are going to adapt to that and whether that's going to be successful for them.
Bloomberg Intelligence Senior Analyst Matthew Bloxham, thank you so much. And SAP CFO Dominic Assam will be on the opening trade at 7:30 a.m. London time today, so do not miss that. Well, still ahead from the center of the world's most important car market, we'll get the latest from the Beijing Auto Show. But first, EU leaders open the door for Ukraine to join the bloc. We're live in Cyprus next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology. shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Estonia's prime minister says there is no alternative to Ukraine's full membership of the European Union as the bloc's leaders gather to discuss closer ties with the war-battered nation.
Our position is that we support Ukraine in European Union because, to be honest, there's no other way. Ukraine belongs to Europe and Europe is stronger with Ukraine.
Bloomberg understands that EU leaders have signaled that preliminary conditions are in place for Ukraine to begin the first stage of the membership process. Our chief Europe correspondent, Oliver Crook, is in location in Nicosia. So talk to us about Ukraine's accession process into the EU. It seems to be gaining momentum here.
Yeah, Zelensky really arrived here in Cyprus riding very, very high. You'll remember there was that 90 billion euro loan that has been blocked by Viktor Orban for a number of months, really putting into peril and into question the future of Ukraine. Zelensky has referred to that money as really a lifeline, a matter of survival for the nation. And that was this week basically put into motion. Now the Ukraine will get that 90 billion. That means that their budget will be largely funded this year and next year and sends a very strong signal to the Russians. There was also the 20th sanction package that was now also approved. And now there's discussions happening about the 21st sanction package. And we should say that despite the fact that Hungary is a relatively small nation, about 9 million people, that the sort of disappearance of Viktor Orban at the European level makes a huge difference for the future of Ukraine. And as you say, Jumana, now there's a very active and a very serious conversation about having Ukraine join the European Union. This is something that Viktor Orban really violently opposed. It was really campaigning on in the election campaign, but it's something now that they can take more seriously and have real discussions about. There are still some debates about how to execute this, what the timeline could look like. I spoke to some of the Ukrainians who are negotiating this a little earlier this week. Their timeline is, I think, very, very optimistic by anybody's standards. They'd like to join by next year. There have been discussions of potentially a sort of lower tier membership to the European Union, associate membership. That's something that the Ukrainians have really rejected, but it's about sort of beginning the negotiations formally. We understand now that the Europeans are open to doing that and trying to accelerate the timeline a little bit, which comes with a lot of different sticking issues, but this is something that now can be realistically envisioned by the European Union.
Okay, Oliver, that's Ukraine, but then also there was talk about the, the energy situation in Europe on back of the Iran war. What are some of the measures that are being discussed to deal with the energy shock?
So some of the measures that the Europeans are proposing at the European level is trying to sort of encourage nations to look at the sort of taxation system in terms of energy, in terms of fossil fuels, that sort of thing. At the EU level, they can do a lot of technical things with the ETS, which is the emissions trading system. Won't get into the details about that. That effectively functions as a carbon tax, ways to reduce that, ways of suspending or sort of delaying state aid rules in order for nations to be able to do more to support themselves. But we're not at the situation now, Jumana, where we're sort of the break the glass moment where there's all the emergency measures being rolled out. You'll remember that after the invasion of Ukraine, when those gas supplies were completely halted over to the European Union, they were talking about gas price caps. That is not something that's being discussed at the moment. I think there is still quite a bit of wishful thinking at the European leader level, not really wanting to imagine what would happen if this war goes on for another, say, 6 months, 12 months, 18 months. Then you get into real sort of crisis territory. The hope is really that this will be resolved in the next couple of weeks and months. But if it isn't, I have not heard a very comprehensive strategy for how to bear those issues through into the future. So that's going to be one of the conversations we're going to be drilling down in with some of the leaders that we'll be speaking to over the next couple of hours. But we're not yet quite at that emergency break the glass moment. The question is, when do we approach that moment and what will the Europeans do?
Bloomberg's Chief Europe correspondent Oliver Crook in Nicosia today. Thank you so much. Well, Oliver will be speaking with the Lithuanian president later today on the sidelines of the EU leaders meeting. Don't miss that interview with Gitanas Nausėda at 10:15 a.m. UK time. Well, coming up, as oil heads for its longest string of gains since the start of the war, we'll explore the impact on inflation and next week's central bank decisions. There are 9 of them. All right, that's next. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Anand, only on Bloomberg.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts Thursday at noon on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Well, we are in the middle of European earnings season, and let me just bring you some of the headlines coming through from Volvo. First quarter adjusted operating profit has come in at 12.17 billion Swedish crowns versus 11.59 billion estimates. So it is a beat on operating profit. And in terms of the sales numbers, though, the first quarter net sales have actually missed versus estimates. So the net sales figures have come through at 110.8 billion Swedish krona. The estimate was 112.15 billion as well. And just in terms of the commentary, the CEO says they saw good order intake, low cancellations in the first quarter. He says that the first quarter performance has been good across all business areas, have maintained their earnings resilience despite the lower volumes. And truck demand in Europe continues to grow gradually. Truck orders rose significantly in North America. So those are the figures that are coming through from Volvo today. All right, let's go back to energy markets. Brent is up above $106 a barrel, with the Strait of Hormuz remaining effectively closed. Let's get more on the wider market impact with Ven Ram, cross-asset strategist at Bloomberg M Live. I guess, Ven, I want to ask you here, is there a broader market impact? Because from what I see, oil is doing its own thing, and equities are telling you a completely different story these days.
Morning, Jumana. I think there has been a complete bifurcation in the reaction, as you mentioned. I think that, the bond markets have reacted pretty vigorously, as you know, particularly in the Eurozone and the UK, where front-end rates have just spiraled and factoring in many rate increases. But if you look at the equity markets, basically they've shut it off. And part of the reason I think is the fact that if you look at the underlying earnings strength, it is a picture of resilience. In fact, I paused the fair value for NASDAQ 100. And what it shows is that if you discount back the cash flows accruing to NASDAQ based on its historical compounded annual growth returns in earnings and in dividends, what you see is a fair value of almost 30,000. And which is kind of underpinning the resilience in NASDAQ 100. Yeah. We haven't seen it really fall. And I think that, as long as earnings are continuing to be buoyant, I think the markets will shrug off what is happening in geopolitics. If earnings are the coupon that ultimately matter for investors, and if that coupons are good enough, then yield will compress and bond and equities will rally more.
Okay, so markets can shrug off what's happening in geopolitics. What about central banks? We have so many central bank decisions coming up next week. Are any of the majors going to be indicating they may hike into this inflationary shock?
I think that the European Central Bank is going to say they are going to be vigilant. They are not going to hesitate. But I think and the Fed is going to basically say that they are comfortable with their forecast that they put out in March. But to me, the two more interesting central banks are going to be the Bank of England and the Bank of Japan. And I think that the Bank of Japan has been trailing the neutral rate for a long time now. Even before the war started, they were behind the curve. So are they going to show a willingness, an increased willingness and a sense of urgency to raise rates, to quell inflation? Japan is overwhelmingly reliant on energy supplies from abroad. So I think that it's a huge energy shock and an inflation shock for them. So is the Bank of Japan willing to raise rates at a brisker pace? If not, I think that the yen will fall and JGBs already under pressure will sell off. As far as the Bank of England is concerned, we have heard several times from Bailey that he's not willing to raise rates as much as the markets were factoring in. But, if you see what has happened this week, Jumana, the markets have added one more rate hike to the BOE equation by the end of this year. And that is because of the numbers that we got in PMI yesterday. But regardless, if you look at inflation swaps, they are pricing around inflation around 5% in 1 year. That's alarming. The BOE has been missing the inflation target for the better part of 5 years now. So it would be very interesting for traders to hear what the Bank of England has got to say next week.
That's a lovely setup for us as we head into a really pivotal week for central bank decision-making. Venram, thank you so much, cross-asset strategist at Bloomberg MLive. Well, coming up, as investors remain cautious heading into the weekend, we'll get the take of Emma Wool, Chief Investment Strategist at Hargreaves Lansdown. That's coming up next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jumana Brisacci with your top stories. Oil heads for its biggest weekly gain since the first week of the war as Iran keeps the Strait of Hormuz closed and U.S. forces board a supertanker carrying Iranian crude. Intel shares soar 20% after hours, powered by a blockbuster sales forecast that smashed estimates. But Bloomberg learns Meta and Microsoft are planning as many as 23,000 job cuts to fund their AI plans. Plus, joining the club, we're told that talks on Ukraine's accession to the European Union could get underway in the coming weeks and months. Let's get you up to speed on these markets. We have some cautiousness as far as the S&P is concerned, but still on track for its best month since 2023. 80% of the S&P companies that have reported so far have beaten expectations on earnings. So it is a very robust earnings season so far. NASDAQ up 0.5%, keeping a close eye on Intel there. It is up 20% in extended trades. So chip makers and tech continue to power the performance here. European markets, not so much, leaning towards the negative, down 0.6% as we head into the European trading day. And of course, taking note of those weaker than expected PMI figures that came through yesterday. Flipping over, let's talk about Brent, though, with the ongoing situation around the Strait of Hormuz. It's still effectively shut. It's still dangerous. 105 is where we are at. The big figure for Brent, up 0.3%. For the week, we are up 17%. So it has been a very strong week in terms of oil performance. But again, a lot of uncertainty about where we go from here geopolitically. The USD up 6 basis points, but is on track for a 0.6% gain this week. Its first weekly rise in this month, so for the month of April. And then 10-year yields in the U.S. sitting at 4.33. As we could talk about the continued curve flattening in 2s and the upcoming Fed decision next week. Time now for your front page news. The Financial Times reports that Poland's prime minister has questioned whether the U.S. would be loyal to its NATO commitment to defend Europe in the event of a Russian attack. El País is reporting that no one is safe in the Trump administration as the Navy Secretary John Phelan is fired after the departure of 3 cabinet secretaries in recent weeks. And the Wall Street Journal also leading with the dismissal of U.S. Navy Secretary John Phelan. The Journal reports that Phelan sat in the lobby of the West Wing for more than an hour on Wednesday night, waiting to see if his longtime friend and neighbor, President Trump, would save his job. But he would leave disappointed. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Terminal subscribers can go to DAYB. Go. Well, it is earnings season, so bringing you now some earnings coming through from Eni. We have the first quarter adjusted net profits coming in at euro 1.3 billion versus estimates of 1.51 billion. So that is a miss versus expectations. However, they have announced that they are boosting their share buyback for 2026 to 2.8 billion. So even though we had a bit of a miss on the adjusted earnings, we are getting news of this share buyback as well. And as you can see, in line with most other energy companies, it has been a strong year so far, up 44% for the stock. In terms of other comments that are coming through, first quarter production, 1.8 million. The estimates for 1.78 million. And that is it so far. So share buyback is a theme, and then a bit of a miss on adjusted net profit versus expectations for Eni. Well, the Middle East ceasefire and rebounding markets have reignited investor appetite for the carry trade. That's where investors borrow money in low-interest currencies and invest where they're high. With volatility collapsing, traders are betting that exchange rates won't suffer the kind of abrupt swings that derailed the strategy in 2024. Paul Dobson, our Asia Markets Executive Editor, joins us now. Talk us through the types of carry trades that investors are putting on, Paul.
Yeah, hi there. Good morning. A few of the biggest investors that we've been speaking to up and down the street have been talking about this strategy recently. Borrowing cheaply in FX markets and then targeting higher yielding currencies to pick up the difference in interest rates between the two, and with a little bit of hope maybe for some appreciation of your currency long on top of that. They've been confident to do it because that volatility, as you were talking about, implied volatility in currency markets has really subsided. People have been expressing optimism that the war in Iran will at some point be concluded, and so that will give markets some sort of a relief. But it's a selective carry trade. It's not just looking for high interest rates, but more looking for countries that are energy producers and therefore shielded to a certain extent from the shock. So thinking about, Latin American currencies in particular are in vogue, those with commodity exports. And using the yen or similar very low yielding currencies as funding, so the short in your trade. And I think that that's quite interesting. We have the BOJ meeting coming up. It also sort of testifies to the idea that the market is expecting the BOJ to remain on hold, and so to keep the yen weaker relative to those stronger energy exporting high yielding currencies.
Yeah, the assumption here is that underlying volatility is going to stay low, as you were just talking about. Are investors being perhaps a little overconfident? We saw a massive upheaval in the carry trade in 2024.
Well, exactly. So your bet is on the war situation remaining under control. I would say that so far this week, while we've had that fragile ceasefire continuing, more or less, we've also had little signs of progress in terms of the talks between the US and Iran, at least in sort of in the public domain. And I think that people are starting to lose a little bit of confidence. If you look at crude oil prices this week, they've been steadily strengthening. It's going to be the biggest percent increase for crude oil since the first week of the war. So that talks to this idea that, the tightness in global markets is getting ever more extreme and more extended. And at some point, that could erupt into some sort of bout of market volatility if, and it's always the big if we don't get some reassuring tweets from Trump or we don't get some signs of progress sometime soon.
Paul Dobson, thank you so much, our Asia Markets Executive Editor. Well, for more on the markets, I'm joined by Emma Wall, Chief Investment Strategist at Hargreaves Lansdown. Emma, I actually want to start with the PMI drop that we had yesterday. Specifically, maybe let's just start with the UK before we talk about the Eurozone figures. I was surprised to see the jump in the UK PMI numbers yesterday. What do you point that down to? And would it suggest that perhaps consumption is being brought forward because of the expectation that this war actually could go on for longer than expected?
Yeah, I think you're right to be surprised. We're seeing a lot of mixed data, the macro data and the market data over the last 6 weeks. And it really speaks to that consumer confidence and business confidence that has been so fluctuating week to week, much as we've seen in the markets, this sort of weeks which will include kind of intraday rallies and then fall off by the end of the week. So actually, too, we've seen consumer and business confidence do the same. If we look at the investor confidence survey that we do with our own clients and some of their trading patterns, we've seen actually risk on, risk off really fluctuate. And we think we're seeing a similar attitude within consumer spending, which is why we're seeing this kind of rather mixed picture in macro news.
Yeah, so Bank of England, if you look at what is priced in by the end of this year, 2 rate hikes, is it likely that they follow through with that, do you think?
Our house view is that it won't actually happen. We completely understand some of the volatility in the forecasting. You cast your mind back over the last 6 weeks at different times. The Bank of England has been sort of forecast to be cutting twice this year, then holding rates through the year, and now hikes are back on the table. And the inflation print this week does, support the concept of hikes. But actually, we think that the Bank of England holds rates next week. Rates continue to be the kind of dominant theme when thinking about markets, along with sort of AI and tech. But next week, we very much expect the Bank of England to hold rates. And there's a couple of reasons for this. There's been lots of parallels made between what's going on now in kind of oil markets and the inflation picture and what happened when Russia invaded Ukraine. But ultimately, the monetary policy position where you're starting from is very different. We are still above neutral rate here in the UK at 3.75. And so actually, we do think there's some cushion left to absorb higher rates before the bank would have to make any kind of move. That said, we don't expect, the sort of the cuts to be necessarily coming in later this year that we were expecting earlier in the year. But we do think that while the war is, in this kind of acute phase, the Bank of England does hold rather than hike.
Okay, let's pivot and talk about the Eurozone numbers. A real surprise to the downside, signaling, again, a lot of downside risk to economic activity. At the same time, inflationary pressures are emerging. Would you say that the European economic outlook is very closely linked to what happens with energy prices from here?
Absolutely. And we know that, compared to sort of the oil shocks of the 70s, the global system is very different. It's much more kind of heterogeneous rather than homogenous. You can take the US, oil shocks in the 70s, they were a net importer of oil, and now the opposite is true. But the sensitivity for Europe and indeed the UK remains, so much of our supply chain, so much actually of kind of the industrial sort of old economy still drives a lot of growth. Therefore, the dependence on energy prices and the sort of, the link to global prices is far more sensitive. That said, rates are already below neutral in the East for the ECB. And so actually kind of cutting further from here would be against kind of expectations.
So putting it all together in terms of investment strategy, is it fair to say that if you want to outperform, you have to somehow be exposed to this AI trade that's once again picking up momentum, semiconductors and so forth, and therefore essentially be exposed to the US market more so than others?
Yeah, it's a good question, because actually the two themes that have dominated kind of Q1 have very much just been AI and the oil price. And they do different things to the market. Sometimes it feels at odds with one another. But next week, we think will be really pivotal in terms of, you've got 4 companies releasing their results within sort of 24 hours of one another. And within that 24 hours, that makes up 25% of kind of market cap of the S&P 500. I mean, it's the scale of these companies and what each of them individually can do to move the market and to move investor sentiment is really important. But of those 4 companies that are, announcing next week, that AI is so intrinsic to kind of market sentiment and expectation and will really tell, how the market reacts. And we do think there's the haves and the have-nots here. Obviously Meta and Microsoft have announced job cuts over the last day. But actually we do think those two are two of the best placed kind of the Mag 7 to benefit next week for different reasons. But we do think very much that next week will be all about not just the names themselves, but how they are, incorporating AI, whether that significant spend that was announced last year is actually flowing through into revenues.
Emma, thank you so much. A delight to chat to you. Emma Wall, Chief Investment Strategist at Hargreaves Lansdown. Well, returning to the EU and the prospect of Ukraine joining, Bloomberg's Oliver Crook has been speaking with the Estonian Prime Minister.
Our position is that we support Ukraine in European Union because, to be honest, there's no other way. Ukraine belongs to Europe and Europe is stronger with Ukraine.
And thinking about the 21st sanction package, what should that contain?
Our message is that this kind of full maritime services ban, because, to be honest, Estonia has been leading or being with other countries with the fight against Russian shadow fleet. This is delivering a little bit less than half of Putin's war chest money, and also with Russian assets. So probably getting them off track with getting new money, fresh cash for waging the war, that probably would be the first thing. And second thing, also added to that, also the Russian ex-fighters banned from Schengen area and European area.
And thinking also about the energy crisis, this obviously is in front of mind for a number of people. How severe do you judge this crisis to be? Because it seems that my impression is that there's a lot of wishful thinking in Europe, that there's a lot of hope that this is just going to not be a problem a few months from now. However, if it is, we go into the winter and we have a gas shortages, we have all kinds of shortages, it becomes very severe. How seriously do you judge this issue?
To be honest, the longer the conflict lasts, and the longer the influence will be. The influence will be on many tracks. The first one is probably immediate gas prices in the gas stations. That will be felt. Everybody will be questioning about the excises, taxes, and so on inside the countries, because it's on the supply side. Second one is which will be impacting Central Europe and Eastern Europe at the middle of the year and at the end of the year is the gas prices, because we need it for heating and energy production when the prices are up and so on. And the second track, which probably will be affected a good way, in every bad thing there's also good side, that renewables and the production of renewables will be going up. So things happening in Hormuz are probably right now the booster for renewables.
But that's a much sort of longer term vision. For example, in Estonia, the last quarter there was a slight contraction. Do you think that it could cause, for example, a recession within Estonia?
Depends pretty much on Europe as a whole, because we are quite exporting nation, and we are depending mainly on our markets, for example, in Scandinavia, Finland, Sweden, and so on. Second thing is about the Euribor, which will be decided by central banks, because if the inflation will be going up, I would predict that central banks would not be in that kind of hurry that they were last time. But they will have to step up, let's say, at the autumn and so on, to make also certain decisions.
The Estonian Prime Minister speaking with Oliver Crook there. Well, coming up, from the center of the world's most important car market, we'll get the latest from the Beijing Auto Show. That's next. This is Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Yes, our cooperation with Volkswagen has been very successful over the past 3 years. Our first collaborative vehicle, the Volkswagen ID Unix 08, has already been launched this month. We are also working with Volkswagen on the next generation of vehicles based on the VEA architecture, which will soon be available for Volkswagen China and other sectors. In fact, the cooperation between XPeng and Volkswagen is deepening further. When we have more information to share, we will provide more details.
That was the CEO of XPeng speaking to us at the Beijing Auto Show. Let's head there now. Our chief North Asia correspondent, Stephen Engel, is on location for us. Stephen, well, the backdrop to this auto show is a lot of overcapacity in the Chinese auto industry. We know that there's a price war that's been going on, heavy discounting. What is the mood on the ground there?
Well, obviously, it's been a tough beginning to the year for the Chinese EV sector. Sales were down about 14% in March alone, and that was the third consecutive month of declines. But again, I think the car makers here who have loaded up their cars with fancy tech, so really connecting the mobile phone to the automobile has been the growing trend. And they've been having product refreshes much faster than legacy automakers in Europe and in the United States. So that's been driving demand. But again, that price war, because of the immense overcapacity, the capacity utilization rate at auto factories in China is hovering around 50%. So they can make many more than what they're actually selling. So that has driven the price down. So how do these car makers adapt to that? Well, they've definitely turned to overseas markets. And we've been hearing about this, and that's why there's this protectionist sentiment we know in the United States. We know there are pockets of that in Europe for sure. But again, the Chinese automaker, with its value for money and tech-laden products, are making significant inroads because exports accelerated, surged 140% to a record in March. They're going into Europe, where hybrids now, Chinese hybrids, make up 30% in Europe of that particular segment. They're going into the Middle East. Yes, challenged, obviously, by the war and the stresses there. But again, long term, they're going into the Middle East, they're going into the global South, they're going into South America and into Africa. So yes, it's been tough domestically, but the other trend is what we just heard there from He Xiaopeng, the founder of XPeng. They have that partnership with Volkswagen. We are here at Volkswagen booth right now, which has a 4.99% stake in XPeng, and they're going to be collaborating a lot with the Chinese technology, autonomous driving, and their engineering platforms. It's sort of like reverse partnerships. In the previous decades, it was all about the Western car makers coming into China to tap the potential here, and then the Chinese gleaning the tech from the Western legacy operators. The roles have been reversed now.
Stephen, thank you so much. And I can also vindicate what you were saying. I'm based in Dubai, and I see a lot of Chinese cars on the roads, to your point about a Middle Eastern market being a big market for them. Chief North Asia correspondent Stephen Engel at the Beijing Auto Show. All right, we're keeping a close eye on earnings, obviously. SAP, I just want to flag this to you. It's up 6.5% on TradeGate versus the Zetsha close. So this is in early hours of trading, already trading in very positive territory. And this after their earnings dropped yesterday, very solid, with the net profit increasing by 6% and their cloud revenue up almost 23 to 25%. So that is a beat versus expectations. And also just a reminder, the CFO will be speaking to our colleagues on opening trade in the next hour. So stay tuned for that interview. All right, plenty more coming up here. This is Bloomberg.
a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Well, I'm going to bring you some charts that we've been looking at and tracking. Over the course of the last month, a massive rally in semiconductor stocks. And yesterday we were talking about the Philadelphia Semiconductor Index up 17 days in a row. And it's set for its largest monthly gain since 2000. So it really just encapsulates the amount of inflows we've seen going into that space throughout the month of April. But flip over, because as we're, well, peeling back now, but S&P did essentially reach new record highs this month. What's interesting here is the breadth has lagged the record prices. And actually, that blue line is telling you that only about 58% of the names in the S&P have broken through their 200-day moving average. And what does this tell you? Once again, there is a concentration. Where is that concentration coming from? It is chip makers, it is AI, it is tech once again. So keep an eye on the breadth of this rally. And then flipping over, obviously, here we spent a lot of time talking about the energy impact of the war and the ongoing uncertainty around the Strait of Hormuz. And even though we continue to see upward pressure on oil prices, Brent is above $100 once again, up 18% for the week. What has happened is volatility in other asset classes has dropped. So you can see that quite clearly here. FX fall, rates fall, all of that has been dropping over the course of the last couple of weeks because the ceasefire is in place. So basically here, cross-asset telling you different stories. Energy telling you one thing, FX and rates telling you something else. Now, to access, search, and save all of the Bloomberg Terminal charts used on this show and across Bloomberg Television, Terminal subscribers can use the function CHRT TV Go. And a reminder, our main risk events to watch out for. In a couple of minutes' time, we get the UK retail sales figure, 9 a.m. UK IFO survey, and then 3 p.m. University of Michigan sentiment. And then the president of the IFO Institute, Clemens Fuest, is on the pulse just after 9 a.m. time. That's our show. The opening trade next.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering.
and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. It is Friday, April 24th. Here is what is on the agenda. The standoff in the Strait keeps oil up for a fifth straight day. Chips continue to rip. AI boosting earnings at Intel and SAP, but costs jobs at Meta and Microsoft. And Europe grapples with the energy shock.
Talking of that energy shock then, Tom, this is the picture on oil right now, just up by 0.4%. But look at this, 105. We're moving higher and higher and higher. Many days in a row this week we have been moving higher, and that is putting downward pressure on European futures today. We're down by 0.5% here in Europe as we increasingly focus on what can be done for European economies in the face of this. The story in the States is a little bit different. Those numbers out of Intel perhaps putting some upward momentum behind tech stocks once again. Nasdaq futures up by 0.6%. The countdown to the opening trade starts right now.
Friday the 24th. Good morning. Two things have happened this week which seem odd. The first one is that oil is up, I think it's up 16% right now over the last 5 days. So that's Brent. 16% to the upside. Anna was just pointing out where we are, well north of 100 now. The other thing is that the semiconductor sector has absolutely rocketed. There's various kind of ways you can look at it. I'm going to give you the Cosby. It's up by 4.5%, nearly 5%. Are those two things incompatible, or are they compatible? Can those two things, do the Venn diagrams overlap in any shape or form? Can you have an energy crisis at the same time as you have a semiconductor surge? At some point, do they overlap? And if so, what happens when they do? And have we had an energy crisis yet? Because that's why we can keep the two Venn diagrams separate. I don't know, but it's been an incredible week.
Yeah, absolutely. Does what's going on in the Straits of Hormuz catch up with the AI boom and the chip sector? A question you've been asking some of our guests, Tom, this week. And it's a valid one because this is an energy-intensive industry. And it costs energy to produce this stuff as well.
It does. And we were looking at the strongest gains for oil in a week since the first week of the war. And at some point, there has to be an answer from the data centre build-out in terms of how they adjust to higher energy prices. But for now, the point is still there, that the semiconductors, in terms of the fully semiconductor index, up for 17 straight days, staring down that oil price. But at some point, is there convergence? It was interesting to hear from the Deputy Governor of the BOE speaking to the BBC, saying that at some point she does expect, and the BOE does expect to see a correction for global stocks, partly because of macroeconomic risks, a nod to Iran, but also partly because of AI, and partly because of some of the concerns around what could happen when those two things collide. Private equity as well. Private credit was also something that she flagged.
Is it an energy problem for the data centre build-out, or is it a cost of funding crisis? I.e., if we get could the cost of funding come down if there's a growth shock, or does it go up because there's an inflationary shock? Because that appears to be one of the critical inputs right now.
It does. And right this week, we seem to be back to worrying about the inflation side of things. If you look at what's going on with, you talked about oil prices up for a fifth day, and yields have been rising. The yields up on the 10-year in the US and the dollar, both heading for the first weekly increase in a month. So it seems as if we're back to thinking about inflation, which was the dynamic at the very beginning of this crisis. And I wonder if that's because we'd lulled ourselves into thinking, you know, oil prices had been kind of stable between 90 and 100 for a little while, but now we are slowly breaking out of that. We're not seeing a return to the volatility of the earlier weeks, but the oil price is creeping higher, and maybe that takes its toll on inflation.
And inflation is taking a toll on gold as well, which is set for losses for this week, and are down about 11% since the start of the war. So gold is under pressure again. It had 4 straight weeks of gains. This week, though, set for losses. So is AI is delivering in terms of semiconductors. It's also delivering in terms of earnings, both on the software front and the hardware front. And interestingly, from 2 companies that are both facing different challenges. Intel, with an incredible beat for Intel, suggesting Lip Bhutan, who's the CEO, is starting to turn things around. But a lot of those gains coming through as a result of demand for their CPUs that go into those data centres. In the quarter that they reported from, the expectations were that they'd earn about 1 cent per share. They earned 29 cents
so the stock went a lot higher.
So the stock soared about 20% at one point. That's the Intel story. Then there's SAP, which has been challenged as part of the SaaSpocalypse, as one of those legacy providers. It can be challenged on margins. But that actually came in. The backlog is looking relatively stable. The earnings were a beat. So for now, this is not a business that's crumbling. It's facing pressure. The CEO's talked about that and how this is a pivotal moment. There could be pain. But it certainly wasn't a disastrous set of results for SAP. They're holding the line, at least at this point.
Yeah. What is it, 25% cloud conversion number? That was described as disappointing a little while ago.
Yes.
I think they're quite happy with it.
But interesting, the suggestion is that the stock goes higher this morning, as if the market is focused on something else a little different this time.
It's just for a moment. Software had a terrible day yesterday. So, yes, the stock is up overnight, but it was down 6% yesterday. So, I think kind of net, let's just kind of... Software did not have a good day yesterday. And I think today's numbers need to be seen as a backdrop. To Tom's point, I think there's a sense of stability that wasn't expected that is there. But it's not a great number.
And then there's this positive story around Intel and the SAP story, perhaps, that we're going to see today. That will feed into, well, Intel specifically, feed into NASDAQ futures. That's the positive. Yesterday in the States, though, we did see this other narrative around tech, which is worth dwelling on for just a moment, which is the job losses coming out of Microsoft and out of Meta. And these 2 businesses are still recruiting people on the AI front, but in terms of what they're doing elsewhere in their labour force, Meta planning to cut 10% of their workforce, Microsoft a voluntary buyout of 7% of their US workforce. So we're talking about thousands of people here in this particular industry. Previously, when we've seen waves of this firing from tech companies, these are types of people who've been able to get jobs elsewhere. So, you know, that was certainly the story some years ago. We'll see whether that continues.
It's a much tougher environment now.
It's such a much tougher environment. It plays into this conversation about whether, you know, these businesses might be fine with AI, but what about the labour market? And for how long can you continue with that dynamic?
23,000 jobs potentially combined from Microsoft and Meta. It's worth noting, we should watch ASML as well at the Open. We will, because of the Intel strength and TSMC as well. So there may be a read across to ASML.
Can I just point out that Intel trades on... Its PE, its forward PE, is spectacular. I think we've got it down as kind of 160 or something like that. I can't remember the exact number, but it is amazingly high in terms of the forward-looking numbers.
The energy story that we started this programme talking about is certainly something that's going to be in focus in Cyprus today. EU leaders to talk about what European governments can do to face up to this. We've got gas and Brent up by more than 30% since the start of the war, of course. We actually heard from Europe on its plans on Wednesday, the Accelerate EU plans, talking about optimising jet fuel distribution, reducing energy taxes. We've heard from Giorgia Meloni in Italy. She says this is not enough. And it does seem as if we're going to have to wait a little longer because, for example, there are plans that are going to be coming in the following months. Things like demand management plans, what do they call them? Demand reduction measures. They're not due till next month. So this might be just a bit of a holding pattern.
What I find slightly amusing about this is the EU's prepared to talk about kind of the taxation story around electricity, making it more kind of affordable, managing the kind of the overall energy picture. When it comes to demand destruction, I suspect they're going to leave it to nations. There's not going to be an overall EU plan on demand destruction. This is your problem, not our problem.
That's got somebody else's flag on it.
Yes. I know they're going to be taking lessons from COVID in terms of how you restrict that demand. But Maloney pointing out as well, with the obvious, which is that different countries have different budgetary constraints.
Precisely.
And different countries have different abilities to address this, and more or less fiscal room, and therefore that
she
is
would like
at a nation-by-nation level, that's going to pose a challenge.
Yeah, she would like an EU solution, I suspect.
Absolutely. And this was very expensive for some governments in 2022, and I think that's the comparison that really hangs in the air in Cyprus as they meet. Everything that governments did then, very expensive. And taking a step back, this will also be something that they'll talk about, no doubt. There are a lot of arguments that actually if you put in subsidies, yes, it cushions in the short term, but it reduces the price signal that tells you what to do in the future. Structurally, how do you want your energy market? Electrify, exactly. And that's what they want to incentivise.
Dominic Assam is the CFO of SAP. He will be joining us shortly. Obe Ejekeme Carmignac, Global Equities Fund Manager, joining us around the table as well, as will be Maria Demirtzis, European University Institute Economic Policy Professor. We'll talk about what the EU can do about the oncoming energy crisis that it now faces.
Here's what else we are watching throughout this Friday. 9 a.m. UK time, Germany, IFO Business Climate Survey. We'll break that for you, of course, and bring you analysis. 9 a.m. UK time. The SMB's Schlegel will be speaking at an AGM in Bern. We'll mark that. 3 p.m. UK time, it's the University of Michigan Consumer Sentiment Survey. So we're touch there on the US consumer, and later on the earnings front, Procter & Gamble, Baker Hughes in the energy side of things, and Carnival on the tourism and leisure sector.
What else do you need to know this Friday morning? President Trump says he's considering having the US government purchase bankrupt carrier Spirit Airlines. Sources say the deal would involve a financing package of up to $550 million in exchange for warrants that would give the government the right to purchase up to 90% of Spirit after it emerges from bankruptcy. Trump has a special kind of relationship with the airline sector. DeepSeek has rolled out preview versions of its new flagship AI model, calling it's the most powerful open source platform in a challenge to rivals from OpenAI and Anthropic, which of course are closed. The Chinese startup unveiled the V4 Flash and V4 Pro series, touting top-tier coding performance and big advances in reasoning and agentic tasks. The firm, however, is warning that the rollout will initially be constrained by the availability of computing power. Heard that one before. And the Justice Department in the United States says a US Special Forces soldier has been charged with using classified information to make more than $400,000 trading on Polymarket. Prosecutors say the soldier was involved in the planning of the capture of Venezuela's Nicolas Maduro and used that knowledge to place bets on his removal. The case is raising concerns that the fast-growing prediction market may be vulnerable to insider trading. Polymarket says insider trading has no place on its platform. Van Dijk has not publicly responded to the allegations.
Coming up on the programme, Estonia's Prime Minister calls for Ukraine's full EU membership as leaders gather in Cyprus. We will bring you some of that interview later in the show. Plus, we will look at your stocks to watch, including the truck maker Volvo, the company reporting a profit beat thanks to order growth in the US and in Europe. Up next, we will be joined by Aliki Rufiak, multi-asset portfolio manager at Rebecco. Please get involved in our conversations. IB plus BBTV Go. That is the function to get in touch with the team. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for all the, I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
President Trump there responding to a Bloomberg News question about how long he's willing to wait for a response from Iran. That's as both sides maintain their blockade in the Strait of Hormuz and tensions grow. President Trump has ordered the U.S. Navy to, quote, shoot and kill mine-laying vessels, raising concerns that peace talks have stalled. For more, let's bring in Bloomberg's Jumana Basechi, who's in Dubai. Jumana, then, good morning. With the naval blockade still in place, what are you seeing? What's the latest news lines coming out of the region?
Yeah, well, very little signs of a breakthrough. And we just heard comments there from President Trump suggesting that he's not in a rush, drawing perhaps what some would describe as an uncomfortable parallel between the current situation and previous wars that the U.S. have engaged in, including the Vietnam War and Iraq War. So, he's suggesting that we're in the early innings of what could be a prolonged conflict. At the same time, the Iranian side asserting once again that they're not going to go back to the negotiations table until the U.S. naval blockade is actually lifted. No signs that the U.S. have plans to do so. And overnight, I also want to draw your attention to an article that our Bloomberg colleagues put up, also suggesting that the way that President Trump has been conducting this, a lot of the threats and assertions, the language that he's been using on social media has also not been resonating well with Iranian officials. And they say that that is actually one of the limiting factors that is stopping the two sides from getting together at the negotiating table once again. Now, at the same time, when it comes to the Strait, it's still in a situation where things are very dangerous. I mean, a couple of days ago, Iran seized a couple of vessels. They literally shot at vessels. We know that now the president has instructed the U.S. Navy to fire on any boats from the Iranian side that are seen to be laying down mines. And basically what this has meant is there are very few ships or vessels that are managing to transit through. So, this is an impasse. It's an impasse between Iran, between U.S. It's not sustainable, not just because of those two, but because of the rest of the world and the ramifications it's going to have on the rest of the world. So somehow this deadlock needs to be broken. The question is how? Is it via diplomacy, or is it via an escalation of hostilities once again? I will just draw your attention as well to comments from the Israeli Defense Minister, Israel Katz, yesterday. And he said that they are ready to go once again. They're just waiting for the green light from the U.S. to, quote unquote, finish the Khamenei regime once and for all.
This time last week, Trump was saying it was all over. Peace in our time. didn't happen. Obviously, 1 week on, we're in a very different situation. Jumana, thank you very much indeed. Jumana Basetchi joining us from Dubai with the latest. What a week it's been. Oil prices are up circa 16%. That's Brent. The semiconductor sector is up significantly. Yields have risen, which also I think is interesting in terms of the tell coming out of the bond market. The bond market sees things quite differently. Licky Rufiak, portfolio manager at Rebecca, joining us around the table. Good morning. Morning. Does the market make sense to you right now? Semiconductor stocks shooting to the moon. Amazing performances coming out of the tech sector. Oil prices are up really sharply on the week. We're up 16%. What do I look at? Which signals do I take as being real and not real? Is it just a duration story in terms of the semi stories now and the oil story is further down the road and hasn't arrived? How are you looking at this market?
We see, first of all, increased tail risks within our base case scenario, and this emanates from the prolonged closure of the Strait of Hormuz and higher energy prices. So since the end of February, we have seen the Brent oil price going up by 45%. And typically, what we see during supply-side shocks, oil shocks, is that the price of oil remains elevated, so approximately 20 to 30% above pre-conflict levels for the next 12 months.
OK, so what is your base case? And is that, are the tails getting closer to the middle of the distribution of outcomes?
So going back to what that means, I think, for the inflation trajectory, what that means is that we are likely to see oil price around $80 to $90 over the coming months. And based on this assumption, which is our base case assumption, we are expecting inflation rates for developed markets to move higher, closer to the 4% mark, and potentially exceed that. Okay. However, whilst these levels are higher than the 2% central bank inflation target levels over the medium term, we do expect that these levels are likely more informative for headline inflation. What we have also seen is that the pass-through from headline inflation towards core inflation prices during this type of scenarios tends to be very low and very limited.
Okay. So I can look through it.
So with that in mind, I think central banks can afford to look through it and not raise interest rates in the short term.
Transitory? Do we use the word transitory?
Yeah, maybe we do. I mean, yes, good morning, Aliki. Yes, the danger we know with saying it's transitory and we look through it is what happened in 2022. But some people draw a distinction between the inflationary backdrop in 2022 and what we're seeing now, and saying, you know, then it was, or at the beginning of this decade broadly, then inflation dynamics meant that inflation was going to spread through the economy more than it will this time around. Is that what you're seeing? I mean, I was looking at some of the retail sales data out of the UK today and some of the sort of high-frequency data out of the US, and wondering, whether the consumer is buckling a little in the face of what they're seeing right now.
So the main point to mention is also what we should be expecting from central banks. We have a very heavy central bank week next week with ECB, Bank of England, and also the Fed. And what the markets are pricing currently is rates are on hold. The other very important driving factor in terms of going forward is how markets are going to differentiate between the regions, countries that they would likely be more heavily impacted by the energy crisis, like UK and Europe, which where we see rate hikes actually priced in over the next 12 months relative to what's happening in the UK. And with that in mind, I think if we also see a positive scenario in terms of the reopening of the Strait of Hormuz and some easing in the energy prices, then the shift would be mostly on the second round effects of inflation. And there we see two catalysts. On the first side, we see that excess capacity in Eurozone and China is likely to keep a lead of secondary effects on inflation in the short term. And in the US, there the situation is more what's going to happen in the labor market. So a likely easing rather than tightening, which was the case back in 2022, is likely going to, we are likely going to experience a lower impact of wage growth this time round Hence, second round effects of inflation are relatively more muted in
So the inflation backdrop is different to a few years ago, but the labour market backdrop is also crucially different. So you think then, if you're right then, Aliki, how quickly does the market unwind its expectations for rate hikes?
I would say relatively quickly. We've seen that at the end of last week, where we had more positive news flow. On Friday, markets have been very strong on the day, but also the interest rate expectation over the next 12 months has been priced out. So the changes that we're likely to see, if a scenario like that again materializes, are going to be very swift.
Okay, different regions will be impacted differently by the inflation. You talked about UK, and you're looking at 4% maybe for some nations in terms of the inflation impact. But you are actually leaning into the front end. So you quite like the front end, Germany, UK. Explain the rationale behind that and what the opportunity is there and how long that opportunity remains open.
So one of the areas where we haven't seen a full retracement across the asset space is fixed income. They are particularly on the front end of the curve. We see rates higher between 60 and 80 basis points for the UK and Euroland. And we find this as a very attractive opportunity at current levels, given that we believe that inflation is going to be transitory. And again, under a more bearish scenario, a growth shock would imply that central banks could also cut interest rates if we move towards a more recessionary type of scenario priced in the markets.
OK, that's the inflation story. What about the chips and AI story? Where do you want to be sitting in terms of the run-up that we've seen, particularly in semiconductors? Are you comfortable with those gains? Did they make sense? Do they have further to run?
What we've seen is US hitting all-time highs again in the markets. And in terms of our equity positioning, we are very selective there because the leadership in the market has changed. So tech has rallied quite strongly. And I think this has come at the back of two catalysts. The first one is very positive earnings growth expectations for the space, but very weak positioning as well. So for us, we like the AI story, but we're very selective in terms of how we approach that.
What does that selectivity mean?
We prefer to implement this through option strategies, so call spreads in the US, now that the volatility has also switched a little bit lower.
Aliki, thank you very much. Aliki Rufiak, Portfolio Manager at Robeco. Good time to point out, as we're thinking about inflation, what this does to the European economies, that we've got European leaders, of course, meeting in Nicosia in Cyprus, and we've got live pictures of that coming through. The European leaders are just arriving. And we've heard from the Spanish Prime Minister Sanchez, who's saying that they need to seek more ambition from the EU Commission on energy. He's in favour of a windfall tax on energy companies. We'll see how that is met by others. They also want an extension of EU funding for energy transition, and they need to talk about fiscal rule flexibility for energy, which is something I know that has been part of the Italian conversation as well.
That all seems fairly straightforward. That's the easy bit. If there's demand destruction required, how does that work?
How do they factor that? How do they factor that in?
Yeah.
Interesting reporting from Bloomberg in terms of the barrels of oil coming now from the US to Europe. They've put about 79 billion barrels of oil from their strategic reserves onto global markets, and some of that is making its way to Europe right now. And we hear from the likes of Shell that their refineries now are at max capacity for jet fuel. It's just a reminder of the tightness there. A bit of flow coming from the US is not going to offset.
Apparently, we know it comes from their strategic petroleum reserve because of the name it's given.
Yes.
It's named after the cave that they keep it in.
And sometimes there's a concern about quality because it's been kept in there for so long.
And you can't take that much out of the cave because of the geology doesn't allow you, so there's all kinds of... It's a genuinely fascinating read. Anyway, what's next?
We're going to switch focus to what is happening on the earnings front. We've been talking about tech, we've been talking about AI. We're going to get a take on software with the SAP CFO. They came through with a beat. Stay with us for that conversation. This is Bloomberg.
increased tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Friday morning, good morning. 30 minutes to go until the start of equity trading here in Europe. One thing really stands out today. By and large, futures are negative, okay? So let's call it 0.5% to 1% across most of Europe, with the exception of Germany, which looks like it's going to be lifted by tech, SAP. We'll talk about that in just a moment. And it's a similar story over in the United States. So NASDAQ futures are up by 0.5%. Intel is probably the trade there, plus a few others. S&P mini futures are absolutely flat. So you're getting a discernible difference today depending on how much tech exposure that particular index has in terms of its expected performance.
So that's the equity story. Let's have a look at where we are on bond markets. Not seeing as much bond market action here in Europe as we're seeing more in Europe than we've seen on Treasuries. Treasuries looking fairly relaxed right now, not a huge amount of movement, but the direction of travel has been higher yields over the past week, and in fact, the bond market's heading for the first week of increased yields in a month. This is on Treasuries, on the 10-year in particular. Here in Europe, we do see some movement higher on those yields. So 3-4 basis points seems to be the extent of it, though.
OK, let's get more details on the tech story then and zero in on SAP, reporting stronger than expected revenue growth in its cloud division, beating analyst estimates. The results come as Europe's largest software company ramps up the integration of artificial intelligence agents across its platforms. Shares are called higher this morning after a brutal 12 months, it should be said, for SAP stock. But again, today called higher. SAP CFO Dominic Assam joins us now. Dominic, good morning. Thank you for your time. Analysts, in terms of their reaction to the earnings, seem pretty optimistic, particularly about the cloud story and the backlog of orders. What is your level of conviction that demand, that the momentum that you're seeing in cloud right now continues in the quarters ahead this year?
Q1 gave us a lot of confidence on that because it has been a very solid start into the year, enabling us to confirm the outlook we have provided for 2026. We increased on constant currency terms cloud revenues by 27%. We increased our non-IFRS operating profit by 24%. If you then compare that to the ranges we've guided for the outlook, you see that this is actually above these ranges, giving us, so to speak, a head start, despite what I would consider a quite adverse environment, given what we've seen in the Gulf region.
In the Gulf region, have you seen big orders being put on ice? Has that been more challenging? Have you had to scale back the ability to ship product into the Middle East? Have customers turned cold in that region as a result of the geopolitics?
Obviously, those customers, governments, but also commercial customers that have been most directly impacted by the war in the region have been distracted by what I would call a lot of firefighting around the situation and have been pushing some projects to the right. But I'd say on a global basis, it's still very solid. And that's, of course, the big question. How long will this last? How long will the Strait of Hormuz be shut down to avoid a contagion of the global economy?
Yeah, something we're watching very carefully, Dominic. Good morning to you. Away from, well, more broadly, thinking about the pricing of your products and where you're moving to on that particular story. You're moving from a usage-based pricing model from a subscription-based pricing model, and there's going to be a hit to margins, we understand. That's the expectation amongst analysts. What kind of timing and margin hit can you describe coming from that move?
Well, the consumption-based pricing that we have alluded to is really something that will be layered in over time in a very gradual way as AI agents will consume tokens. And that is not something that is happening from one day to the next. So it's nothing comparable to what we had when we transitioned from on-prem to the cloud, where we had to defer all the revenues to the right, where there was some cannibalization of the legacy business, so to speak. Here, AI is an opportunity coming on top, which will be then more consumption-based over time. So this is a much more gradual shift and actually an expansion opportunity for us and should also bode well for earnings growth.
OK, so, I mean, your CEO said recently that there would be short-term pain, trying to understand how painful. You're not painting a picture of much pain there.
Well, the pain we've referred to is what you alluded to in your introductory comments, which is this kind of alleged SaaS apocalypse narrative, which has been around for the summer of last year and has, of course, left its traces in the share price. So Christian was really referring to the pressure on the share price here, as opposed to anything related to our outlook.
Why is it alleged? The market is deeply concerned around this. You're saying the market is wrong. What is the market getting wrong here?
Well, I think you cannot generalize that. I just talk about what we can see in our figures. And as I said, we had a very strong into 2026. We can confirm our outlook. So that doesn't kind of confirm an apocalypse-like meltdown that people are speculating about.
OK. Do you think 25% conversion rate onto the cloud is good enough? It wasn't that long ago you thought this number was, quote, disappointing. Do you think actually you are seeing some effect? But yes, you're confirming what was a fairly cautious guidance. Do you think that these numbers are good enough? Do you think that 25% conversion rate is good enough? And do you think, to Anna's point, that as you convert from subscription to a usage model, that you're just going to become more volatile as a business to own?
Well, first of all, let me just get this straight. We have by now more than 50% of our revenues in the cloud. So the conversion of on-prem customers to cloud is much more advanced to that. I'm not sure that is what you refer to, but that is really still in full swing. And the other thing I can say is just most recently, outside third-party prominent research institutes like IDC and Gartner have confirmed extremely high market share gains of SAP in the SaaS market. So I think we have a very special situation here at SAP because the type of processes, complex end-to-end processes we are dealing with, which are around monetary transactions, where the assurance levels are extremely high, and you have to provide that trust wrapper really to make sure that people can transact with confidence. It's a different game from a more content-driven, language-driven, or even vibe coding-driven environment. So I think that's where the kind of market share gains can be explained, and the continued strong momentum of SAP, despite the backdrop of AI revolutionizing basically everything. To the contrary, we want to be on the kind of side of leveraging that technology in our portfolio to harvest either higher hanging fruit, like the very complicated processes I've just alluded to.
Dominic, is Anthropic now your biggest competitor?
I think it's fair to say that they want to go where we are already. We are just right in these complex processes. Right now, of course, the lion's share of the ARR stories that you hear out there are still around large language models in a more traditional sense, doing chats with customers, services, coding, which is also some type of language. What we talk about is really the ultimate decision point of a transaction, triggering a monetary transaction that has consequences. You have to be first time right, very different assurance requirements. And there we are. That's our kind of core business. And of course, they want to go there. But rest assured, we want to lead that market as opposed to being a follower there.
Can I ask you another question, Dominic, about the pricing model then? Will there be options for people, for customers to stay on the status quo? If they don't want to move to a usage-based model, if they like the predictability of a subscription, can they stay there? Because even your CEO, I think, has acknowledged that it's quite difficult for some businesses to predict what a usage model will mean to their costs.
Yeah, it's indeed a big challenge for our customers. Many CIOs would love to have predictability. By the way, we have the same situation right now that consumption of tokens for coding goes through the roof as the adoption of these new AI tools also by our developers is really making great progress. It's becoming more expensive. But on the other side, you also have a great value added, a great productivity gain. So I think those vendors who have the leverage to give a differentiated offering to the customer that provides productivity will have some leverage in deciding what type of monetization model we give.
Okay, just to kind of stay with this theme, one of the reasons why private equity, private credit liked the software environment was that it did have predictable revenue. It was based on a subscription story. That was one of the big attractions of it. Do you think if you do move to a pay-per-use model, that your business will become more volatile? Or do you expect that actually there will be the same volatility or less volatility? What do you think happens in terms of your revenue volatility if you do move to this model?
I mean, again, as I said already, that kind of consumption-based model is like an increment coming on top. So we have a very strong subscription-based. By the way, today already we have some consumption-based models like on the BTP. We have this BTP EA enterprise agreement credits where people for development are consuming credits. We have tools like travel in Concur where people are paying per transaction. So it's not a new model. We have the metering in place for all that. It's now really more about the value creation with AI. We want to come from a cost plus type of logic to participating in the value that our tools can deliver to the customer. And that's the strategy of many of our peers. But indeed, it's that dilemma that we have to manage the predictability on the one side for the customer and also for our cost base. I mean, if you spin these GPUs, it's not necessarily for free. Yeah? So also API calls on our infrastructure will be charged because we have some effort for that. We have some cost for that.
Yeah, so there's a cost there. There's a cost in the R&D that goes into building these AI products as well, Dominic. Does that mean you're going to have to trim headcount at some point?
Well, it's clear that we have an extremely dynamic environment in the tech industry, and the domain you point to, which is the development, is the one where the productivity gains have been most tangible, most impressive in the most recent past. And we will leverage to the full extent these new technologies. We have a lot of customers really pointing to certain feature gaps. We have been quite selective in the past about how many customers we need before we start developing solutions. I think with these new tools, we can really pull in the roadmap of deliverables from SAP, make sure that the customer needs are satisfied in a very speedy manner so that they don't need to do it themselves. And we still benefit from the economies of scale that we're not developing for one customer only, one company, but for myriads of customers. So that model is unbroken from our point of view. And the question what that exactly means for headcount is really hard to judge, because then we would look in the crystal ball and say what exactly will be there in terms of productivity gains. There are ranges out there, but for the time being, I would say let's really speed up, drive the top line, and make sure we are a strong winner in the AI race.
SAP CFO Dominic Asam, thank you for your time on the back of that earnings beat with the stock called higher this morning for that software giant. Staying with tech, as we mentioned, Anthropic's Mythos AI model has been the talk of the industry in recent weeks. The company says the tool is effectively too powerful to be released to the general public, but the headlines may benefit Anthropic as it sees potential valuations approaching $800 billion US. The company is the subject of this week's Bloomberg Originals Weekly Doc.
If you look at the AI sector landscape more broadly, what you've seen is OpenAI's early dominance being challenged increasingly by Anthropic.
Anthropic is drawing investor interest at a valuation of $800 billion or higher,
making it close to, if not the most valuable startup in the world.
Turbocharging the hype is Anthropic's latest model called Mythos.
Only a small number of companies outside of Anthropic have access to it, and on a limited basis.
This limited release has been dubbed Project Glasswing, and all the participants include a who's who of Silicon Valley.
We know that Apple, Google, Palo Alto Networks, CrowdStrike, the Linux Foundation, Amazon are a part of this Glasswing project. It's a highly unusual arrangement. These are fierce competitors who are trying to get the best model out there. And Anthropic is not only showing them sort of some IP that hasn't been released yet, they're allowing their competitors to potentially criticize some of the work that they did.
The unorthodox rollout has generated a lot of publicity, and already there are reports of unauthorized users accessing the model.
This is terribly basic cybersecurity practice 101 that was missed here.
We have been hearing about this theoretical threat that AI poses to cybersecurity, and what Mythos has proven is that that threat is a reality.
There are big worries that this, if it falls into the wrong hands, it could essentially lead to some of the greatest cyber risks that humanity's ever faced.
With massive potential for havoc and the stakes so high, is tech's era of move fast and break things finally over?
And you can watch the full Bloomberg Originals documentary on the terminal at Bloomberg.com and on YouTube. There's a lot more coming up. Stay with us. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Risk premium in equity markets and credit markets are at a 20-year low, which is an astonishing fact. So what the market is effectively saying is this is the least risky macro environment that you've seen for the last 20 years. Markets are saying there's a 90% probability that this will not lead to weaker growth momentum. And we have to judge, is this a correct assessment of where we stand?
As in Europe, you're probably going to see a few percent earnings growth, also quite skewed. Banks and energy are probably going to give you a lot of that growth, whereas other companies, it's flat or even slightly down.
As a company, and to a certain part probably as an industry, we're less impacted by the conflict in the Middle East. One reason is that we are very energy efficient.
From the Middle East conflict, of course, there has been a huge demand now on sensor capability to detect sort of incoming missiles and drones.
If you look outside of tech and energy, the rest of the sector, yes, we haven't seen upgrades, but we haven't seen downgrade neither.
We're not seeing at this point an impact on demand. If we see this conflict continuing for much longer and we stay in a world of higher inflation, then over time that does have an impact. But at this point, we're not seeing a whole lot of pre-buying, for example, in Q1.
It's far too optimistic. I think there will be demand destruction, and I'm positioned for risk premium to go wider. Risk premium at a 20-year low at the current juncture with all the risks we're facing is the wrong probability distribution. Maybe there is a good case outcome, but it's not a 90%.
Investors and CEOs giving us their takes on the impact of the Iran war on their earnings, or the earnings of companies they invest in. Let's turn to today's markets in 3 minutes on the opening trade with Paul Dobson, Bloomberg's executive editor for Asia markets. Paul, here in Europe, it seems like the only thing you need to know is that oil prices have been going up all this week, and we're just flirting with $106 a barrel as I look at Brent, and that seems to be what matters to European stocks. Meanwhile, the Nasdaq is focused much more on Intel and that particular story. How are you looking at this particular divergence right now?
Yeah, divergence is the word, I think, Anna. Good morning. So the market is really sort of grappling with these two different things that are going on, right? On the one hand, we have the AI boom still getting priced in or repriced in. And so we're seeing that continuing acceleration of US tech-heavy equities and, for that matter, North Asian stocks as well. But each day this week, each day that this conflict goes on, we're seeing those oil prices steadily increase. And this has been the biggest percent increase since that first week of the war as well. And that tells you that we're really seeing sort of stasis, no signs of a shift in the talks between US and Iran, at least in the public sphere. And the market is starting to get more and more worried about that, because we know, and we've been saying it for 8 weeks now, that the longer that this goes on, the tighter the energy supplies get, and the more that there's going to be an impact on the economy over time, starting probably in Asia and then spreading west.
Do we resolve the problem of kind of how this market is working? Oil prices up on one hand, but the semi-sector up on the other hand. Does it get resolved by looking at who is buying? It's interesting, the markets team here forwarded me a note that came out of Goldman Sachs talking about the fact that pension funds have actually been selling, but it's the CTAs and to a certain extent re-risking of hedge funds that have been basically chasing this market. Is it that kind of internal flow that tells you about what is happening here? That actually, big picture, institutions are very nervous about this kind of environment, but the CTAs, the momentum chasers, have had to get on board and basically chase this tech story as hard as they have been?
Yeah, and if that's the case, then that sets us up for a rather shaky times, right? Because those are the sort of flightier, faster money investors that are just as likely to get out again as they are to hang on in there. So unless you get a capitulation where you have more of the long-term investors folding into that because of fear of missing out and because of their underperformance relative to the gauge, then at some point the market will potentially run out of momentum, and that could be a dangerous point. Or we get to, a moment where we have a bit of a volatility shock again, some sort of a flare-up, and that turns us around even more critically. What I do think is that some longer-term investors are taking a view as well, because you're seeing that show up, in the relative stability in the bond space and in the currency space, where people are moving back into the carry trade. So because there's lower volatility, people are thinking, all right, target this right, short yen, where interest rates aren't going anywhere particularly fast. Have a look at higher yielding emerging markets, energy producers, places like that where you can put some money and still continue to pick up yield. And that seems to be a safe investment, again, with that proviso that it could all go wrong if we do have another flare-up in the Middle East.
Bloomberg's executive editor for Asia Markets, Paul Dobson. Paul, thank you. Let's get your stocks to watch now, or at least stocks that could be on the move this Friday, and bring in Chloe Melly. Chloe.
Good morning, Tom. SAP is in focus today after beating analyst estimates. So this could help lift the shares after what has been a very steady downward trajectory for that company, and could also really help reassure investors in that software sector generally, with analysts saying that this eases some fears around AI disruption. We all remember, of course, the big software sell-off from earlier in the year, but also help ease fears around the impact of the Iran war on business confidence. So we should watch out for SAP this morning. Moving on to another company that could be moving higher, and that is Siemens Energy, which raised its outlook last night. It's one of those companies that has been a really big beneficiary of this growing energy infrastructure demand from data center customers and grid customers as well. And so we could see that raising again that share price. And analysts are saying that this shows that this really this investment cycle is only really accelerating, is not peaking just yet. And so we could see even more movement there for Siemens Energy. And finally, Volvo is also in focus after raising its outlook for the European truck market. They show some early signs of recovery in that truck market after what has been quite a prolonged slump in demand. And so we could see both Volvo but also its closest rival Daimler Truck go a little bit higher on the back of that this morning.
Chloe, thank you very much. Chloe Melly with some of the stocks in focus. I'll add them to the mix. Electrolux, they're talking in quite dark terms about what's happening to the US consumer, so we'll watch that one. Accor also had some guidance out last night. Revenue seeming to miss estimates. Room demand, though, holding firm outside the Middle East, so we'll watch that one. That can move a bit on some of its
the hotels numbers. group, travel and leisure in the Middle East, and to what extent that's been impacted. And Electrolux, the white goods trade as well.
Yeah. Do you have to fill up your car? Do you not buy a new washing machine?
Yes.
These are important trades.
And you certainly, maybe you don't buy a house. And it's linked to that, obviously, often. Let us tell you that the opening trade, of course, is coming up next. Futures pointing lower here in Europe. More positive picture from tech in the States. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back. A couple of minutes to go until the start of cash equity trading here in Europe this Friday morning. Yesterday's session in the States dominated by the earnings picture, but there was also significant selling in the software sector, which is significant when you think about where SAP is going to go today. We probably finished a bit below where Europe went out at the end of the day, but there was a lot of action after hours. Names like Intel, front and centre, and they will have a significant effect, those names, on today's session, Tom.
Yeah, the hardware story, the software story, both coming into play with SAP and Intel beats for both of those. European stocks yesterday essentially ending the session flat, today pointing low by 0.6%. To the SAP story, though, the DAX is unchanged, so that's going to be supportive. It seems it's called higher SAP, of course, on the back of those earnings. FTSE 100 futures pointing to losses of 82 points, down 0.8%, despite the fact that oil is higher. Not significantly so, but of course through the week, holding above that 105 level on Brent. So that is the picture, of course, on the broad index level. Anna, what are you looking at in terms of individual stocks?
Yeah, let's look at a few individual names that could be on the move then this morning, Tom. We talked about SAP quite a bit. You've mentioned the strength coming through in the numbers, reassurance maybe I should say, coming through in the numbers. And of course this was a stock and a sector that was really beaten up, as Guy was saying yesterday, so we look for a bit of a rebound there. Siemens Energy also in focus, price targets being raised for this one. I see from Bank of America, others maybe also upgrading it. Siemens Energy raising its outlook on strong AI driven demand, so that's certainly one that we will put into the mix and one that we will watch. Watch also for Volvo. This is trucks, not cars, raising its outlook for the European truck market after orders increased, and that's often quite a bullish sign for the business cycle. But business activity also improving in the Americas, they're talking about in the release today. So we'll watch all of those three then, Guy.
Absolutely, we'll keep an eye on all of those stories. Let's try and price it all in and see what we're seeing with these markets this Friday morning. Here we go. It is time for the opening trade. We're expecting the DAX to outperform. SAP is expected to have a solid day after a very disappointing day yesterday. The two-day chart on SAP, I think, will probably be quite instructive today. So the FTSE flat at the get-go of trade this morning. We have seen oil prices creeping higher throughout the week. That has been a tailwind for this sector. In fact, basic resources generally have been as well for this market. Stock 600 down by around 0.3%. These are not big moves. Below the surface, more interesting things are happening. But at a headline level, we're down a little bit. We're down 0.5% now on the FTSE 100. In aggregate this week, though, it hasn't been a great week for the European equity picture. You are potentially seeing Europe being much more exposed than the United States. The US market, more tech exposed, has had a better week. The CAC is now down by 0.7%. The AEX, I've got a funny feeling that ASML goes ex-dividend today. Just bear that in mind when you look at what you're seeing in terms of the numbers. IBEX down by 0.8%. So a fairly soft session, actually, pretty much in line with what the futures were telling us. The FTSE's down by around 0.5%. Other markets are down more. I am waiting for the DAX to arrive. Tom.
Just one sector in positive territory so far. Energy up 0.6% with Brent above $106 a barrel right now. So that is the only sector across the European space that is posting gains so far in the session, up 0.6. The biggest losses coming through for basic resources. You've seen a drop in prices for silver and gold. That is weighing on that sector. Then down 1.7% on basic resources. Banks also under pressure. There was some selling that came through for financial services and banks yesterday as well. Banks currently down as a sector, down 1%. Autos down 1% as well. It's basic resources, banks, autos in terms of the biggest losses. Again, every single sector in negative territory, bar one, which is energy, up just 0.6%. And we're still waiting, it seems, for pricing on SAP, Anna.
Yeah, absolutely. Waiting for pricing on SAP, waiting for pricing on Siemens Energy. And I noticed that Electrolux is halted, so there must be some big move anticipated there. So the only one we've got a price for, of the ones we were watching this morning, is Volvo Trucks, and that is up by 2.4%. So quite a positive story coming out there. And SAP rebounding a little. We bear in mind, Guy, the need for a two-day chart on this, but it's up by 4.6% this morning.
Yeah, it was down by 6.1% yesterday. So let's just have have a quick look at the GIP2, just to give you a kind of two-day basis story, just to kind of figure this one out. So it is still down on a two-day basis by 1.8% at this point, despite the significant rally that we are seeing in today's session.
OK, let's get another voice on these markets and bring into the conversation Obi Ejikemi, who is Global Equities Fund Manager over at Carmignac. Really nice to see you, Obi. Thank you very much for coming in. Are we getting very different signals from different markets? If we focus in on what equities are telling us, are they telling us something fundamental about the prospects for AI? Or is there a huge positioning story we need to know about that explains some of the enthusiasm in April? What's your focus?
I guess my focus, and good morning, my focus is really on the underlying fundamentals of equities, which is typically driven by earnings. And what we're feeling as fund managers and investors is there's a lot of sentiment-driven moves. So to the downside in March was pretty horrific, but we've also seen a significant rebound. But under the surface, when we just look at the earnings of the companies that we invest in, actually very little has changed. So this is mostly sentiment, fear about the macro, fear about the risks that we can see from the geopolitical side. So that's one of the biggest drivers. Now, the impact is clearly seen in different places. So Europe has taken a bit of the brunt of this. The recovery of the market's not been as strong as, let's say, the US. But I think most of what we're seeing at the moment is more sentiment-driven.
Yes, and let me ask you about where that sentiment is having an impact. Cyclicals have been doing really well. This is in Europe, even though the City Surprise Index has been deteriorating. And you gave us this chart in your notes ahead of our conversation, Obi, which we've got a version of, that shows that. I mean, does something have to snap there between those two?
Yeah, and I think that is something that we're quite conscious of, especially when you have the sort of sentiment-driven rallies that we've seen off the end of March lows. Is there are risks that are slowly but surely building. Now we know we started the year with a decent macro setup, but there clearly are some uncertainties. And if you get this big disconnect between what the market's doing and what the underlying potential macro risks are, then I think the chance of seeing an equity market unwind, or at least a reversal of some of those riskier trades is quite high.
The macro risks, top of mind for you, is it inflation or is it growth or is it a combination of the two?
I think it's everything that's related to one of the biggest parts of the economy that's not really been talked about as much these days, which is the consumer. I mean, everything that's hitting, that's going to be hit by this really is the consumer. And so that's where I see some of the macro risks. And we talked about some of the sectors that are in the negative territory already this morning. Things like autos and any of those sectors. I think that's where you're going to see some of the surprises, maybe to the downside, because higher inflation, higher costs are clearly going to hit consumer spending.
Do you think earnings expectations for those consumer-linked companies and corporates are looking overly bullish at this point? Do you expect downgrades?
Well, it's hard to say how it's going to play out, but I think at the moment what we're seeing is everybody's quite happy with the current situation. The numbers that are coming through are probably okay. But I think what's going to happen is we'll start to see the real economy impact of higher oil prices. We saw even in the UK with retail sales jumping up this morning, partly because people are spending more money on filling up their cars. Well, that's got to be taken from somewhere else. I think the longer-term impact of this is going to be...
Dishwashers appears to be the place where it's being taken from at the moment, as far as I can tell on the screen at the moment. Electrolux is down by 20% to that consumer story that Anna's been flagging this morning. You miss, you get punished right now. So just to kind of to synthesize this into a kind of single piece of advice, you think you sell equity markets right now? At a headline index level, you think they're overvalued and now is the time maybe to get out?
I would be a little bit more careful. I think that the one advantage of equity markets is they're not all linked to one theme. And so some of the areas...
Which ones would you sell?
Well, I think some of the areas are quite interesting, which are, especially on the technology side, which got heavily punished. And we saw a similar thing last year, right? So they got heavily punished on the fears of tariffs last year. They got heavily punished on the fears of geopolitics this year. But actually, their earnings are quite resilient. And I think the market will reward those stocks, especially...
Hasn't it already rewarded those stocks?
Well, let's see what the earnings continue to do. And I think if the momentum continues to be there, which I think will be the case,
so
because they're not...
you would chase tech and fade the consumer?
Yeah, it's a relative story trade there at the very, very least.
So which markets am I buying and selling?
Well, naturally, I think that pushes you back to the US stock market, which for at least a few months has been somewhat forgotten, I would say. It pushes you back to the US, back to technology stocks as the longer-term structural winners. I think that story is still strong.
And you say you like companies, obviously, that have strong balance sheets and have pricing power. Any reason for concern on that front when it comes to those big tech companies that are spending a huge amount on AI? Well, we've seen these headlines overnight about, or yesterday rather, Meta and Microsoft cutting jobs because of the amount of capex they're doing, the amount of spending they're doing. That doesn't mean they're necessarily worried about their balance sheets, but they're having to be careful about the spending, maybe.
Yeah, I think they're on a different different side of the boat to some of the risks that I would be focused on. I think the job cut story is obviously is a big challenge. I think we're going to see that across the economy in many different places as a result of this sort of AI theme and AI disruption, which is not just a quarterly story. This is going to go on for many, many quarters. But I think their earnings and their visibility of earnings are going to be far more stronger, and that's going to be the reward that we'll see from the market. Remember, these stocks have been derated in this contraction that we saw in March, so they're a lot cheaper today than they were at least 2 or 3 months ago.
We were wrestling with the question at the top of the show about when the energy constraint starts to pose an impact on the build-out of AI, whether it does. Do you have a view on that? Do you have a model that shows you when that starts to become an issue for the build-out of data centres that could constrain some of the uplifts in AI that we're seeing?
Look, I think I don't have the specific numbers on it, but I think that it's going to be an issue for everybody. But energy constraints and energy costs have been an issue for many companies, especially even in the industrial space for some time. So I don't think it's a specifically new story. I think the demand for some of this AI will be so big and so far ahead of that I think that the revenue story will be fine for some of those companies.
If I want a place to hide out, is tech the place to hide out? Is it a safe trade? If I'm nervous about what's happening around the world, is that the place to go? Or are there other trades that you would recommend that give me maybe a little bit more kind of ability to sleep at night?
So tech as a broader sector, I think to call it the whole thing safe is a bit risky because obviously, as we saw yesterday with some of the software names, not all tech is the same. So I think some of the bigger cap tech, which is less exposed to some of the AI disruption, is a reasonable place because that's a structural theme that's not really going to go away. The other side of what I would call the part of the market that we like is let's go to a look at maybe some of the more defensive parts of the market as a bit of a hedge. And that's areas that actually we're working very, very well, especially in January, February, the consumer staples, some of those more defensive stocks, which will do well if there is some sort of a rotation out of cyclicals into more defensive names. I think that's another place in the market where you could see some...
You think Electrolux would be a consumer staple, wouldn't you?
Well, I mean, yes. I guess if it's tied to house moving, I don't know.
Anything like that?
A bit more complicated, maybe. But, Obi, what about volatility? What about volatility? I mean, we've seen a bit of a collapse in volatility since it shot higher in March and then came right down. We seem to be creeping higher on oil rather than jumping higher in a sort of stunning fashion. Does that mean volatility stays contained?
It's hard to know. Any event that could play out in the next 2 to 3 weeks could see us see volatility move a bit higher. I mean, what concerns me more as a fund manager is I'm concerned about volatility that's driven by a change in fundamentals. So if companies start to report that the oil price is affecting earnings and profits and therefore they're having to downgrade numbers, then that's a much bigger concern than the volatility that's driven just by the market itself and uncertainty and fear. And I think that's most of what we've seen this year. It's been more of a fear of something going wrong rather than actually the reality. And that was what would worry me more.
Obe, thanks very much indeed for coming in. Really appreciate it. Obe Ejikeme, Global Equities Fund Manager, joining us from Carmagnac. Let's take a look at the Core 6. This is what we are seeing first thing this morning. Tech is front and centre. SAP certainly rallying, got hit hard yesterday. Some of the luxury names are under a little bit of pressure. There's some big moves out there this morning, maybe not represented here. Defence under a little bit of pressure. Maybe that's the only standout story from what you see here. But SAP is on the move. Electrolux is on the move. There are some single stock stories today that are definitely worth paying attention to. Chloe Melly.
Good morning, Guy. You asked for a two-day chart for SAP. Here is a two-day chart for SAP. As you can see, we've gone into the results with quite a lot of pessimism, in part because the US peer of SAP, ServiceNow, had quite disappointing results yesterday, and that raised questions and fears around the software sector in general. But then we have this rebound today because SAP had those really reassuring figures, which eased those fears around both AI disruption and also the impact of the Iran war on business confidence and on those software companies' ability to close those deals. And so we are seeing SAP move much higher this morning. Moving on to Siemens Energy, which is also seeing some upward movement this morning. It is up. It was up a little bit more strongly at the open. It's up now 0.1% after raising its outlook because of its exposure to both AI and electrification. So it's one of the big beneficiaries of this growing infrastructure demand from data center customers and power grid customers. And so we are seeing a bit of movement there. Adyen, the payments firm, is also in the green this morning after making its first acquisition. It is buying Talon One, which is a platform for loyalty and incentives. It's the first acquisition. It's one that is received quite well, with shares up about 4% this morning. And finally, let's end with Electrolux, the home appliances company, which is most definitely in the red this morning. A massive drop of more than 23%. after reporting much weaker than expected first quarter figures. That was due in particular to a lot of weakness in the North American market, which is a really key one for Electrolux. So we're seeing a massive drop this morning.
Thank you very much, Chloe. Chloe Melly with the stocks on the move then this morning. We are monitoring what's happening over in Nicosia in Cyprus. EU leaders have all arrived now, it would seem, and they're gathering for this EU leaders summit. Emmanuel Macron has been the last of the leaders to be, well, one of the last ones to go in, and we heard from him saying that he and Merz have tasked their defence ministers to work together. So that's certainly one thing they'll be talking about, no doubt, is defence, Ukraine, money for Ukraine, Ukraine membership, all of that very much in focus, and energy policy as well.
We also heard, of course, from the Spanish Prime Minister Sanchez talking about the need for more in terms of trying to address the energy constraints. Oliver Crook is on the ground for us in Nicosia, so we'll get an update as well in the next few minutes. Coming up, though, SAP getting a lift from AI. As cloud growth beats expectations, the stock up today 5.8%, beating expectations on the earnings. Highlights from our conversation with the CFO coming up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets. So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
has been a very solid start into the year, enabling us to confirm the outlook we have provided for 2026. We increased on constant currency terms cloud revenues by 27%. We increased our non-IFRS operating profit by 24%. If you then compare that to the ranges we've guided for the outlook, you see that this is actually above these ranges, giving us, so to speak, a head start, despite what I would consider a quite adverse environment, given what we've seen in the Gulf region.
SAP's CFO, Dominic Asam, speaking to us earlier. SAP shares are higher after reporting stronger than expected revenue growth in its cloud division. The stock is up 6% right now, beating analyst estimates in terms of the earnings. On a 12-month basis, the stock is still down about 37%, so that's the context. But today, up a decent session for SAP on intraday basis, up 6%. Joining us now is Matt Bloxham, Senior Analyst at Bloomberg Intelligence. Matt, what did you make of these SAP results? Are you reassured that they are no longer a victim of SaaSpocalypse, that they can rewrite the boat, that they can reassure investors that they have a plan?
I mean, they definitely have a plan. I think this is like an encouraging update, but I think there's still a long way to go. I think for companies that have got SAP in their technology stack and have had it for years, it would be a big leap to take to a kind of a new AI startup. So they have a big opportunity to kind of retain that business, but they really do have to convince them that their AI technology upgrade works. And there's a big question about the pricing model. There's a big potential shift away from a subscription model to a usage model. That's a huge amount of exposure for corporates in terms of how people are using this. I think that could be a little bit of a kind of a glitch in the system, or something they still need to resolve.
Is Intel in the kind of same boat? I.e., the numbers look reassuring, better. They were good numbers, but if you take a step back, you realise that this is a business that's still got an awfully long way to go.
It definitely has a long way to go. I think maybe an interesting difference for me is that the legacy of Intel kind of CPUs and having historically close to 100% share in that business is coming back into fashion. We're kind of through the huge focus on training AI models now into inference AI usage, and as corporates use it more, they're turning back to general processing, the CPU compute that Intel's always provided as the kind of foundational level of that. So
are they a leader in that space, or is it?
Yeah, so the Xenon product offering is what's kind of really driving this growth again. So there's a big opportunity for them there, and it's kind of coming back. I think the other thing that's still kind of work in progress is the foundry business. So this is their idea of essentially becoming kind of like a US version of TSMC, and I think they're still kind of largely reliant on their own business to drive that, but the fact that their CPU business is growing helps that. And we've had signals from, for example, Elon Musk, who also wants to build his own chips, that he's going to use Intel's foundry business for that. So early stage for that bit, but some encouraging signs there.
That is interesting. Help us understand the job loss story then, Matt, because we've seen from Meta and we've also seen from Microsoft some substantial announcements around jobs cuts. Something of a, I mean, it's easy to conclude, is this a sort of AI-related jobs apocalypse? But then there are going to be plenty of other AI growth stories that are creating jobs, and even these businesses are probably recruiting on some AI roles. So give us the context that matters.
Yeah, so 23,000 jobs across these two businesses, 14,000 of them at Meta and 9,000 or so at Microsoft. For Meta, it's about 10,000 roles that they're getting rid of, and another 6,000, so maybe kind of 8% or so, where they're just not going to fill vacancies. So it's quite significant. My sense is that at least some of this is them readjusting the business after overhiring kind of through the kind of pandemic period, where we saw a lot of these big tech companies kind of really, exactly. Obviously, they are spending huge amounts of money on AI, and they need to balance the books to some degree and show their investors that they're being responsible with their costs. I mean, I did some rough numbers that maybe this is like a couple of $1 billion maybe of operating costs for them out of a total cost stack of $120 billion. So it's relatively small, but I guess everything helps when you're trying to kind of show that you're managing your margin when you're making these big investments.
Meta and Microsoft both obviously investing heavily in terms of the hardware. Is DeepSeek going to be another reminder that maybe the costs that are being sunk into AI infrastructure don't need to be there? They're coming out with a new model. They've come out with a new model. They say it's the most powerful open source model that's currently available.
Yeah, so this is the kind of the V4 model, and certainly seems to be pitching as comparable on performance, but way better in terms of efficiency. And obviously, as more corporates start to use AI, they're going to be really focused on how much it costs to run these things. Now, I mean, there clearly is a bit of a kind of China, non-China divide here. So I think, you know, you're not going to see a huge number of US or developed Europe companies move over to DeepSeek, but for the rest of the world, this kind of is a kind of serious proposition for them. So it's an interesting development. It definitely kind of shows there's a lot of competitive tension in the market, and there's lots of different ways to kind of evolve this. And I think there's a lot for the likes of OpenAI and Anthropic and Google to learn from the approaches that DeepSeek is taking to reduce their own costs. Because ultimately, all these kind of big developed market AI companies are going to come under pressure from their customers about how much it costs to run AI.
Matt, thank you so much. A really good rundown of all the tech news overnight and this morning. Matt Bloxham from Bloomberg Intelligence. Let's move on to the oil price story. Oil prices in flux, but moving higher broadly this morning as uncertainty over talks between the US and Iran threaten to further delay flows from the Persian Gulf. That's as both sides maintain their blockades of the Strait of Hormuz. President Trump has ordered the US Navy to shoot any boat putting mines in the strait. For more, we're joined by Waylin Sun, who is our oil and shipping reporter and somebody who tracks very carefully what is and is not getting out of the Strait of Hormuz. Waylin, good to speak to you. Thank you so much for joining us. Bring us up to date on what is getting out right now. We have these two blockades in place. We see reports sometimes suggesting that maybe some Iranian ships are getting out, but the US administration saying no, that's not the case. What are the facts that we can verify?
So traffic through the strait, traffic through the strait seems pretty empty right now, and these are ships that are turning on their transponder signals. We don't know for sure how many ships are going through dark, but safe to say these are Iran-linked ships. This morning at Singapore time, we saw a VLCC, which is a super tanker, laden with Iranian crude, attempting to transit the Strait of Hormuz. So we don't see any merchant vessels going in or out, signaling clearly that they're going through the strait. So it's safe to say what we are seeing now is a reverting the status of the Strait of Hormuz back to what we saw in the initial phases of the war.
So we don't know when it's going to open, and even when it does open, we don't know how long it's going to take to reopen fully. You saw that conversation, obviously, last Friday, taking place. So what are you hearing about how this process could unfold? Even when it does open, how long will it take to get back to normal?
It's anybody's guess because the calculation for the reopening of the strait becomes quite different with each passing day. And if we look at how oil production has been shut in, the longer each day that the strait doesn't reopen, the harder it is for oil production wells to resume production. Because of the way the soil and how the refineries work, they need to be in constant utilization for them to work properly. So today there is a Goldman Sachs note that comes out to say that oil production is still about 14.5 million barrels per day less than before the war started. And with each day that the strait remains closed, the longer this resumption of oil exports would be when it reopens. So if you think about it, if the strait reopened right when the war started, it would be sort of like a V-shaped recovery. But now, the longer it drags on, it becomes more of a U-shape, a very, very shallow U-shape for oil exports to resume through the strait.
Again, we get this different kind of narrative emerging. Equity markets looking for that V-shape still. Maybe other markets looking at a fairly different picture. Waylin Sun, thank you very much indeed for the update. That's the problem is, though, at the moment, we don't know how long the energy crisis will last for. We don't know when it's going to reopen, and when it does reopen, we don't know how long it's going to the effect is going to last.
Are there three different scenarios you could look at when it comes to the Strait of Hormuz? One, a continuation of what we're seeing right now, which is a standoff. Number two, a very thin, slim deal that the two sides come to. You don't get a comprehensive deal. Number three, you actually return to military action. You actually turn to full-on conflict. And we're quite close to that. We're shooting at vessels at this point. Trump doesn't want to go there. But that is the risk.
And we have no meeting in the diary. We do have a meeting, though, of EU leaders. We'll get some analysis of that. That's coming up shortly. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We are 30 minutes into the Friday session. European markets turning cautious. There's been some earnings strength coming through from the likes of SAP, and that is helping the DAX, which is up 0.1%. But across the benchmark in Europe, you're seeing losses of 0.5%. You'll continue to see that divergence, particularly when you look at the US future story versus what you're seeing in the European equity space. And that has been something of a trend this week. On the upside, you've got the likes of tech and energy. That is helping to some extent, but again, across the benchmark, down 0.5%. Again, it's coming through for the DAX, down 0.6 on the CAC current over in France, and losing 43 points so far on the FTSE 100. Guy.
Yeah, Siemens Energy and SAP certainly stand out stories. We'll come to the leaders in just a moment. This is what the internals look like. 420 down, 158 up. So definitely a bias on the downside in terms of what we're seeing in terms of the breadth this morning. Volume again. This is the story. Our pension funds are kind of sitting on their hands. Are institutions selling? Are they not selling? Feels like the fast money has definitely been a driver of the story, which makes this kind of a very narrow narrative that we see around equity markets at the moment. And Europe speaks to that on a daily basis in terms of the volume picture that we are seeing. Leaders, SAP, I urge you to take a look at the two-day chart just to give you a sense of context as to the rally that we are seeing this morning and the offsetting factor of what we saw yesterday. So we're kind of back where we started at the beginning of Thursday's session. Total is up quite nicely. Volvo Trucks is up quite nicely as well, painting a positive picture about demand there, particularly over in the United States. You listen to the kind of the trade on the trucking sector at the moment, and they're painting quite a positive picture over in the States as well. Let's talk about what's happening on the downside. You are seeing some weakness in some of the pharma stocks this morning, pretty much across the piece. Astra is one of those. It's down by 2.4%. Electrolux is the real standout story. Rolls is down this morning, but Electrolux, I think, is the real standout story. A real downside move, just reflecting this consumer caution that we are seeing, and you're seeing stock after stock, particularly in this space, under significant pressure. Electrolux is just the latest version of that. High costs on the input story, but weak demand on the output story. That is the narrative that some of these stocks are having to deal with right now, Anna.
Yeah, absolutely. They cited the US, didn't they? But we also saw weaker consumer confidence out the UK as well. Let's get to some other stories that we're looking at this morning. TSMC shares climbed to a record after Taiwan's financial regulator eased limits on single stock fund holdings. The Financial Supervisory Commission is planning to relax a rule capping money managers from putting more than 10% of a fund's net asset value into any stock, allowing up to 25% in certain cases. JP Morgan says the move could draw more than $6 billion of inflows. Japan's key inflation gauge accelerated for the first time in 5 months, suggesting price pressures were building even before the full impact of elevated oil prices ripples through the economy. The Bank of Japan will release its next rate decision on Tuesday. Politics in Japan also very much in focus. And the European Union is warning member states that efforts to strengthen safeguards in the bloc's trade agreement with the United States may cause the deal to unravel. The EU's trade chief, Maros Sefcovic, will discuss the deal with US Trade Representative Jameson Greer and Treasury Secretary Scott Bessent in Washington. That conversation taking place later today. Tom.
Meanwhile, sticking with the EU, Bloomberg learning that leaders have signalled prelim conditions are now in place for Ukraine to begin the first stage of the membership process. This comes after the bloc gave final approval to a €90 billion loan package for Kyiv. Of course, that took some time to get across the line, but they've done that now, a big achievement for Europe. Bloomberg's chief Europe correspondent Oliver Crook joins us now from Nicosia, Cyprus, where leaders are gathering for that summit. Let's start on the question of Ukraine, Ollie. How real is this accession for Ukraine to the EU? Is that process now gaining momentum?
It absolutely is, Tom. And listen, we should say that this has been a really spectacular couple of weeks for Volodymyr Zelensky, the president of Ukraine. First, with the defeat of Viktor Orban in the Hungarian election, and a lot of things that flow from that. We should say that Orban himself did, in the end, approve that €90 billion loan that he initially agreed to back in December. There were real doubts about whether or not this money would get to Ukraine, and in a timely fashion, it's really seen as the lifeline, really the sort of survival money for Ukraine for the next 2 years, and that now seems to be squared away. So a huge amount of relief for the Ukrainians. They also passed the 20th sanction package from the European Union. They're now beginning work on the 21st sanction package, again, without the sort of difficulties of the Hungarians. But as you point out, Tom, this is the next big step for the Ukrainians, if and when they will join the European Union. It's something I spoke to the Prime Minister of Estonia last night in a discussion about what their position is and what the timeline they see. Have a listen.
Yes, we probably will be talking about this today and next meeting and so on. Our position is that we support Ukraine in the European Union because, to be honest, there's no other way. Ukraine belongs to Europe and Europe is stronger with Ukraine.
So absolutely fundamental for the Ukrainians. And what the Ukrainians are now trying to do is get a definite timeline for when they could potentially join the European Union. I spoke to the man who was in charge of negotiating that from the Ukrainian side a little bit earlier this week in Brussels. They say they're going to be ready by next year. I think by anybody's timeline, that is a very aggressive timeline. So that's what we're going to try to get from some European leaders. How long do you think it will take for the Ukrainians to get into a position to start really accelerating the conversation about them joining the European Union? The Lithuanians, for example, said yesterday could be by 2030. So we'll speak to a number of leaders here about that.
So that's certainly an important conversation taking place there in Cyprus. Ollie, also under discussion then, how Europe responds to the energy situation that we're seeing coming through, but being passed on to Europe from the Gulf, of course. What measures are really under discussion there? We've heard talk earlier this week about jet fuel, about energy taxes. Pedro Sanchez talking about how he wants fiscal rule flexibility for energy. What's really in focus for the European leaders meeting?
Yeah, I think Pedro Sanchez's comments just a few minutes ago helped sort of focus the attention. We heard from Giorgia Meloni, the Prime Minister of Italy, last night, saying that basically the EU measures that had been proposed so far were a good start, but really don't go far enough. And that's a message that Pedro Sanchez echoed this morning. So what he is calling for is talking potentially about loosening fiscal rules. This is obviously something that's very important, particularly post-COVID, post that energy crisis. There's not a lot of fiscal space in a lot of these different sort of nations. Also a conversation potentially about windfall taxes across the European Union to energy companies to help finance some of these things. So these are two sort of concepts that have been spoken about in the background, but now are coming to the foreground in a sort of very public discussion. So a lot of sort of news coming from the Spanish. We should say another sort of interesting storyline that we're watching here on the sidelines of this meeting is this story out from Reuters just a couple of hours ago saying that the United States is looking at possible reprisals for NATO members that did not help them out with their initiative in the war in Iran and the Strait of Hormuz, apparently looking at potentially contesting or changing the U.S. position in recognizing the Falkland Islands as part of the United Kingdom, but also critically, if this is in fact true, an email circulating around the Pentagon saying that they're potentially considering kicking Spain out of NATO, the only nation that is not willing to reach that 5% spending target. So a lot to discuss here, a lot of concerns, of course, about NATO and collective European defense and other sort of articles that might need to be enlisted in the absence of a sort of full U.S. commitment to NATO, which Trump has been calling for the last couple of weeks a paper tiger.
You do kind of wonder what happens to the Rosen Naval Base at that point, but we'll park that thought for the time being. Ollie, thank you very much indeed. Oliver Crook reporting from Nicosia and the EU leaders meeting that is taking place there. Oliver will be speaking, Anna, to various presidents later on throughout the morning.
Yeah, absolutely. The presidents of Lithuania and Romania later today. He was just setting up some of that conversation for us, talking about the Ukraine accession conversation. So that's certainly going to be in focus. That all on the sidelines of that EU meeting, Guy.
OK, let's dig deeper into the energy pressure facing Europe in the wake of the Iran war. Let's bring in Maria de Mertzis, Professor of Economic Policy at the European University Institute. Maria, what can Europe do this time to shield its economy, its consumers, from the ongoing energy crisis? And are we in any way in the same situation that we were at the end of COVID?
We're not in the same situation. We are in a similar situation, but I think it is much lighter now than what it was in the energy crisis in 2022, and indeed in the pandemic. What you see countries are doing right now is indeed having measures that are extremely targeted. That means that it is really focusing on helping those that have had a disproportionate weight of the current energy bill. And this is very much also the advice that the Commission is saying, given that, of course, that fiscal space is much more reduced now than what it was 3 years ago and 5 years ago. Also, the European Commission is urging countries to be absolutely ready to come out of these measures as soon as we come back to some normality, whatever normality might mean these days. So I think what we've learned from the two previous crises is really to focus, identify the weakest as much as possible, quickly as possible, and really help those, but also be very, very quick in reversing those measures. I think the one thing that we need to see is whether the European Commission will tolerate some more flexibility on its own fiscal rules. We have done it before. However, every time we break the rules because we have to, the credibility of these rules is eroded. So, we need to wait and see whether the Commission will actually pursue that.
Do you think demand destruction measures are going to be on a nation-by-nation basis? It kind of feels like the Commission is willing to take easy measures, is maybe the wrong way of putting it, to talk about those, changing taxation around electricity prices, etc. But when it comes to actual demand destruction measures, i.e. don't travel, don't do this, it comes down to national capitals to make those difficult decisions.
Absolutely, it always does. And also there is no need to coordinate at that level right now because the shock is manageable, I think. So it is always the countries that will take those measures and will bear also the political cost or gain of these measures, absolutely.
Maria, if I was a CEO of a big energy company in Europe, should I be worried about windfall taxes? Does that gain traction, do you think?
Oh, yes, we have used this measure before. And to be fair, I think that corporates have been quite understanding of these measures back in 2022 because they were really very, very big and they were windfall. They were not structural. So I think there is some understanding on the corporates with differentiation, of course, depending on how much you're hit by the shock. On understanding that this is exceptional and everybody has a role to play in this crisis. So I think the experiments have shown us in 22 and 23 that corporates were very cooperative when it came down to this.
I just want to be clear in terms of the energy shock facing Europe right now. If this is prolonged, the standoff that we're seeing in the Straits of Hormuz, do we end up with shortages of oil and gas in Europe or just higher prices?
No, I think it's both, and we will see first the prices moving and then the shortages. There is actually a discussion about what would mean for the quantities on the energy right now in the EU, simply because we have depleted the backups that we had on energy, all the stockpiles that we have. We are actually depleting those. So we are in an urgent need to restock, to pile up again. We will see this, but it all depends on the prolongation of the shock. So it's very difficult to forecast this, but it certainly is in the policy minds, in the minds of the policymakers.
Maria, away from the direct economic impact of what we're seeing in the Middle East, I know that there's been a lot of tension amongst typical allies, certainly around NATO and amongst NATO members, and we're seeing that most recently just this morning. How are the European leaders who are gathered there thinking about those tensions and what Europe needs to do in the face of them?
It's very interesting because the Cypriot presidency has actually put on the agenda the discussion around Article 42.7. This article is an article of the EU treaties, and it is the equivalent of the Article 5 of NATO, which actually talks what happens in the occasion of military attack, and the assistance that countries, members, allies will provide. We do not have a scenario planning of actually invoking Article 42.7, and Cyprus, I remind you, is not a member of NATO, and therefore they're very eager to understand what would happen if we were ever to invoke this article. The reality is that the NATO procedures are the only procedures we have which are ready enough to answer that question effectively. So on the European side, we do not have an idea of what invoking Article 42.7 would actually look like in terms of preparedness. So I think it's very urgent that the European countries think about what this would mean, because, as we've heard, it's not obvious that the US would actually help in the occasion of an attack.
And within or outside NATO, I suppose more spending on defence is the thing that's important, Maria. How convinced are you by the plans that European governments have talked about for increasing defence spending? Clearly, Germany's the big one that stands out right now and such a big pivot, but they have the fiscal space. Elsewhere, are you convinced by a willingness to spend on defence?
Oh, absolutely. And you see it already in the public debate as well, because given the very short fiscal space that exists, there need to be cuts elsewhere. You need to take it from elsewhere and give it to defence. But I think that battle has been won. It happened last year, and all countries are very convinced about the need to spend more defence and are actually doing that. Now, the speed at which they do it, of course, varies between countries. Germany is the one that accelerated the most. It was also the country in need of acceleration, but everybody else is doing the same thing, and we will reach the 5% within the 5 or 6 next years.
Maria, thank you very much. Maria de Mertzis, Professor of Economic Policy at the European University Institute. Thank you very much for joining us. Coming up, we will talk about some of the themes around energy and how it's affecting the aviation sector. Airlines scramble as a fuel price shock hits the industry's profits. We'll bring you the details next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history. and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back. 48 minutes past the hour. Let's talk about what is happening in the airline sector. Increasingly on the front line when it comes to the fuel shortage story. Global airlines certainly scrambling to manage jet fuel costs on the back of what we are seeing in the Gulf. American has cut its full-year outlook. Southwest declining to update its full-year profit guidance. Similar story over here in Europe. Let's bring in Bloomberg's managing editor for aviation, Benedict Campbell. He joins us now from Berlin. Benedict, this is the week that it felt like the airline sector started to put size and scope on the challenge that it now potentially can face, would face, maybe will face. We don't know yet. What do we know at the end of this week that we didn't know at the beginning of the week?
Well, we certainly know more of the cost picture that is facing the industry. We heard from American, they said that they expect $4 billion in additional fuel costs for this year. As you said, we've had a number of airlines reporting this week out of the US principally, starting with Alaska, United, Southwest, American, as I said. And the picture there is fairly universally bleak. In terms of the outlook, they all say that we don't really know what the rest of the year will look like. As a result, they've either suspended or cut their forecasts. The only good side of this really is that the demand picture seems to be holding up. So the customer is still booking. The customer is still booking expensive tickets. And as a result, the airlines are able to sort of hand off and pass through some of these costs, or actually quite a lot of these costs, to the customer. The question really is, as this continues into the summer and beyond, will the customer still be able or willing to stomach these additional costs? And that could quickly change if at some point customers start saying, I'm not going to take this long-haul trip, I'm going to drive somewhere instead, then very quickly the airlines will have a very different problem on their hands.
Yeah, that's really interesting, certainly in the face of some of the consumer confidence data that we've been looking at. It's interesting that it's holding up then, Benny. What about the self-help measures that airlines are taking here? I know we've got this example of Lufthansa adopting a sort of budget model when it comes to some of its fare structure. Are we seeing surcharges spelt out on bookings yet for fuel costs? I remember periods where we've seen that, and that was quite normal for a time.
Yes, all of the above, really. So we've seen these fuel charges, these surcharges happening for a number of weeks now. Really, a couple of days after the war in Iran, late February, that's been going on, and that's been going on across the world. We've also seen airlines take out capacity quite robustly, so they are scrapping flights that they didn't feel were profitable, even when fuel was low, and certainly are unprofitable now. We heard from Lufthansa they are scrapping a whole subsidiary, their city short-haul operation, because that was also on the cusp of being unprofitable, and they took this step now. really airlines looking left and right where they can cut costs and where they can sort of rein in their spending. Some airlines have suspended or grounded some of their more fuel-guzzling aircraft, like the old Airbus A340. So a lot of those things are happening, but they're sort of all on the margins for the time being. Obviously, the big one that everyone is sort of waiting for, the big bang, shall we say, is consolidation happening in the industry. And again, that's where all eyes are on the US. A lot of noises, speaking of what we learned this week, a lot of noise coming out of the US industry that consolidation might well happen there as a result of these additional costs.
Yeah, Spirit Airlines seems to be front and centre and certainly part of the thinking of President Trump and his team for now. Bloomberg's managing editor for aviation, Benedict Carmel, on the update in terms of the impacts on the global aviation sector as a result of the energy crisis that we are witnessing. Thank you. We're wrapping up, of course, a big week of corporate earnings as well. Here to walk us through what we've seen so far, Rod Turnbull from Bloomberg Intelligence. Rod, I'm looking at the S&P 500 and the earnings story there, which is that about 80% of companies on the S&P 500 that have reported earnings have beaten. Maybe it's not such a bright picture in Europe. Walk us, what has stood out to you in terms of the European earnings season? Maybe you can fold in some US names as well. Is there a clear takeaway at this point, at the end of this week?
No, sure, I think there is. You know, if we take a step back, 2.5 weeks ago we sat here and we looked at markets, major indices at support levels or breaching support levels. You wind that forward and, you know, we're at all-time highs. And the question becomes why? You know, despite the fact oil's 106 and we've still got no resolution in the Middle East on site, right? And maybe part of that response is cash. So our strategists look at $1.35 trillion worth of cash sat on companies' balance sheets in the U.S., in the S&P 500, generating about $475 billion of cash flow. That's a huge amount, and that'll act as a buffer. The European results season, we'll see some benefits of that, obviously. And actually, it's been okay. You know, if we look at it overall, currency's been an impact. So we've got sales flat. Add currency back and you get maybe 3-4% growth in sales, and earnings is growing 3% so far. Again, add currency back, you get maybe 5-6% growth. So it's not too bad so far.
What do the forward-looking indicators look like, though? What are the companies telling us about what happens next?
Well, interesting. I mean, you had Matt Bloxham on here talking technology just a little while ago, and you can see the benefits that AI is having and that huge cash pile that's flowing through an awful lot of the companies, right?
Outside of tech?
Outside of tech, industrials, which is that beneficiary of technology as well, right? So we've got ABB, who had triple-digit order book in data centers, looking like it's taking market share. And, of course, what we'll have next week is Schneider Electric report, which will, again, give us that little bit of an insight. And they're probably coming off a higher base than ABB is as far as their DC exposure is concerned. But that'll give us another piece of the puzzle in terms of how that AI capex is flowing through European companies.
Everybody wants to sell things that go into data centers, whatever they are. Consumers, how are consumers holding up? Because, I mean, overnight, we've got some UK consumer data that looked a bit gloomy. But from the earnings picture, what does that tell us?
I guess we always get hit with inflation a little bit harder in the UK than elsewhere. But, you know, actually, again, if you look at Nestle, Danone, L'Oreal, you know, they beat in many instances, so that staple side of the equation looks okay. And even in luxury goods, you know, you take out the Middle East exposure. LVMH is a good example. They had 1% organic growth. It would have been 2% organic growth, which would have been in line with what the market was looking for. So again, it's not terribly bad for all that's being thrown at them. And the one addendum to that as well is if you think about the U.S. consumer, how top-heavy it is in terms of the earners who consume in the U.S., got a big IPO pipeline coming. There's probably an awful lot of wealth generated, and you do wonder if luxury will see more North American support having got over its China hangover.
What are you most excited about for the earnings next week, Rod?
I think, you know, again, it's those little indicators. Atlas Copco. Yeah. So we can get another look into the semi-supply chain. We heard VAT Group say that, you know, there's a shortage of helium and bromine. So there are constraints in that supply chain despite all this capital. And we have to remember, there's a lot of capital chasing all the same stuff. So there's going to be constraints. And I think in that, the message is inflationary pressure. And are we taking our eye off the ball a little bit? Maybe it's not tomorrow, but over the course of this year with markets at highs, supply chains start to creak and that inflation starts to come through. And then we've got Microsoft and Meta. And as I say, Schneider will give us that European feel on DC spend.
Great stuff, Rod. Thank you very much indeed. Nice
Pleasure.
to see you.
Thank you.
Rod Turnbull joining us from Bloomberg Intelligence. That's all next week. The weekend is almost upon us. London Marathon this weekend?
Not personally, no. You, Tom?
I've run a marathon, a single marathon.
Excellent. That's it. You've ticked that
This
box
week
then.
has felt like a marathon to me.
Yes.
But it's beautiful weather for London Marathon. Perfect.
Yeah.
Well, I don't know. Good for watching. Is it too hot for running? I'm not sure.
Tom is barbecuing. I think we just kind of we'll wait for the smoke signals from North London.
I'm interested to see that we've got the Netherlands King's Night, Koningsnacht, ahead of Koningsdag on Sunday nights. If you need a party on Sunday nights ahead of what will be an extremely busy week next week.
Is that a big party in the Netherlands?
It's a very big party. Amsterdam, Utrecht, Rotterdam.
That sounds. There's two. The Saints are in action this weekend, both in terms of Southampton Football Club and Northampton Saints against Bath. Semi-finals, the FA Cup.
Yeah, we need Arsenal
good
to
sport.
beat Newcastle, 5:30 tomorrow.
Yeah, Arsenal. Do you want to talk about Arsenal?
Not really. Have a great weekend, everyone.
Yes, we've got some great newsletters out over the weekend. Enjoy them. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bloomberg understands that more peace talks between the U.S. and Iran are being hindered by public threats and social media posts from President Trump. After a challenging comeback, Intel delivers a blockbuster sales forecast that shatters Wall Street expectations. And 1 year after shocking Silicon Valley, well, China's DeepSeek unveils its new flagship AI model, calling it the most powerful open source platform. So there is a lot to unpack. I know it's been a busy week. It's been actually a very, very busy month. If you look at the markets, look, it's really all about the chip stocks or chip makers seem to be the standout performers on a day when other sectors are under pressure, as a standoff between the U.S. and Iran over oil shipments from the Middle East showed no signs of easing. I'm looking at the S&P futures gaining 1.3%, Brent crude over $105. Now, again, traders will be watching a couple of things, signals from the U.S. and Iran, along with shipping flows for clues on energy supplies. And then they're also looking at data, that German April IFO business figure coming in at 84.4, a little bit below the estimate of 85. 0.7. Let's also take a look at the markets map here in Europe. Now, again, a lot of the focus, of course, is on earnings. I would suggest it's really on forward guidance, given all of the uncertainty. So their outlook on inflation, also how much capex they need to spend, whether that goes up, maybe because of some inflationary forces. And you can see there's a little bit more red than, for example, U.S. futures with the CAC 40 down 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. In just a moment, we discuss the latest from the White House on the Iran war with our Deputy Washington Bureau Chief. We're also joined by Wei Li, Global Chief Investment Strategist at BlackRock. But let's begin with big tech and AI. Now, Intel shares are soaring on a blockbuster sales forecast that shattered Wall Street expectations. Intel, pre-market, gaining more than 21%. We're now joined by Matt Bloxham, our senior analyst for Bloomberg Intelligence. Matt, this was a bit of a surprise. I mean, Intel is absolutely booming. What have we learned from their earnings?
We're learning that AI technology
is alive and well.
but it's transitioning into the next phase, which is away from training, which is heavily reliant on NVIDIA chips, into inferencing. Like, companies are starting to use technology, and to do that, they need a different kind of technology to complement it, which is back to the old school CPUs, the kind of the once dominant domain for Intel. And so they're seeing huge demand for their Xenon processors, which can kind of carry out that inferencing. So yeah, it's kind of back to the old school vibe, really.
So S&P and Intel doing great, but then you also have Microsoft and Meta going through quite big job cuts.
Yeah, so 23,000 jobs across those two companies, 8,000 losses at Meta, and another 6,000 posts that won't be refilled, and another kind of 9,000 or so at Microsoft. I think some of this is a bit of legacy hangover from overhiring through the pandemic period, but obviously they are both spending big sums of money on AI, and they need to demonstrate to investors that they're being responsible about managing their cost base. So I think there's some of that coming into play. I mean, for context, I did some rough numbers. $2 billion maybe of headcount costs will come out of Meta on the back of this, against a total cost base of $120 billion. So it's relatively small, but I think it's an important signal that they're kind of thinking about their cost base and trying to manage these additional investments they're making in AI.
Okay, Matt, thanks so much. Matt Bloxham there, our Bloomberg Intelligence senior analyst. Now, Bloomberg also understands that President Trump's threats and social media posts are hindering the process of further U.S.-Iran peace talks. Now, we're told that Trump's Truth Social posts, as well as his decision to continue with a naval blockade of Iranian ports, have hampered mediation efforts through Pakistan. Now, we're joined by Laura Davison, Bloomberg's Washington Deputy Bureau Chief. So, Laura, how has this behavior basically been impacting progress?
Essentially, the Iranians aren't liking it. Trump's strategy of going out with big, bold, maximalist threats, changing demands almost day by day, throwing out these deadlines, then backing off of them, have indicated to them that he's not negotiating in good faith, and that he's not a partner that he can trust. And they've essentially said, look, we're not going to negotiate while under these threats. This is also coupled with the blockade, the naval blockade of the Strait of Hormuz that Trump has also implemented in recent weeks, that have just sort of furthered hardened their positions here, that that Trump is looking for a military buildup versus looking for some sort of ceasefire or way to back down. And this just really shows that there's a very much a different negotiating tactic that may work in sort of the New York real estate scene that Trump has been able to use effectively in business and with other world leaders, but translating this to a really high stakes war conflict in the Middle East, both inside and outside the White House, there's worry that Trump is actually worsening the situation and prolonging the war.
So, Laura, President Trump says that Israel and Lebanon will extend their ceasefire. So what more do we know about that?
Yeah, so this was a ceasefire that was reached a couple weeks ago, and he extending it for 3 more weeks. This is, while not directly central to the U.S.-Iran conflict, it is a part of this because it's there's been essentially a proxy war going on between Israel and Hezbollah, which is an Iran-backed group that operates within Lebanon for some time. And this is part of what, Iran wants to also see the fighting there stop there and have the attacks from Israel stop. So having this ceasefire, a 3-week ceasefire is a positive sign that potentially the U.S. talks could get back on track. Without that, it's one piece of the puzzle, but it's a relatively small piece of sort of the overall problems that the U.S. and Iran still face that they need to work out, including, what's going on in the Strait of Hormuz, the future of Iran's nuclear program, its ballistic missile program, and what life looks like in Iran going forward.
Laura, thank you so much for the update. As always, Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Now, joining us now is Wei Li, Global Chief Investment Strategist at BlackRock. Wei, thank you for joining us. When you look at, what we've talked about in the past, you always say AI is a megaforce. So we'll talk about energy and U.S. and Iran in a second. But has anything changed? I mean, it does seem to just accelerate every time.
In terms of AI, I think we have seen two developments. The first is that if you look at the revenue ramp for model developers, we're seeing unprecedented speed on that front. And then the second development is that the capacity is becoming more constrained. The constraint has become really much worse compared to before. You look at GPU, you talked about CPU, and data centers, they're really becoming quite profitable. Even old chips are becoming quite valuable to lend out, as Matt was just saying just now. So because of this, I think this is the most clear evidence we need to see to show that the significant capex spend so far has not been misallocated. And against that backdrop, more capex is good, not bad. And we have seen more capex so far this year, 60% higher compared to commitment and what realized last year, which was already record.
Is that a concern? So the higher capex, is it because chips are getting more expensive? We also had a story yesterday about ASML or the infrastructure, or is it inflationary?
Well, I think in part it reflects the higher prices. In part, it reflects greater conviction in the AI transformation. And the last thing I would say is that there has been some development on the technological front in terms of energy generation, power generation that allowed companies to up their capex spend, right? So, for example, this idea of behind-the-meter power generation that doesn't require grid connection, and energy was one binding constraint. So as we see that improving on the margin, we see companies feeling a bit more comfortable with guiding up capex, and valuation has become cheaper compared to before. Tech has fallen back in line in terms of valuation versus broader market. Earnings are strong, so we're overweight.
Overweight in all parts of AI. Again, there are questions. We have the new model by DeepSeek. There's this big race between LLM models. Is that too dangerous? I mean, does it really make a difference who comes on top?
It does over time, and I would say right now we're specifically overweight semis and hardwares, because when it comes to the application layer, so right now we're in the build-out phase, but when it comes to the application phase, I think the jury is still out. Who is going to win? Is it the ultimate kind of model provider and compute provider, or is it going to be the provider of data, IP, and patents, right? So I think on that front, jury is still out, but the enormous amount of power and commitment that we have seen so far already keeps us overweight broadly on AI and U.S. equities.
Wait, I mean, U.S. equities, despite the volatility in the price of oil and the fact that we don't really know where this conflict is going?
Well, that's actually really remarkable, because if we do a mark-to-market versus pre-war, oil prices like 50% higher, net gas prices significantly higher, especially in Europe and APAC, and rates are quite a bit higher, front-end and back-end, right, to the tune of 40 basis points in U.S. and also in Europe, and yet risk assets are holding up really well. U.S. equities up mid-single digits because of the perceived and also actual energy independent spreads have been holding up really well throughout the whole of this conflict. That really makes the current market backdrop feel a bit easy and make our overweight risk position feel a bit uneasy because the strait remaining closed is a big risk. Having said that, we have seen very clear evidence of economic incentives to resolve the conflict, right? Because all parties have really fallen short of major kind of escalation every single time. And in terms of the accrued macro damage, we're talking about up until now to the tune of 0.2%, 0.3% to global GDP, more heavily concentrated in Europe and APAC, less so in the US, which is why even before we have clarity in terms of kind of the resolution of the war, we were able to dial up risk 2 weeks weeks ago by upgrading U.S. and emerging market equities. The last thing I would say is that markets can only focus on one thing at a time, and right now it's earnings, and earnings are good.
Yeah, earnings are good, but is there a concern that actually they slowly deteriorate in ways that we're not quite figuring out? I mean, again, inflation's a big question mark.
It's possible. It's possible because the nature of broad supply disruption is stagflationary, right? So it will impact
nightmare
earnings
for everyone. Let's
yes,
be very
for
clear.
central bankers, for investors, and if this persists for a lot longer, it's possible that it could impact earning both from a demand consumer perspective and also from a cost of production margin pressure perspective. We're not there yet, and because of the recognition that economic incentives are seemingly influencing decisions, we're leaning into the momentum right now.
Wait, we're just getting some breaking news. So this is a Bloomberg headline saying that China has added 7 EU firms to export control lists over links with Taiwan. Again, we haven't really talked about the U.S. versus China for quite some while because there's so much else going on. But is this a risk that could come back on in full force?
While there are themes that are getting accelerated by the Middle East war, no matter what happens from here in terms of the next kind of headlines that can come from anyone and anywhere. And these themes include geopolitical fragmentation, it includes energy security independence, it includes infrastructure and supply chain independence. And we are in this world shaped by supply. And in the face of more demand than supply, you can see headlines like this. It's not entirely surprising.
Wait, what do central banks do? I mean, there's a lot of... I don't know if that concern has been walked back, but that they actually act too quickly. Also, remembering 2022 when they acted too slowly.
Yeah, they were behind the curve back then. I think it's becoming so hard for them because inflationary pressure, even before the Middle East war, was already, not very comfortable, right? Goods prices are starting to come back, and service prices have been persistent because of the wage pressure. And on top of that, you throw in Middle East conflict that is not just energy, it's broad-based supply chain shock. And then on top of that, AI is actually inflationary first before it can be disinflationary. Look at what it is doing to energy prices, electricity, and labor cost. When you bring all of this together, already it was a very fine balance that central bank had to really strike the balance of. And now I think markets have swung wildly in terms of rate repricing. And if headlines resolve, we can see the pricing kind of coming back in terms of rate hikes. But I don't think we're going back to the previous environment where multiple cards were on the table, because we're just talking about, already pressure is there and incrementally more so.
What did you make of the Kevin Warsh testimony? I mean, it's only one vote, but actually he could really be divisive if he does push for interest rate cuts too soon. Yeah,
he is only one vote, and I think we are going to, what we have already seen in terms of the disagreement and divergence on the committee. I think that is really a feature of this environment where the trade-off facing central bank is becoming so much harder, and you throw him into the mix is just kind of a ramification of the environment that we're in.
So I love the way, you're overweight U.S. EM stocks, you see AI megaforce accelerating. Is there something where you see a big dislocation that actually is a good time to sell? I don't know how much you worry about private credit or anything, like that's still bubbling in the background.
I would say where we have underweight is specifically long duration government bonds and also long duration credit, but we like front end for income and quality income. Because if we look at, for example, U.S. Government bond market term premium, 10-year is currently around 66 basis points. Given where we are heading towards in terms of fiscal, where we're heading towards in terms of the inflationary pressure, and also the fact that treasuries haven't been very effective as a diversifier this time round. So investors are going to think twice about its balanced property in portfolio. You bring all of this together, I think over the longer term premium in U.S. Treasuries can go up to 150 basis points. We're currently only at 66 basis points. So there is room for that to push higher, and that's what we're using to fund the risk-on convictions.
So interesting. Wei, as always, thank you for joining us. Wei Li, the Global Chief Investment Strategist at BlackRock. Now, coming up, the German economy, of course, is in focus. We'll be speaking to the IFO Institute president with the latest data on the nation's business confidence. Clemens Fuest up next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The aviation industry is facing a monumental challenge to keep up with the surge costs of jet fuel on the back of the Iran war. Now, American Airlines has cut its full-year outlook, while Lufthansa is rolling out a stripped-down fare with just a small carry-on included. Well, we're now joined by Bloomberg Managing Editor for Aviation, Benny Camel. Benny, how drastic is the supply crunch on jet fuel, really?
Well, the supply crunch doesn't seem to be so bad right now, but what really is the issue is the cost of jet fuel. So we've heard from a number of airlines this week that reported earnings, all saying that really the cost of the jet fuel is what's causing lots of headache. American Airlines, for instance, they reported this week, they said that they expect $4 billion in additional jet fuel-related costs by the end of the year. And that is a huge number that they somehow need to pass on, and they are passing it on, in essence, to the consumer. We know that the US government would like airlines to sort of keep those costs in-house, but they simply can't, particularly those that are somewhat weaker. And as a result, you are seeing ticket prices go up. We heard from United Airlines saying that by the end of the year, they plan to hand off the entirety of the additional costs in terms of ticket prices. So expect those prices to go up. And maybe over time, if that's not enough, some of the weaker airlines will need to start thinking about, do we need to shed assets? Do we need to look for a stronger partner? So again, we heard some of that going on this week. So there's certainly movement in the industry. For the time being, a lot of it is around the ticket prices.
Benny, what actions are airlines actually taking to grapple with the surging price?
So they can do several things. As I just said, they can pass on the ticket prices, but that only goes so far. That suggests that the demand is still there, but at some point that will also break. You can't load up the consumer with endless ticket price increases. So once people come out of the end of the summer and we look into sort of the shoulder season of travel, it'll be harder still to get these ticket prices higher. So what can you do? You can start cutting costs. You can think about what do you need, what don't you need? Do you need to furlough employees? Do you need to think about your fleet? What kind of aircraft do you have that might be too fuel guzzling? And then the ultimate logic will be to really look for a stronger partner. We have reported that United Airlines sort of took a cursory look at American. We know that American is speaking to Alaska to deepen their collaboration. We know in the US that Spirit Airlines, which are bankrupt and are trying to avoid liquidation, they are now hoping for a bailout essentially from the US government. Again, a fairly drastic step, but those are the sort of multiple measures that are taking place in the industry right now, and it shows that this is really a crisis that's not going to go away anytime soon.
Yeah, Benny, thank you so much for the terrific update. As always, Bloomberg Managing Editor for Transport and Aviation, Benedict Camel. Now, Germany's business outlook has deteriorated more than expected, adding to fears that higher energy costs will derail the country's economic revival. The IFO Expectations Index dropped to its lowest level since summer 2023, where I'm delighted to be joined by Clemens Fußt, president of the IFO Institute. Mr. Fuest, thank you for joining us. Is it now more likely that we actually have a recession scenario, or could we have a reversal with growth picking up?
Well, the expectation before the war was something like 1% growth for the German economy. Most forecasts have now downgraded this to 0.5. I would say there certainly is a risk that we are going towards stagnation. I wouldn't talk about a recession yet, but all of that depends on the further course of the conflict in the Persian Gulf, of course.
The Bundesbank sees a slight growth in the first 2 quarters of the year still. Do you agree?
I would say yes, we'll probably have some growth still in the first quarter. About the second quarter, I'm not sure. The economy could be even shrinking a little in the second quarter. The third obviously will depend on how things develop in Iran.
Yeah, Mr. Fuest, even if something happens in Iran with like a lasting ceasefire, it's unclear, especially when you look at the stock markets and the fact that they're gaining by so much, what the base case is. Even if it stops tomorrow, how much is the overhang on energy prices and inflation in your mind?
That's a critical question. We know that it'll take a couple of weeks, at least maybe months, for flows of oil and gas and other products to normalize. What we see in our data today is that increasingly there are supply bottlenecks for intermediate products emerging, not just with gas and oil, but also in the chemical industry, for instance. And it will take some time for that to normalize. So if we realistically expect the conflict to last at least 1 or 2 more months, I think normalization can not be expected before the autumn.
Is there anything that the government can actually do to try and help with the crisis, mitigate the crisis?
It's really hard. So one thing the government can do, the German government and other governments can do, is try and stabilize consumer demand. But of course, there is a trade-off with fighting inflation. This is a supply shock driving up inflation. And so there is a trade-off here. I think what governments should do is try and take measures to stabilize demand, but not by cutting taxes on energy, just to make sure that there is adjustment in energy demand, but to avoid that this spills over too much to general demand for other products.
Do you worry about stagflation?
That's what we're clearly having now. It's exactly, it's a textbook case of stagflation. We see companies telling us they expect prices to rise significantly. We see rising interest rates, and we see a decline in economic activity. So it's the textbook case of stagflation. And we know that it's very hard for governments to respond to stagflation. They face unpleasant trade-offs, as do the central banks. They now face the trade-off between letting inflation happen and making the downturn worse by increasing interest rates. So it's a difficult situation to address.
But Mr. Fuest, just so I understand, stagflation, is there a point where you can still get out of stagflation? And is there a worry that once it's entrenched, it's almost impossible to fix? And where are we now?
I think we are at the beginning of a stagflationary shock. That's quite clear. So inflation is going to increase and economic activity is going to decline. Just by how much really depends on further developments in Iran. But we clearly are in a stagflationary situation at the moment.
Do you worry that a lot of governments, including the German government, just don't have a lot of fiscal leeway to move?
Well, the German government does have fiscal leeway, and they have planned to increase debt finance spending on defense, debt finance spending on infrastructure. So that is stabilizing the economy. The German economy would be shrinking already if we didn't have this stimulus. Can they increase it by very much? I doubt it, but it should have an effect this year. For other governments, especially in Europe, it's more difficult because debt is higher in most other countries, France, Italy, so there is little fiscal leeway. At the same time, fiscal expansion is not necessarily the best response to stagflation because it does drive up inflation further and may force monetary policy to increase interest rates.
Mr. Foos, thanks so much. Coming Foos there.
Can do is that.
Yeah, there's a little actually to do left. President of the IFO Institute. Coming up, we'll have plenty more, of course, on what Mr. Foos was talking about, the Middle East and the energy crisis. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time we went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi. But Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Bloomberg understands more peace talks between the U.S. and Iran are being hindered by public threats and social media posts from President Trump. After a challenging comeback, Intel delivers a blockbuster sales forecast that shatters Wall Street expectations. And 1 year from shocking Silicon Valley, China's DeepSeek unveils its new flagship AI model, calling it the most powerful open-source platform. So as European leaders gather in Cyprus, Estonia's prime minister says there's no alternative to Ukraine's full membership to the bloc.
Our position is that we support Ukraine in the European Union because, to be honest, there's no other way. Ukraine belongs to Europe, and Europe is stronger with Ukraine.
Bloomberg understands that EU leaders have signaled that preliminary conditions are in place for Ukraine to begin the first stage of the membership process. While our chief Europe correspondent Oliver Crook is on location in Nicosia. Ollie, good morning. Is Ukraine's accession process actually gaining momentum?
Yeah, absolutely, Francine. And it's really been a terrific few weeks for President Zelensky, who went to a few weeks ago having Viktor Orban still as the Prime Minister of Hungary, blocking all these initiatives towards Ukraine, including that 90 billion euro loan, which is seen as absolutely essential for the survival of the nation, both for its fiscal budgetary reasons and also for military reasons. That has all sort of gone his way in the last couple of days. In addition to that, he's also got the Europeans on board for that 20th sanction package. That has come through and will be put into place. Now there are discussions about the 21st sanction package. And Francine, really the big conversation, and this is the last thing that the Ukrainians really want, the last piece of the puzzle, is joining the European Union. And that is a conversation that is happening much more openly, that is certainly accelerating. We spoke to the Deputy Prime Minister who's in charge of negotiating that with the European Union a little bit earlier this week. He says that they think that in terms of reforms, they're about 40% of the way there, and they would like to join by next year. Now, that is optimistic on anybody's timeline, but for European leaders now, with Viktor Orban out, there's a real pathway for the Ukrainians to potentially join the European Union, and that is going to be one of the conversations that we're having here at the sidelines of the event.
Ollie, on the energy situation in Europe, what measures are being discussed to actually deal with this energy shock?
Yeah, so the EU Commission put out a few proposals and a couple of things which are really sort of seen as moving around the margins, and there's some calls here from certain European leaders to really take a more sort of a dynamic and a much more active approach by the European Union. We heard it from Giorgia Meloni last night, speaking outside of the dinner that they had last night, saying that basically the European measures do not go far enough and that they need to go further. That was echoed this morning by Pedro Sanchez, the Prime Minister of Spain, sort of fleshing out very specifically what Spain would like to see. They would like to see a conversation happening about loosening of fiscal rules. Francine, as you know, this is always a big debate at the European level. A lot of questions about the fiscal headspace that many of these nations have, particularly in the wake of COVID, particularly in the wake of the energy shock with Russia. How much room do they have? Can the EU budget give them a little bit more room? And also a conversation more explicitly about windfall taxes across the European Union, potentially for those energy companies that are making a lot of money, collecting some of those taxes to help fund some of these measures. So these are some of the debates. But Francine, what's really struck me here, despite some of the rhetoric we've heard about how severe this potential energy crisis is, we're really not yet in the break the glass moment, talking about really emergency measures at the EU level, things like gas price caps that we talked about in the initial wake of the invasion of Ukraine. So we'll see if that conversation accelerates. I think there's still a lot of wishful thinking here, Francine, among European leaders that this will be resolved in the next couple of weeks. Not clear, obviously, if that is going to be the case.
Yeah, Ollie, thanks so much. Ollie Crook there reporting from Nicosia. Now, Oliver will also be speaking with the Lithuanian president and Romanian president later today on the sidelines of the EU leaders meeting. Don't miss those interviews. Now, uncertainty over talks between the U.S. and Iran threaten to further delay oil flows from the Persian Gulf. Well, Bloomberg's Jumana Bersachi joins us now. Drew, with the naval blockade still in place and negotiations in Pakistan at an impasse, is the actual path to a breakthrough there?
It seems very unlikely at this point, Francine, but it is also one of those things where we won't know until we actually know. And what we do know is that the Pakistani mediators are really trying hard to get the two sides together. Just a few minutes ago, the report came through from Pakistan suggesting that they have reached out to the Iranian side once again, passing on messages from the U.S. But at this point, there doesn't seem to be a lot of hope that another round of discussions in Islamabad, at least, is going to happen in the coming days. And yesterday, President Trump was asked about the timeline by our own correspondent at the White House, Jeff Mason. And Trump said, we're not in a rush, and also made a very, well, I would say a controversial comparison to the war in Vietnam as well, and said that went on for years. We're only about 8 weeks into this one, and said they don't want to be rushed into making a deal. Now, at the same time, the Iranian side once again are reiterating that they're not going to proceed with these negotiations until the U.S. lifts the naval blockade. Trump has said that they're not going to do a deal, and they're not going to lift the blockade until the Iranians do a deal. So it's a bit of a chicken and egg situation. The strait is still effectively shut, and there's still a lot of mistrust between the two sides.
Is the Strait of Hormuz still largely at a standstill?
And that's the situation we're in. You've effectively got these two blockades in place. We've been monitoring various vessels that have been trying to go through. Earlier this morning, there was a VLCC that was laden with Iranian oil that was trying to make it through the Strait of Hormuz, so we're monitoring that. We know that yesterday, U.S. Central Command actually intercepted 2 Iranian vessels that were trying to make it through. They also were escorting an Iranian sanctioned vessel all the way out into the Indian Ocean, so it got all the way that far. CENTCOM say that they have managed to intercept 33 vessels in total. And at the same time, President Trump, and you just have it up there, he's saying that he has ordered the U.S. Navy to shoot and kill any boat or small boats that may be laying mines in the strait too. And in parallel to that, we know a couple of days ago that Iran and IRGC actually seized 2 vessels and fired at 2 others as well. So bottom line is, it is not safe for commercial passage. Maybe we've seen 1 or 2 vessels get through, but it is essentially a standstill. And just to point out, this morning, Goldman Sachs out with a note suggesting that Gulf crude oil production is down by 57% versus pre-war levels, down by 14.5 million barrels per day. And the longer this effective closure goes on for, the more difficult it is going to be to ramp up supply to get it back to where it was before. So this is a stalemate. And the question here is, how long is it going to go on for, and how do we break it?
Yeah, Jumana, thank you so much. Jumana Barsechi there with a terrific roundup of everything that's happening in the Middle East. Now for more analysis, Clément Terme, non-resident fellow at the International Institute for Iranian Studies, joins us. Mr. Terme, if you look at our latest reporting, there seems to be mistrust on the Iranian side that they can really, believe the U.S. and the negotiation tactics. What does Iran want?
I think that Iran wants to find a way to guarantee a security guarantee that they will not be attacked again in a couple of weeks or for a couple of months, like it happened, between the 12 days war in June 2025 and again in February 2026. So the idea is to guarantee that the U.S. will not attack. They seek a security guarantee maybe from China. That's why the negotiation takes place in Pakistan. So the Chinese factor is very important. Only China can pressure Iran to reopen the Strait of Hormuz, and also the Gulf states are putting a lot of pressure, and they're very close to Pakistan too. So I think the place of negotiation and the fact that Pakistan become an intermediary is a strong signal that it's not a face-to-face, diplomatic meeting between the U.S. and Iran, but the Gulf state will try to push, for a security council resolution to reopen the Strait of Hormuz that will be legally binding regarding international law if this happens, and we need China and Russia for that. That failed before, so that's the only way, I think.
But I mean, what can we get in the next couple of weeks? Again, if could you get some kind of agreement on Strait of Hormuz without touching the nuclear issue? But it was the nuclear issue that got the U.S. to attack in the first place.
Yes, exactly. You need a comprehensive deal to have a long-lasting solution. But the thing is that we are going more for a short-term solution. I think there's 2 main scenarios. The first one, it's a frozen conflict. The 2 sides decide maybe to reopen the Strait of Hormuz and to end the blockade on the one hand, but Trump has to say that will no deal or later, a roadmap maybe. And the other option is military escalation, because if the U.S. cannot obtain what they want through diplomacy, they may seek, a new military escalation. But the cost for the international economy will be very high, and we have the midterm election in November. So that's not the most probable scenario. I think the frozen conflict with some, flexibility on both sides to reopen the Strait of Hormuz in the coming weeks or months before the midterm election. And again, after the midterm election, we have a high risk of military escalation.
Do you have an understanding of how strong this Iranian regime is?
I think it's weaker than it seems. That's why the Trump administration is trying to push for economic pressure and the scenario of the zombie state, a state that will not be able to pay the salary of the police, of the security forces, the Basij, the Revolutionary Guards. So that's the idea, to weaken economically the state of the Islamic Republic, not to need to have a military intervention on the ground, because this is a nightmare of the Trump administration, to send U.S. troops, Marines on the ground in Iran to provoke regime change. So if they can have regime change with economic pressures, they will try it. But for that, they need China, because China is a key lifetime for the Iranian regime.
Mr. Tam, I mean, is there what's China playing at right now? It's unclear. We know that they don't like disruption. We know that they don't like uncertainty. But actually, could this be to their advantage?
I think they're playing both a game, a very complicated game. On one hand, they support the Iranian state and the Islamic Republic. They provide a lifetime buying Iranian oil and providing, dual-use technology and what is needed for Iran to build this industrial defense base. But on the other hand, if they have to pay an economic price for the crisis, they may seek an agreement also with the Trump administration. There is a meeting coming mid-May between the President of China and President Trump. So that can be also a possibility for the Trump administration to seek an agreement with China. It's an easier sale than an agreement with Iran for the U.S. Congress, for internal political reasons. So the solution may be between China and the U.S. with a broader negotiation, because the U.S. have no way to pressure, beyond the blockade economically the Iranian regime.
What do you think happened? I mean, I know it's difficult, but what's your educated guess on when we have some kind of agreement, which means that the Strait of Hormuz is fully reopened? Will it ever be fully reopened until we have a comprehensive deal that could take 15, 20 months?
I think that the issue, there is a political aspect of it. Do we have a framework, to reopen it? And after you have the technical part, the military part, we have mines, you have threat of drones from Iran. So can we reopen, the Strait of Hormuz without regime change? That's the question. Can we have a diplomatic solution with the Islamic Republic that is a lasting one? Because you have also local commander of the Revolutionary Guards on the shore of the Persian Gulf that can also decide, by themselves and without listening to the central state in Tehran. So that's the issue. It's a complicated actor to deal with, the Islamic Republic. But I think in the coming months, the economic pressure will be very strong on the Islamic Republic. So they can sustain the pressure for the next 2 months, but after it will be difficult for the survival, the economic survival of the Islamic Republic.
I mean, what does the U.S. need? Again, I've often been told, look, when gasoline prices touch $5, that's when the president really needs a deal. And even if it's not a great deal, he'll accept it. On the U.S. side, are they looking at a timeline, or how desperate are they for something?
I think, yes. On the U.S. side, you have the problem of U.S. soldiers dying in the war with Iran, so the acceptability of human loss. You have the ammunition factor also. Do we have enough military equipment to choose again the military option? And the effect on the global economy is a third factor also. But on the other hand, the bad deal is also a negative outcome for President Trump because of the U.S. Congress. They will not accept a bad deal like Obama kind deal. Also, you have the issue of the frozen asset of Iran, that part of the negotiation. It's a very sensitive issue because of all the debate between Trump and Obama about really unfreezing Iranian funds. And the third element, I think, is Israel. Israel will not accept a bad deal neither.
Understood. Thank you so much for joining us, Clément Terme, non-resident fellow at the International Institute for Iranian Studies. Now, coming up, we'll talk to Francesca Giuretti, head of Europe-China Initiative at RAND, as Beijing navigates also the fallout from the U.S.-Iran conflict. That's next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Well, Anthropic's Mythos AI model has been the talk of the industry in recent weeks. The company says the tool is effectively too powerful to be released to the general public. But the headlines may benefit Anthropic as it sees potential valuations approaching $800 billion. While the company is a subject of this week's Bloomberg Originals Weekly Doc.
If you look at the AI sector landscape more broadly, what you've seen is OpenAI's early dominance being challenged increasingly by Anthropic.
Anthropic is drawing investor interest at a valuation of $800 billion or higher.
Making it close to, if not the most valuable startup in the world.
Turbocharging the hype is Anthropic's latest model called Mythos.
Only a small number of companies outside of Anthropic have access to it, and on a limited basis.
This limited release has been dubbed Project Glasswing, and all the participants include a who's who of Silicon Valley.
We know that Apple, Google, Palo Alto Networks, CrowdStrike, the Linux Foundation, Amazon, that are part of this Glasswing project. It's a highly unusual arrangement. These are fierce competitors who are trying to get the best model out there. And Anthropic is not only showing them sort of some IP that hasn't been released yet, they're allowing their competitors to potentially criticize some of the work that they did.
The unorthodox rollout has generated a lot of publicity, and already there are reports of unauthorized users accessing the model.
This is terribly basic cybersecurity practice 101 that was missed here.
We have been hearing about this theoretical threat that AI poses to cybersecurity, and what Mythos has proven is that that threat is a reality.
There are big worries that this, if it falls into the wrong hands, it could essentially lead to some of the greatest cyber risks that humanity's ever faced.
With massive potential for havoc and the stakes so high, is tech's era of move fast and break things finally over?
And you can watch the full Bloomberg Originals doc on the Bloomberg Terminal on Bloomberg.com and, of course, on YouTube. Now, DeepSeek has unveiled its new flagship AI model, claiming it is the world's most powerful open source platform. The release, a challenge to rivals OpenAI and Anthropic, comes amid intensifying scrutiny. Well, American officials and tech leaders accuse the startup of using illicit hardware and trading techniques. Well, Francesca Giretti, head of Europe-China Initiative at RAND, joins us now. Francesca, thank you for being with us. I wanted to actually get onto the Middle East in a second, but start with DeepSeek, because, I mean, this is a massive race, right, between the two countries. Are they like 3 months ahead, 5 months ahead, and does this continue changing?
The months ahead framework is very interesting because there are several pieces saying, well, I know the US is 7 months ahead. I think the framing that is really important is sort of the differences between the two of them in the sense of the US as a computing advantage, right, that we are very much aware of. And in theory, China is lagging behind in that particular sector. But the new announcements show that, there's also rising very quickly to the challenge. And the big difference for the future is that the US the companies are looking at frontier models very much so, while the Chinese are thinking about how do I spread these as quickly as possible throughout the industrial production in my country, make it cheap and make it available to as many companies as possible within China.
What will be more successful? Because actually, if you make it available and cheap, it seems to me like a good strategy.
Look, it's debatable. My opinion is that for productivity, diffusion and so industrial application is actually much more successful than frontier technology. But obviously, frontier can allow you to leapfrog and provide services that, staying behind doesn't. At the same time, we've seen how quickly China has been able to catch up with some of also the closed source type of models. And so the question is perhaps the Chinese approach a better approach for productivity, industrial production, manufacturing, and so on and so forth.
Francesca, at the end of the day, is this an economic, who comes out trumps in this race? Is it an economic benefit or is it geopolitics?
It's both, as we've mentioned. So there's a geopolitical advantage. A lot of these models also have military implications, so they can create that dual-use spillover that can give advantage to one country over the other. Military-civil fusion of this sort of technologies is really important. It is, however, at the moment, the debate very key for the economic discussion, right? Both countries are going through economic struggles. It's not the best. These haven't been the best years for the economic performance in the United States or in China. So it is also mostly an economic competition.
Francesca, how's China doing overall? So we had this great story saying, look, the first special bond sale of the year of China drew strong demand. We also had a headline just moments ago saying China will allow overseas investors to trade government bond futures. So economically, China still has challenges but seems better, but they're really hurt by this energy crisis.
They are, and although the first few months, was 2 months and now 3 months of the year have shown quite solid growth in the Chinese market, we're seeing signs that this may not be as solid as we thought. The energy crisis is starting to bite. People were talking about, China is in a relatively safe position, is more resilient than other countries in the region, and that is true, is more resilient than other countries in the region. It doesn't mean is safe and is not actually paying the price of this energy crisis. And some documents that we've seen coming out of the central government show that China has a real concern when it comes to energy resilience and the cost that this brings to production, but also that foreign demand that Chinese products need in order for the economy to keep growing.
So, could they, play a bigger role in trying to temper and almost force Iran to accept a deal with the U.S., or does it also give them an advantage? Because if the U.S. thinks they can do what they want, then China could do the same with Taiwan.
I'm always very skeptical when people say, well, can China force or pressure foreign capital to do something? Yeah. China has been very active diplomatically. We've seen it that it has very deep interest, that clearly it has stakes in making sure that the Strait of Hormuz stays open. It opens up. To a certain extent, it pushed Pakistan to mediate in this conflict. It keeps calling for the strait to be open. So it is very interested. If it had wanted, or if it had the ability to pressure Tehran into striking a deal, it would have already done so to a certain extent. We always think that China is much more prone and much more interested in influencing the sorts of the different types of countries abroad. We did that back in 2022, for example, with Moscow, than China actually is. And this is sort of the difference that we need to start to understand in between how China does foreign policy and how the US has done foreign policies in the past years, right? China is an ally to a certain extent, is a partner to a lot of these countries. It doesn't mean that it's going to deploy troops to help these countries. And even though it sends help when it comes to technologies, being able to use their satellites and so on and so forth, there's a big difference between the two approaches.
Yeah, but for example, with Russia, they've continued, to support, I guess, on the sidelines.
Yes, and this may very well be the case, right? We saw that already, that the US may have intercepted ships where there were precursors of missiles, and that China may have let Tehran use their satellites to target US bases. So that can be the case. But from that to saying that he's able and willing to pressure foreign capital, there's a big gap.
Francesca, overall, do you see this settling down anytime soon? Because it feels like, there are these outbursts of geopolitical concerns, the Middle East really being the epicenter and being, a big one. But could you see it elsewhere in the world?
One area where I think things may stabilize is, at least at surface level, is the US-China tensions and the US-China competition. In a different geopolitical framework with a different president at the White House, all these things would have been irritants in the Beijing-Washington relationship. They would have actually led to some sort of escalation. What we're seeing is that both Xi Jinping and Donald Trump are very much committed in stabilizing the relationship, at least at surface level, and buy some time. That, however, and we need to be aware of that, doesn't mean that competition will stop, whether it is in technological race, and also there's a tension between what the president wants and what perhaps Congress wants within the United States.
Thank you so much, Francesca, for joining us. Francesca Giretti, Europe-China Initiative Director at RAND. Now, we'll have, of course, plenty more throughout the day. It is Friday. Happy Friday, everyone. We still have a full day of trading to get through. The focus not only on some key data a little bit later on, but, of course, on what's happening in Iran. Up next, Bloomberg Brief, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A monster rally in shares of Intel after the chipmaker posted an outlook well above the street's expectations. That, along with TSMC boosting its forecast, seems this morning ahead of an even bigger tech earnings week. Oil also gaining with no sign of peace talks on the horizon between the US and Iran. And we can have a look at oil right now, up to 106 and change on Brent, 97 practically on WTI today. So oil really gaining. Now, it's interesting because this is a slightly different war on trade than we have been seeing. Today, we also have equity index futures higher. This, of course, thanks to Intel results and some of the enthusiasm that's come from the AI trade once again. Don't forget the SOX index up 33% this month alone, so that has been a massive rally. Let's take a look at some other asset classes. Yields today are not moving a whole lot, but we are seeing the 10-year yield still at that elevated level. The dollar index unchanged, and gold below $4,700 an ounce. So there's not a lot of conviction out there. Low volume, low breath when it comes to the gainers in the S&P 500. At the same time, oil is rising. So what does that portend? We'll see. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Vonnie. There's a huge move for Intel this morning after the second quarter forecast came in well ahead of expectations, thanks to, of course, very strong AI demand. And so for investors, this will be seen as evidence that the turnaround is working and that the huge rally in the shares recently is justified. And so we are up more than 23% for Intel this morning. Moving on to TSMC, which is also having a good day today after the financial regulator in Taiwan eased some limits on single stock fund holdings. And so this is something that could unlock billions of inflows for TSMC, and therefore we are up also for that company. And finally, to round up our very tech-heavy morning, we have got SAP also moving higher after beating analyst estimates. And so those results were seen as reassuring, easing fears around both the AI disruption and also the impact of the war in Iran on business confidence. And so this is seen as a welcome relief, especially after the quite disappointing results that we had from ServiceNow just yesterday. And so we are up about 6% for SAP today in Germany.
Chloe, thank you so much. That's Chloe Melly there in London. And coming up this hour, we're going to be speaking with Sonia Martin of DZ Bank as investors see renewed appeal in the carry trade. But first, Washington and Tehran still at a diplomatic standstill as the Strait of Hormuz remains shut. Let's discuss the state of play with Jumana Bersetchi in Dubai and Laura Davison in Singapore. Jumana, bring us up to speed. We haven't heard much from the Iranians and there's not much happening in the Strait of Hormuz right now. Is that roughly where we're at?
That's exactly it. You could call it wait and see. You could call it a stalemate as we await to see what the next steps are going to be. And it's also a bit of a chicken and egg situation because President Trump yesterday was saying that there's no definitive timeline and that he's not going to lift the U.S. naval blockade until Iran make a deal. Iran, for their part, are saying that they're not going to return back to the negotiating table unless the U.S. lift that naval blockade. So it is a bit of a battle of the wills, so to speak, around the Strait of Hormuz. And for all intents and purposes, it's still effectively shut, especially for commercial vessels. We've been tracking a few Iranian sanctioned vessels that have been trying to make it through. U.S. Central Command say that they have managed to turn around 33 vessels in total since the blockade went into place. But then also the last 24 hours, we've seen multiple attempts out of Iran to defy that blockade. And President Trump also saying that he's directed the U.S. Navy to fire at any Iranian boats that try to lay down mines around the Strait of Hormuz. So it is still ultimately very risky. There are very little flows, very little traffic going through. And not just for Iran and U.S. here, but this is a stalemate that is going to have global repercussions. And I think the question that people are really asking is, number one, who blinks first? Or number two, to get out of this stalemate, is it going to necessarily require return to hostilities? And indeed, President Trump has said multiple times over the last couple of days that the military is locked and loaded and ready to go. Iran, for their part, are also saying that they are ready to return to the battlefield. So it could go either direction from this point.
Just one thing, do we know who even is responsible for negotiations in Iran right now, Jumana?
Well, I mean, this is the big question, and I'm sure Laura will speak to some of the reporting that we put out overnight. You know, a lot of the social media messaging that President Trump has put out the last couple of days has really not gone down well with Iranian officials. And if you remember, the day that he announced the extension of the ceasefire, he also referred to fragmented and fractured Iranian leadership. And what's interesting, what's coming through from the Iranian side is multiple comments from these senior officials suggesting that actually they are a cohesive unit and that they're working in conjunction with each other. That this contradicts a lot of the reporting that has come through, suggesting that on one hand, you do have the pragmatists, you have the likes of Galibaf, you have the president who want to push forwards with the negotiations because they fear that the longer this goes on for, the more it's going to harm the Iranian economy. At the same time, the hardliners, the IRGC, the clerics, are thinking that they can stare the U.S. down on this one, and that as long as the U.S. blockade stays in place, they can continue to fight back, to wreak havoc, to seize vessels, to cause disruption in the region without a lot of significant outlays. And from their perspective, just coming out to the other side of this, having survived, is a sufficient enough outcome for them. So again, questions internally about which one of those groups is going to prevail.
Laura, Jumana mentioned that we might even need a return to hostilities in order to break this stalemate. Let's have a listen to something that President Trump said in response to a reporter question.
How long are you willing to wait until you get a unified response? Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for all the, I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
I mean, that suggests that the president doesn't have any, at least public, sort of interest in ending this war anytime soon. But do we know that to be true, Laura? I mean, gas prices bottomed at 402, but they're on the rise again now.
Yeah, this is just one of the many examples we've seen from the president in the past 2 months or so of really mixed messaging. If he's, over the past week vacillated if he wants to make a deal, he sees a deal coming together quite quickly. Now he's saying, don't rush me. This could take some time. And this has been part of the problem as he's been dealing with the Iranians. As Jumana mentioned, there's a great story on the terminal that talks about how the threats and the social media posting he's been doing has actually been quite detrimental to the talks and contributed to there not being talks last weekend in Pakistan between J.D. Vance and the Iranians. Some of these maximalist threats, he'll come out and, say things that he's going to, bomb Iran back to the Stone Ages, setting some of these deadlines and then pulling back from at the last minute, almost seemingly day by day, that depending on the president's mood and depending on where he sees the leverages, he'll fire off a new sort of edict from social media has really, a strategy that may have worked when he was dealing with universities, with corporate America, is not working well when dealing with the Iranians, partially because they have leverage, and that is still control over the Strait of Hormuz. Trump has tried to counter that by putting in his own U.S. naval blockade. But he's found himself in a situation where he does not have full control, which has been unusual for him. And this is really kind of where we see him, grappling with the loss of public support for the war, the fact that the economy is going to struggle from this. Republicans, as they face the midterms, this is going to be a key issue for voters. And so this is all, really contributed to the president sort of really struggling on how to move forward here.
There was some suggestion that Pakistan was putting out this proposal that perhaps there would be some unfreezing of sanctioned money or what have you in order for Iran to maybe ease up a little bit on its Strait of Hormuz conditions. Is that gaining any traction, Laura?
This is one that it's, kind of a middle ground proposal, but we still have both the U.S. and Iran sort of saying that they're not going to talk unless, sort of this blockade issue has been resolved. The U.S. saying that they will not come to the table, until the Strait of Hormuz is open, and the Iranians have said that they will not come to the table until the U.S. blockade is over. So, we really are waiting to see, who is going to crack first on either side. Are there some concessions? Are there some proposals like this one from the Pakistan officials that might be able to help bridge some of these divides? But one of the things, especially when dealing with Donald Trump, is you have to give him some sort of face-saving measure to be able to agree to something. He wants to be able to tout a big number, a headline win. Right now, there hasn't been some sort of arrangement here that has been able to work, that has also been appealing to the Iranians.
Laura, thank you so much. That is Laura Davison there, and of course Jumana Bersechi in Dubai as well. Staying in Washington, the White House taking a closer look at Spirit Airlines.
I'd love to be able to save an airline. I like having a lot of airlines, so it's competitive. So we are looking at Spirit. It's in a bankruptcy. It's in bankruptcy court, and we're looking if we could get it for the right price. I'd do it to save the jobs, and we have somebody that wants to run it, do a good job, smart person. And if they run it properly and if prices come down, all of a sudden it's a valuable asset.
Bloomberg's Benedict Camel runs our aviation coverage. Benny, of all the ailing companies in the United States, why Spirit Airlines?
Well, Trump loves airlines. That's number one. He's always been a bit of an aviation nut. So, but there's also the jobs, as we just heard. He's interested in saving those. 14,000 jobs, he said, are at stake here. The question really is, can the government really save an airline that has been on the ropes for a long time? A lot of people that comment on Spirit will tell you, yes, the latest crisis with fuel and with costs has sort of accentuated the crisis they're in, but this is something that predates this latest crisis. This is an airline whose business model has been shaky for a long time. They have been in bankruptcy. They tried to merge with others. That didn't work, or it was blocked. So what can the government realistically do? Arguably buy them some time, prop them up, and then hope that they can get through this, and that maybe even, we just heard it from Trump, sell them at a profit. But there's a lot of ifs and buts involved here. He might be looking at what he did with Intel, which suddenly looks like a very good investment if you look at the stock price increase. But certainly the same can't be said with certainty of the Spirit. As I said, that's an asset that some people will say has been sort of a zombie airline for a long time. And some airlines, people will tell you, should just be let go and left to die. Trump seems to think differently, and we hear that they are working on some sort of a package whereby ultimately the taxpayer would own the majority of this carrier.
Benny, would Spirit be a state airline if this were to happen? I mean, we've seen that in Europe quite often, but we've never seen anything like that in the United States. And how would it work for other creditors, you know, Ares and Citadel and other people that have put money into Spirit?
So that's a good question. How would it actually work? We don't know that much about the mechanics. Citadel is an interesting one. They've put money into this. Sort of what would happen to the leasing contracts. There's a lot of unknowns in this, but the talks have certainly gained traction over the last couple of weeks. This is what we're hearing. We're hearing that Howard Lutnick, the Commerce Secretary, is driving this. There seems to be some internal debate in the administration whether this is in fact a good idea. Sean Duffy, who's the Transport Secretary, seems to be a little bit more sort of on the side of those who are urging caution, but then there are those who think this should happen. And there's, as you said, sort of the financial side. There are big investors who don't want to lose money here. The state has stepped in the past and propped up airlines, notably during COVID, but this is not a COVID moment at this stage. And again, a lot of people in the industry will say this is probably the time to sort of separate the wheat from the chaff, and Spirit should probably be let go. Trump has other views here, so we'll see how this goes.
All right, massive stock price moves there, even though it's in bankruptcy over the last couple of days. Benny, thank you so much. Benedict Camel. Now to other top stories trending on the terminal this morning. Porsche selling its stake in the venture that owns the Bugatti supercar brand. The stake will be sold to a fund co-founded by a scion of Egypt's billionaire Sawiris family. Porsche holds a 45% stake in Bugatti. Mercedes is assessing possible cybersecurity risks linked to Anthropic's Mythos. It has not suffered a major cyber attack, but sees a potential for disruption. The Mercedes assessment signals concern that threats from AI bots are spreading beyond the financial sector and into the industrial economy. Canadian manufacturing company Cohere is set to buy Aleph Alpha, a startup once considered Germany's national AI champion. The deal includes a $600 million investment from German retailer Schwarz Group. The Financial Times reported Cohere's new valuation will be $20 billion. Coming up, Intel extending double-digit gains and boosting NASDAQ futures. More on that next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Wednesday, the Fed decides.
Regime change at the Fed. It's a matter of when and not if.
This is not a small matter.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
A series of shocks have interrupted progress.
We've completely priced out a rate cut for 2026.
This is a really tough time for all of us in markets.
There is nothing this institution can do in the face of the shock elsewhere.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Tech stocks rallying as earnings reflect positive AI impacts. Intel's a strong AI-fueled outlook sending shares soaring. Free market. Matt Bloxham of Bloomberg Intelligence joins us. Matt, this is quite the turnaround. Is it the fastest turnaround in history?
Yeah, it's certainly a quick one, isn't it? I mean, it's been a long time coming, but it's a pretty quick pace. Obviously, really good revenue for the quarter they reported, and the forward guide as much as 14% ahead of market expectations. And what's going on here is that as AI shifts from the kind of training environment to the kind of actual deployment or the inference environment, we're finding that there's a lot more demand for the type of CPU, the kind of general purpose compute technology that Intel's always been famous for. So it's kind of a bit of an old school revival, if you like, of the technology that they've always been well known for deploying. They're also obviously trying to kind of pivot into being a foundry business too. That's benefiting from that incremental demand from other parts of the business, but there's also signs that they might be getting outside customers, with Elon Musk talking about using Intel for his own chip development plans. So yeah, overall, encouraging signs for the turnaround in the Intel story.
Matt, I just want to ask you a little bit about Meta and Microsoft and these layoffs. So some voluntary retirements and some actual layoffs. Is this much bigger than you would anticipate from companies of this size?
They're certainly big, aren't they? So we're talking about 23,000 jobs in total, 14,000 of them at Meta, 8,000 redundancies, 6,000 empty posts that just won't be filled of their headcount. So it's a big chunk. And obviously they're having to do this to kind of help balance the books with the big investments they're making into AI and showing investors they are being responsible about managing the cost base and protecting margins. I'd say with Microsoft, similar kind of number, maybe kind of the high single-digit % of their US workforce, perhaps a softer approach there, offering kind of voluntary buyouts for staff. But yeah, it's still a big shift, and I think that it's the same theme, that there are big investments going on in Microsoft into AI, and that they need to manage the overall cost base to kind of manage margins and reassure investors that they're thinking about this in a responsible way.
Matt, I have to ask you about the DeepSeek models. 2 new models. Well, one, bifurcated, the V4 Flash and the V4 Pro. Are they sending the shockwaves that previous models did into the market, or are people a lot more sanguine now about DeepSeek?
Do you know, yeah, I think that the initial shock's gone, but I think the underlying theme is still very much there. That these models match the kind of the well-known the OpenAI, Anthropic models for performance, but they can be run at significantly lower cost. And obviously, as we move into much broader scale deployment, cost is going to become a much bigger factor for customers deploying AI. Question mark about how wide scale the DeepSeek penetration will get, certainly into the US and Europe, but it is going to put pressure on the likes of OpenAI and Anthropic to think about the intensive compute power needed for their models and how to make them more efficient so that companies can deploy at scale without really squeezing their margins.
Matt, characterize the earnings season for us so far. I mean, we have had some major tech earnings, but there are obviously still some major ones to come next week and beyond. How are we at least moving to a different stage of the AI narrative? And what are companies telling us, basically?
Yeah, I think first and foremost, the AI story is still very much in rude health. We are seeing more of a shift away from this, just big investments by the hyperscalers, almost kind of risk investment, like in building capacity for the future, and that we're now seeing more of the kind of demand come through from enterprise customers to use that. I think the other interesting thing is a lot of companies like Intel and like SAP, who have been seen as kind of legacy providers potentially at risk from this trend, are actually kind of being more resilient, and that's an interesting theme I think for investors to watch.
All right, Matt, fantastic context. That's Matt Boxham there of Bloomberg Intelligence. Coming up, a look at what's in your front page news headlines. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. And first up on the Washington Post, the Special Forces soldier involved in the capture of Venezuelan President Nicolas Maduro being charged with commodities fraud, wire fraud, and using confidential government information for personal gain. Federal prosecutors say Gannon Ken Van Dyke used his access to classified information to place a series of wagers on Maduro's future through Polymarket, netting him more than $400,000 in profit. Next up, the Financial Times is reporting Poland's Prime Minister has questioned whether the US would be loyal to its NATO commitment to defend Europe in the event of a Russian attack. Donald Tusk told the FT Russia could attack an alliance member within months. And the Wall Street Journal reporting Oracle's $300 billion AI mega deal with OpenAI pushing debt investors to the limit. The Journal says a funding snag is posing risks to the data center boom. Banks, including JP Morgan, struggling to spread the risks of the loans. Coming up, we're going to be speaking with Sonia Martin of DZ Bank.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A monster rally in shares of Intel after the chipmaker posted an outlook well above the street's expectations. That helping boost tech stocks even higher this morning, and that's before an even bigger tech earnings week next week. Oil also gaining with no sign of peace talks on the horizon between the US and Iran. Let's start with oil then. Up another 2%. Brent crude firmly above $107 a barrel. New York crude approaching that $100 a barrel mark. Now, the interesting thing is that today it's not having so much of an effect on equity index futures. NASDAQ futures pointed to a nice gain after Intel just absolutely knocked it out of the park yesterday with investors. Intel itself up more than 20% in the pre-market. Mightn't see as much enthusiasm in the S&P 500, but nevertheless, we are seeing that war on trade bifurcate just a little bit through this earnings season. If we look at the dollar index, it is pretty much unchanged. Same for yields, and gold down ever so slightly. We're also seeing the VIX holding in above 19. We'll see what happens in the next few hours. Let's get to some individual movers now. Here's Chloe Melly.
Good morning, Bonnie. As you just mentioned, Intel shares are soaring this morning in pre-market, up about 25% after its second quarter forecast came in way ahead of what analysts had expected. And so this will be seen as evidence that the ongoing turnaround at Intel is working and that the huge rally in the shares recently is justified and should therefore be extended. Moving on to another tech company, TSMC is also in the green this morning. That is after the financial regulator in Taiwan eased some limits around the single stock fund holdings. And so some analysts are saying this could unlock billions of dollars of inflows for the company. And therefore, we are up about 3% for that company. And finally, let's end with a final tech stock. And we have SAP over in Germany also moving higher after beating analyst estimates. And so these results have been seen as quite reassuring, easing fears around both AI disruption and the impact of the Iran war on business confidence. And this is seen really as a welcome relief, especially after the disappointing results that we had from ServiceNow just yesterday. And so we're up about 5% in Frankfurt for SAP.
All right, Chloe, thank you so much. That is Chloe Melly. US and Iran still at stalemate. Several US officials telling Bloomberg that President Trump's threats and social media posts are hindering the prospect for Tehran agreeing to more in-person peace talks. Bloomberg government's Jonathan Tamari joins me. Jonathan, do we know if the President of the United States, Donald Trump, has any kind of, an idea of what he's trying to do here? I mean, he wants Iran to come to the table. Iran is obviously signaling that there's no incentive for them to come to the table. And the president just keeps insulting them. Where is that going to get us?
Well, it's unclear. The president obviously throughout this conflict has kind of switched day to day, almost sometimes hour to hour, between saying a deal is close, the war is near over, or saying that he's about to escalate and take the war to a new level. I think the best that we can tell, he has not articulated a public strategy very clearly, but I think the best we can tell is that there's hope within the administration that the blockade the U.S. is putting on the Strait of Hormuz now will bring pressure on Iran, that at some point that they will run out of capacity to even store their oil, and that will force them with the economic pressure, the prospects of their oil wells being damaged, to actually cave before the U.S. does because of the economic pressure that the U.S. is feeling from this whole blockade.
It could be a while before that happens, if it ever does happen, though, Jonathan. So what's the plan meantime? Is the president going to run out of patience at some point and start bombing again?
I think that's the question. I think the president has shown pretty clearly he does not want to go back to armed conflict, does not want to go back to bombing. I mean, he's made multiple threats here and backed off of them at the last minute. So I don't think he wants to do that. But yes, I don't think there's a clear strategy for how to get out of this. This is something people have said from the start, that there's not a clear exit strategy. He's been saying since March 9th, at least, that the war is just about over. Obviously, we're well past a month beyond that date. So it's kind of a staring contest right now. And I don't know that he's going to get what he wants. There's also some reporting from our Bloomberg colleagues that he might ultimately have to accept a nuclear deal that looks similar or even worse than the one that he tore up during his first term in office.
Yeah, it's hard to see where it goes from here. Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government. Sonia Martin is Chief Economist and Head of FX and Monetary Policy at DZ Bank, and she joins us now. Sonia, markets are reacting rather strangely this morning. So we have the equity market side of things, which has been pretty anemic, looking to the AI story and the better earnings. But you still have this oil trade going on. What does it all mean for the US dollar?
Well, I mean, as you said, it's a very confused market right now. And to be honest, a situation that we have been seeing since the beginning of this conflict. I think, markets have been trying to find clear direction in this very, very uncertain time. As you just pointed out, equity markets have been pushing higher. This is an AI story, and I think we have a sense anyway that for the past few weeks, investors have sort of been waiting to go back in. We have generally an environment of high risk aversion in some ways, politically speaking, but when you look at the financial market, it seems that the market is playing a much more benign story. We have seen the dollar under some upward pressure in recent days, but I think the moves have been fairly moderate. So I honestly do not think that you can sort of, find one story to fit all market movements here. Overall, though, I would say my sense is that investors are maybe a little bit over optimistic right now, not just when it comes to how this conflict is going to end, but also regarding the question of what the consequences will be for the global economy.
Yeah, and you're not alone. In fact, Deputy BOE Governor Sarah Breeden saying just in the last few hours that current share prices are not yet consistent with the scale of economic pressures facing markets, and there's a lot of risks out there. What are the major risks for investors in terms of monetary policy? Do we start seeing hikes in June from the BOJ, the BOE, and so on? And what does that do to relative rates globally?
Yes, I mean, definitely monetary policy is going to have to go on a very different path for many central banks than what was expected earlier this year. I mean, that the Bank of Japan hikes rates, not unexpected. We were looking for that anyway. It's very different for the Bank of England or the ECB. Also the Fed, obviously. When you look at the ECB and the Bank of England, they will have to hike rates to respond to this rise in inflation. Both central banks, I think, very sensitive to the risk of inflation expectations losing their grounding. I think this is what they're both really looking at. Economically speaking, one doesn't want to hike rates, but with a view to managing inflation expectations, they will both be hiking interest rates. The Fed, on the other hand, hiking rates, I think not an option right now, but I think they won't be cutting rates. And this is going to put Kevin Warsh, if he ever does get finally confirmed, in a very hot seat with the US president. So I think the independence of the Fed will be coming back to haunt us this year.
And it could be that actually moves the yield curve as opposed to monetary policy even. Sonia, I'm curious, does a Kevin Warsh Fed change how monetary policy is determined substantially?
Well, I think not in this current environment. I think he has experience with monetary policy, which makes him definitely a better candidate than some of the others that have been in the running. We're quite confident that he has going to be a steady hand when it comes to the Fed. But I think the problem is going to be that in this environment he can't really cut rates, and Donald Trump is going to put a lot of pressure on him. And to be fair, in this current environment of massive uncertainty, continuity would be preferred. In a sense, it would be better if Jay Powell stayed, but obviously that's not something that is likely to happen. So I think it will be a real test for the new Fed chair, and it's because he's new, it's going to be so important that he communicates well with the market and makes sure that he really drives home the fact that his actions are independent of what the president wishes.
Sonia, we were seeing renewed appeal in the carry trade for quite some time now. What happens to Latin American currencies, given that the president seems to have turned his gaze from Latin America to other parts of the world? Do they continue to see this carry trade, strengthen their currencies? And what does it mean for their economies?
Well, I mean, I think it's interesting, this return to carry trades, which, again, like high equity market valuations, strikes me as a very risky move in this environment. I think you have to be very nimble on your feet when you're in these trades. And a lot of them, I think, are designed to run very short term. So it's just another reflection of the fact that the market is still hunting for yield despite massive uncertainty. And of course, emerging markets, some of them are going to be quite hard hit by this current crisis, looking at their supply of oil and gas. This is particularly true when you look at Asia. So I think that, again, the market maybe is somewhat too benign in this environment. And with the prospect of interest rates in other developed countries sort of going higher, that's another risk factor. So, I think nimble feet and strong nerves definitely required if you're going to go into these carry trades right now.
Sonia, can you have targets in this environment? You typically would sort of have at least figures in your head, right, when it comes to where you see the dollar in the next few months. What are you doing right now?
Well, I mean, for one, obviously it only makes sense to think in scenarios, right? I mean, since none of us can entirely predict what's going to happen with the Iran war, I think we can't entirely predict Trump. I honestly think Trump can't predict Trump right now. So I think very uncertain, have to think in scenarios, be very quick to adjust. We do have targets, obviously, and basically in two scenarios, where one is worse than the other. When it comes to the dollar, I think in our base scenario, we have a euro-dollar target of 120 in 12 months' time. It's a fairly benign forecast. In an escalation scenario where we're looking at a global recession, we're probably looking more like at 110. But that's kind of, I think, the only way to do things right now, and to adjust accordingly depending on what comes out of the White House.
All right, Sonia, thank you so much. Always a pleasure. Sonia Martin of DZ Bank. Now to other top stories trending on the terminal this morning. China regulators plan to restrict technology firms, including some of the country's highest-profile AI pioneers, from accepting U.S. capital without government approval. The move is part of Beijing's broader response to Meta's acquisition of startup Manus. Moonshot AI, which is considering an initial public offering, and ByteDance were among those that got the guidance from the regulators. SoftBank's mobile unit plans to transform part of its factory in Osaka into one of Japan's biggest production lines for large-scale batteries. The move is part of an ambitious attempt at powering its own AI data centers. SoftBank aims to bring the production online within the next 5 years. A Citadel real estate project in New York City is at risk after an attack from New York City Mayor Zoran Mamdani of Ken Griffin's purchase of a $238 million apartment around Central Park. Citadel called Mayor Zoran Mamdani, quote, shameful, after he specifically referenced Griffin's apartment in a video about his tax on second homes. Coming up, Intel soaring after earnings and giving a boost to tech shares. We'll talk Intel next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Tech stocks rallying and rallying big as earnings reflect some positive AI impacts. Intel's strong AI-fueled outlook sending shares up almost 30% pre-market. Matt Bloxham of Bloomberg Intelligence joins us. Matt, this is a massive move. Now, it mightn't hold into the open, right? But it's a signal of what investors are at least thinking. A massive turnaround. But is this a little bit of euphoria now at this point?
Well, I think it's certainly a big shift in sentiment and optimism about the kind of future. And, what we're seeing here is a better than expected revenue trend, both for the quarter they just printed and a really strong guide for the next quarter, which at the top end of their new range would be about a 14% upside to consensus. So it's pretty significant. I think what's really going on here is that as AI shifts from being about training models to actually deploying them into commercial situations and shifting to inferencing, the world is finding a need for Intel's core offering of the past, which is CPU, central processing units, the general processing power, and that's sitting alongside the kind of GPUs that people have been buying from NVIDIA. So, a bit of a kind of old school revival for Intel in their core technology, and that's an encouraging sign for them. And obviously, alongside that, the CEO has been doing a lot to try to expand the company's capability as being a foundry, kind of helping other companies to kind of build chips. And whilst that's being a little bit slow to kind of follow the momentum in the core business, we're actually seeing signs of a pickup, notably Elon Musk signaling that he plans to work with Intel on his own chip project. So, overall kind of pieces of the jigsaw for Intel coming together and some good momentum coming through.
Yeah, and writing its balance sheet as well. Matt, can I ask you a quick question about TSMC? Because we were talking about it yesterday in terms of it was complaining that ASML's gear was too expensive. Today we have Taiwan easing single stock caps for anyone who wants to buy into these single stocks. So money managers could now put 25% of a fund's net asset value into any stock. Is it going to have much of a difference to the likes of TSMC?
Yeah, I think potentially, obviously, it's very much a technical rather than a fundamental move, but TSMC is about 44% of the local index, and arguably there's quite a lot of pent-up fund manager demand in that local market that would want to own more of TSMC, but has historically been limited to just a 10% holding of their total net asset value. So I think you could see some fairly significant, I guess we're seeing that today, some significant portfolio rebalancing to kind of increase exposure to TSMC, because ultimately the fundamentals of TSMC is still very strong, still kind of very much at the heart of the AI trade that we're seeing still play out in a very good way across the world.
Can I ask you about the new DC models that rolled out, preview versions? It doesn't seem to be scaring the market quite so much as earlier ones, but tell us more.
Yeah, no, the spook factor's definitely kind of dissipated, hasn't it? But this V4 model, matching the likes of OpenAI, Gemini, Claude in terms of performance, but pitching it as significantly lower cost if you're going to use it. And I think that's going to become increasingly important as we go forward. As more companies deploy AI at scale, they're going to realize it can be quite expensive to run, and there's going to be pressure to either look for models that can deliver that productivity at a lower cost, or pressure on the likes of OpenAI and Anthropic to adjust their own models so that they require less processing power and therefore less cost.
All right, Matt Bloxham, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Meanwhile, in Europe, EU leaders in Cyprus for a two-day summit. On top of that agenda, how to deal with higher energy prices. Bloomberg's chief Europe correspondent, Oliver Crook, is in Nicosia with the latest. So, Ollie, we had lots of talk about energy, also the freeing up of this funding for Ukraine, which was a massive sticking block for a long time now. Tell us the output, the result.
Yeah, so we'll deal first with the Ukraine question, and it's really a fundamental question for the survival of the nation. We've heard it from Zelensky many times, that 90 billion euro loan coming from the European Union, blocked by Viktor Orban until this week, really was the lifeline for the Ukrainians. And Volodymyr Zelensky came here to Cyprus. He met with European leaders last night, and it's been, we have to say, a remarkable 2 weeks for Ukraine, really a reversal in the fates. You went from basically getting that 90 billion euro loan blocked, getting it unlocked. You get the 20th sanction package by the Europeans. That has been rolled out, and now negotiations on the 21st sanction package on the Russians. So this is all going in the way of Ukraine, and that is building on some of the momentum that Zelensky would like to capitalize on now to have a much more difficult conversation, but a very, very important discussion about joining the European Union. And the sort of reporting that we've done, the people that we've been speaking to on the ground here, but also earlier in the week in Brussels, is that European leaders, now with Viktor Orban out of the picture, it paves the path for a much more serious discussion about bringing the Ukrainians into the European Union. Now, as you know, anything with the European Union takes a very, very long time, particularly joining as a full member, but that is a conversation that is now accelerating in earnest and something that the Ukrainians would like to see happen by next year. I think for anybody, that's an intensely optimistic timeline. That being said, it is the groundwork is now being laid, and that is a very serious discussion now among the European leaders.
And interestingly, it was a huge sticking point that Ukraine never accede to NATO, for example, when we were, right smack bang at the beginning of the war. But speaking of NATO, a lot of developments. So we have Donald Tusk telling the FT that the US wouldn't back NATO if Russia were to attack one of the NATO countries, and that could happen within months, which sounds terrifying. And then you have the US, of course, wanting to boot Spain out of NATO. Where does that organization stand at the moment, Ollie?
Yeah, I think, Zvani, that is the fundamental question. I think that, again, when we return to the main issues that the Europeans have had with the Trump administration, the trade war was obviously massive, but I think nothing is bigger than the question about American commitment to NATO and that Article 5 guarantee. It is basically the security guarantee and the security umbrella that has preserved Europe basically since the end of the Second World War. And now, every other week now, we have Donald Trump calling NATO a paper tiger. We now have reports from Reuters that there's an email circulating around the Pentagon that basically the United States would look at potentially booting out Spain from NATO because they haven't reached their 5% target and they haven't committed to that target. So all of these things put into jeopardy the real sort of the ironclad nature of NATO and Article 5, which is, of course, fundamental to sort of deterring Russia. That being said, there are then conversations also happening in tandem. They don't want to be too public about them, but there's another security defense clause within the European treaty. It's called Article 42.7, and there are lots more conversations happening at the European level of operationalizing that. Basically, it's a NATO ex the United States, a common defense clause within Europeans. Now, again, this is a very delicate conversation because you don't want to be talking openly about basically a replacement to NATO because that could undermine it, but a very active conversation and a very big concern for European leaders.
All right, we'll watch that. Ollie, thank you so much. That is Bloomberg's Chief Europe Correspondent, Oliver Crook. Coming up, we're going to get you set up for your Friday trading day. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's take a look at what your market will look like going into this Friday session. So we have crude creeping ever higher now. Brent crude is above $107 a barrel, up more than 2%. And WTI close to $98 a barrel. For the moment, it is not affecting equities. The Nasdaq looks like it might be having another great day. Of course, Intel is up some crazy amount pre-market. We'll see if that holds. Breadth in the S&P 500, though, has been fairly narrow, so we haven't seen that many companies making 200-day moving average highs. We'll see if that changes today. Of course, we have seen some blow-away earnings in terms of semiconductor earnings in particular. The SOX index up 33% this month. The dollar index unchanged. Same for yields. Gold down just a little bit. Many of these markets just waiting to see what happens next in terms of US and Iran and whether there will be any kind of negotiations or any kind of response to the US proposal still. One stock, of course, we're keeping an eye on is Intel. Lip Bhutan will be very happy to see it up 28% pre-market. We'll see if that holds throughout the session. This is Bloomberg.
Day 3 at the Mutua Madrid Open. Three-time champion Aryna Sabalenka eased into the third round for the 5th time with a comfortable win over American Peyton Stearns. The world number 1 fired 2 aces and 28 winners in her 13th consecutive win so far this season. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Davos, Switzerland, and this is Bloomberg.
I think this bull market and tech has further to go.
The market's clearly looking through the short-term uncertainty.
The market is telling you, look, this is still maybe a transitory story.
If you are not spending right now, you're going to be left behind.
The shock really supports the need to invest.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, extending the chip rally. Strong guidance from Intel helping semis build on a 17-day winning run as Meta and Microsoft are moving to cut workers to support big spending. Secular tailwinds in tech offsetting a cyclical threat brewing in commodities. Brent crude up 18% this week.
Yeah, it's the biggest weekly gain for Brent, for WTI, going back to the week ended March 6th. That was the first week after the war began. And so you can see suddenly people worrying about the stress in the Middle East coming to roost, at least when it comes to the physical commodity world. However, when you take a look at stocks, yes, you're seeing the first loss of for a week so far in April. Nonetheless, the loss is minor, and you're seeing record high after record high in a number of big tech stocks. These two themes cannot be wider apart, and that really is the tension of the moment.
It's the tug of war, isn't it, right now, between these cyclical tailwinds that you see in tech and the cyclical threats coming from commodities. And this week is a perfect example of that. Do you want to fight this? The move at Intel up by close to 30% in the pre-market. Do you want to fight this? Texas Instrument with better forecasts in the last week. We talked about GE Vernova, another AI theme. All of that supporting tech stocks. It's why the Nasdaq is up on the week. You look elsewhere, though. The pressure building, 18% move in crude. And by the way, it's not just the front month of the futures curve. It's the summer months as well. Late into the summer, starting to make new highs too. We've got to bet in this market that this won't be a prolonged shock. This will be a transient story. I just wonder how fragile that bet is at the moment.
Especially because every single strategist who you talk to says it's very hard to see how this gets resolved in any kind of clean way. Ultimately, do you have this regime staying in power and you still have some sort of free travel through the Strait of Hormuz? Do you have the idea of mines that can be removed in a short period of time to have ships start to go through again? And how quickly will ships have the confidence to go back in there if it's occasionally oh, wait, what? We're not allowed? Oh, OK, we're going to go over here. Oh, wait a second. We just got blown up. It is not exactly a good recipe to get confidence of some of the mariners who are out there on the seas.
Bramo, quick reminder, think about where we were this time last week. This time last week, we were heading into the weekend. The Strait of Hormuz was reopening. Look at where we are a week later. The Strait of Hormuz is still closed, right? Think of how things have changed in a week. The enthusiasm and optimism, the hope into last weekend. And here we are a week later, and very little has changed.
I still think about that cartoon meme. Open, closed, open, right? Closed. And that's essentially where we are. At the same time, people seem to have accepted the fact that this could be a long process or a longer process. And somehow, some of the risk assets are entirely divorced because they're looking at earnings and they're looking at the tech promises that seem to still be going strong.
Where are they divorced? So you've got the US market and the US economy almost on an island right now. Then you've got the rest of the world. And we're looking at the sequencing of things. It starts in Asia, pain. Continues through to Europe, pain. You see it in the PMIs. Compare the PMIs this week in Europe to the US. Downside surprises in Europe, upside surprises in the US. For how much longer can that continue?
Well, some people say that Europe is uniquely terribly positioned. And when people go to Europe and they come back, they say, oh, my goodness, the pessimism there is absolutely horrific because of the dependence on oil imports that you don't see in the United States. You also had the one big beautiful bill and the refunds that did give some power to consumers. As this goes on longer, people say there will be pain. Right now, a lot of people are saying, la, 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 AI, and that's going to somehow get them through.
And buying the Nasdaq right now, the Nasdaq futures up by 0.7% so far this morning. Coming up this hour, we'll catch up with Peter Schiff of Academy Securities with tech leading stocks higher, John Lieber of Eurasia Group on insider trading in Washington, and Vitos Peduto of RBC Capital Markets as deal making continues to pick up. We begin this hour with tech earnings helping to offset cyclical threats building in the energy market as US-Iran tensions continue to simmer. Peter Schiff of Academy Securities writing, my best case is that the chatter from last week of an impending and very strong deal for the US comes to fruition. Pete joins us now for more. Pete, good morning.
Morning.
That's your best case. What's your base case?
Base case, I think, is that this continues to struggle and it starts weighing a little bit more on the economy. As you just pointed out, we've been looking longer dated futures contracts, and you're out to $80 in WTI out to November now, so that's different. And you're starting in those longer months, September, October, November, you're actually at the highs of the whole cycle. So unlike the front contract, which we're still below kind of those spikes, we're seeing this kind of push out. And it's really hard to figure out who's in charge in Iran, so I think that's a big issue. And it's really hard to figure out who's willing to make that first move. I think when we talk to our geopolitical intelligence group, the consensus view is that we will probably, to end this war, have to escalate once more to actually win. That we will have to go in, that we will have to fight, and we will have to put pressure on Iran. Trump seems reluctant to do that right now, but we don't really see winning any other way right now.
Right now, we're not trading the economy, we're trading the market. And they're slightly different things. The economy's not great in Asia. In Europe, there's a real threat. In the US, things are okay, but they're better than good. If you look at the US tech story and the earnings profile of some of the chip makers at the moment, what's your best bet in the market? How are you allocating capital? What are you advocating for?
Well, as you know, we've been talking about this production for security, so we love that. And Intel was actually one of our names that we picked because we did think that the U.S. had to grow chip business organically, domestically. I think now that's almost, I've got to admit, I started selling a little bit ahead of earnings. I'm probably going to be closed a bit more. It's better lucky than smart sometimes. But, we've had that great play. I think you have to start really looking, too, now to Europe and thinking that Europe is finally going to get the joke that you have to invest in heavy industry. You have to invest in your own electricity production. You have to let BP, Shell, Total do what they're good at and not so worry, don't worry as much about carbon in 1 degree temperature changes 5 years from now, when the reality is you need electricity, you need energy. I think they start unleashing some of this. They're getting a little bit more creative. I think they're getting a little bit more organized, partly because they're getting a little bit more desperate. It kind of takes them years to figure anything out. They got kicked by Russia. Now they're getting kicked by Iran. Yeah. I think that's going to be really interesting. So I want to own the energy plays. I want to own kind of that production for security, not just now in the U.S., but really heavily into Europe.
Lisa, we mentioned it briefly. You see the pressure on the Europeans in the economy, in the PMI data. You see it in the markets, too. I think the Euro Stoxx 50 so far this week is down some 3%.
They are hit in both ways. Number one, they're energy importers, but they also don't have the tech story. And the tech story seems to be supporting the market in two ways. On one hand, you've got, of course, just the idea that there's upside surprise in the equities, but also the investment, the CapEx, which seems to be supporting the picks and shovels that we see with the semiconductors and the energy stocks in the U.S. And that's been a huge support because that is existential spending. It isn't necessarily something that's coming from an obvious use case.
It takes us to next week. So next week, next Wednesday, we get some big earnings from Microsoft, from Meta, from Alphabet. They are the big spenders, and some of them are also cutting jobs to support that spending. To Lisa's point, when they feel like it's existential and they've got the balance sheet to carry on spending, are these trades you want to be on the wrong side of, to get on the other side of at the moment?
I think we're all kind of waiting to see if software can really turn around. So the Microsoft story, I think, will be really interesting, right? Can we get this turnaround in software? And, I'm tempted. I don't think I'll get to the point this weekend, but I want to write the note, like, your costs are someone else's customers. And I'm getting a little bit worried about the job situation, right? We kind of have this working poor situation. We have affordability that's doing nothing but getting worse, right? And I know we kind of focus so much at gas at the pump. I'm getting increasingly worried about what's going to happen to fuel costs, right? Diesel is such a big component of fuel costs. We haven't even started feeling the impact of higher fertilizer prices on food costs. I feel this affordability, like this working poor, and people who are not able to make ends meet the way they thought, that income line keeps creeping higher and higher. Now you're starting to lay off some people, very nice jobs in many of these cases. I'm a little bit worried that there's a subtext to this economy that's worse, and that the one thing I'm still trying to figure out how to pick this up myself, but I feel like we are very good at identifying job loss-led recessions, right? We see the job loss, we start figuring out, we know how to deal with that. I'm not sure we've had an affordability-led recession, and despite the fact that chips and things are doing so well, I'm increasingly worried that you're seeing pressure on the consumer in ways they're making ends meet. We got the bump from, the tax relief and things. Where are they 2 months from now?
So a lot of people will be nodding along, and they'll be saying, we see this in the data, we see this in the sentiment that we have, of course, coming out through all the surveys that indicate this fear about affordability. But then stocks get rewarded for cutting staff and saying that they're going to invest in AI instead. How awkward is that? I mean, do you think that that's going to be the theme going forward, that if companies cut staff wholesale and say we're going to invest in AI, that's a buy the stock moment?
I think at some point people start getting worried about the job losses, and not at that individual company level, but at the national level, and say, where are we? And, it was just, 2 months ago, we were going to have the AI took over all the jobs, and that kind of narrative disappeared. I think that starts coming back, right? This is a little bit concerning. If you're going to lose these jobs, who's going to take these jobs? At the same time, you continue to use AI. You hear about AI slop and people having to redo work. I believe a big law firm just had to make some announcement that they'd included some hallucinations. So this is not yet perfect, and we're treating it that way. So
things you don't want to read from your law firm.
And again, I keep looking at the far side, and we might be the only species that extincts ourselves. It's like we're sitting there and going out of our way
and
to
the market's encouraging it, and this is the key point. Lisa makes it. This was in Citrini research a number of months ago, and I thought it was the most important point in that research piece, Lisa, was that you replace the operation expenses, the OPEX, with the CAPEX, and the market rewards you for it. So then you drop the OPEX again, you boost the CAPEX, and the market rewards you for it. And that's the labour market doom loop. And you end up in this really, really bad situation where the market's doing well and rewarding that kind of behaviour, and unemployment starts to climb. Now, I'm not saying that's the base case for you, or the base case for me. I'm just saying that's the fear. That's the fear of what could happen in the next several years.
Well, and essentially, if you start to see companies have to justify their expense in CAPEX tied to AI by cutting staff for efficiencies, then what does that set us up for? I mean, is that essentially what you see going forward, Pete, that there's going to be a sense that companies have to cut somewhere in order to keep spending on AI at the speed that they have been?
There's certainly some of that sense right now. And again, I think they're going to get more and more investment in the semiconductor industry, right? I think that's just one. A, you've got these companies. B, you can start looking at places like Nokia, Ericsson. What in Europe might benefit if Europe can kind of get serious about AI? You've seen some smaller companies, that BlackBerry, I think, is a company I own a small bit of. All of a sudden, that's interesting because they're doing something in the space. So you're seeing kind of everyone, I think, look to, okay, what else can benefit? I think that's going to drive that part of the market. I think it continues to do pretty well.
Can I just get a final word in on government intervention? Intel. Talked a lot about Spirit and what's going to happen there. We'll save that conversation for later this morning. Intel. I don't want to downplay the real developments taking place at this company, but how many companies do you think are re-engaging with Intel because of the government involvement and the halo that offers, and maybe they want to please some people?
I think when that was part of why we had the PROSAC, right? And we concluded Intel because of the 10% government stake. And part of my thesis had been Trump likes to win. Trump owns this on behalf of the American people. So the American people are winning, but people are going to do business with this company because you want to be on the right side of Trump. So I think that was part of my thesis. I think that's probably played out very well, for better or for worse. I do wish that when we're making these investments, whether it's in that or there were some guidelines set up and that we had some group that actually does this and was well organized. Yeah. That's not how this administration works. And fighting how this administration works isn't a good way to make money. Figuring out how the administration works and taking advantage or following it, I think, is been a good way to make money.
What's next? Defense contractors flying Spirit? Is that what's going to happen next?
No, I do think I'm looking for, anything in the drone space. The drone space is just going to continue to take off. I think a lot of those companies are private, though I'd expect a lot of IPOs. As we were talking offline, there's going to be IPOs and everything. I think you're going to see that. And I think surface drones have not get enough attention, and that's, boats, basically. So you can look at companies, again, I think the shipbuilding industry, which is allegedly why the Secretary of the Navy was let go, was he was not focusing enough on shipbuilding. That's an area I think is going to gain attention. I look at Brunswick, for example. They make small boats. Not military or anything like that, but why don't they get involved in this? I think you're going to see that this drone space explode, and I think shipbuilding really is a big focus that we need to do. So that's, if I'm betting right now, I'm shifting some money out of maybe the semis that have done so well and looking for other things.
Interesting. Pete, thank you, sir. Peter Chair there of Academy Securities. What a turnaround for Intel. What a move this morning in the pre-market, higher by more than 20%, close to 30% higher so far this morning.
Intel might make sense from a PROSEC standpoint, trademark, Peter Scheer. But I don't really understand exactly how Spirit goes into that unless you've got, defense contractors flying Spirit, which I don't think that any of them would want to do.
That was just a joke.
I know, but
exactly.
But the truth is, that's exactly the point, which is how does that fit into the same thesis, which gives anyone a sense of exactly what the roadmap is ahead for this government to invest.
Let's give an update on stories elsewhere this morning. We'll come back to that. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. A U.S. sanctioned supertanker carrying Iranian oil appears to be attempting to cross the Strait of Hormuz. The tanker is carrying 2 million barrels of crude loaded from Karg Island. It stopped signaling its location for days before reappearing on ship tracking platforms. And as you all were just discussing, Intel shares up close to 30% in the pre-market. The chip maker reporting a revenue outlook for the year that blew past estimates, signaling it's beginning to benefit from the AI infrastructure build-out. And President Donald Trump saying Israel and Lebanon will extend their ceasefire by 3 weeks. Trump announcing he'll host the leaders of both countries in the near future and says the U.S. will work with Lebanon to help it protect itself from Hezbollah. That's your Bloomberg Brief. John?
Yahira, thank you. Thank you for the update. Up next on the program, insider trading in Washington.
The whole world, unfortunately, has become somewhat of a casino. And you look at what's going on all over the world, in Europe and every place they're doing these betting things. I was never much in favor of it.
Up next, we'll catch up with John Lieber of Eurasia Group and touch base with Anne-Marie down in Washington, D.C. Live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Look at that gap. This gap right here. Equity futures on the S&P, totally unchanged. The outperformance here on the Nasdaq, high by 0.8%. Thank you to the chip makers once again. Intel, absolutely crushing it. The stock is higher in the pre-market by close to 30%. The chip stocks already on a 17-day record-winning run. Over that period, a move of more than 40%, Bramo, and it extends this morning.
Yeah, and part of it comes off of a period of time where the chip makers hadn't necessarily gotten the benefit that a lot of people had expected based on some of the CapEx plans that were announced by big tech. So that's on one hand. But on the other hand, people are realizing that this is the one trade that can keep giving, because big tech will keep spending, and they will show that they will sacrifice their people in order to keep spending. And ultimately, these are the companies that will benefit.
In some ways, it has been frustrating if you've sat this out. It's also been frustrating if you feel like someone's got an edge that you don't have. Under surveillance this morning, insider trading in Washington.
It's a little like Pete Rose. Pete Rose, they kept him out of the Hall of Fame because he bet on his own team. The whole world, unfortunately, has become somewhat of a casino. And you look at what's going on all over the world, in Europe and every place they're doing these betting things. I was never much in favor of it. I don't like it conceptually, but it is what it is. No, I think that I'm not happy with any of this.
So here's the latest this morning. A U.S. soldier facing charges for allegedly using classified intel to rake in over $400,000 on Polymarket, betting on the timing of the capture of Venezuela's then-president, Nicolas Maduro. With the latest in Washington, Anne-Marie has more. Morning, Anne-Marie.
Good morning, John. And it's not just what's happening in terms of this criminal investigation, but also the CFTC is lodging its very own in parallel civil investigation into this soldier. And this marks the first time we see that regulator take that step when it comes to prediction markets. It also comes, this own White House sent out a memo to staff a few weeks ago to make sure that they are not making these kinds of bets, especially given they have access to information. And we've seen a number of sizable trades, not just when it comes to trading platforms online like Kalshi and Polymarket, but also in our own financial markets, especially when it comes to massive oil positions put on in a timely fashion before the president comes out with a Truth Social post. And for more on this, I'm very glad to be joined by John Lieber of Eurasia Group, a friend of the show. John, thank you so much for joining me. So the CFTC is also joining in on this in a parallel suit. Are we going to see more of these kinds of lawsuits?
I hope so. I mean, I think this is actually a pretty major issue where you've got government officials who are using their position to profit. And the proliferation of new markets that allow that to happen with very little oversight and very little regulation means we're going to see more of it. So I'm actually surprised the CFTC has gotten in on this. The oil investigation that they're launching about Trump's Iran attacks, who knows where that thing leads? I mean, these could be some very politically sensitive investigations. And I think that as these things proliferate, you're going to see more of this.
Rep. Luna yesterday took to Twitter and said, unless the DOJ plans on going after all the crooks in Congress currently insider trading, this is simply skewed justice. Will there be more pressure on Congress to also make sure that congressional lawmakers, senators, staffers cannot trade?
Yeah, there's been pressure on Congress to stop getting rich off of inside information for decades now, and it seems like members of Congress somehow find a way to keep getting wealthier. So I doubt there will be any serious enforcement. The Stock Act was passed over a decade ago, and there haven't been that many meaningful prosecutions brought under it. I think that probably congressional staff are certainly scared about this, but members of Congress are right now more or less above the law here.
When it comes to Congress and the war in Iran, there's an important deadline coming up when it comes to the War Powers Act. Does it matter to this White House?
No, I don't think so. I think the War Powers Act, which was passed decades ago in order to be a check on the president's power to do exactly what Trump is doing in Iran right now, is more or less defunct as long as Congress is not willing to enforce it. And unfortunately, the only enforcement mechanism they have is impeachment, and we know they're not going to impeach Trump. So what are they going to do here?
Does this change, though, potentially after the midterm elections, if we do see a changing of power, whether that's in the House or the Senate?
It could. I mean, the Democrats would certainly control the House and maybe the Senate, but you still have, the enforcement here, which is, isn't really, there's no real enforcement channel. And I think President Trump, who in his first term disputed the legality of the War Powers Act as an unconstitutional check on his ability to conduct foreign affairs, I think probably continues to just ignore this.
Well, Obama sort of ignored it as well when it comes to Libya. So we've seen this on both sides of the aisle.
Circumstantial, legality, right? Circumstantial rule of law, where you care about it when it's your side and you don't care about it when it's preventing you from doing what you want.
When it comes to the war in Iran, where is Eurasia right now in terms of this potential off-ramp talks that are happening? There was a ceasefire announced yesterday by the president when it comes to Israel and Lebanon. Does that help the United States when it comes to trying to get the Iranians back at the table?
So if you look at where the two sides are right now, the Iranians look pretty dug in. They've got a flow of oil moving out. They've got oil revenues that are much higher than what they originally budgeted for this year. With 2 million barrels a day on average going out over the last month or so. That probably drops significantly under the U.S. Barricade that's happening. But the U.S. is quickly backpedaling off of its position. We don't think Trump is able to go back in any meaningful way because of the political constraints that are on him in the United States. And the Iranians know this. So I think the negotiations that are happening right now eventually do lead to some kind of a deal that reopens the strait, let's say by the end of May. And I think this weekend is going to be a key time as the two sides are exchanging ideas about what exactly the Iranians are going to do. Probably they are forced to stop enriching uranium. They probably get some pause over some period of time. And the U.S. probably ends up lifting some of these sanctions, which looks a lot like the JCPOA that President Obama did.
As you're saying this, I'm like, okay, I've seen this deal before that the president then ripped up and Trump won.
Right.
Is Trump willing to take a deal that he, in his prior term, would say that is not efficient?
So if I were betting on Polymarket, I would have lost a lot of money betting on Trump right now. So who knows what he's going to do? But right now, the signals that the White House are sending are that they are backing off of their key demands, and they want to get a deal to make this thing go away. And that's at least the direction of travel right now. Trump, of course, can change his mind at any time for any reason. And but that's what it looks like right now.
I spoke to the former CENTCOM commander, Votel, yesterday, as well as a 6-time CIA station chief, and they said 9 to 12 months.
Until the Strait is open again?
Until things are back to normal and potentially have a deal.
Yeah, I think there's kind of two levels of a deal. There's like the memorandum of understanding that allows the blockades to go away and the Iranians can open the Strait once again. And then there's a deal, which is, you move uranium out of the country, we get inspectors in, here's some cash. So I think that the deal part of it might take a little longer. But right now, we think they are headed towards some kind of memorandum of understanding that would sketch out the parameters of a deal without even if something's not written. But I do agree that the disruptions we're living with right now are going to be with us for a while. And the Strait's not going to be fully open till at least the middle of the summer, if not beyond that.
Right. Axios said yesterday that they were laying more mines. Doesn't the Iranians want to make this as complicated for the president before the midterm elections?
Certainly, that's what it looks like right now. There's been a lot of reporting about how Trump's tweeting is disrupting the negotiations, and the Iranians, I think they're playing a stronger hand, and I think they're playing a stronger hand too. So I think that puts the Americans in a very difficult position in the negotiation here.
Well, if they think they're winning, then why would they back off? John?
Because they want it to be. I think everyone wants this to be over and for life to return to normal.
John Lieber, thank you so much for your time. Of course, that was Eurasia Group's John Lieber, who thinks we're going into a critical weekend as both the Iranians and the Americans continue to negotiate via Pakistan when it comes to these back channels, John.
Anne-Marie, appreciate the update down in Washington. More from Anne-Marie in the next hour. Think about what we've learned so far this week from the Washington Post and from Axios as well. Washington Post indicating that it could take 6 months to clear the mines through the Strait of Hormuz. And to Anne-Marie's point, Bramo, Axios yesterday, the IRGC laid more mines in the Strait of Hormuz this week, according to a U.S. official.
They want to ratchet up the pressure. They want to delay this as much as possible. There's a sense of both sides trying to create leverage. Unclear what both sides are looking for and what the points of pain actually are to bring them to the negotiating table. One key question is, at what point does Iran have to stop pumping oil, actually shut in its wells because it's run out of storage capacity? A lot of debate on that front.
Could be close. Could be very close. Coming up on the programme, we'll catch up with Vitos Baduto of RBC Capital Markets as tech leads a resurgence in deal-making. Plus, we'll catch up with Yahira. Yahira's got your morning movers, Intel, the one to watch, absolutely soaring as the turnaround of that company starts to pay off. That name is up by 28% in the pre-market. Live from New York City this morning, you're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
So we've had a small pullback from all-time highs on the S&P 500. We've had quite a run of gains. 3 weeks of 3% plus gains on the S&P. This week we're slightly down on the week, but still up on the month by 9%. That could be, for April, the best month, going back to November 2023. This morning a gap opens up, and you can see it clearly on the board. NASDAQ futures higher by 0.9%. Equity futures on the S&P up by only 0.1%. The reason, the explanation, look to one thing right now, and that's chips. Every single company that we've seen report so far is reporting really strong guidance in this sector. That's why we've had 17 consecutive days of gains for the Philadelphia Semiconductor Index.
I thought you were going to say look to one thing, and that would be Intel, given the fact that those shares are up more than 30% in the pre-market trading. When you start to see a company that is worth this much money, when you can take a look at a $335 billion company, and that it can gain 31% overnight after reporting better than expected earnings because of the CPUs and the promise to invest, really gives you a sense of just how much of a moonshot some of these are viewed as.
Just helping to insulate this equity market from this, Brent, WTI. Brent crude this week, higher every single day this week, 5 days of gains, up on the week by some 18%, more than that now. That week, the second biggest weekly gain since this war started. It's been a big week, and it's not just the front month of the futures curve. It's the later months as well, as you look at the curve. Now, this is where things start to get a bit more fragile, Bramo. It's the difference between a prolonged shock or a transient story. This market's been pricing a transient shock. I would say that this market here, crude, Brent, WTI, slowly starting to push this out to make it slightly more prolonged. And where negotiations are at right now would speak to that.
And the key issue for a lot of economists is, are we seeing a prolonged shock that leaves prices of oil manageable but inflationary? And this is the key difference, right? I mean, if you get to $120, $125 a barrel, then you can get to the demand destruction kind of phase. But if you're at $100 a barrel for a prolonged period of time, suddenly that becomes inflationary. So people have to really try to understand what that looks like later out, because this is an economy that can handle it.
And this is a sneaky move in the bond market too. So you've had 5 days of higher crude prices. You've had 5 days of higher yields at the front end of the curve as well. Two's back to about 384, up a basis point on the session, up by double digits so far this week. Now, with some 16 basis points off the high of the year, the crazy days of 4% are still behind us, but we're getting closer, Bramo. We're getting closer this morning.
Well, and part of the reason why is because people are assessing exactly how do you measure inflation, exactly what is the appetite going to be to cut rates, even with Kevin Warsh at the head of the Federal Reserve. And really, what does this mean if we have higher for longer oil prices and an economy that keeps chugging along?
We'll come back to that story a little bit later this morning as we count you down to the open, about 3 hours away. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. There is no stopping Intel this morning, up 28.5% in the pre-market as it's on track to open at its highest level ever. The chipmaker forecasting revenue well above estimates due to hot demand for its CPUs. And this really speaks to the turnaround under CEO Lip-Bu Tan, with the conversation shifting from whether Intel can survive to how fast it can scale to meet those needs for AI. And sticking with chips, because you are seeing a spillover into some names like AMD, up 10.7%. ARM also up in the pre-market as we see this historic run, as you said, in the Philadelphia Semiconductor Index up for 17 straight sessions through yesterday. Speaking to the strong earnings we've gotten from Texas Instruments, as you said, and as investors look to put some capital to work during the Iran conflict. And we are all chips this morning with TSMC ADRs also rising 3.25% in the pre-market for a different reason as Taiwan moves to loosen investment rules, allowing funds to put more money to work in a single stock, with JP Morgan saying it could unlock billions in inflows for this name. John.
Yahara, thank you. More from Yahara later this hour. On our radar this morning, the US and Iran maintaining blockade of the Strait of Hormuz and President Donald Trump refusing to set a timeline to resume peace talks.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. We were in Vietnam like for 18 years. We were in Iraq for many, many years. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
The president posting on Truth Social, quote, "I have all the time in the world, but Iran doesn't. The clock is ticking." Elsewhere, the DOJ charging a U.S. Army soldier with using classified information to make more than $400,000 on Polymarket. The Special Forces soldier is accused of placing bets on whether Nicolas Maduro would be out as Venezuela's leader. And finally, Meta is planning to cut 10% of the workforce and won't fill 6,000 open roles as the company looks to offset AI spending. Microsoft also announcing it will offer voluntary buyouts to thousands of U.S. employees.
Yeah, and the speculation here is that they're trying to get ahead of an increase in capital expenditures and saying, look, we're getting rid of some costs on the overhead here by getting rid of people. And this really, to me, is a key issue for the market. Do you reward that? Is that a positive? If you cut people to invest in CapEx right now, is that a boon for future growth? And at what point does that reach a stopping point because people are concerned about growth when it comes to the economy and when they're worried about the actual use cases, because ostensibly it is to benefit humans?
I'd suggest that Meta is a drop in the ocean right now compared to what they're spending. I also think there's a difference between saying, you know what, at our company, we've made these massive efficiencies, we don't need these people anymore. That's one story. Another way of painting this is saying we're spending so much, we need to cut costs. This felt like the latter and not the former.
Well, and at what point do other companies have to do the same, right? At what point do companies have to justify their increase in AI expenditures by showing efficiencies that come at the expense of personnel? I mean, look, this is the fear so far. We are not seeing it in the labor data. We are seeing actually an acceleration in the labor data. It's important to point that out. At the same time, headlines like these from Meta and Microsoft really illuminate just how much people are really worried about this and how much it could become a reality, particularly in these companies.
4-week average on jobless claims right now, 210,000. If I just showed you that, you wouldn't think there was anything wrong with this labour market.
And we were talking to Neela Richardson yesterday, who said she actually sees an uptick in hiring, particularly in small businesses. So we're not seeing that necessarily yet. At what point, though, do people start to worry about the monetization of some of the AI expenditures that they've been making at their companies?
Meta in the pre-market high by 0.2%. That company reporting next Wednesday. Elsewhere, a surge in multi-billion-dollar deals for chips and AI infrastructure, driving a more than 40% surge in M&A activity. Vito Spaduto, the head of RBC Capital Markets US, writing mega deals in tech are masking subdued middle market activity. It's a consolidation of power by those who can close the AI valuation gap right now. Vito joins us now for more. Vito, good morning.
Morning.
It's good to see you. It's great to see you. There's so much to be concerned about right now, but I just want to talk about the C-suite and the confidence that you see hearing from CEOs. What are those confidence levels like this morning?
Yeah, so it's interesting. We've talked about it before here about the Conference Board CEO Confidence Index. And, you know, at the end of last year, the last 2 quarters, it was sitting below 50 out of a scale of 100, which means it was good, but there was still some trepidation in terms of what the forward looked like. There was a spike in the first quarter measured at the middle of February. And you got to keep in mind, these are quarterly measures, and you have to think about the exact date of when it came out. So it was a mid-February measure of 59. So a significant increase. CEOs are feeling positive. What are they feeling positive about? It's their balance sheets are strong. They understand their business. They've been operating in a cloudy environment, and as a result, they've been very resilient. They're still, their biggest concern is just overall uncertainty out there. And if you think about mid-February to now, we've got the Iran war conflict that's occurred. I think you're starting to see that in the earnings announcements this week, a few folks referring to it, and so we think about it. You just talked about job cuts. One of the questions I'd ask you is, underlying that, yes, they're announcing that they're making cuts in specific areas, which makes sense, but where are they adding jobs? And so, you know, I think about the marketplace more about where they're transitioning jobs to not necessarily the numbers of cuts in the one place. So I'd ask, what's the net number as a result? Because I think in the Meta announcement, they did talk about the fact that they were adding in other areas, which would make sense because you're changing the skills that you need in this environment. And I think going back to the CEOs, they feel pretty confident because they're looking at their businesses, they feel strong. With equity market valuations up, you have a really strong currency.
Yep.
So when I look at the various barometers out there, or whatever you want to call it, we've seen deal volume up year to date by 43%. Although globally, it was an easy comparison to the first 2 quarters of last year, and certainly the second quarter is going to be an even better comparison to last year. We've seen CEO confidence, as you've talked about. I think AI, has been a big driver of that. And I think you're seeing the companies that are the leaders out there just continuing to consolidate. And as we'll talk about, the large-scale transactions that are happening and that are being considered are just unprecedented in the time period that we've all been around.
That last point is the point I want to pick up on. The ones being considered. How much has changed? And it's not just financial conditions we need to talk about here.
Yeah.
It's the regulatory backdrop as well. How much has changed?
Yeah, look, our friends at McKinsey have written about how AI is just accelerating the deal pace. So they estimate that the upfront work on transactions is probably shortened by 10 to 30% by the use of AI. More importantly, down the road, they expect in a couple of years that integration is going to be 50% handled by AI tools, which, when you look at it, it's making it easier. I do think, from a financial perspective, balance sheets are stronger, like I said. The equity markets are higher, so you have a higher currency. But then you've also got a regulatory environment that folks are looking at and going, if I'm going to do something substantial, now's probably the time. And if you think about that, there's been some whipsaw. Prior administration was more difficult. They turned down a Spirit airline merger. This administration is considering investing there to save that company. You've seen a United and American rumored discussion, whether there were conversations with the president. When would you ever have had that?
Wait, hold on 1 second. I have to break in here.
Yeah.
Do you think that actually could get done? That kind of transaction that in the past would have been absolutely shunned by antitrust regulators?
Look, jokingly, I'm not a lawyer. I'm married to one, but I,
An M&A banker married to a lawyer. Fantastic.
It's great. Yeah, so I would sit back and say, look, I find it very difficult to think how that would happen, just given the scale and what they would control, and so I think it can be discussed. But what's happening is you've had American having to respond to it. You're certainly having others now have conversations. And what it's going to do is going to prompt other parties to consider deals and go, well, if that's being talked about, I better be thinking, if I'm not already. And so I think the knock-on effect is more of what it causes in the dialogues. And look, we always talk about and have joked that M&A bankers in our M&A team, same thing, always talk about the strength of the pipeline. So when we say pipeline are engaged transactions and mandated transactions. So these are true deals that clients have said, let's evaluate or pursue this. There was a step function change in pipelines at the end of last year where it stepped up in terms of quantum of what everybody has in their pipelines. And it's stayed there this year. What that means is there's more transactions and there's larger transactions. And so, one other point I would just make is when we think about the U.S. year to date, the U.S. is up 43%. It represents half of the M&A market year to date. Okay, but number of transactions are down 30%. And so we like to talk about the K-shaped economy. This is like the K-shaped M&A market in terms of smaller deals are kind of flat if you're below $1 billion, whereas deals that are $5 billion or greater are up 125%.
So this is where I want to pick up, this idea that it is resilience to be bigger. It is better to be bigger. And right now, there is a moment of excitement around AI that may not be replicated again.
Yeah.
Is this the window for all of the AI-related names to get in? Because right now, the enthusiasm is kind of reaching its peak.
Well, I think the way I would look at it is we've been talking quite a bit about, valuations will get a pop when someone talks about their AI investments or what they're doing in that front. I think this year's an inflection point where if by the end of the year you don't have a clear AI strategy that's already implemented, and including in your M&A playbook, for example. If you're out there and you realize that I'm low on skills in this one area, I need to go acquire this, or if you just have the graphic up on the screen of all these large AI-related acquisitions, investments, and partnerships and the like, if that strategy isn't locked in by the end of this year, I think there's a permanent valuation discount, meaning you're seeing volatility when folks talk about it. You've seen some of the companies talk about earnings this week that have talked about the forward pipeline and how much is being driven by AI, and we're now starting to see it translated into the results. They're, again, step function to a permanent level. And I think it's even worse for the folks that are considered the laggards, where if you haven't cleaned that up, you're going to be sitting in this lower valuation level for longer, and it's going to be hard to get out of that.
Vito, it's good to see you. Thanks for breaking it down.
Great.
Thank you, sir. Vito Pizzuto there of RBC. Just think about the moment we're in. The fact we're even talking about American and United potentially getting together, the fact that we're even anchoring the conversation that way, to Vito's point, just opens the door to considerations of things that we'd never think about.
I feel like 2026, anchoring to the extreme should be the motto, right? And essentially, what else can you get? What can you loosen up as a result of anchoring to the extreme?
A page out of the president's book. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. DeepSeek unveiling its new flagship AI model, calling it the world's most powerful open source platform. The Chinese startup is previewing versions of the V4 Flash and V4 Pro series, touting top-tier coding and reasoning capabilities. The new model arrives more than a year after DeepSeek ignited a $1 trillion market sell-off. Warner Brothers Discovery shareholders voting to approve a $110 billion takeover by Paramount, beating out a rival bid from Netflix. The deal offers shareholders $31 per share, but still faces antitrust review in the U.S. and the EU. And President Trump says he's looking at the idea of the U.S. buying the struggling carrier Spirit Airlines, saying it could be a good investment for the federal government.
So we are looking at Spirit. It's in a bankruptcy. It's in bankruptcy court. And we're looking if we could get it for the right price. I'd do it to save the jobs. I'd love to be able to save an airline.
The proposal would include a package of up to $500 million that gives the government the right to purchase up to 90% of Spirit after it emerges from bankruptcy. That's your Bloomberg Brief. John?
Yahira, thank you. Have we got time for a Mets joke? Do you want to squeeze this in?
No, absolutely not. But fine, go ahead. Vito, you planned all evening.
Oh, my. Well, I'll caveat that I'm a Yankee fan. And,
no kidding.
And as I was coming in, and, apologies, I was talking about, if you want to relate the current baseball season, which how can you not be romantic about it? You might think about, the Dodgers versus the Mets. Would you like to make a large acquisition and have it be considered Ohtani or Soto?
Can I just tell you that's not romantic to me at all? But I think that's
it's
lovely.
Wonderful.
Thank you. I appreciate that.
I don't think he needed to tell us he's a Yankees fan, did he?
I think that pretty much you start saying Mets and everyone's like, I know where this is going.
Thank you, sir. Up next on the program, sitting on the sidelines.
We think the Fed is very inclined to cut rates if job data weakens, if growth weakens. But at the same time, they're perfectly content sitting on the sideline and holding pat.
Up next, we'll catch up with Kay Hurt of JP Morgan Asset Management.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, sitting on the sidelines.
We think the Fed is very inclined to cut rates if job data weakens, if growth weakens. But at the same time, they're perfectly content sitting on the sideline and holding pat as long as there's this lingering concern about inflation in the background and the job data still looks okay and growth still looks pretty good. And so we're in a wait and see mode for the Fed. But ultimately, we do think the Fed will still get in at least 1, if not 2 cuts by the end of this year.
So here's the latest this morning. Investors are waiting Fed Chair Jay Powell's final rate decision, potentially final rate decision, at the helm of the central bank. Investors expecting rates to remain on hold. Kay Hare of JP Morgan Asset Management writing, expect no change to Fed policy, and we're unlikely to see any family fights. Kay joins us now for more. Kay, good morning.
Good morning. Well, first off, I never know what we're going to talk about on surveillance, but I was a little surprised by the Mets conversation, I have to say.
Well, I was surprised too, and I think that we need to bury it right there.
Okay, but they've won 2 in a row, so maybe this is your time to be a proud Mets fan.
I think that's going to jinx it.
I'm trying to make you feel better.
I appreciate that.
Feel better.
Let's talk about the Fed instead.
Let's talk about this Federal Reserve. I said it could be his final rate decision at the helm of the central bank. Do you think it will be his final rate decision?
I don't know, is the honest answer.
Does that complicate your ability to forecast what this Fed's going to do or not?
So first off, you started talking about next week, and I thought, my goodness, that feels a very long time away. It feels like, given the volatility in markets, the news flow, the Iran conflict, it feels like we're almost day to day in terms of what's happening in the day's markets while keeping longer term focused on how we manage portfolios. So next Wednesday feels a long way off already. So no. I think the fundamental issue, I know you have your concerns about inflation, and they are well-founded, and they're in the market in terms of what, that we have to acknowledge those. But the real factor in the market is what happens to jobs. You've got some major headlines this morning about layoffs in the job market. The job market's intact. I mean, the Fed's going to stay on hold either way. Next week, there's not going to be any family fights. I don't think there's going to be a lot of discussions. Fed stays on hold. The Fed stays on hold until we see either a reacceleration in the job market and wage growth in particular, or we see a reacceleration in the unemployment rate. Has the unemployment rate peaked at 4.5, or are we headed back down? It's just that simple.
Would you be concerned if the Federal Reserve changed the way it measured inflation, given the fact that that's what Kevin Warsh, the presumed next Fed chair, suggested?
Not really.
You wouldn't care?
No.
To a lower
is
metric.
It trimmed? Is it mean? I mean, look, we look at PCE, we look at trimmed PCE, we look at, you want to look at wage labor, you can look at employment cost index, you can look at unit labor cost. We're already looking at 437 different ways. I don't know that it really gets me too worked up.
You did tell me that I'm worried about inflation, and perhaps I need
you
to
reminded me.
But I guess what I'm worried about is, as John was pointing out earlier, it's the longer this goes on, the more the forward curve is pricing in higher oil prices for longer. And commodity prices in general have been going up. And they're not going up to such a degree that would suggest demand destruction. They're going up to a degree that would suggest inflation in an economy that otherwise is fairly strong. At what point does that change your calculus of how much inflation can be tolerated in this economy?
It's an excellent point. And you're exactly right that the question is really on how long does this go on? This is short. There's no change, right? When you go pay for gas, maybe you don't buy that Diet Coke and bag of chips at the gas station. If it goes on longer, the question is, does it go long enough that it affects consumers, but they don't change their behavior in any way, right? Our view is that you're going to get demand destruction in some way. And the other thing is, in this case, you've got a arguably one-time supply shock on the oil side, and it's not like 2020 coming out of COVID when you also had demand driven. You had an acceleration of things. I would submit when you start to see airline prices go up, you start to see other things go up, consumers respond. In fact, you're starting to see that in corporate America when you start to see layoffs. So, overall corporate profits are strong, as you've seen. We've had, about 25% of companies reporting earnings, and I think the vast majority, 3/4, 80% or so, are beating. Well, as bond investors, we don't care as much about earnings, but you look at the sales side, revenues are up 7%, profit margins continue to look very strong. So that's a pretty good backdrop. We've got fundamental strong balance sheets in good shape, consumer balance sheets in pretty good shape. Things are solid. Do they get screwed up by a sustained conflict? On the other side, we've got, when I was here a couple of weeks ago, we were talking about UMich consumer sentiment. I think the final number comes out today, which is not a major piece of data flow, but consumer sentiment has been weaker than we've seen ever.
Which is crazy to think about.
It is crazy to think about. Worse than GFC? I mean, I felt a lot worse then than I do now. But if consumer sentiment looks like that, that's going to start to have an impact on how consumers spend. And there's your reaction function on the consumer side.
Does that mean the 10 years are by at 4.33?
Yeah. We've had a range. I mean, you've got my friends and colleagues on regularly, and I think Kelsey was on talking about a range of 3.75 to 4.25. We breached it on the top end. But, yeah, we see value in duration. We see value in high-quality credit, too. I mean, the IG market and the high-yield market have both absorbed another extraordinary amount of supply. And I think I was on a month ago and told you all deals are 4 times oversubscribed in IG and new issue concessions of 4 basis points. This week, we're down to 2.4 basis points of concessions. So there's a lot of demand. Now, there's absolutely dispersion among that. There's a front page article in one of the major newspapers today about some indigestion on supply. And I think we've had substantial supply from the hyperscalers, and then on the data center, AI hyperscaler related. Yeah. So
things are okay.
Things are okay.
Better than okay, maybe. Kay, thank you.
Things are okay.
Appreciate it. Kay Herr of JP Morgan Asset Management. Fellow therapy for us both. The Mets are doing okay.
I can retire now.
Things are okay. Up next, Sarah Hunt of Alpine Saxon Woods, Bob McNally of Rapid Energy, and we'll catch up with Ted Mortensen of Baird and Joe Davis of Vanguard.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The U.S. economy will still do okay, but we're going to grow at a slower pace.
Inflation is a really careful watch point. I wouldn't dismiss it.
The reality is we still a have versus have-not economy.
The longer this lasts, the main adjustment mechanism becomes lower demand and lower economic activity.
There's a good chance that now we're looking at a 2026 where we could see no rate cuts.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures positive by 0.1% on the S&P. On the Nasdaq, there's your outperformance, higher by 0.9%. Intel in the pre-market up by more than 20% so far this morning. The good news from chips keeps on coming and insulates this market from this here. Brent and WTI. Brent crude higher for 5 consecutive sessions on the week so far, up by something like 18%. Brent crude just short of 107.
It seems like at least the U.S. economy is coming around to this idea that it can keep powering through even if oil prices remain at this level. And that's what you're seeing, and it's really resulting from the AI trade, the idea that people will still invest in semiconductors, in energy, and some of the other picks and shovels that are required to power this incredible industrial change. And that, I think, is underpinning the resilience that people keep scratching their heads and saying, we don't understand. There's a hot war. Maybe there's a ceasefire, very unclear resolution. Oil prices are higher, and yet the U.S. market keeps shrugging it off. It is this AI trade. It is the semiconductor.
To summarize, this is how it goes stateside. I'm sure it doesn't sound like this in Asia, if you're up this evening. I'm sure it doesn't sound like this in Europe this afternoon, but this morning in New York, this is what it sounds like. We can live with this. $100 crude, we can live with this. JP Morgan, Brent at 100, still consistent with earnings upside. We can live with this. Morgan Stanley, the earnings recovery remains intact. We can live with this, and the earnings speak to it.
Yeah, and one thing that people keep pointing to is on an inflation-adjusted basis, oil prices aren't nearly close to the highs that they've been historically over time. And so this is something that absolutely people can absorb. I keep going back to what we heard from Scott Kirby of United saying that even though prices have gone up on airline tickets, people are still buying. He has not seen demand destruction to the degree that he thought he would. That is what we're seeing in the economy as well. You can point to inflation and what that means on the other side, but nonetheless, this is an economy that keeps chugging along.
Well, let's work through the data. So retail sales this week, better than expected. ADP, jobs better than expected. Jobless claims better than expected. 4-week average 210,000. All of that is good news. The PMIs, better than expected. You can say that about the US data. I'm not so sure you can say that about the data internationally, in Asia, in Europe?
In Europe in particular, and the PMIs came out and they were highly disappointing given the fact that you've got the 1-2 punch of both imported energy as well as the lack of the technology and engine that you see in some of the other regions, which again, it goes to the question of winners and losers, a bifurcated kind of result for the entire geography, considering the oil shock that really has disproportionate effects on different regions.
Futures this morning positive by 0.1% on the S&P 500. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods as chip stocks rally, Bob McNally of Rapid Energy with crude gaining for a 5th consecutive day, and Joe Davis of Vanguard forecasting caution at the Federal Reserve. We begin this hour with stocks looking for direction following a strong showing from semis. Sarah Hunt of Alpine Saxon Woods writing, it is a remarkably narrow group of companies that account for earnings growth this year, but the promise of AI continues to drive investor enthusiasm. Sarah joins us now for more. Sarah, good morning.
Good morning.
Let's start with chips. What a run. 17 days, record daily winning streak. Over that period since the end of March, we're higher by more than 40% on that index. What now?
That's a great question, but I think Intel just answered some of that last night and said we see an enormous amount of demand. It's the forward-looking, and it is the question of, are we starting to make money in AI? And it looks like we are. Like all of that concern that people had about return on investment, as things get deeper into corporations and other places, you're starting to see people think, okay, we're really going to see a return. So it becomes less about are we wasting money and more about where are we spending it and how are we spending it. And I think that you're seeing that run continue. And I think right now it's hard to get in front of.
For every Intel in semis, there's a ServiceNow in software. For every Texas Instruments, there's an IBM in software. Are we going to start to see that divergence pick up again? Because IGV in software had a great week last week. It's had a terrible 24 hours.
It had a great run, but I mean, that's one of those things where it was down so far that almost anything looked up from there. And now I think the question really is going to be, I see this as being an and more than an or, but the question is, you had a lot of growth in software that was really baked in for long periods of time. You had a lot of cash flow. You had good margins. Now the question is, are we going to need as many seats? Do we need as much of this? Do we need as much of that? So I don't think it's going away, but I think that what people were looking at and the growth that they were anticipating is now really under question, and I'm not sure we have an answer for that yet.
As an investor, do you reward companies like Meta and Microsoft that cut workers in order to afford investing more in AI?
I think that's a really tricky question right now, and that just came up from Meta and from Microsoft is one of those things where part of the boom was also supposed to be that these companies were growing. So laying off people while they're spending money is, I think, going to give some of the questions about where this labor market is going some pause. Right now, it's probably you're seeing more hiring in smaller businesses and larger businesses. So this could equal itself out. But I do think that there's going to be a question about, if you're only cutting people so that you can spend more here, is that the right balance? And I'm not sure where that falls yet.
This has been a lot of treading water in terms of just a question in general about headline risk, given the fact that the oil story has kind of been a drumbeat through this entire period of time, even as AI-related stocks do really well. How does it affect your psychology as an investor that you have government intervention with the likes of Spirit? You have a government investment in Intel that is maybe giving it an upper hand in this race to semiconductors. And you have allegations of insider trading, making the feeling that maybe there's some level of a playing field that's been rigged. Does that together paint a picture that's concerning for you as an investor, or is that sort of lumping too many things together that don't belong?
Well, I think that the markets are really big, and I think that some of those things, I don't like to see any of that. I wouldn't want to see any of that. I want someone to go policing that, right? They're trying to trade on inside information. But I think that you've got such big markets and such deep markets. It's really a question of, and I've heard this the last couple of weeks on the show about how if we didn't have the Iran thing, would the economy be booming in a much bigger way? If we didn't have the energy problem, would this be less of an issue? For the United States, it's less of an issue because of the energy. You have more energy security here. But I think that, one, it elevates energy back into the discussion about whether or not it's an investable class, because you need so much of it to drive the AI boom that is fueling all of the exciting things that people are looking for in the economy, and the economy and the stock market are also not always the same thing, right? So what people are excited about in the stock market is not necessarily playing through immediately in the economy, but you are seeing some better data that people were worried about, especially after that bad UMISH data. So I think that, what people are saying and what they're doing right now is not aligning, and so until that happens, the economy looks reasonably good in the United States.
I'd suggest that it's leading to a reduction in the things that we have a confidence about, have a high degree of confidence about, which has led to the crowding in tech again. And I do wonder, if we didn't have this shock in Iran, in the Middle East, whether we'd have broader participation in the equity market?
I think you'd have broader participation, but I mean, you could also do the counterfactual of if we didn't have this boom in tech, we would be looking at a much worse situation all over the place, just because you didn't have something where people were chasing what they thought was going to be higher productivity and better workflows and everything else. So I think the dueling narratives that are going on switch back and forth, but optimism is definitely leading the pack right now. And I think that as we get through earnings, and we have a lot of earnings next week, right? We've got a lot of big tech earnings, and Intel had good numbers. It's going to be interesting to see how that plays out with everybody else. The fact that Microsoft and Meta are saying we have to slow down on, we have to get rid of people and we're not going to hire new people, that's a little concerning in the longer term, but we have to see if that plays through to everybody else as well.
Piling into tech again this morning, session highs on the S&P 500 up by 0.4%, on the Nasdaq 100 briefly through 1% higher so far this morning, Bramo.
Yeah, when you have moves on major mega caps of 28 to 30% in pre-market trading, that's the kind of thing that fuels that kind of gain in the NASDAQ. Again, how much are we seeing indexes heavily weighted to this trade and increasingly bifurcated from the underlying economy?
Next Wednesday's a major day. Federal Reserve decision, and the Fed decision, I have to say, feels like a sideshow compared to what happens later on this afternoon when we hear from Meta, Microsoft, Alphabet, and perhaps Amazon as well. How high is the bar for the big spenders next week?
It's really going to be about how both what they say and how investors take that. And I agree with you with the Fed, but I think that's more because the higher oil prices and the shock through the pricing system makes it unlikely that they would do what the market wanted, which was cut rates. It also, Powell's been pretty clear that he doesn't want to raise rates, at least in the near term. So I think that it's less of a sideshow for any other reason than it looks like the answer is they're not going to do very much. But what happens with those big tech stocks and how those earnings are taken and what they say, I think is pretty critical right now with the market sitting at new highs. I mean, that was such a fast snapback. And, you know, to your point earlier today, you talked about the fact that last Friday we were sitting here and the Strait was open, and now it's not, and the markets are still at new highs.
Or at least we were told it was going to be open.
We were told it was going to be open.
Was it really ever open?
No, and that's and what we've been saying all along is show me the traffic. Show me the traffic. It doesn't, whatever you're saying, show me ships getting through, show me stuff coming through, and then the market can be happier. Right now, I think there is a little bit of a sense of it's going to happen, so it's going to be fine. I'm a little worried that the longer that takes, the harder it is to recover.
Sarah, it's good to see you. Thank you. Sarah Hunt there of Alpine Saxon Woods. I'd argue around the Federal Reserve, we've just reduced the drama just a bit. Just track how things are building. Get away from the hearing with Kevin Walsh and the back and forth with certain senators and just focus on what we're hearing from elsewhere. The Treasury Secretary, in the last few weeks, saying it would be understandable if this Fed remained on hold. The NEC Director, Kevin Hassett, and I don't think he would say it unless that it had endorsement around the White House, that it's OK if the chairman of the Fed stays on if we don't have Kevin Walsh confirmed at the Federal Reserve. Things have just calmed down, I think, around the institution.
Yeah, you always like to say benchmark to the extreme, and it seems like this whole conversation has been benchmarked to the extreme. The idea of Kevin Walsh having an office right next to the White House and President Trump going over there and telling him what to do as Chair Powell stays at the Federal Reserve, that seems to be a moot point at this point, and it seems like this is moving along. There also is speculation now that potentially there could be an off-ramp for President Trump to actually get Kevin Walsh confirmed by the middle of May, when he should be getting to the Board of Governors. So a lot of off-ramps. It seems like nobody in the market really cares anyway. They're just sort of saying this is, you know.
Semis.
Yeah, semis. Exactly. We're not really interested in this bachelor.
By chips, apparently. Nasdaq futures much higher again this morning. Equity futures on the S&P higher by 0.4%. With an update on stories worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. The U.S. increasing pressure on Iran with its naval blockade near the Strait of Hormuz as it tries to get Tehran to agree to more talks. President Donald Trump writing on Truth Social, quote, "I have all the time in the world, but Iran doesn't. The clock is ticking." The White House is giving a 90-day extension to a key shipping waiver, marking the latest effort by the Trump administration to make it easier to move oil, fuel, and fertilizer. The extra time is expected to immediately help U.S. refiners seeking waterborne shipments of crude. And as Lisa mentioned, President Trump reportedly suggested he would be open to an alternative investigation into Federal Reserve Chair Jay Powell and the cost of the central bank's renovations. That's according to Semiconductor. The president's potential shift could provide an off-ramp to the Justice Department investigation, holding up Kevin Walsh's confirmation. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara later this hour. Up next on the program, diplomacy on pause.
How long are you willing to wait until you get a unified response?
We were in Vietnam like for 18 years. We were in Iraq for many, many years. We were in the Korean War for 7 years.
I've been doing this for 6 weeks.
Well, I'm not sure we want the Strait of Hormuz closed for 18 years, or 7 for that matter, but we'll have that conversation in just a moment. Bob McNally of Rapid and Energy joins us next from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Check out the moves this morning. Higher by a third of 1% on the S&P 500, erasing some of this week's losses and potentially taking us into positive territory by the time we get to the opening bell later this morning. Positive territory for the week. On the Nasdaq, flying. On the Nasdaq 100, up by 1.3%. Intel up in the pre-market. This move's crazy. Up by more than 20%, even with the rally we've seen in chip stocks over the previous 17 days.
They're getting it done. When you take a look at the results, and they're showing that growth when it comes to their AI production. You also hear things like Elon Musk using them for some of the fab production. And they keep talking about CPUs. There's this question about TPUs for the more complicated compute and the CPUs that people use for a lot of the basic tasks that they need. They're doing it well, and clearly people are rewarding them.
This is the tug of war right now. On the one side, you've got the secular tech story, and on the other side, you've got the cyclical threat in commodities. Check out the commodity move this morning, pulling back just a little bit. We're down by a third of 1%, 104.70. WTI at about 95, up on the week on Brent at the moment by double digits, and potentially the second biggest weekly gain we've seen on crude since this war started.
Yeah, and I would broaden that out and say there's a tug of war between strength in the underlying U.S. economy with tech and other aspects of it, and this higher commodity price. Procter & Gamble just reported earnings beating expectations for the first quarter, but talking about $150 million extra commodity cost. That said, still maintaining guidance, because guess what? There is so much strength in the consumer because people want to look beautiful when they go on Zoom or whatever else they're doing. So to me, this just highlights the tension here, that people can offset some of the potential costs with the strength elsewhere.
Sometimes I don't even know how to respond. Is that what's supporting this economy? People want to look beautiful. I mean, to some extent, it probably is.
Driven by growth in the beauty category.
There you go.
I mean, Instagram, although I think that fake lashes are out.
Single-handedly just holding up this equity market.
I think so. Remember the pandemic? The lights that people would get to try to look beautiful, and the different filters, and people like beauty products.
I'd love one of those lights right now, to be honest with you. Let's turn to the bond market. As crude comes off session highs, bond yields do too. And if you get out to the long end of the curve right now, we've got 10s down to about 431. 30s at about 490. We've been tracking the moves at the front end of the curve, higher by more than 10 basis points this week. Now down by a single basis point in the session, but north of 380, it gets your attention, and there are several reasons for it. Crude has been pushing higher through the week. with the exception of this morning. We've moved away from some of those highs, but you've seen the data improve as well. ADP, jobless claims, retail sales, things have looked pretty good so far this week.
Consumers have absorbed higher prices, and if prices of gasoline, of diesel, of just crude in general and products related to it stay higher for longer and people are able to absorb it, well, all of a sudden you end up with an inflationary type of push under a market that otherwise is resilient. And this is, I think, what the Fed's going to have to deal with.
Let's talk about the Middle East. Under surveillance this morning, diplomacy on pause.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
Brent crude this morning just eking out another gain of 0.1%, potentially a fifth consecutive day of gains on Brent so far. The president refusing to set a timeline for restarting negotiations with Iran. The truce remains fragile. Anne-Marie joins us now from Washington for more. Good morning, Anne-Marie.
Good morning, John. Yeah, the truce right now does remain fragile. At the same time, we do see the administration looking for some of those tools in the toolbox that could be used to really make sure that American consumers are less vulnerable to what is going on in the war. And we saw that today, Jonathan, with the White House extending the waiver for the Jones Act for another 90 days. And to discuss this all, I'm joined by Bob McNally of Rapidan Energy. Bob, thank you so much for joining. It's not really a surprise that they're extending this waiver for another 90 days. Is it helping?
It does, Anne-Marie. It helps on the margin. It's a few pennies. California, especially the East Coast, it makes it a little easier to move gasoline where we've got tons of it, to those regions from the Gulf Coast. So it helps. Same thing with the RVP waivers, the emissions limits on gasoline. Those things help at the margin. But when we're talking about the largest oil disruption in history, 15% of global supply, ongoing now, it is a drop in the bucket. Good step, good to do it, but a drop in the bucket.
The United States has been less vulnerable than the rest of the world. If it starts to pressure this administration more here, if prices go up higher, what else can they do?
Well, there's not much else that's good that they can do. There are bad things they can do, in my view, right? And the two ideas under discussion are, one, go into the futures markets and try and sell oil futures in some way, if they can find a legal way to do that. I think Scott Bessent, above all, would know that would be a folly and a mistake. The other is, God forbid, they decide to throw up export restrictions on products or crude, like the Chinese have, like the South Koreans have.
At one point, that really was something they were seriously discussing.
Well, absolutely. In 2022, President Biden looked at that when we had the all-time high in gasoline at $5 a gallon. And one would hope this administration, which attacked President Biden for limiting exports, looking at LNG, it would be quite ironic if they did. Now, look, they're telling industry, and we believe them right now, not on the table. They're not going to do it. At Rapidan, we have a 35% probability. But I've been in the White House during emergencies. If we head up this summer towards and beyond $5 a gallon, and those walls close in the White House, you never can rule it out.
Does it make it more likely because we are in a midterm election year?
Well, yes and no. It's President Trump's last term, I think. And look, I think he knows he's going to lose the House. Now, something that put the Senate in play would be alarming. So on the margin, it does. But at any time, any president doesn't want to be the president who owns the highest gasoline prices, a new record above $5 a gallon. And so they will look to desperate measures. And I just hope that they don't do that, because I think it would be counterproductive. It might work for a few weeks, and then we'd be worse off.
Let's talk about the Strait of Hormuz. You had a great note out talking about how you don't think this is a leaky blockade. There was some reports that some Iranian vessels were turning off their transponders and getting through. Are they getting through?
They may be getting through the line in the Gulf of Oman, but this blockade is across many oceans. CENTCOM is staffed up and ready for this. We're tracking every boat that comes out of an Iranian port. Just the other day, we picked up one in the Bay of Bengal. We can get them in the Pacific. So while we may be allowing some boats to cross the line, if you will, that doesn't mean that they're going to get to their port at destination. I think they'd be picked up later by other assets we have further afield.
When it comes to the blockade in Karg Island, the Treasury Secretary has said basically they're waiting for shut-ins. When could we see that happen to Iranian
We estimate it could be at least a month, if not more. So the big debate is how much storage capacity do they have? At Carg, we can all see that. That's filling up rapidly.
They're going out, though, and also buying empty vessels.
That's right, and they have floating storage as well. However, what's harder to measure is inland storage. They have tank farms inland in Iran. So even if we see Carg Island fill up and stop to load tankers, that may happen, they still may be able to avoid or delay shut-ins if they have inland tank farms that are filling up. We would estimate 2 months at the max. Somewhere between a month to 2 months would be before you see major shut-ins in Iran.
So if this is 2 months, do you expect Iran to continue at this posture right now with the United States?
We do. We think they're dug in. They think they're winning. Their leadership is fractured, but it's functioning. They know they have President Trump by the throat here. And with regard to Hormuz, and their strategy is just wait for those higher oil prices to soften up the president. I think they're going to stick to it.
What do you think the U.S. response would be then? If they're dug in and there's no movement, do we just start escorting vessels through the Strait of Hormuz?
Escorts come later. I think, though, we have to do the military suppression of Iran's boats, mines, missiles, that they have to threaten the ships. I think we should have started doing on the first day. We're seeing reports now the president has put a kill order on these fast attack craft, on these mine layers, and it looks like they're laying more mines. So I think there's 2 ways, Anne-Marie, this is going to end in terms of Hormuz. We're going to have a ceasefire that permits free flow of navigation, or we're going to have to militarily, forcibly reopen that strait. And that's 4 weeks at least if you start it and stick with it, which we haven't yet.
Well, apparently, according to a Pakistani official, the Iranian foreign minister is going to be in Islamabad this evening. Potentially, could we see a ceasefire as soon as this weekend? Do you think we're there? Because the Iranians, if history is any indication, like to drag their feet with negotiations.
Absolutely. So at Rapidan, we have a 20% probability on that. You can't rule it out. The president always has a dual-track diplomacy going on and military pressure. But as we read the Iranian side and what's happening here in Washington, we think they're still very far apart on nukes, Hormuz, and other issues.
Thank you so much for your time. It's great to see you in person. Bob McNally of Rapidan Energy, Jonathan, speaking to us as we are learning that potentially the Iranians are willing to show up to the negotiating table, or maybe this is just a bipartisan meeting with their Pakistani counterparts. No word from this White House just yet if they're sending anyone over to Islamabad.
Anne-Marie, thank you. Let's take that headline and run with it, push it through the market. You're seeing some response and reaction. Equity futures on the S&P 500 out to near session highs, up by 0.5%. Crude out to near session lows, we're down by more than 1% on WTI to 94. Brent crude down by 0.9 to 104.
Yeah, although you pointed out the move started before we got these headlines.
About 15 minutes before, yeah.
Which raises some questions. I mean, I think that it's fair to raise that, considering the fact that we've seen that repeatedly in terms of what's the move, what's the move, what's the move? And then we see a headline and we're like, oh, that could be it.
Yeah, it's getting complicated, isn't it? And the first thing you go to is the worst case, which is someone knew something before everyone else did.
You know, the truth is, so many people come in here and they're not going to talk about it on air, but they will say that they're concerned about what's going on and they are concerned about who knows what. And it is dampening some trading in some asset classes. And you just have to wonder how much that's a drumbeat behind all of this sort of headline whipsaw that we've been getting.
Crude right now, WTI down by more than 1%. WTI at 94.60. Brent crude at around 104. Up next, we'll catch up with Ted Mortensen of Baird with Intel heading for all-time highs.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
So we've got session highs here. Equity futures out to 0.6% higher. On the Nasdaq 100, up by 1.5%. When you've got session highs like that in the equity market, this is a picture of things happening in the commodity market. Near session lows. We were higher for a fifth consecutive day, now lower. Down by 2% on WTI crude. Brent crude down by 1.4%, 103. These headlines crossing just moments ago that the Iranian foreign minister is expected in Islamabad Friday night. And Pakistani officials saying a second round of US-Iran talks are expected. Some encouraging signs, early signs. We need more detail on this, particularly from the US side and the Iranian side, ahead of what could be another round of talks.
Yeah, you can see that the reaction in markets is there, and you do see the reaction you'd expect, which is stocks higher and crude lower, but it isn't a massive move that you would see necessarily a week ago when we were talking about talks that potentially were going to happen on Tuesday. Nonetheless, the fact that they're still talking does give a sigh of relief and just helps fuel the optimism that's been underpinning this market.
Let's get out to Anne-Marie. She's down in Washington, D.C., tracking the headlines for us. Anne-Marie, just set the bar for us. What should we expect now into Friday evening?
Well, I think the only thing we can expect right now is that the Iranians are showing up. Right now, there's no indication that the United States yet has sent someone. Potentially, though, if the Pakistani officials are saying they do expect a second round of talks, maybe what you have is the foreign minister showing up this evening in Islamabad, and then that gives the United States a little bit more optimism that they can then send, said J.D. Vance, the vice president, or Steve Witkoff, or the president's son-in-law, Jared Kushner, on the flight to Islamabad because the Iranians are there in place. So potentially what we could see this weekend is another round of talks. Whether or not we get a deal out of this weekend, that remains to be seen.
So the Iranians have been quite clear that for them to engage in talks, the US needs to end the blockade. Anne-Marie, any sign of that blockade being ended?
Absolutely not. And for the first time in decades, you have CENTCOM this morning tweeting about how there are 3 aircraft carriers in the Middle East right now. And you heard from the Treasury Secretary earlier this week that they're going to go after every single Iranian vessel. And Bob McNally of Rapidan Energy, who tracks all of these vessels, is saying even if an Iranian vessel was able to get through the line in the Gulf of Oman, the United States is tracking down these vessels anywhere they go in Asia, and they are either boarding them or taking them hostage, which we saw happen in the past 24 or 48 hours. So the blockade is not ending. And for the Iranians, that is one key element, as well as what we saw yesterday in terms of a ceasefire when it comes to Lebanon and Israel, as Israel was targeting Hezbollah. That is one key element that they would need to be seen. And right now, if you look at what is going on in the Gulf of Oman, that blockade actually feels like it's getting ramped up, not winding down.
Anne-Marie, looking for additional details. MH, stay close. We'll work through those details when we get them, particularly looking for a response from the US side about the potential for talks here. But this is what we've got so far, that the Iranian foreign minister is expected in Islamabad on Friday night. Pakistani officials saying a second round of US-Iran talks are expected.
It's clear that Pakistan really wants these talks to happen.
Without
Let's
a doubt.
just remind everyone that Islamabad's been on lockdown for about 2 weeks as they prepare for these talks. It's a pandemic-style lockdown for security reasons ahead of these talks. They're still in lockdown, even though the talks haven't happened. So I'm sure Pakistani officials are eagerly petitioning both sides.
So stocks right now getting the best of both worlds. On the one hand, you've got the potential for de-escalation, crude pulling back. On the other hand, you've got great earnings coming from the chip sector. Equity futures up by 0.6%. Let's get you some of those single names, some morning movers. Danny has more. Hey, Danny.
Hey, John. It's all about Intel this morning. A big beat from them. Excuse me, and what they're expecting for sales. I just want to put some of the superlatives in context here. So if Intel holds on to this gain, which why wouldn't it, it's going to be opening up at a new record. It hasn't hit a new record since 2000. And at the same time, a surge of nearly 30%. That's going to be the best single day reaction to earnings in modern history for this company. It's lifting the entirety of the semi sector, which has been on a tear. This would be its 18th straight day of gains for semis, for the Philadelphia Semiconductor Index, something that it has never achieved since that index was compiled in 1994. So AMD, ARM all rallying in sympathy. Some other earnings, not as bright, but a much smaller company, Coursera, they miss on their earnings. William Blair does express some shock that it missed because there was already a low bar set for them, also considering the AI disruption, but maybe there is just this feeling that they didn't raise guidance. In fact, their guidance was kind of towards the lower end of their range, so some disappointment there, down nearly 10%. Finally, wrapping things up this morning with P&G, another set of very, very strong earnings. P&G beats their beauty sector, that is the best performer for them. Organic sales surge 7% better than any other sector. They do note some charges, though. They have a charge when it comes to higher commodity costs, about $100 million, to a tariff cost, about $400 million. But this thing has been down 13% since the start of the war, so maybe that's priced in and shares move higher by 3%, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. Let's focus on tech. Mixed trading in the tech space. Software stocks taking a beating in the past 24 hours. ServiceNow suffering its worst day ever, and a chip rally pushing Intel towards record highs. Danny went through the numbers. That name is up by 29% in the pre-market. Ted Mortensen of Baird writing the following: the market is still viewed to be in the speculative, over-exuberance and complacency phase, with very limited fear and no capitulation. Ted joins us now for more. Ted, welcome. Some very fiery words there. I want to pick up on the complacency. What makes these moves complacent?
I think, the geopolitical is just not factored into anything right now. And if you look at even the blockage of the straits, I mean, this is really going to affect Europe and emerging markets. That's not in the market right now. I'm on 70+ conference calls during the earnings season, and I think Q1 earnings are somewhat, de minimis. It really doesn't matter. What matters is the guide and the 26 guidance. We're seeing now companies actually hint of prudent guidance. If you look at the March quarter, we only had 1 month of war. Now Q2 is basically the full Monty, if you will. You're going to see some inputs on some of the large diversified tech companies that have 30% exposure into EU. They're very energy dependent, and some of these models are very, very stale. And I don't think the market's really looking through potentially, if this goes longer, this supply chain is going to hit sometime in September onward.
Ted, some of these names are also quite cyclical. I'm thinking of Meta, who reports next week as well. Are they the parts of the markets that maybe you'd fade as well?
I really don't think so. I mean, this whole AI trade, the cloud titans are basically huge worldwide monopolies that have unbelievable technology advantages, and quite frankly, they're years ahead of any foreign competition. I think their free cash flow and their core businesses are enough. If you look at Google, Meta, and Microsoft specifically, they can fund a lot of this CapEx just on their core businesses. So I think, a lot of my clients on the institutional side have to go somewhere, and it's a free cash flow game, and who has the engineers, and quite frankly, who can push the AI models forward. I think those positions are going to be overweighted for some time.
Ted, we've been talking about how in some ways the tech trade has been a safe haven trade. People are analyzing what they can amid the backdrop of a war that is highly uncertain and seems like it's on a rocky trajectory. Can you game out what you were just talking about with supply chain disruptions? Who you think is most exposed should the conflict in the Middle East continue for a longer period of time?
Well, one name that's not exposed, has totally locked up the supply chain, is NVIDIA. And I think if you look at what they've done on just investments in Marvell, Coherent, Lumentum, they put $5 billion into Intel. I mean, a nice $1 billion gain overnight for NVIDIA. They've locked up the supply chain. Also, Broadcom, Arista, Cisco, they have very sophisticated supply chains. Where my worry is all the industrial and auto companies that are really caught flat-footed, they were reducing inventory at the end of last year. And if they don't have the long-term service agreements on volume and price protection, they're going to see gross margin contraction.
Ted, can you walk us through what type of supply chain constraints you're expecting as this war goes on for a longer period of time? And I don't just mean a hot war. I mean, even the ceasefire that we see now, where you're not seeing any traffic get through the Strait of Hormuz.
Well, if you look at what's coming through the Strait, this is a discussion, for semiconductors on, for example, helium or bromide or neon. A lot of the petroleum-based outputs go into semiconductors. So what we're seeing kind of going into Q2 and Q3 is some material inflation. Prices are up everywhere, from tea glass on substrates to basically everything. And I think you're gonna see it in the supply chain, but the Street may not be totally estimating how much inflation we do and have in that tech trade. Let's just put it in context. The big four cloud titans are spending over $700 billion in CapEx. And then now you put in a war, and the US government's got to re-platform a lot of weapon systems that are very highly silicon-centric. There is unbelievable demand. And, if you do have that Strait closed, you're just going to see the inflation and potential shortages sometime in late Q3 into Q4. So everybody's trying to pass on prices.
Ted, can I jump in? How price sensitive is that demand?
Right now, it's not price sensitive. I think it's going to be price sensitive in some of the industrial and some of the auto OEMs that, for example, if you look at Micron last quarter, their DRAM prices were up 68% sequentially. That's sequentially. That's not year over year. You're going to have to eat it. And if you're going to have to eat it on, like an auto OEM with high memory concentrations, it's going to show in gross margin. You don't have a choice. And that's the reality. On the Cloud Titan side, it's just a race to AGI. So I think it's a totally different argument.
So, Ted, with that in mind, top buys right now, just to wrap it up, what are your favorites?
I'm trying to stay large cap, really large cap, and names with free cash flow. It's not going to be rocket science to say that if you're doing a semi portfolio, you really need NVIDIA and Broadcom in your portfolio. That's number one. Those are just long-term buys, and they free cash flow very aggressively. I think NVIDIA had free cash flow of almost $35 billion last quarter. And then I think, again, the Cloud Titans are very insulated, I think, just from a competitive worldwide standpoint. And then there are some other names, that I would say are undiscovered yet, like a Global Foundries that has huge optical exposure. And if lead times are moving out to 40 weeks, they're going to see better utilization. There's other specific names in the defense area that I think have 3 years of 25% growth just on replenishment. And some of those are more small cap in nature. And then, I wish we had a pullback in the market. Memory and optical, from a structural infrastructure standpoint, are very long-term buys, and we've got 3 to 4 years of non-cyclical growth in that sector.
Ted, this was a clinic. It's fantastic to hear from you. Thank you, sir. Ted Mortensen there of Baird. Love it when someone's got something to say, and Ted's got something to say.
Yeah, and he has a history. He's done 3 tours of duty in the Middle East, and so he has a real intimate knowledge of exactly how this works, what the likely progression is, and what kind of time frame we could look at. And I think that really the supply chain disruptions could be something that comes to the semiconductor industry a bit more than some people are expecting.
Inflation and price-insensitive demand. and institutional buyers getting crowded into certain names. They've got to be long something. That's what they're going to be long right now. The big spenders keep on spending because of existential risk. All of these things are the things we've been talking about, and that's why he's staying with some of those big names.
Yeah, although on the flip side, and his comments about the auto manufacturers are a really interesting point. How much can they eat those higher costs and continue to manufacture at the same pace, and how much can they pass along to consumers? That's the type of inflation that could lead to demand destruction.
Lots to think about. Futures right now up by 0.5% on the S&P, with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. We're following breaking updates on the U.S.-Iran war. Pakistani officials saying a second round of peace talks are expected as soon as this evening. Iran's foreign minister is expected to arrive in Islamabad with a U.S. security and logistics team reportedly already on site. A U.S. Army soldier is charged with using classified information to make more than $400,000 trading on Polymarket's prediction market. The Special Forces soldier was involved in the planning and execution of the military effort to capture Venezuelan President Nicolas Maduro. And Citadel threatening to scrap its multi-billion-dollar expansion into New York City. The firm blasting Mayor Zohran Mamdani for using founder Ken Griffin to push a new luxury home tax. Citadel executives calling the move shameful, warning that the massive Park Avenue project now hangs in the balance. That's your Bloomberg Brief. John.
Yahara, thank you. You've won the election. This is where I really start to get frustrated with politicians. You've already won the election, now start to govern. It's not about social media videos and going after people that generate revenue for this economy, for this city. De Blasio used to do the same crap. He used to ignore the biggest employers in the city and not meet with them. Why? What's the upside of doing that?
A lot of people are scratching their heads with that. I mean, essentially, if you need a functioning city, you need to have the biggest businesses that employ the most people and, frankly, invest the greatest degree of money. How do you do that? And that ultimately is going to be a challenge for this mayor, as it has been for every single mayor that has come before him.
Yep. Up next on the programme, we'll talk about the Federal Reserve struggling to justify a rate cut.
There's a good chance that now we're looking at a 2026 where we could see no rate cuts, right? Unless we see a very different story transpire. It is going to be, I think, very tough for the Fed to really justify a rate cut given where we are.
Up next, we'll catch up with Joe Davis of Vanguard from New York City. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
To speed. Let's get you up to speed. Equity futures right now in the S&P 500 session highs up by 0.4%. On the Nasdaq up by 1.3%. On the Russell up by 0.3%. So session highs, and here's the why. This comes from reporting here at Bloomberg. Apparently, officials in Pakistan briefing reporters that the Iranian foreign minister is expected to arrive in Islamabad later on tonight with a small team. That U.S. logistics, security, those teams are already in Islamabad for the negotiation process, the officials have said in a message to reporters. A second round of talks, peace talks between the U.S. and Iran are expected as a result of important talks and discussions with Pakistani mediation teams. So it's difficult to understand here, and I think we need additional clarity. Are they talks about talks, or are these actually talks? And we're going to find out ultimately, I'm sure, from the president's side. No doubt in the next few hours.
And does it matter for the market? I mean, essentially, given the fact that it took many months and, frankly, years to negotiate a JCPOA and other agreements that the U.S. and Iran have reached, a question here about what the bar is for the market. Is it just not the threat of escalation over the weekend that's enough to get people excited to go back into risk assets again?
Anne-Marie's tracking the story down in Washington, D.C. Let's catch up with Anne-Marie now for more. Anne-Marie, what is the latest? Are they talks or just talks about talks?
Unclear. We still need confirmation from the United States on exactly what do they make of this. Are the talks expected in the near future, or actually this weekend that coincides with the Iranian foreign minister's trip to Islamabad? Even if there is some U.S. detail that is there in terms of security or logistic teams, it doesn't mean that we are going to see the Vice President J.D. Vance, Steve Witkoff, or the President's son-in-law Jared Kushner actually go to Islamabad. We really need that confirmation from the United States, because this could just be a bilateral meeting the Iranians are having with the foreign minister and his team and the mediator team to set the stage for the second peace talks. Doesn't actually mean this weekend we will see peace talks. I know right now the market is certainly gearing into that, but right now to have that confidence, we really need confirmation from this White House.
Anne-Marie, how unusual is it for the mediator to brief reporters in this way before we've heard from anybody else?
Well, it's a little odd, but I imagine it was going to come out in terms of maybe leaks. So they just said, let's set the stage and brief everyone, because obviously this is high profile. Usually what you would have is the Iranians would announce the trip on their own and the White House would announce the trip as well. Or potentially this could be a scenario where the Pakistanis are really trying to cajole the Iranians to the table to show the United States, look, they're coming here, they're talking to us, why don't you try to get on the plane? We don't really know what is going on exactly for the back channels, but clearly the Pakistanis are doing everything they can to try to get both these sides to meet in Islamabad.
Sure, especially because they've been on lockdown for the past 2 weeks as they expect these talks to continue. Emery, you've been talking with a lot of Defense Department officials as well as military representatives, and I'm just curious, what is happening on the ground in terms of preparing for an escalation or any kind of method to try to clear the strait of mines or any other obstacles?
Well, in less than 10 minutes' time, we're going to hear ourselves from the DOD. We're going to have Secretary Pete Hegseth and as well as Chairman of the Joint Chiefs of Staff, Kane, speaking. I actually heard him speak yesterday at a defense conference in Nashville. And I would say he was pretty happy to get out of Washington for a few minutes, but he was racing back, didn't go into the details exactly what is going on the ground. But I spoke to the former CENTCOM commander yesterday, Joseph Votel, who says the blockade is working. similar to what we heard from Bob McNally of Rapidan, that they don't see a porous blockade. There's no leaky blockade. Even if they're not being able to grab an Iranian vessel right there in the Gulf of Oman, they are tracking that vessel as it makes its way through Asia Pacific, really trying economically to hurt this regime, to try to bring it to the table. Obviously, the blockade is incredibly important because for the Iranians, they say they need to see the end of the U.S. blockade in order to get to the negotiating table. And right now, we are not seeing the end of that blockade. And CENTCOM this morning put out a tweet saying that for the first time in decades, operational, you have 3 U.S. aircraft carriers in the Middle East. So right now, the United States definitely has a posture that at any moment they could escalate, but that blockade remains firmly in place.
We were talking, Emery, with Ted Mortensen of Baird just a bit ago, and he was talking about how supply chain disruptions come into play as this goes on for a longer period of time. From the officials who you're speaking to, how much of a sense of a resolution is there in the near term that could potentially reopen the strait in the way that it was open before this war began anytime in the near future?
It's interesting because I think when you look at market participants, they're looking at the screens in front of them and they're saying this has got to be just a few weeks or a few months' time. When you speak to individuals who have either worked in the Gulf or worked in even the Strait of Hormuz, military officials, this could take months. At the same time, you have not just the United States trying to find the mines that the Iranians weeks ago laid, but an Axios report yesterday that they were laying fresh mines. So there is not going to be enough confidence in the shipping industry to want to take that journey until mines are cleared, and also that they have that confidence that they're not going to get basically gunned down by Iranian gunboats from the IRGC or potentially hit with Shahadi drone. So this is going to take months to get the mines cleared and also the confidence from the shipping industry to go to the Strait of Hormuz. So this is not going to happen in days. And even when the Strait of Hormuz is, quote unquote, open again, like we saw with the Houthis in the Red Sea, it might take a long time for companies to decide, OK, we're going to go back to the normal process there because they are concerned about putting their employees in harm's way.
Very few want to take that risk right now, that's for sure. Very few want to take that risk at the moment. Anne-Marie, down in Washington. Anne-Marie, thank you. The equity market fading that initial move. We're off session highs. We're still positive, but off session highs up by 0.3 to 0.4% on the S&P 500. Very unclear what's about to happen here going into the weekend, but I think we're all got a lot of experience of this now over the last 2 months throughout all of this, that things can change pretty quickly from minute to minute.
I'll see your green dot on Sunday night and you'll see mine. I mean, that's essentially what we're looking for, because ultimately there's always some kind of drama that escalates right heading into the open of futures on Sunday evening. Look, I think people are watching this saying, are we at least going to avoid an escalation over the weekend so I can actually go out with my family on Sunday? Or is this going to be...
You get Saturday.
Thank you. I appreciate that.
Sundays are longer.
You're so sweet. I know. It's true, but I mean,
Monday morning starts Sunday evening, and the whole week feels like one long day. Right?
I mean,
from Sunday evening through to Friday at the close.
You asked someone on Wall Street, how are you doing?
Yeah. Pretty good.
Yeah,
Coming up next, Tracy McMillan of Wells Fargo, Sarah Kuntz of Clio Capital, Veronica Clark of Citi, Ed Yardeni of Yardeni Research.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
I think this bull market and tech has further to go.
The market's clearly looking through the short-term uncertainty.
The market is telling you, look, this is still maybe a transitory story.
If you are not spending right now, you're going to be left behind.
The shock really supports the need to invest.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And the price action, your scores look like this. Positive by 0.4% on the S&P 500. On the NASDAQ, up by 1.3%. For Intel, a wild ride. The stock is higher by close to 30% in the pre-market. Stock supported by this and this as well. Commodities, crude, off session highs. Down on the session by more than 1% on WTI. Just in the last 60 minutes, these headlines coming from officials in Pakistan that the Iranian foreign minister is expected in Islamabad later this evening.
So we might be seeing talks about talks. I don't even know what to do with these headlines anymore. I actually find them incredibly annoying because ultimately we don't have a sense of exactly what they mean, whether it's talks about talks, whether this is progress, or whether we could see re-escalation over the weekend. Because ultimately, when you look at the facts on the ground, they tell one story, and then you hear these rumors about headlines, headlines about talks maybe happening in a place that's been on lockdown for 2 weeks preparing for these talks. What do you do with that?
So what do you do? This is what people have been doing. You ignore that and you pile into US equities.
I get it.
80% of companies have beaten earnings expectations so far. You crowd into the tech names, the chip players, the hardware names that are up for 17 consecutive days, supported by fundamentals and results. Intel, Texas Instruments, and the big spenders next week are going to keep on spending, and they're the big customers.
And what Ted Mortensen just said of Baird, he was saying essentially a lot of the buyers are price insensitive, right? This is an existential risk. We keep talking about that. Expect those CapEx plans to only increase from the likes of Microsoft and Amazon. At what point are you looking at inflation that happens in one sector that starts to have ramifications for the rest of the consumer world? And I think that is where people's minds maybe will float, but it's very difficult to understand what else to do when you have these sort of headlines that keep coming out and giving you mixed signals. And then on the flip side, you see a strong economy with all these companies that are beating earnings.
It's so frustrating. I'm right there with you.
It is.
And we mentioned when this program started, think about where we were last week heading into the weekend. We were seeing social media posts from both sides, Iran and the US, suggesting the Strait of Hormuz was opening. And then by the time we got to the weekend, it was anything but.
Yeah, and then you've got like Lego movies and you've got different gifts. And so at a certain point, people are just kind of starting to tune out and say, okay, what can we tolerate? And right now, what the market seems to be saying is, right now, $100 a barrel in the United States can be tolerable. And you know what? The economy can keep going. Procter & Gamble beating expectations. We talk about the semiconductors, but this is the quintessential consumer company, and it is beauty, is the sort of discretionary spending that people can go out and do that beat expectations and saw the best return going back to 2023. So people are looking at that and saying, okay, if prices stay here, we can manage through this, and then we can ignore these headlines, because ultimately, that's what a lot of people want to do.
I've tuned out the world back and forth. Most people have. Anchored by this belief the president's committed to a de-escalatory path. Got that, great. But I'm really tuned in still to the consequences and the fallout as it continues to build, from Asia into Europe, across the airline sector and elsewhere. And you mentioned the conversation we had with Ted over at Baird. He also pointed out the supply chain risk here for other sectors outside of just tech.
Yeah, and people have pointed out the helium, not let alone the fertilizer, not just the oil that we're talking about, natural gas. At what point does that start to bite in a more material way? And everyone says, well, if this is short term, it's okay. If it's long term, it's not. Well, what does short term mean when we're coming up on 2 months, right? I mean, at what point do we start saying, okay, we've kind of shifted over to the medium term or longer term? And if we're talking about mines that are still sitting there in the Strait of Hormuz that are going to be difficult to remove, that prolongs the time frame even more. So it's the physical world versus the financial world and a U.S. economy that's strong. And they're in a battle. And right now, people would rather look at longer term than try to sort of game out headlines that seem to be
That's the point. It's the physical world in the present and the future in the tech world. Yeah. And it's a difference of time horizon. And we talked about anchoring and what's anchoring investors right now. Investors are very happy anchoring themselves to the future promise. And that's ultimately the job of equities as an asset class. Anticipatory asset class, think about the future, and that maybe gives you the benefit of looking through the present. The problem is, as you point out, and we've talked about throughout this morning, it's not just about the very front end of the futures curve anymore. Just slowly this week, starting to build out to later dates as well.
And there's a tension here. How long can you maintain the strength that's coming from the AI investment and from other parts of the world, and have higher commodity costs on the other side as the physical world is constrained, without having some sort of meeting in between, with one either constraining the other or else inflation coming out in a big way on the other side?
So there is a briefing taking place down in Washington, D.C. at the Pentagon at the moment. Anne-Marie's going to stand by, track those headlines for us, and we'll catch up with her in about 5 minutes' time to break down what took place there. Coming up this hour, we'll also catch up with Tracy McMillan of Wells Fargo, with stocks rising on renewed optimism for peace talks. We'll speak to Sarah Kunst of Clio Capital on job cuts at Meta and Microsoft, and Veronica Clark of Citi expecting a Kevin Walsh-led Fed to cut interest rates later this year. We begin this hour with stocks rising and crude slipping as Pakistani officials say a second round of US-Iran talks are expected. Tracy McMillan of Wells Fargo Investment Institute joins us now for more. Tracy, welcome to the programme. It's been exhausting for a lot of people in Wall Street tracking these headlines. Are you in a position to tune this out and tune in to the tech story elsewhere?
So that's exactly what investors have been doing, John. And what we have seen here is investors looking beyond the headlines. And, you know, that's exactly what we instructed investors to do at the beginning of the year. Was it was going to be a noisy year for headlines, whether, you know, the war emerged or it was something else. We knew that with midterms, there were going to just be a lot of things to grab investors' attention, and we wanted them to look forward and to look toward the end of the year. We still see higher equity markets by the end of the year. Yes, we're going to see choppiness, and we're potentially even going to see another, opportunity to move cash and fixed income into equities. But it's looking out and making sure that portfolios are positioned appropriately.
Tracy, sometimes in your business, it's hand-holding with clients to try to keep them invested. And I understand why they feel uncomfortable. There's just this itch. Just reminds them a little bit of, say, February 2020. Stocks are at all-time highs, and we haven't really seen the physical pain yet from a major shock. Why is this different this time around?
Yeah, so I think it's different probably in the magnitude, and it's probably different in the duration. You know, obviously COVID was a 2-year event, but at the same time, we did see supply chain disruptions. Now, this time we don't expect such a prolonged disruption to supply chains. So investors are able to look out at, say, oil futures at $76, $77 a barrel by the end of the year, and anticipate that, you know, that by that point, we should have seen a lot of the tension subside. So there are going to be opportunities along the way, and we're telling investors to take advantage of those opportunities.
Tracy, what's long-term when it comes to this conflict?
Yeah, so we would say that longer term is probably towards the end of the year. You know, I'm obviously head of asset allocation strategy, where long-term is 15, 20 years, the full-time horizon of an investor. But, you know, right now, markets are so myopic that we do need to get investors focused out toward the end of the year.
Tracy, what else do you need to see, whether it's from earnings next week or whether it's from the Federal Reserve, to keep your optimism intact, given the fact that potentially this could be a prolonged conflict? It does eventually start to crimp supply chains on the margins.
Yes, that's obviously very possible. And so to maintain the optimism, we need to continue to see earnings coming through like they have so far this earnings season. Earnings are expected to be double digits this year. If we continue to maintain that expectation, that should support equity prices. We're also anticipating, you know, that oil prices will start to come down. We will see a bulge in inflation through the summer that should start to subside by the end of the year. That's what it's going to take, I think, to maintain the optimism.
Tracy, it's good to hear from you, as always. Tracy McMillan there of Wells Fargo Investment Institute. I think that summarizes the consensus viewpoint pretty well right now for a lot of people.
Yeah, people are looking for strength. They're looking to the end of the year. They're saying if we're looking at long-dated crude futures for December, it's somewhere in 70 to 80, low 80s. That's good for us, and that gives us a sense that we're trying to direct people to the strength that we see right now in markets.
Equity futures in markets right now near session highs, up by 0.4% on the S&P 500. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. We're following those breaking updates on the U.S. and Iran war. Pakistani officials saying a second round of peace talks are expected as soon as this evening. Iran's foreign minister is expected to arrive in Islamabad with a U.S. security and logistics teams reportedly already on site. Israel reporting that it intercepted a drone bound for northern part of the country before it entered Israeli territory. The IDF telling residents of a South Lebanese town to evacuate before it struck its target. It follows Israel and Lebanon agreeing to extend their ceasefire deal for 3 weeks. And just in the last hour, Meta striking a multi-billion-dollar deal to use Amazon chips for AI. The multi-year deal will give Meta access to Amazon's chips unit while the social media giant works to develop its own chip. Meta has taken a broad approach to securing chips for its AI efforts. That's your Bloomberg Brief. John.
Yahira, thank you. Thank you very much. Appreciate the update. Up next on the program, we'll get you some morning calls. We'll catch up with Sarah Kunst of Clio Capital on job cuts over at Meta and Microsoft, and touch base with Anne-Marie down in Washington, D.C. to get you the latest on that briefing over at the Pentagon down in the nation's capital. From New York City this morning, good morning.
is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It is the question of, are we starting to make money in AI? And it looks like we are. Like all of that concern that people had about return on investment, as things get deeper into corporations and other places, you're starting to see people think, okay, we're really going to see a return. So it becomes less about, are we wasting money, and more about, where are we spending it and how are we spending it?
That was Sarah Hunt of Alpine Saxon Words wagging on the tech trade at the moment. And what a trade it's been. 17 consecutive days of gains for chips. The Semiconductor Index, the Philadelphia Semiconductor Index, on a 17-day winning run, record winning run, and up by 40% plus over that period. Unreal. Up by 0.4% on the S&P 500, the Nasdaq 100 up by 1.3. Not just encouraged by tech, but also encouraged by the prospect of talks in Pakistan. Now, I'm half laughing because who knows where we're going to be an hour from now. I keep thinking about where we were this time last week. This time last week, we thought the Strait of Hormuz was reopening, and then we found out over the weekend pretty quickly it wasn't at all. And here we are a week later, and not much has changed.
Yeah, although we are looking right now at oil prices on the week that are seeing one of the biggest weekly gains, or the second biggest weekly gain in price going back to the start of this war, as you pointed out earlier. If we maintain the gains that we're seeing right now in equities, we will still be up on the week, even amid that increase in oil prices. So how much has this market moved on from the story in the Middle East as people look to tech earnings next week?
We are looking for a fourth consecutive week of gains on the S&P 500, potentially a little bit later on today. Crude pulling back, we're down by 0.7% on Brent. WTI down by 1.4, 94 handle on WTI crude. Let's take yields down too. We're down by 2 basis points at the front end of the curve, 382. 10's down 1 or 2 basis points to about 430. That's the price action. Let's get you some morning calls. First up, Citi upgrading Intel to buy, citing surging CPU demand. I think that horse is bolted.
Yeah.
Right?
I think that's pretty much what we're seeing right now in shares.
That stock is up by 27% in the pre-market, but thank you for the upgrade. Your second call from D.A. Davidson upgrading AMD to buy, highlighting Intel's strong earnings beat. And finally, Wedbush initiating Oracle with an outperform, calling it the, quote, foundational infrastructure provider for the AI revolution. Let's stick with tech. Meta and Microsoft announcing plans to trim their workforces as AI costs surge. Sarah Kunst of Clio Capital writing, nothing helps morale like front-running layoffs by a month to juice earnings. Sarah joins us now for more. Sarah, welcome to the program. Let's break this up, Sarah. Let's start with Meta and then talk about Microsoft. How are you reacting to the cuts over at Meta?
I think that they're not super consequential. When you look at sort of the total savings of, hey, we're going to cut 8,000 jobs, we're going to pause on hiring for 6,000 more jobs, right? Carry the one and you still get maybe a $7 to $10 billion cost savings compared to the $100 billion in CapEx they're spending this year. It's just a tiny drop in the bucket. So I don't think that it's going to be huge. And it looks like, you know, the street's not blown away by it either.
Sarah, I was going through your notes and you're far more interested. Far less interested in this and far more interested in ad sales. This is a piece of the Meta story that I'm interested in too. There is a much bigger cyclical component in this company than maybe we let on in the conversations we have every day about AI. How important is that going to be next week?
I think that it is the story of Meta, right? We know that basically everyone, like half of the globe, uses Meta products. The problem is that they only make money when they are serving high quality ads that people are paying a premium for. And they have tried so many different sort of things to figure out, hey, can we get into the influencer business? Can we get into the shopping business? The answer tends to be no. It's that kind of core ad unit that makes up most of their revenue. And if the global economy is not great, they're going to see less revenue from that.
That said, Sarah, we saw a headline come out today, this morning, saying that Meta is solidifying this multi-billion-dollar to use Amazon chips for artificial intelligence, talking about how they're going to rent hundreds of thousands of Amazon's general-purpose chips for its AI efforts. Where is the AI effort going, given the fact that ultimately, yes, it can actually increase the value of some of these ads, but beyond that, the metaverse is kind of not there. What's next?
You know, it kind of reminds me of the metaverse. Zuck wanted to live in the metaverse. Now he has an AI digital twin. He moved his desk next to Alexander Wang, right? I think that sometimes you have to look at those things as this is a founder CEO's sort of passion project. And as long as the core numbers work, it doesn't necessarily matter where it goes. Ideally, you know, AI means that you're getting a better feed, a more targeted feed that's relevant to your interests, that ads are served that are more relevant, that they're making more money on ads, that the overall product is better. And we just haven't seen that yet.
Sarah, you said that the layoffs are non-consequential for Meta. At the same time, Microsoft is offering buyouts, voluntary retirements to about 7% of their staff. Do you think that that is more consequential, a signal of just how companies are looking to prioritize CapEx over human capital?
I think that it's interesting when you look at sort of the kind of math equation of you're getting money based on how many years you've worked, plus if your age equals 70. This is clearly a pretty targeted kind of early retirement scheme as opposed to just mass layoffs. Those tend to be the people who make the most money and who maybe were, you know, have been incredible contributors over the years, but who are not necessarily leading on kind of the AI focused revolution that Microsoft is very aggressively all in on. So I'm not surprised to see it. I don't think, again, that it means a ton when you look at their total workforce. I think it's probably a natural, healthy part of the ecosystem saying, look, these are longtime warriors who've done a great job. Let's let them take an early retirement if they want with a very generous severance package. Great. I think the bigger question for Microsoft is going to be one of their other big obligations, which is OpenAI. And is that still sort of the golden goose? Because I suspect it's not going to be.
Sarah, why do you suspect it's not going to be?
I mean, at this point, why would you suspect it is, right? You can look at Claude, you can look at Gemini, you see that OpenAI is not on the forefront of the enterprise business. You know, their sort of let adults be adults plan has fallen apart. You know, their senior management team who was brought in to make money has all left. Their senior kind of tech co-founding team has mostly all left. Sam is getting hit with bad press left, right, and center. I have a feeling that the Elon Musk lawsuit is going to be very, very juicy. And so it's hard to see what's going right with OpenAI right now.
Do you think that means they need to change their strategy over at Microsoft? And if so, what's that going to look like?
I think that Microsoft is really good at their core business, but for the last few years, their stock price has really reflected sort of the glow, the sort of overflow glow of OpenAI. And so I think that they need to focus on what they are excellent at, which is enterprise sales, which is you know, their cloud business, their chips. Those are the things that they know really well, and sort of stop focusing quite so much on the hype cycle, because while it certainly helped them on the way up, it is maybe less likely to help them in this next sort of cycle, unless they take it the other direction and say, hey, actually, let's go find the next OpenAI and start doing more investing in the next shiny object.
Sarah, do you think that the IPOs of the likes of OpenAI and Anthropic later this year, maybe even SpaceX, will be a buying opportunity for this market, or the sell sign that indicates that maybe some of that hype cycle is over?
I think a lot of my peers in venture capital are going to be very excited to be able to finally cash out on some of those companies. Will it be a huge buying opportunity? Probably not. We know that IPOs tend to be a big bounce at IPO. When you look at the SpaceXs of the world, the premium they're trying to command versus their revenue is steep. It is so steep. And so I don't think that for the average retail investor or even ETF ETF, that's going to be sort of this great buying opportunity. I think it is more private companies saying, look, we need to get more liquidity to our early shareholders, to our early employees, and we're also just running out of bag holders to get money from in the private market. So we are kind of being forced to go public.
These are not your average IPOs, that's for sure. Sarah, thank you. Appreciate your opinion. Sarah Kunz there of Clio Capital. Ahead of some big earnings next Wednesday. Not just talking about tech this morning, also the risk in the Middle East. We've had some comments from a briefing at the Pentagon down in Washington, D.C. over the last 20 minutes or so. Anne-Marie's been tracking that briefing for us. Anne-Marie, what's the latest?
Well, we heard from Secretary Hegseth and as well as General Kane, who's speaking right now. Secretary Hegseth, the first thing he said was this is a new phase for Iran, and they have an important choice, a chance to make a deal, a good deal, a wide deal. And then he talked about the blockade, and he said the blockade is ironclad. He said another aircraft carrier will be joining the blockade, and he said the blockade is global, similar to what we heard from Bob McNally. If the U.S. Navy is unable to pick up a ship in the Gulf of Oman, they will track the ship wherever it goes, most likely in the Asia Pacific, as we've seen the U.S. military do, and seize that ship and seize that cargo. Also interesting, Secretary Hegseth talked about the fact that the United States, as we've heard from the president, is less reliant on the Strait of Hormuz, and he says he wants to tell Europe and Asia the time for free riding is over. This is interesting at this moment because earlier this morning, Reuters was reporting about an internal email within the Pentagon outlining options on potentially how they can punish NATO allies that they deem have not been supportive of what the United States is doing in Iran. And one of those things they potentially could do is suspend Spain from the NATO alliance. And then you see Secretary Hegseth really coming down on Europe and Asia when it comes to the Strait of Hormuz and basically the lack of support in terms of actual hardware, minesweepers, et cetera, that they have been willing to send to the region.
Anne-Marie, any questions just yet on insider trading? Have you heard anything yet?
No, not yet. I haven't heard any questions just yet on insider trading. I am sure that will likely to come up. It did come up yesterday, though, with the president, given the fact that, of course, there is this soldier that was part of the operation, at least a minimal, the planning to capture Nicolas Maduro earlier this year, making that huge bet on Polymarket that the DOJ as well as the CFTC is going after him for. The president was asked about all of this in terms of these massive positions that are happening that are linked to geopolitical events, and he basically said the world is a casino.
Anne-Marie, thank you with the latest down in Washington. We'll keep tracking those headlines for you. This is the one that jumped out to me. We've got a truce, yes. It's a fragile one, though. And I don't think you can call it peaceful over in the Middle East right now, that's for sure. General Kane, Iran has attacked 5 merchant vessels, seized 2 of them. That doesn't sound too peaceful to me.
This is a very difficult situation to give anyone confidence that they can actually start sending ships to the region. I mean, that's what a lot of people are watching, is not just the traffic through the Strait of Hormuz, but how many shipping companies are going to initiate a voyage to that region with the expectation that it will remain open right now. Very difficult to get that confidence.
Who wants to take that risk? Not many people, that's for sure. Equity futures at the moment on the S&P up by 0.4%. The opening bout about 65 minutes away. We'll catch up with Veronica Clark of Citi, expecting a Kevin Walsh-led Fed to cut interest rates this year. Plus, Danny's going to drop by. Danny's got some morning movers for you. Energy stocks dipping on potentially renewed US-Iran talks in Pakistan. From New York City, you're watching Bloomberg TV.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The open about 16 minutes away. The scores, the price action shaping up as follows. Just off session highs, up by 0.4% on the S&P, up by 1.3% on the Nasdaq. Danny's going to have some morning movers for you in just a moment, but Intel's a feature of the conversation for sure, if not the feature of the conversation. Intel up in a pre-market, absolutely flying, supporting this move in the Nasdaq, up by 1.3%. Elsewhere, we're starting to see crude pull back from highs as well, supportive again of risk assets this morning. WTI and Brent down by 0.4 to 1 percentage point lower. Brent down to 104, WTI down to, let's call it 95 on the prospect. And I stress the prospect because I've got no idea what happens after I sign off in about 30 minutes' time. The prospect of talks between the US and Iran later on this evening.
The market reaction, I think, is telling. And I think that this analyst from Bank of America sums it up perfectly when they write, it's a statement to us that the fear of missing upside seems to outweigh the fear of downside. That's kind of the psychological lens through which people seem to be approaching the market. You could see that today. Just the expectation maybe of talks perhaps in Islamabad, maybe at some point, is enough to give people a sense that it is time to go game on, risk on, green all the way.
Perhaps potentially at some point.
Exactly.
Going to hear a lot of that. Going to hear a lot of that over the next 24 hours, I'm sure. Yields are down with crude lower. We're off by 2 basis points at the front end of the curve. The 2-year around 381. Higher on the week by around 10 or so basis points. At the moment, the data's been good. This Fed is not in a rush to cut interest rates. And that Fed meeting next Wednesday could be somewhat interesting. It's the last scheduled meeting for the Fed chair. Jay Powell might not be his final meeting at the Federal Reserve.
I imagine there are going to be a lot of questions about that in the press conference. I imagine the statement itself might be the risks are balanced and we're on hold, and everyone's going to say, yeah. Let's get to the questions. Let's answer the question. Are you going to stay on? What do you think of the new framework? Do you think that we're measuring inflation wrong? You know, how concerned are you about the politicization of the Federal Reserve, et cetera, et cetera, et cetera? Is he going to give some sort of salvo, or is he going to just say, I don't have any comment on it?
Inflation above target for 5 years. Was that a choice? First question.
Yeah, it's a choice depending on the index.
Mike McKee, you're not welcome back. That's how that's going to go.
Well, I mean, I think that it'll be an interesting navigation that he has to do.
The opening bout just around the corner. Let's get you some single names. Danny Berger has more. Hey, Danny.
Hey, John, you laid out what's happening in the energy sector with those maybe probable, who knows, talks happening on Friday with the Iranian foreign minister, Islamabad saying heading there. And we are looking at energy stocks dropping alongside the price of oil. Oxy, for example, one of the worst faring this morning, down 1.4%. But it is the tech sector that is dominating this market. I'll get to Intel in just a moment, but this out just moments ago, about half an hour ago, that Meta will be buying Amazon's Graviton chips. The idea is to help support its AI and AI agents, so Amazon shares go up 1.6%. It's a multi-billion-dollar contract, but we don't have the exact details of the financials behind it. Finally, the story of the morning for this equity market, it is Intel, a big beat, a big expectation beat when it comes to the revenue going forward. If Intel holds at this level, it will trade at a record high for the first time since 2000. It's one of the best post-earnings day reactions ever for Intel, up 26% in the pre-market. It lifts the entirety of the semiconductor industry, AMD, ARM, all up at least 7.33%, in what will be the 18th straight day for semis, the Philadelphia Stocks Index, trading higher, a record that it has never achieved before, John.
A win for the U.S. taxpayer. Danny, thank you. I guess we can say that, right? Got a stake in it? No?
Well, yeah, that's actually really good. And I think that some people might say that it's a self-fulfilling prophecy. It's sort of, you give a little to the company, you back them with the world's biggest paycheck, and ultimately you end up with positive returns.
Spirit up next. Spirit's so different.
Okay, Spirit is not Intel.
So different.
Intel I can get around. I can understand the idea of creating.
You've got a problem with Spirit. Let's talk about it. Go.
Okay, well, I just feel like this business model has been in question. They didn't manage to get the Spirit JetBlue deal across. You could make an argument that was a huge mistake, which a lot of people are making. Spirit now is failing. There are other airlines that are coming out beating expectations. This is not a time of wholesale failure on the airline industry. Spirit needs a lifeline for the government to bail them out. Is that a good investment for U.S. taxpayer dollars? And I think increasingly that's where the focus needs to go.
I'm not a big fan of government intervention at the best of times, and on this one, there's obvious pushback. For this industry, it's been so mishandled over the past 2 administrations now. The previous one blocking that deal between Spirit and JetBlue, that made no sense. And arguably, people are making that argument now, this makes no sense either.
At a certain point, where is the rhyme and reason for which companies you want to take a stake in? Is this to give some sort of boost to a strategic sector in the United States, and is Spirit a strategic sector for the United States, given the fact that the airline industry more broadly is actually in one of the healthiest shapes it's been in a very long time?
Intel made a little bit more sense, didn't it?
Yes.
If you want to sacrifice free markets at the altar of national security, people can support that. Crowd in some investment for national security purposes, domestic production, people can get behind that. Spirit, not so much.
I think increasingly people come on and they all say, we don't really get this one. We'll see what happens. Right now, the president is saying that the U.S. could own a stake in Spirit. Let's see what transpires, whether they have to declare bankruptcy or maybe whether a sale will be facilitated.
Yes, and maybe the door's open for a lot of movement in that particular sector. United, American, maybe not so much, but maybe some other targets in the mix. As we count you down to next week, some big tech earnings in focus, but also this, a Federal Reserve decision coming up on Wednesday. Mike McKee's got a preview for you. Hey, Mike.
Hey, John. Well, this is going to be a kind of a nothing meeting in terms of what's going to happen, but it's going to get an awful lot of attention because it is, of course, Jay Powell's last official meeting as chairman of the Fed. We don't know if he's going to stick around, but it's going to be all about Jay. And you were talking about the questions he'll get asked. I wouldn't be surprised if what his plans are isn't the first question, because there's no rate change, no SEP, no dots. Ordinarily, the outgoing's chair view of what will happen doesn't really matter because he's going to be gone, and we care about what the new person thinks. But is Powell outgoing? We don't know when Kevin Warsh will get confirmed and take over. So it's possible Powell will be around for a while. The rest of the week is kind of interesting in that sense. Wednesday's the Fed meeting, of course. And the rest of the week after Wednesday is when the news really hits. We get the income and spending and PCE numbers, jobless claims, employment cost index, and first quarter GDP, all of that after the Fed meets. So no real help to them in their decision making. Friday, ISM manufacturing sets the stage for the beginning of May data. Sometime during the week, the Justice Department has to appeal the quashing of the subpoenas in the Jay Powell Fed renovation case. Otherwise, they run out of time. They only have 30 days to do it, and that's up at the end of next week. So we'll see if they actually pursue it or if we get this potential banking committee look at what's been going on there and whether that has any impact on when we see Kevin Warsh get confirmed. There's only about 8 days left, 8 legislative days left to get this done before Powell leaves office, or technically leaves office. He'll probably be staying on. One thing I want to mention, you talk about the PCE numbers coming up on Thursday. Right now, PCE is at 2.8%, and the Bloomberg survey of economists just out this morning says during the second quarter that's going to rise to 3.6%.
Oof, that's going to bring its own conversation. Mike, thank you. Michael, thank you very much. Looking ahead to the Federal Reserve next week, this has turned out to be so different to what we expected 12 months ago, looking out 12 months. 12 months ago, people were talking about the prospect of a shadow Fed chair that would be confirmed early, that would take the attention and the power away from the current Fed chair because all the attention would be on them. 12 months later, what's actually happened is hardly any attention is on Kevin Warsh because at the moment, he's going to struggle to get confirmed. because for so long as they go after the Federal Reserve with this DOJ investigation, this gets pushed out and it gets pushed out.
And President Trump hasn't taken an off-ramp. Question now, he's being given another off-ramp. Will he be given that? Will he take that to allow Kevin Warsh to get to the Federal Reserve? There's also a big difference in terms of the economic backdrop. People expected boom time conditions for the U.S. economy and disinflation because of some of the effects, the year-over-year effects that were running off. We now have the opposite. We've got a boom time conditions that's suppressed by some of the higher prices and potentially inflation creeping higher than people previously expected. It is a difficult thing for the Federal Reserve to get their hands around. And frankly, bond markets are so in a tizzy that they simply are stagnant.
Veronica Clark of Citi writing this on the Fed's next move. We expect a combination of softer core inflation and loosening labour markets to help Warsh convince the majority of the FOMC to cut rates before the end of the year. Veronica joins us now for more. Veronica, good morning.
Good morning.
Good to see you.
Yeah.
Kevin Warsh did not really articulate a good argument to cut interest rates this week. Is that because there isn't one or because he didn't want to?
Yeah, I think he just repeated this, productivity enhancements, gains from AI, things like that. That can be disinflationary. We can cut and not stand in the way of stronger growth. That's the argument the administration's been making, though. I don't think that's one that other Fed officials are going to buy until we see it in softer inflation data itself. So yeah, he was not terribly convincing, at least in terms of the near-term path.
Has your timing for cuts changed? Has it been pushed out because of this shock in the Middle East?
Yeah, we did. We pushed it out to September. But I think what we'll see, and obviously it will depend, of course, on what happens in the Middle East with oil prices. But the focus the next couple months will absolutely still be inflation data. We'll get some uncomfortably strong readings even in April and May, I think. But as we get into the summer, I do think we won't see the substantial pass-through of higher energy prices to core inflation. And what has happened in the summer the last few years is that that's when the labor market starts to look weaker. And I think that will repeat. And then the pattern has been that then the Fed cuts in September.
How many scenarios do you have right now on your desk and potential outcomes for employment and inflation?
Too many, right? Yeah, there's just too many. Even if we weren't dealing with the oil shock, this is a labor market that's very unlike any that we've seen before, and so it's really hard to forecast when you don't have historical comparisons to base those forecasts on. So all we're really doing is, for the labor market at least, looking at, this is a very low hire, low fire dynamic. It's happened this way for a while. What that has meant the last few years is, starting within the next couple weeks, jobless claims start to rise in the summer, and that, precedes a rise in the unemployment rate by the end of the year, just 3 to 4 tenths. It's gradual. But yeah, a lot of ways, this is an economy that is very unfamiliar to us.
Is there anything about the earnings that gives you pause, given the fact that we're seeing very strong earnings, consumer discretionary companies coming out and saying that demand remains strong, even amid some higher prices? Mm-hmm. And you have credit card companies coming out and saying people are still spending. I mean, at a certain point, do you say, if prices remain where they are right now in the energy complex, we can maintain this level of activity, and frankly, that becomes more inflationary than it does, but suppressive of growth?
Yeah, the earnings and the survey data and these anecdotes, they're interesting, but it's always kind of hard to translate those to macro forecasts, aggregate data. I mean, if anything, in some cases, it seems like earnings are stronger because of job losses and cutting costs that way. What we've seen in the actual spending data the last few months or so is, yes, consumption is very resilient. That's been the story for the last few years. But we were slowing as we were getting into this year. Of course, we had a very strong retail sales print this week. A lot of that is nominal, higher gas prices. There is a bit of a cushion right now for some consumers, getting higher tax refunds than they did last year. But the primary driver of if people are spending or not, I think, is aggregate take-home labor income, and that is slowing this year.
Veronica, good to see you. Still looking for rate cuts. Expecting the first one to come in September. We'll see. Veronica Clark there of Citi Research, tracking the headlines out of the Middle East and continuing to look for some extra clarity about what may or may not happen this coming weekend. Anne-Marie has more from Washington. Hey, Anne-Marie.
Well, Jonathan, those headlines from earlier about whether or not we see peace talks, it sounds like the foreign minister is on his way potentially to Islamabad. That's the foreign minister of Iran. But this is part of a regional tour, and this is according to Iranian press. So he's not just making a stop in Islamabad. He'll also be going to Muscat and Moscow, according to this report. That gives a little bit more clarity on potentially whether or not we were going to see a second round of talks to the United States and Iran this weekend. We don't have confirmation from the United States, and it doesn't sound like that's this trip Abbas Araghchi is making. It sounds like he's going there just to speak to mediators. Sounds like these are talks about future talks, not the actual big talk themselves.
Anne-Marie, thank you. Down in Washington. It's almost comical, isn't it? I would say it's not just clarity, it's also cover. It's cover to go to Islamabad, just in case there happen to be talks about talks about talks.
A regional tour. I love where they're going to, Islamabad and Moscow, to talk to people just in general, because I want to just see what's going on out there.
Right, catch up with people, get a feel for things.
Yeah, just take some, get some knickknacks, bring them home to the kids.
If JD, the Vice President, happens to get on a plane too, and we can have talks.
Yeah, it's like, it happens.
Fantastic.
It's not exactly because we want to negotiate any capacity.
It would be comical if it wasn't serious, but of course it's immensely serious.
What do you do with this, though? Again, this is a reason why people want to look past this and they want to say what's going on with earnings. It's refreshing. You see people cheering the excitement to be able to talk about earnings so that they don't have to decipher these types of headlines. Because ultimately, if you ask them, what does it mean to be taking a tour of the region? They're just going to say, I like the long-term prospects of tech.
Of Intel.
Exactly.
Up in the pre-market by more than 20%. Futures fading just a touch. We're still up by a third of 1% on the S&P. With an update on stories worldwide, with your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Pakistani officials saying Iran's foreign minister is expected to arrive in Islamabad tonight for a possible second round of peace talks, though. As Anne-Marie just said, it looks like he's on a regional tour. A U.S. security and logistics team is reportedly already on site to prepare. The White House is giving a 90-day extension to a key shipping waiver, marking the latest effort by the Trump administration to make it easier to move oil, fuel, and fertilizer. The extra time is expected to immediately help U.S. refiners seeking waterborne shipments of crude. And DeepSeek unveiling its new flagship AI model, calling it the world's most powerful open-source platform. The Chinese startup is previewing versions of the V4 Flash and V4 Pro series, touting top-tier coding and reasoning capabilities. The new model arrives more than a year after DeepSeek ignited a $1 trillion market sell-off. That's your Bloomberg brief. John?
Yahara, thank you. Thank you for the update. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Ed Yardeni of Yardeni Research as investors continue to rotate out of software stocks and into hardware. That conversation up next.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Welcome
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This whole AI trade, the cloud titans are basically huge worldwide monopolies that have unbelievable technology advantages, and quite frankly, they're years ahead of any foreign competition. It's a free cash flow game, and who has the engineers, and quite frankly, who can push the AI models forward. I think those positions are going to be overweighted for some time.
Fantastic conversation with Ted Mortensen there of Baird. Fantastic conversation you can catch on Bloomberg.com and on the Bloomberg terminal. Equity futures right now supported by some of the content of that conversation, the power of big tech, up a third on the S&P, up by more than 1% on the NASDAQ. Intel absolutely flying. Bond yields this morning slightly lower, helped out by this move in crude, down a basis point on 2s, on 10s. Crude just about unchanged this morning, settling down on Brent at about 105, on WTI at 96, on the prospect of talks. I mean, we all know and understand how ridiculous some of the reporting has been over the last 2 months, how ridiculous and exhausting it has been. And the fatigue that I think a lot of people have got in financial markets at the moment, which is one of the reasons why people are looking past this, looking through it, setting it to one side and just focused on US tech.
They want to see what they can analyze, not something they can't get a handle on. And that's the reason why you're seeing each headline have diminishing returns when it comes to the market impact.
Big week coming up as we count you down. Lots to look forward to in tech as well. Coming up next Wednesday. Let's get to the calendar. On Wednesday, does anything else matter other than this next week? A Fed rate decision in the afternoon. Then in the evening, you'll hear from Google, Meta, Microsoft, and maybe Amazon as well. That's like the week ahead. It's one day. It's Wednesday.
100%. And I would argue, actually, it's the earnings from the tech companies that matters that much more than the Fed. I think the Fed's going to be a lot of noise in politics and questions around Fed Chair Jay Powell. The real meat behind this market is tech earnings, how much they're going to spend and how much they can increase their capex, considering some of the constraints the market's putting on them.
Let's keep it on tech. Intel on track for a record high at the opening bell. Traders rotating out of software and piling into hardware. Ed Yardeni of Yardeni Research writing, investors are increasingly betting on the long-term consequences of the technology revolution and looking past the short-term mess in the Middle East. Ed joins us now for more. Ed, welcome to the program. Just the perfect summary of where we're at. Do you believe that's going to be the right approach?
Yeah, I think so. I mean, the market does tend to look ahead. Typically, it looks ahead by 12 months, but maybe it's looking beyond that. The whole technology revolution is not something that's just going to continue to power ahead for just the next year. It's going to power ahead right into well, right now we're in the roaring 2020s, in my opinion. I think it's going to roar right into the roaring 2030s.
Do you think that there's anything concerning about the fear of missing out seems to be triumphing over the fear of some sort of escalation in the Middle East, given that there are potentially supply chain constraints and real-world implications that could hamper the expansion?
Well, you know, my job, and I guess your job in a sense, is to sort of anticipate where markets are going. But sometimes we just have to look at the markets and kind of get the signals from the markets. And really, it's really quite incredible to me how the price of oil just managed to hang around $100 a barrel in the face of the Strait of Hormuz being closed now for over a month. And that implies to me that oil is getting out one way or another. You know, oil's pretty slippery liquid, and it's certainly getting out through pipelines from Saudi Arabia to the Red Sea. I think the administration's kind of looking the other way and letting more Russian oil go to China and India. They're not getting concerned about that, upset about that, so that's happening. Japan is looking to get more oil from Mexico, and so everybody's scrambling to figure out where they can get oil, and apparently it's there, which is why the price of oil is holding up around 100. And I think at this price, the market here is telling us that the market can handle it, especially since a lot of the strength of the U.S. economy is related to the technology revolution, and that's not that dependent on oil coming through the Strait of Hormuz. It's more dependent on how much gas you can pump out of Texas and other areas.
And if the oil prices stay at this level, do you start getting concerned about inflation that accompanies the roaring 2020s in a way that we haven't seen, at least in the past couple of years?
Yeah, I think there is. I think we're looking at a stalemate situation in the Middle East. I mean, that's my analysis du jour every day and every hour. As John pointed out, things can change, but I think it's a stalemate situation. I think the United States, I think Washington feels like we won the war. The problem is there's nobody on the other side to surrender. There's a real problem with a lack of a government in Iran. So I think we're kind of stuck with a stalemate situation. And yet the stock market's been remarkably strong, and I think it continues to do very well. Still using 7,700 by the end of the year for the S&P 500.
Ed, you've
But
been bullish and you've been right to be bullish for quite a while. And I just want to jump in, Ed, to squeeze in this question.
Go ahead.
This market's had such a strong forward-looking mindset, impressively so. And you're right to point out that it's not just a disconnect. I think that's probably the wrong word. As you point out, it's just a difference in time horizon, that we're looking to the future and the technological progress. And in the short term, we've got this mess in the Middle East. But I am curious from your perspective, I'd love to know, what would get markets and investors to start thinking about where we are right now and the mess in the present just a little bit more? What would change things for you?
Well, I think the price of oil. I think we're all kind of watching it, and as long as it stays around here, I think the market figures we can handle it. To Lisa's question about inflation, I think the market recognizes there's going to be an inflation problem, but I agree with your previous interview that it's probably not going to spread to the core inflation rate, and that we will be looking at kind of a moderation in inflation later in the year. But in any event, kind of we've been there, done it. I mean, the same thing happened, when Russia invaded Ukraine, oil prices went up, and that eventually settled down. Last year we had the tariff mess, and that was followed by a huge rally in the market. Now we've got the mess in the Middle East, and already we've got a huge rally in the stock market.
Ed, appreciate your time. Thank you, sir.
Thank
As
you.
always, thank you. Ed Yardeni of Yardeni Research, summarising that time horizon difference pretty well right now. That's going to be a source of tension for the time being. The mess in the Middle East, in the here and now, and the promise of a better future and better earnings driven by big tech.
And it seems like people are getting a lot of comfort from the fact that oil prices haven't topped $110, $120. The new benchmark for OK seems to be around $100 a barrel. That's manageable for an economy that has plenty of cash sloshing around. That, at least, is the message from markets.
That benchmark for OK has changed a bit, hasn't it? Through March and April.
You know, we used to talk about long term as being months.
Yeah.
Now we're talking about it being through the end of this year. That is a benchmark that keeps shifting, and I wonder why it has changed so substantially.
Brent crude this morning, 106, WTI 96. Coming up on Monday, we'll catch up with Laurie Calvasina of RBC, Norman Raw of CSIS, Kristen Bidley of Citi, Olivia Wassenaar of Apollo. Looking forward to catching up with you all on Monday. Have a wonderful weekend. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this cost that amount of money, this cost that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
"30 minutes till the start of the cash trade, and the semis are up again." I'm Matt Miller.
I'm Danny Berger. An 18th Street day. Bloomberg Open Interest starts right now.
Coming up, AI euphoria returns. Blockbuster results from Intel fuel a massive rally in tech shares.
Meanwhile, Meta and Microsoft plan to cut thousands of jobs to offset heavy spending on AI.
Plus, Pakistan says a second round of U.S.-Iran talks is expected, but no date has been set.
By the way, so Intel's move has been huge, right? So I went in to ask B, and I was like, hey, when's the last time Intel had this big of a surge post its earnings day? And I kind of broke it. It was like, since 2000, this is big. It's bigger, like 2.5 times bigger than the average of the typical move, because let me show you what it's doing. It's up 25% pre-market. If it ends the day here, it will hit its highest level, a new record, the first time it's done so since 2000. It was a blockbuster sales forecast saying that basically, good job, Louboutin, your pivot to AI infrastructure is working out.
Yeah, it looks like Louboutin is crushing it.
Truly.
At Intel. Okay, Amazon and Meta have struck a multi-billion-dollar deal for the social media giant to rent hundreds of thousands of Amazon's general-purpose chips for its AI efforts, those Trainium chips. As you can see here, Amazon shares are up a mere 2% in the pre-market. Facebook is up 0.3% in the pre-market. And of course, Danny, we have had a lot of news surrounding Meta and other hyperscalers that are reducing staff. They're getting ready, paving the way for thousands of firings. So there's a lot going on in this space.
There is a lot going on. And typically what we've seen, Microsoft as a whole was down yesterday with a lot of the big tech. But pre-market, it's slightly higher. And is this the lesson that these companies are going to continually learn? That if you let go staff, you blame spending on AI, maybe that's the thing that takes you higher. But capturing this market's attention right now, these huge blockbuster numbers from Intel. Let's bring in Bloomberg Intelligence head of global tech coverage, Mandeep Singh, on it. Mandeep, can you just walk us through the numbers? Because the market reaction has been nothing short of incredible.
Yeah, look, I think the sequential revenue growth was predominantly driven by the server side. And even though they cited, the consumer side will probably decline because of memory prices going up, Intel doesn't mind that because what they're seeing is resurgence in server CPU demand because we are entering this agentic phase where you don't just have to use GPUs, but you rely on CPUs to orchestrate the work of an agent. And that is where Intel has the capacity, fab capacity to deliver on that CPU demand. And I think they see a very nice runway going into the second half.
First of all, so much for my thesis on Elon Musk buying Intel, right? Because
that's not happening now.
It's starting to get too expensive even for him.
Yeah,
but I wonder about, our mutual friends, Mandeep at Samba Nova, because they were the first ones who turned me on to this inferencing play and how much more efficient it could be. And of course, Lip Bhutan, I think he's the chairman of the board at Samba Nova. The two companies have a very close relationship. Are they moving in that direction where, like, inferencing is where it's at and they happen to be in the right place at the right time?
Yes, and look, the demand for inferencing is right now off the charts. Pretty much any company that has, chips for inferencing is seeing that demand really kind of pan out. And you're seeing, even the ASIC companies, whether it's Google or Amazon, and that's where all these partnerships come in. So for smaller players like Cerebras, Samba Nova, I mean, they should do well. But if I think from a long-term perspective, that's where they will be challenged in terms of making sure that, they grow their market share. But right now, we certainly are in an environment where any company that has, inferencing chips should be doing very good business.
Mandeep, what difference does it also make for this company that the United States has a stake, a little under 5.5%?
Well, I think the fabs part is very important for a company like Intel now because of the backing of the government. And it sounds like there is a real need for Intel fabs to do well because, no one wants to be dependent on TSMC for all of their AI chips. And that's where I think Lip Bhutan did lay out a path that, they will have a role to play in the ASICs ramp up, and you will see a lot more in terms of that fab business improving its margin profile and also signing up more external customers.
All right, Mandeep, thank you very much. That's Mandeep Singh from Bloomberg Intelligence. And joining us here is Morgan Stanley Chief U.S. Equity Strategist and Chief Investment Officer, Mike Wilson. Mike, great to see you. Thanks for stopping by. Intel adds to just a huge rally that we've already seen from semis, the 18th straight day running, the most that the Philadelphia Stocks Index ever has since the thing was created in 1995. How much of that is fundamental? How much is momentum? Can this thing sustain itself?
Well, somebody who grew up, doing TMT in the 90s, I remember when they first created this ETF. So yeah, it's been a long, roll back, especially for Intel from the 1990s. But anyways, the point here is that I think part of it was the setup coming into the last couple of weeks, right? I mean, let's not forget that we had a big sell-off in the group, going into the end of the month. I mean, the concerns about the war. And so that reflexive move, I think, is fueling some of this. But the results are great. And one of my wasn't a concern, but I said there is a risk that the hyperscalers might talk a little less optimistic about CapEx this quarter because their stocks were down. But now those stocks have recovered. In fact, we loved those stocks a couple weeks ago. And so maybe there's not as much incentive for them to back off on that CapEx guidance. That's really the only risk here. So until that momentum breaks, the group is going to continue to see people buying them.
I've been looking at both of us have been looking at the Goldman Sachs unprofitable tech stock basket, and it's been on a tear in the last couple weeks. That could be a sign of froth. It could also just be a sign that some of these companies, I don't know exactly what's in the basket because it's proprietary, but like NeoClouds, for example, aren't making a profit. Still, you want to be in them, right?
Well, to some degree. I mean, I think what's going on there is that's something we've written about as well. The liquidity picture, started to tighten up last fall. The Fed, of course, pivoted hard. They ended QT. They started buying assets again. And then bond volatility picked up. And then they came in again when Jay Powell started talking more dovishly at the end of March. And that was the beginning of this latest rally. So it's not all fundamental, right? There's the liquidity now is growing again. I mean, M2, when you include the loan growth, is up to like 10% on an annualized basis. So that money's has got to go somewhere, and it's going back into the financial assets.
So does that mean that more than this market being dependent on oil, and we can get into the war risk later, but it's more dependent just on rates then? And that's the kind of key factor for whether this rally can keep going, not necessarily $100 per barrel of oil.
Well, I mean, rates are stable. They're, 10 years at 430. It's kind of been stuck in this range for a while. Our number's always been 450, where it becomes a problem. The other variable we watch closely is bond volatility. And, when that gets above 100, 120, it becomes an issue for the market. That was happening in March with the oil price spike and the conflict in Iran. That has since come down as well. So those are variables that we watch for sure. But right now, they're not a problem for the market. And so now we'll go back to the fundamentals, and the earnings revisions are quite good.
Were there I mean, maybe it's a moot point now, but were there levels on the 10-year, specific levels that you were worried about? I've heard people were saying, like, if it goes over 450, then we have an issue, and it didn't, so everyone was more sanguine.
Well, we didn't get back above 450 this year. We got close to it.
Right.
We actually put that, we'll take credit for that, good and bad. We put that 450 number out a couple of years ago. And then all of a sudden now it became kind of a thing. Okay, I actually worry more about bond volatility, because that affects liquidity, okay, and that really is a bigger driver for asset prices. Now, if we were to go through 450, it also depends on why we're going through 450, okay? If it's because growth is spectacular and inflation is under control and the Fed doesn't have to raise rates, I think that's okay. But if we're going up because inflation's a problem again and then the Fed has to get hawkish, then we have an issue. So right now, I'm not worried about rates. I don't think that's going to be an issue for the market. Valuations are totally fine here, 21.5 times earnings, given the earnings picture. And that's been our thesis all year. We haven't wavered on that, right? That this earnings recovery is a lot stronger than people think.
I hadn't thought about the fact that you made that 450 call a while ago. Does that mean every time the market has sold off because that people have called you up and been like, Mike, this is all your fault.
No,
Why did you put this in our heads?
Actually, no, they take credit for it instead.
Okay, fair enough.
No, I'm teasing, but like that's the game, right? It's like once you, and by the way, I figure out things from other people too, where it's like we identify something that works and then the market kind of trains itself.
Right.
I don't think, to match question though, I don't think that level of 450 is nearly as important today, okay, because of the earnings picture as it was, say, 2 years ago when earnings were very tepid. The bigger issue, the bigger risk, if there is one right now, would be if bond volatility were to pick up again, which is probably more a reflection of the conflict in Iran or some other external event. Private credit starts, percolating again on the negative side. Something like that, I think, would be much more of a headwind for equity multiples than just a level of rates.
Right.
Yeah, earnings expectation. I keep looking at this EEO page on the Bloomberg terminal. S&P earnings 12 months out, 328 for the blended. It's like 350 already, and it's just, I mean, that's 23, 24% growth.
Right, there's a simple measure. Just look at NTM, rolling NTM earnings per share. Whenever that's going up, which it has been, it's very hard to see the market
Does it
go
not
down.
make a difference, though, that like so much of it, and I've been talking about this because our MLive team has been doing great work, it's like all Micron. So many of the earnings upgrades have been Micron. It's very concentrated, that.
Well, it's actually not true. I mean, that was the case last year.
Right.
The earnings, the broadening of the earnings story has actually been very impressive, something that people have underestimated. So I'll give you an example. The median stock within the Russell 3000, okay, so this is like the 1,500th largest company in the broader market, is now growing earnings close to 14% year over year. So that broadening story, I think, is still underappreciated, which is why we want to go back to some of these areas that got pummeled when oil prices went up. So, for example, consumer goods or some of the industrial stocks. Financials is an area we doubled down on like 3 weeks ago.
We're going to go back. We're going to go into that, so we can talk about that in our next block. Mike Wilson is staying with us, a sort of guest co-host, if you will, for the hour. Check on markets here. We have gains in futures, 0.2% on the S&P. We're down a little bit yesterday, but we could come up to new highs again today. Even though it's Friday, you can see the 10-year yield not moving at all, so no volatility there at 432, and Brent crude at 105.15. Let's get a look at some of the single stocks moving, because there are a lot to talk about today. Procter & Gamble reported stronger than expected results for its latest quarter, driven by growth in the beauty category.
Yes, even though they noted that they have a charge for higher commodity prices, around $150 million, and then $400 million in a tariff cost, but that doesn't matter because sales are strong. We're also looking at Hims and Hers this morning. That's been initiated by JP Morgan at an overweight, and Hims will soon let providers send prescriptions for medications, including GLP-1s, to independent pharmacies.
Porsche has agreed to sell its stake in the venture that owns the Bugatti brand to a consortium led by HOF Capital. This is, for me, a ground-shaking event. Volkswagen will no longer own Bugatti. What Ferdinand Piëch did for his whole career amounted to owning Bugatti, and they are getting rid of it. We'll talk about that throughout the program. Still ahead, insider trading concerns rise as regulators notice impeccably timed trades for commodities, stocks, and prediction markets ahead of White House policy changes. They didn't get the big guys. Of course, those making hundreds of millions of dollars will keep doing that. But they did throw a little dude under the bus, and we'll tell you who next. This is Bloomberg Open Interest.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Is the blockade growing? In fact, a second aircraft carrier will join the blockade in just a few days, but this growing blockade is also gone global. Just this week, we seized 2 Iranian dark fleet ships in the Indo-Pacific region that had left Iranian ports before the blockade went into effect.
That was Defense Secretary Pete Hegseth speaking in the last hour. Pakistani officials now say U.S.-Iran talks are expected, but didn't offer details. Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst and retired Army Colonel. Colonel, it feels like Pakistan absolutely wants to make these talks happen. Just from the noise that you're hearing that perhaps the foreign minister of Iran will be going there, we don't know whether the American side are going. Does it seem like a second round of talks is likely?
Yeah, I think it is. I think right now, from an appetite of military operations out of the House, a lot of that is already done, right? Both sides want to figure a way that they can actually bring and get as much legitimacy as they possibly can out of this situation. So I do see them wanting to be able to come back, but they are still in the Straits of Hormuz. Obviously, you heard Secretary Hegseth today talk. Ships and mines became the big talking points at this point in time. That will continue to be on that negotiating table as well.
Hey, I got to ask you about another niggle that I have been talking about this week or reading a lot about this week after Carolyn Leavitt said one of the demands that President Trump has is they get the nuclear material, the highly enriched uranium back. But the president on Monday again repeated his claim that we have buried that nuclear dust so deep that it would take a long process and difficult process, even for the U.S. Army, to get out. So how can that be a justification that they would get a bomb for this war when at the same time the president of the United States, who has to have access to better intelligence than any of us, says that we have completely and totally obliterated their nuclear capabilities and materials?
Yeah, I think that ends up being that you have to be able to look at it in terms of 2 different pieces. One is he has to maintain as much as he can on the global stage and say, hey, look, Iran cannot have that nuclear weapon, and if there is any, right? We've talked before about the fact that the intelligence community can't be wrong when it comes to this. So it's very, very difficult to be able to confirm 100% that material is actually buried the way that it says. 441 kilograms, whether or not it was in one facility, in multiples, in Natanz and Fordo, where all of these pieces are. So I think at this point in time, part of the message is actually looking to find out whether or not it creates reflections in the intelligence community that when he says that and says we've buried it all, he's looking for any type of information that scientists are saying, oh, no, we still have this. And then obviously that's going to be close hold within the intelligence community that would end up being used to create some type of additional military operation or some type of diplomatic channel extraction for that. They've already talked about down blending of that capability from 65% enriched uranium down to 20%. And other pieces like that. So I think there's a lot to be in play here, and he's not going to show all of his cards.
But when he repeats that we've completely and totally obliterated their nuclear capabilities and materials, is he just not really sharing the truth with us?
Well, I think it's fair to say that when you look at the production and the enrichment capability has been severely degraded, if not completely removed, based off of all the locations where that enriched uranium could possibly be enriched any further inside of Iran has been decimated. Those were part of the military objectives. Now, whether or not you can actually find all the kilograms of 65% enriched uranium becomes a bigger question there, because with that, well, like we've talked about before, if you don't have boots on the ground, the ability to confirm whether or not it's there, whether or not it can be extracted, or whether or not it can be moved and supported by another potential actor, China, Russia, or somebody else, that's going to be one of the top intelligence collection capabilities right now.
All right, Wayne, thank you very much. Retired Army Colonel Wayne Sanders of Bloomberg Intelligence, and still with us is Morgan Stanley Chief U.S. Strategist and Chief Investment Officer Mike Wilson. Mike, there have been a lot of people who looked at the events in the Middle East and said this is a complacent market. You've been very clear there was not complacency. Pain was priced in. Where did you see that?
Well, we saw the multiple. So it's very simple math. I mean, I would agree if the S&P was only down 6 or 7% and all these events are going on. By the way, let's not forget about the private credit concerns and also, you know, the AI disruption and all that was happening. But the earnings have been so good that the multiple actually went down 18%. So an 18% decline in the S&P 500 multiple only happens if you have a recession or you have a financial crisis, okay, neither of which looked obvious to us at all. So I think the market very much dealt with the problems and it was very surgical with the areas that were most affected by these areas. And now we're moving forward. And that's what markets do. They live in the future and they price this in. And now we're looking ahead to the second half of the year, which looks pretty good.
Yeah, and you've definitely made the right calls throughout this war. My question is, what happens if it continues on through the end of the year? And we can talk about that. Mike Wilson is staying with us. Coming up later on the show, we'll talk the energy outlook with Baker Hughes CEO Lorenzo Simonelli, who says everything's going great if you take out the war effects. This is Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevryan in Seoul, and this is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Getting out of high interest, look at what's making headlines around the world. Chinese regulators are planning to curb U.S. investment in tech companies. Sources telling Bloomberg agencies have told several private firms in recent weeks they should reject capital of U.S. origin in funding rounds unless explicitly approved. It's a broader part of Beijing's response to Meta's controversial acquisition of the startup Manus. Citadel raising the possibility of halting expansion plans in New York City after Mayor Zoran Mamdani took a jab at billionaire founder Ken Griffin on social media right in front of his house. Mamdani using Griffin's record-setting purchase of an apartment to tout a new tax proposal on second homes worth more than $5 million. And, of course, Citadel is getting ready to build a $7 billion high-rise on Park Avenue with over 6,000 construction workers to hire 15,000 people to work in this city. So, hopefully they still do that. A U.S. soldier is facing charges for allegedly using classified information to make more than $400,000 trading on Polymarket, betting on the timing of the capture of then Venezuelan President Nicolas Maduro. President Trump vows to investigate federal workers' prediction market bets, but other people made hundreds of millions in this game of potentially using inside information to place bets early. So, I mean, poor soldiers betting on his own mission, right?
And not just prediction markets, but in oil markets, maybe in equities, some big bets made. Still with us is Morgan Stanley's Mike Wilson, and I'm not going to ask you to litigate this case specifically, but there's this idea of if you have this distrust in these markets as to whether people are trading on inside information, I mean, not even just talking about prediction markets, but equity markets too. Does that not have any sort of chilling effect that there is a risk that maybe the administration is using information to trade or weird things are going on?
Well, look, it's a nascent market, right? So, I mean, these markets still need to be somewhat regulated. I mean, it's sort of the Wild West. And as the late Charlie Munger said, show me the incentives and I'll show you the outcomes. And so if it's not regulated, and people can figure out a way to make money off it, they're going to take their shots. Now, this person getting arrested is probably good in that regard, because then people will think twice about trying to front run or use information they have. But it's there are no rules. I mean, as far as I can tell, it's pretty much open season, just like insider trading rules weren't in place 25 years ago. So it'll mature. And I'm not worried about it. Markets will figure it out.
But is there any sort of spillover effect? Because there is a lot of retail participation in wider markets right now.
It is a hard break.
Oh, yeah, true. Sorry, Mike. Sorry, Mike. We're going to have to go to that later. I'm just so interested in this. I want to talk about it.
I want to talk about it more, too. But we have to take a break now. We have to pay our own bills. And when we come back, we have the opening bell at the New York Stock Exchange and the NASDAQ market site. This is Bloomberg Open Interest.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market, you can get that from a bank, you can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at markets up ahead of the open. So S&P futures higher by 0.3%. We did have a drop yesterday of about this size. I think we were off 0.4%. NASDAQ futures up more than 1% because the story today is all about the Intel beat, a massive rise in those shares, a continued gain for semiconductors after, I think, 18 days in a row of gains. Today could be number 19. You have contango silver and gold ringing the opening bell at the New York Stock Exchange. Some fist bumps there. I looked at the stock, actually done a whole lot of nothing. It's up like 2 or 3% over the past 5 years, which, as you know, is my typical. I don't know, because Oceana, remember we had Oceana Gold, another miner, and they're up like 500-600% in the same period. So these guys are doing something different. I got to dig into it a little bit deeper. And then
nice fun, by the way.
X Energy is IPOing today.
Yes.
On the NASDAQ. So that's why they're in a good mood ringing the opening bell. And why not? You know, as we get every day pretty much a new high, not yesterday, but this market is ripe for IPOs.
And probably a great time for an energy company that supplies things like data centers to be IPOing because it is hot in this market. So that's a hot trade, as is semis. Intel this morning, here at the opening bell, up almost 25%, 24, 25, all right, moving around. But this is an all-time high for Intel, assuming it closes here. It'll be its first all-time high since 2000. It had blockbuster sales. It's been pivoting to AI infrastructure. Lip Bhutan leading this company, and this is one of the best single earnings day reactions in recent history from Intel because you have the fervor over semis plus a really good set of earnings, Matt.
Yeah, absolutely back. In terms of at least the stock price, right, and the market cap for Intel, not in terms necessarily of revenue and EPS. You only have to go back a few years to find those numbers. Amazon and Meta have struck a multi-billion-dollar deal for the social media giant to rent hundreds of thousands of Amazon's general-purpose chips for its AI efforts. This is something we were talking about with Ed Lud, not with Ed Lud, but with Mandeep Singh briefly.
I'm sure Ed will talk about it.
Ed also will talk a lot about that at 11 o'clock when he joins us when he takes over the airwaves for his program, Bloomberg Tech. Let's bring back Mike Wilson, Morgan Stanley's chief U.S. equity strategist. And I want to get to the calls you've been making because you've been right. And you know it's difficult. So what have you been looking at and how have you not been distracted by the war, the closure of the Strait of Hormuz, the doubling of the price of oil, and been able to make the right call on equities?
Well, I mean, look, we don't get everything right, but I would say that the reason I think we stayed more true to the call this year is that we had a different view coming into this year than most people, which is that we believe that a recession ended last April. that's still like this crazy out of consensus view. And if that's the case, that's why the earnings story has been so good. So in other words, the foundation of the economy, the foundation of the earnings story was so much better this year than it was last year going into Liberation Day. We're like, wait a minute, the multiples come down 18%. Our revisions are actually still going up. Companies aren't really, revising earnings despite all these things that are going on. Certain parts of the market that were affected by, specific things. But the point here being is that our work is based on earnings growth, okay, valuation, sentiment positioning, which got washed out, okay, and then policy. We talked about this already a little bit, but the thing that was really weighing on the market at the end, we call it the last hurdle, was when the Fed started getting a bit more hawkish, somewhat related to the price of oil. But then as soon as, Jay Powell kind of pivoted back and said, look, we're not raising rates, okay, the market didn't look back and it moved forward. So all those things helped us to kind of stay with our core call.
How about fiscal policy? How does that factor in with an administration looking at affordability at the midterms, discussing things like bailing out Spirit, which maybe doesn't have a direct implication considering it's not listed anymore? Even Intel, it's up 200% since the president took a stake in this company. Mm-hmm. How much of this administration's moves are also acting, maybe not as a lift, but at least a floor for this equity market?
Well, the fiscal is also another variable coming into this year. Incredible, right? I think people completely underestimated the tax break from last year. So just to give you a number, tax returns, okay, are up almost 15% year over year in dollars. That's a big number. So that helped to offset some of the gas price increase. That kept us positive. And then the big beautiful bill, which I think is still underestimated. Right. One of the reasons we're seeing this CapEx stay incredibly robust is because companies are getting a massive tax break. So if you're going to spend the money anyways, you might as well pull it forward, right? And so that's why they're not getting punished for that, because the cash flow impact is actually not as bad as you would think because of that tax benefit. So those are two big levers. There's other things going on. Deregulation is one that still has to kick in the second half, in my view. And there's just a lot of things that the administration has put into the economy from a fiscal standpoint that has helped the earnings story.
Have we not front run a lot of the deregulation? The first quarter was a record first quarter for M&A. It feels like companies are like, all right, let's do this thing.
Yeah, but why is that going to stop? So you were just talking about the IPO market, and that's very helpful for us. And the IPO market, the capital markets activity, I think is going to be robust for the rest of this year, and maybe even to next year because of that deregulation, and because there's still a lot of paper out there that needs to come out.
I just go back, I'm looking through your ticker on the Bloomberg, right? And I see on March 2nd, Morgan Stanley's Wilson says Iran is unlikely to dent bullish view. Now, at that point, we had no idea that oil wasn't going to 150 or 200, right? At that point, I think a lot of people were worried that gas could go back to $5.
Yeah.
Now, we didn't get that, terrifying scenario. In fact, it was pretty tepid at 120 and $4.16, I think, is where the national average peaked for the prices at the pump. But you couldn't have known that.
Well,
and wouldn't oil at 150 dent the earnings picture?
Well, I didn't know that, okay,
Yeah.
but I have experience. And and we wrote about this at the time. It sounds a little simplistic and people get a little crazy, but this is the way you have to think about it, which is the solution for high commodity prices is high commodity prices, okay? The oil, I was confident, was going to find a way to get to the end market because it had to. At this point, Iran was not fighting Israel and the United States. It's fighting the world, okay? And China is one of its biggest, but they're not going to tolerate that. And they didn't. That's why they got involved in the negotiation. So I didn't know exactly where it would peak out, but the rate of change, I felt like it had already happened. Kind of like with the tariffs last year. We made the same call, that the rate of change on tariffs. Now, I'll give you a really good example from 22. We were bearish in 22. We got lambasted for that. And oil spiked because of the Russia-Ukraine war. But the reason we stayed bearish in 22 is because the Fed was raising rates. The Fed was raising rates aggressively. Apples and oranges. And the earnings story in 2022 was awful, okay? Earnings in 2022 were negative, particularly for the big tech companies. They were down 20% year over year in the fourth quarter of 22. Apples and oranges. So that's why you have to look at all these different things at once. And I'll leave you with one last thought about this. So there was big concern about infrastructure, getting blown up at the time. And that's a real concern. But then I thought back to 2020 and says, wasn't that what happened to the Nord Stream pipeline? That was devastating, yet we still figured out how to work around. In other words, the world is very resilient in these moments. And the way we worked around the Nord Stream pipeline is Germany found a way to build LNG plants in 6 months when the plan was for 10 years because they just expedited everything. So I just think people don't appreciate how resilient the world economy can be around these types of crises.
Okay, Mike, I'm so pleased to say we get you for a little bit longer So generous with your time this morning. That's Mike Wilson from Morgan Stanley. Let's quickly get a check on these markets about 8 minutes into your trading day. And it's an equity market that's higher, but supported by not a whole heck of a lot. The breath is pretty bad this morning. Only 160-ish stocks are higher. It's obviously being led by Intel. I mean, that's no surprise. It itself is contributing 9 points to the S&P 500. NVIDIA, AMD, so chip makers having a really good day. Amazon making a new agreement with Meta to supply it with chips. So it's a real AI kind of theme. It's back to that whole thing of AI does really well and the things that are getting disrupted not so well. Looking at the downside this morning, Apple kind of tepid, but because it's so big, it's listed there as the biggest loser in terms of points taken away from the S&P 500. A lot of drug makers aren't doing well. Eli Lilly down 3%. Some industry prescription data for its obesity weight loss shots looking not as expected, a little worse than expected. So those shares falling, and in general, a bad day for healthcare too. If you look at the sectors, again, this gets the flavor of we're not being supported by a lot in today's rally, which is only 0.2%. Only infotech and consumer discretionary are higher. P&G had some pretty good earnings. That's probably in Staples. Staples a little change this morning. Again, I pointed out healthcare with Eli Lilly falling, doing one of the worst. Energy is down because the price of oil is down. But overall, Matt, it's Intel, it's semis that are carrying this market higher.
Absolutely. All right, coming up, lofty expectations from Intel are met with blowout results. Lifting the tech sector today, as Danny was just showing you, we're going to talk more specifically about Louboutin's success. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Some top calls, what the sell side is saying this morning. We start with Wedbush, who has initiated coverage, Dan Ives and team there, of Oracle with an outperform rating. They say that the company is on the path to becoming a foundational infrastructure provider for the AI revolution. Shares only up about 0.4%. Next up, D.A. Davidson upgrading AMD to a buy, seeing upside to the chip maker's earnings estimates thanks to Intel's strong results, and that's why it is much higher. Because of Intel's results. Shares are up 13.33%. Finally, Citi upgrading Intel to buy, citing improved CPU demand and expecting the company to benefit from Tesla's Terafab project. Evercore ISI and Roth Capital also upgraded Intel this morning. And how could you not, considering this thing now, Matt, is trading at record highs?
I'm pretty pumped about the Terafab project.
Yeah.
I mean, we've been talking about it every day for this week, but it just seems like such a great like a no-brainer, right? Morgan Stanley's Mike Wilson still with us, and I want to bring in Bloomberg Tech co-host Ed Ludlow as well. And you can feel free to ask Ed. We always ask Ed a million questions because he knows everything about this stuff. Ed, it does seem like a no-brainer when you step back and look at the whole chip situation. Even if we have NVIDIA and AMD and all these Apple, great designers, the only place to make chips is TSMC. And I know that they're doing one fab right in like Arizona, but it would stand to reason that we need to move a lot more production here. That's the whole point of the president's push, and President Biden also was pushing for this with the CHIPS Act. So what's going to happen with Terafab? Is it going to work? Is it going to be huge?
Yeah, I'm just going to point out the obvious, which is, Intel's blowout earnings, the quarter gone, and the guide for the quarter have literally nothing to do with Terafab. And I kind of insisted when I spoke to Lip-Bu Tan and Dave Zinsner on getting them to say that on the record, that they haven't even begun to factor in any benefit from it. But what Lip-Bu Tan explained to me, the CEO of Intel, is that basically, philosophically, he's aligned with Elon Musk that the world's supply of lead-edge chips is not keeping pace on the supply side with demand, and that the only way that they can do that to fix that imbalance is to do it in America. The market is taking the commentary, which includes what Elon Musk said on his own earnings call in the middle of this week, as being like, this is a done deal. Intel is part of the Terafab project, and the Terafab project is going to use the 14A process. But actually, I think what they're talking about is just a sort of shared, broader dream, an initiative to make American chips great again.
Mike, if I could just ask you about this in the wider context, because as Matt was pointing out, it's like the way to kind of combat a TSMC and not being too reliant on it is Intel. If I look at the things that President Trump has announced government positions in, it's Intel because of that. MP Materials trying to combat some of the rare earth coming from China. Also, Lithium America is trying to overcome sort of an energy grid bottleneck. It kind of goes to what Peter Scheer talks about, this pro-sec theme. I'm wondering how viable this is for a trading theme of looking for American independence and on top of that, government stakes as really following the White House and their plan.
Well, look, I mean, I think the one thing that I feel confident saying is we're in a new world order, right? We're, whether you want to call it the Monroe Doctrine, the Donroe Doctrine, we're going into a multipolar world. This has been going on for a while. That's accelerating now with this administration. They're actually pushing it faster. So that is going to create opportunity in these new areas where we need redundancies. We need, new supply to kind of combat the fact that all the supply is coming out of China. That's the whole point of this America First movement. So yes, I think you need to listen carefully. One thing this administration, when they say something, they usually follow up. So, now at some point, and I think that this is really the key question. Technology, only works if the marginal cost goes to zero. So in other words, at some point, the pricing of this is going to collapse. And we're not there yet, obviously, we're still going. But that's what they're trying to do with these different solutions. What Elon Musk is saying is, look, not only is the supply not there, it's too expensive. We can't build this out at this price, it won't be economic. So what technology companies are really good at are finding solutions that are cheaper, And that's where the risk is. In like, say, memory, at some point, the price is going to collapse.
Yeah.
Now, it's not right now, but it's a given, And by the way, if the marginal cost of compute doesn't go to zero, then this is all for naught, because it won't work.
Right, all these hyperscalers, Matt, we were talking about this yesterday, have such an incentive to make things more efficient and not to be relying on this and to figure out a way to get over all the bottlenecks we currently experience.
Yeah, I think it's all fascinating. I still think about things in a historical perspective because I'm so old. And, I've watched Ed, and I've watched you interview Lip-Bu Tan, and I've watched you interview Pat Gelsinger. Yeah. And this morning when I woke up and saw this, I was just thinking, what must Pat be thinking right now? What did he not do that Lip did? Or is it just timing? Is it just we had to get here? Because now Intel's worth more than $400 billion. It's worth more than it was in the dot-com era.
Yeah, I've just asked the control room to pull up that chart, right, and like go really long duration. And what Mr. Wilson was saying about unit economics of compute. The market today, this morning, right now, is giving Intel a lot of credit and Lip-Bu Tan a lot of credit for executing a turnaround plan. They have turned things around. But if you isolate the foundry business and we go back to the year 2000, we do all of this historical comparison and analysis, Intel's margin is still at 37.5, not at the 60 it was in that era. The foundry business still loses billions of dollars, and it all comes down to technology. You know, it's just an idea that terafab will happen and that they will use the 14A process and that it will be meaningful, but it is not yet executed on. And so, I mean, it is wild what you're seeing on your screen with Intel. But a lot of it is based on them finding relevance in a cycle that was happening anyway. And forgive me, I literally just came from SFO, but I'm assuming you've discussed the idea that Intel is just benefit from being in the right place at the right time.
That's exactly what I'm talking about. I mean, because look, I look at the MODL, the modal function on this Bloomberg, and just in terms of annual revenue, okay, expected to be 56, 57 billion this year. They were more than that in 2022. So it's not like the business has turned around in a massive way yet.
Yes, and the foundry, which is the business of being a third-party manufacturer for other chip makers, you know, those customers aren't some long list. They really aren't any list at all. But the point I'm making is that the world right now needs CPUs in AI servers. Intel is benefiting from that. And right now they are in the good position, they have the good problem where their ability to supply doesn't meet the demand that's there. And you know, any sell-side analyst or desk analyst will say that when they model for that, that's a nice problem to have.
I mean, the earnings momentum is tremendous, as everybody knows. But Ed, how much do you think that the stock price movement is also a reflection of the fact that software is not working? So in other words, within the technology, industry, basically, are we seeing that maybe some of that money is just is not going into software, is going back into semiconductors and hardware?
I find that to be very interesting. You know, the way that Lip-Bu Tan explained it, because you know it's his duty to explain it from Intel's perspective to their benefit, is that there is a direct correlation with the move from training models to inference, running the models, right? And this era requires more CPU, but it also needs, you know, people to make decisions of where they want to invest, right? Bet on the right horse, and Intel sees itself as the right horse.
Hey, Ed, thank you so much for that. Bloomberg's Ed Ludlow, and a huge thank you to Mike Wilson. Mike, thank you so much. What other calls do you have for us, just 30 seconds that this market's getting wrong, in your crystal ball that we should look at?
Well, I don't think the market's never wrong, okay? It's only people that are wrong. The market usually gets it right.
All right, that's a perfect note to end it on, Mike Wilson. Thank you so much for joining us this past hour. And coming up, more on the historic rally in chip stocks. We're going to dive into what it means for ETFs. That's coming up next right here on Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Semiconductor stocks are powering the market as of late, and maybe the ETFs are even helping to power what the thing that's behind the powering of the market, if that made any sense to you. Joining us now is James Safer, ETF analyst for Bloomberg Intelligence. James, I saw somewhere that SMH, the big semi ETFs, are on track for like a really, really strong month. What do the inflows look like?
Yeah, ironically, the inflows aren't that great. For the most part, people are kind of taking their money out as this thing rallies. I mean, we're at, I think, 17 straight days of up days. And you'd think money would be pouring in, but honestly, no. I mean, there is a couple $100 million that went in, but if you include leverage products, there's actually been some meaningful outflows over the last week or so. And I think most of that has to do with, A, people are like, okay, this is insane. I'm going to take some profits here. And maybe people just aren't willing to jump in just yet. So maybe waiting for a pullback. But yeah, you'd be surprised to find out that the flows aren't really that strong for semiconductor ETFs as a whole.
It is indeed surprising, James, especially seeing what happened to the SOX index. Where do you see the strength in flows right now? What trends are you seeing on your ETF Go screen?
Yeah, I mean, right now, the top three, if you look over the last week, it's very much a risk-on rally. I actually just tweeted about this because it's so strong. We have 3 S&P 500 ETFs that are at the top of the leaderboard. ETFs in general have taken in over $35 billion in the last week alone, obviously very strong. And then we have Cathie Wood's ARK, ARKK, at number 4, which is something like a blast from the past. You don't really hear from too much unless people are really trying to buy some risk. You even have Bitcoin up there in the top 10. So yeah, this is very much a risk-on growth rally, I would say.
What's not working? What's unloved at this moment?
I don't even know, actually. I haven't really looked at it. The real answer is that, like I said, semiconductors are working, but obviously people aren't buying. They're actually selling and taking their profits.
All right, James, great to get some time with you and look forward to the work from your team. James Safer there of the Bloomberg Intelligence ETF Triumvirate, the BI team with Eric Balchunas and Antonio Serafagas. Athanasios Serafagas, sorry, I made him Italian for a moment, not Greek, is probably the greatest ETF team in the world. So definitely follow their research and watch the show, Bloomberg ETF IQ. It's now 1 hour long on Mondays. And I know as someone who used to kind of sit in on this show that we needed more time. 30 minutes was not enough for the ETF kingdom. Coming up in the next hour, Dana D'Auria on market moves as economists predict higher inflation coming. And Lorenzo Simonelli from Baker Hughes will talk to us about energy infrastructure plus ChargePoint. CEO Rick Wilmer has some pretty exciting news on quickly charging EVs. I mean, I was mind blown. This is Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
I'm Brian Clark. Iran says that its foreign minister is traveling to Pakistan for talks. So far, there's no indication the U.S. is going to join in any negotiations. But U.S. defense officials say the blockade of Iranian-linked ships in the Strait of Hormuz is real and growing.
The Pentagon says the U.S. blockade has seen 34 ships heading to or from Iran turning around. One didn't earlier this week and was met with disabling fire. Defense Secretary Pete Hegseth.
I think that sent a very clear sign that this is not a fake blockade. This is a real, full blockade. We'll use up to and including lethal force if necessary.
Echoing the president, who says the U.S. is not anxious for a deal with Iran, Hegseth says the blockade will go on as long as it takes.
Whatever President Trump decides.
Stephen Portnoy, ABC News, Washington.
Officials in Enid, Oklahoma say there were no serious injuries, but about 40 homes were damaged in a powerful tornado.
The roar was unmistakable.
Oh, my God!
Wow.
It was weird. You could feel the tornado. You could feel it in your chest.
Terry Washburn lives in Enid and watched as the twister moved in, leveling buildings in its path. The mayor reports 11 people injured, none seriously. For Terry Washburn,
you know, when they say it sounds kind of like a freight train, that's true. I mean, I'm never going to forget this.
Jim Ryan, ABC News.
An Army Special Forces sergeant was charged by the Justice Department with using inside information to make more than $400,000 betting on prediction markets. That information allegedly included his involvement in the operation to seize Nicolas Maduro, Venezuela's leader. Today in Colorado, sentencing for the woman who pled guilty to helping her husband hide almost 200 corpses at the funeral home they owned in Colorado Springs. Gary Halford's expected to get between 25 and 35 years. You're listening to ABC News. President Trump said the U.S. government could purchase a large stake in Spirit Airlines. The budget carrier is struggling amid financial problems and rising fuel costs.
We're looking at helping them. We have 18,000 people that live in this country that are great people and great employees, and we're thinking about doing it, helping them out, and meaning bailing them out or buying it. I think we just buy it.
Republican Senator Ted Cruz called this an absolutely terrible idea. 91 Georgia counties are under a state of emergency as wildfires continue to burn and continue to grow. ABC's Morgan Norwood is there.
Those fast-moving wildfires triggering a new wave of evacuations in South Georgia. Officials desperately trying to contain the two largest, the nearly 30,000-acre Pineland Road fire and the Highway 82 fire in Brantley County, burning 5,000-plus acres.
Authorities in Louisiana are looking for more suspects after a midday shootout inside of a shopping mall in Baton Rouge.
The shooting began just before 1:30 Thursday afternoon during lunchtime in the mall's busy food court after a dispute between two groups ended in gunfire. At least 6 people injured. Police later announcing 1 person had died. Suspects quickly fleeing the scene. Police hunting for them on the ground and in the air. By nightfall, authorities said at least 5 suspects were in custody, but that they were searching for more.
It's ABC's Pierre Thomas. I'm Brian Clark, ABC News.
Offer not valid in all states.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney with you here this morning. This is the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Joanne Shu, University of Michigan Surveys Director there on the UMich survey. Consumer sentiment came in a little bit better than expected, so we'll break that down. Kim Forrest, founder and CIO of Boca Capital Partners, will get her thoughts on these markets. Geetha Ranganathan is going to join us. She covers all the media industry for Bloomberg Intelligence. We're going to talk about some cable earnings coming out of Charter Communications and talk about just some big deals in the media space. In studio coming up this hour, Dan Ives, Global Head of Technology Research at Wedbush Securities. Got a million things to talk to him, Dan Ives, about on the tech front. So we got a lot coming up over the next couple of hours. We've got red and green on the screen. Let's break it down with Alexis Christopherson of Bloomberg Business Flash.
All right, thanks very much, Paul. And we have got stocks mixed. Oil is mostly lower on news that Iran's foreign minister is due in Islamabad later today and that a second round of peace talks between the U.S. and Iran is expected. The S&P 500 inching up about 11 points. The Dow Jones Industrial Average is down about 170, but we do have the NASDAQ Composite up by 132 points, led higher by a blowout forecast from Intel. That's driving shares of Intel to an all-time high, now up 22.5%, trading at $81.86 per share. And that is sending the group of chip makers up for an 18th consecutive session. The NASDAQ 100 on pace for its 4th straight week of gains. That is the longest winning streak since 2024. Also on the plus side, Procter & Gamble up better than 3% after the company came out with better than expected earnings, including a 3% rise in organic sales last quarter, led higher by their beauty category. Elsewhere in the markets, the Bloomberg Dollar Spot Index 1198.37. We've got the 2-year yield at 3.80%, the 10-year at 4.31%, and spot gold at $47.19 the ounce. This Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Once again, S&P 500 up about 10 points. WTI crude 95.50 the barrel. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Scarlett, how about this news here from ABC News? The Department of Justice is expected to drop its criminal investigation into Federal Reserve Chairman Jay Powell as soon as Friday, today, ending a standoff that threatened to delay the confirmation of Powell's successor at the central bank.
So good thing they held that hearing earlier this week.
Yeah, so maybe this can be a catalyst to get this thing moving and get that transition, a smooth transition.
Yeah, the senator who is not running for re-election and therefore can afford to take a stance on things, has been very clear about how he wants this investigation completely resolved before he moves forward with the vote. He's planning to vote for Kevin Warsh to be confirmed.
Exactly.
Let's make that clear. He just doesn't want this to be an overhang.
Very good. So we'll have more reporting on that coming up, but that's some pretty important news coming out today for those folks that watch the Fed here. All right, we got red and green on the screen here today. Let's take a look at some stock movers out there. We can do that with Bloomberg's Matthew Griffin. Matt, what are you looking at here?
Well, first, let's talk some more about Intel. I feel like there is just no end of what you can say about this report, about the stock reaction here. So, of course, shares up more than 23% today. But taking a step back, looking year to date, Intel now up 121% year to date. That's after about 85% last year. So the days of this long stock slump look increasingly in the rearview mirror, even before the blowout revenue forecast that the company gave for the current quarter. There was a lot of reason for investor optimism. They had bought back part of a factory they'd had to sell basically to raise cash. That's seen as a vote of confidence. They're participating in Elon Musk's chip-making project. So, really a lot of reason for optimism, even though their revenue still a long way off all-time highs.
Very good. All right, what else you got? Avis?
Yes, so Avis now extending a slump into a third day. Nothing like the epic crashes seen the last two sessions, but shares now down about 2.5%. The stock down nearly 69% across three sessions. That comes even though Pentwater Capital, that's their second largest shareholder, they said last night that they'd exercised call options, bought 741,000 shares just before the crash started. Those are in the green. They those options were for a lower price. However, that not moving the needle. And just to throw something extra in for listeners, look at what's happening with the Dow Transports Index. It weights its members by share price, and it is just swinging wildly along with Avis, down 12% across 3 days.
Yeah, all those Dow averages being price weighted is a really weird thing. Okay, let's talk about the company formerly known as Schlumberger.
Yes, so now known as SLB, ticker SLB, investors trying to pick a direction here. Shares up about 0.5%, recovering earlier losses, and it, I think, highlights the way that the Iran war cuts both ways for companies that do maintenance and services for oil. Long-term, Iran war expected to be a tailwind. Oil prices a lot higher. Right now, though, a lot of those oil fields in the Middle East, you can't send people in to do maintenance. That's caused their earnings per share to fall 28% year over year. And again, investors kind of weighing the short-term versus the long-term here.
All right, Matt Griffin, thanks so much. Appreciate that. And giving us some stock movers. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Again, Scarlett, ABC News out with the news here. The Department of Justice is expected to drop its criminal investigation into Federal Reserve Chairman Jerome Powell as soon as Friday.
And we saw markets move on this. The 2-year yield promptly dropped to its session lows right now at about 3.79%. That tenor much more sensitive to Fed policy than other tenors, but the 10-year yield also came down as well, now at 4.30%. Michael McKee, our international economics and policy correspondent, is here with us to discuss. So if the DOJ drops this, if this ABC report is correct, what does that mean in terms of the timeline for Kevin Warsh to be confirmed?
I don't know, call Tom Tillis.
Yeah.
That's going to be the real issue as far as Kevin Warsh. Now, ABC is reporting this, and we believe they're getting their information from people up on Capitol Hill, so maybe from Tillis himself. We know that Jeanine Pirro was meeting with Todd Blanche, the acting attorney general, and there would be no move to drop the case without the president's permission. And one had to think, oh, there's a text coming in, I guess, on X from Jeanine Pirro any minute now. We can see what she has to say about it.
This is live news, guys.
Yes, this is
how it unfolds.
This is live news, and she's saying a comprehensive report in short order. I'm confident the outcome will assist in resolving once and for all. They're going to ask the Inspector General for the Federal Reserve to scrutinize the building cost overruns And she says that I expect a comprehensive report in short order and am confident the outcome will assist in resolving once and for all the questions that led this office to issue subpoenas. Accordingly, I have directed my office to close our investigation as the Inspector General undertakes this inquiry. Note well, however, that I will not hesitate to restart a criminal investigation should the facts warrant doing so. Okay, so that is what we were expecting to happen, and that's the thing that we always said, well, why didn't the president just do that?
Right.
But the idea that she is saying she could restart, that is something that will not sit well with Jay Powell and with the Fed, because at this point, he's got no other leverage. He still would be, in theory, facing criminal jeopardy if they decided that there was some fact they wanted to try. It doesn't change, the way I see it, it doesn't, and I'm not a lawyer, the way I see it, it doesn't change the situation for Powell, because they're still investigating what happened, and there was sort of no grounds that anybody could find for the charges or for the effort the first time. So they could still make something up out of the Inspector General's report, unless the Inspector General comes out on the first page and says, you know, there's absolutely nothing wrong. But I would imagine that investigating a $2.6 billion building project, you'd find something.
Yep.
So I wonder how the Fed is going to view this.
Well, you wonder how Chairman Powell and his legal advisors will interpret this.
Yeah, he had said until this investigation is finally brought to a conclusion, and I'm not sure that it is being brought to a conclusion.
But so this is an off-ramp for Jeanine Pirro, right?
It's an off-ramp for the time being. It may be their peace offering to Tom Tillis to see if he will then let the confirmation go forward.
Yeah.
My question here is, has Tom Tillis ever raised concerns about the Fed renovation expenses? Is that his concern? I mean, I know he said he wanted to get this out of the way, but does he have any doubt or skepticism over what has happened at the Fed?
He doesn't seem to think that there's any problem. He mentioned that at the confirmation hearing for Kevin Warsh. 7 members of the banking committee came out and said they didn't think there was any particular problem with what had gone on. They didn't see any reason that they might end up needing to have a criminal proceeding against Jay Powell. Is this going to be enough for them? That's going to be the question. And you wonder if this is the way we've seen this Justice Department work, is to kind of stretch things, go right up to the line. And this may be another case of that, and they may, we'll have to see if the Fed, if it's enough for Powell and the Fed.
Well, perhaps I think the way you phrased that, Michael, maybe the next step might be, is this enough for Mr. Tillis, for Senator Tillis?
Yeah. Well, there's 2 things here. One is who's going to be chairman of the Fed and when, which if Tillis is satisfied with this, then the committee can vote him out, can vote Warsh's nomination out, and then they have to get it to the floor. That could be done fairly quickly, although the time is a little tight. But the idea of whether Powell leaves the Fed or stays on as governor, even if Tillis agrees to let the vote go forward, that's still going to be an open question. And if we don't get anything out of the Fed, you know what I'm going to be asking next Wednesday.
So do we expect, I'm not sure, Senator Tillis, should we expect a response from him today? Does he feel the need to be that quick in his, I guess, observance of this and his comments?
Well, I don't know if we can expect anything. Part of it would be, how much has he been briefed on this?
Okay.
Did the Justice Department talk to him about this already? And, you know, does he know enough that he could make a decision? If not, we'll probably hear from him in the next 24 hours or so, because everybody's going to be after him.
We need some lawyers from the Fed, or former lawyers from the Fed right now, to kind of interpret this.
Call Scott Alvarez. He's the former. He wrote a piece yesterday about
there you go.
This, so.
All right, I guess that's the news right now. So we have, presumably, the investigation is closed, so says Pirro, but we don't know whether the option to reopen it again, is that a problem?
Right. You know who's going to be relieved is Jay Powell, because this closes the door on a lot of questions that he would get asked at the press conference, because he can then now refer it to, let's let the lawyers come back to you with that answer.
Yeah, well, we were surprised last time when he came out at the last press conference and was as candid in saying what he said about staying on as chair and then staying on as a governor. So he may be just fed up, and he
That's
might
true.
tell us something.
That's true.
We don't know. But obviously, 2 p.m. next Wednesday, everybody's going to want to be listening to Bloomberg Radio to hear what.
And you will be in Washington, D.C., covering it all for us.
Absolutely. All right, Michael McKee, thank you so much. We appreciate that. Michael covers all things on the economics front and for Bloomberg here. And again, Bloomberg News now has this the confirmation. U.S. Attorney General for D.C., Jeanine Pirro, directs her office to close its investigation of Federal Reserve Chair Jerome Powell, as the Inspector General for the agency has been asked to scrutinize its building construction project costs. That's according to a post on X. So we have that right now. We've also got some economic data out there, Scarlett. We had the University of Michigan sentiment data came out a little bit better than expected, 49.8. The consensus was 48.5. That's better than last period, 47.6. Let's welcome Joanne Shu, Surveys of Consumers Director at the University of Michigan. Joanne, what'd you take away from your sentiment data this period?
Essentially, consumers are still feeling pretty sour about the economy. Leading into the last couple of months, consumers had been and continue to be frustrated by high prices, and they had felt that labor markets were weakening and were going to continue weakening in the year ahead. And the Iran war, of course, has just put further downward pressure on sentiment, and we see that right now. Consumers are expecting inflation to come back, and they're expecting more pain in the short run before things get better in the long run.
So when we look at the economic data and you look at where things stand compared to the preliminary reading, what does this indicate about how much a factor what's happening overseas is in how people feel?
So about 2 weeks ago, we had the announcement of the temporary 2-week ceasefire, and we also saw a little bit of a tick down of gas prices, and consumers were taking note of that. I think what we saw in the data was that they noted that gas prices had softened just a touch, and indeed sentiment improved just a touch as well. So in terms of what's going on in the Middle East, I don't think consumers are going to be really moved by developments on the military front or the diplomatic front. What they're really looking at are a lifting of the supply constraints, shipping constraints in the Middle East, and some relief when it comes to energy prices.
In terms of inflation expectations, a one-year inflation expectation, 4.7%, a little bit better than last period, 4.8, a little bit better than consensus of 4.8, but still elevated, particularly if you're the Federal Reserve. You don't like to see anything in short-term inflation outlook with a 4 handle on here, pushing up to 5%. How much of that is energy, do you think, Joanne?
That is 100% the Iran conflict.
Yep.
We saw a surge in short-run expectations pretty much as soon as the Iran conflict began, and as it continues to drag on, the more and more consumers are going to be concerned that there will be at least a short-run increase in inflation. What's notable is that the increase in long-run inflation expectations is much more modest. So consumers perceive a lot of uncertainty about how this conflict is going to evolve, but at the moment they are very concerned, particularly in the short run, that prices are not going in the right direction.
Joanne, fantastic to get you to provide some context around this data. Joanne Shu is University of Michigan Surveys of Consumers Director on the latest consumer confidence numbers out of the University of Michigan. Let's reset and get a check on where the markets are, particularly when it comes to treasuries, given the news flow, with our Alexis Christoforous.
Yeah, let's start right there. Why don't we? Scarlett, thanks so much. We've got the 2-year yield now at 3.78%, the 10-year at 4.30%, and we've got the Bloomberg Dollar Spot Index coming under a little bit of pressure at 1197.66. As for equities, it's a mixed bag. We've got S&P 500 up 18 points. Dow Jones Industrial Average down about 156, but the NASDAQ is really the story of the day. It's up 172 points, led higher by Intel, which is now up nearly 23% to an all-time high after that blowout quarterly earnings report, and that's bringing other chip stocks with it, including AMD, which is up now 13%. On the flip side, we've got Charter Communications, the biggest decliner in the S&P 500. It's down 18%. Charter reporting a decline in first quarter revenue and profit due to weakness in its residential video business. And HCA Healthcare, also another big loser in the S&P today, opting against raising its yearly profit and sales guidance, and that's despite first quarter profit beating analyst estimates. HCA and other hospitals are bracing for the impact of less government support, including cuts to Medicaid programs and expired Affordable Care Act subsidies. Shares of HCA are lower right now, down by about 12%. Once again, S&P 500 up about 18 points. WTI crude 95.17 the barrel. Brent crude 105.22 the barrel. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So the news crossing the tape just minutes ago, Scarlett, the DOJ probe into Fed Chair Jerome Powell and Fed building costs has been dropped. That is Ms. Pirro is saying that. So that is the news that is, as Alexis was just mentioning, is certainly moving the short end of the Treasury curve.
Absolutely. We see the two-year yield falling to session lows. It's right now at about 3.78%, so just below that 3.79% level. And the two-year yield, of course, extra sensitive to Fed policy. Yep. The Fed is going to be holding its next policy meeting on Wednesday, making a decision on rates. It's not looking to make any changes at this particular meeting, but if Kevin Warsh can become the next Fed chair sooner than maybe we had thought at the start of this week, that puts us perhaps in position for a more dovish Fed chair when they're ready to move on it.
Absolutely. Stuart Paul joins us here. He's Bloomberg Economics. We got this guy, Elliot Stein. He covers all. He's a lawyer. Bloomberg Intelligence.
That's what we need right now.
I know it's exactly what we need right now. And for Bloomberg Intelligence, he looks at all the legal aspects of the business issues out there in the community. Stuart, let's just start with you here on the economics front here. The market's kind of telling you, all right, we're going to get a more dovish Fed chair. Let's start reflecting that in the yield curve, I guess.
That's what's starting. The question has always been, and it continues to be, whether a future Fed Chairman Warsh will be able to wrangle enough members of the FOMC to actually deliver big cuts. Based on what we've been hearing since the March FOMC meeting, it looks like folks are far more comfortable just remaining on hold, waiting for inflation, mostly due to energy costs, to start dissipating, to start seeing inflation diffusion dissipating, to see if there are any additional downside risks to growth that are materializing, or if it's the case that tax refunds are just going to continue supporting growth, despite what we've been seeing with energy prices sapping consumption and spending power. So the question around Warsh is always whether he'll be able to get enough of a coalition to deliver the cuts that markets are starting to anticipate could come sooner.
Right, because this is a committee, and he needs to convince the rest of the guys on the FOMC. Let's talk a little bit more about the legal angle right now with Elliot Stein. He is our litigation analyst here at Bloomberg Intelligence. Elliot, Jeanine Pirro, the U.S. Attorney for Washington, dropping this investigation. This is something that Tom Tillis, the senator from North Carolina, who's a key vote on the Senate Banking Committee, wanted to see happen. However, Jeanine Pirro says she would not hesitate to restart the Powell probe if warranted. Is that just an off-ramp for her, or is that something that Tom Tillis is going to pick on, do you think?
I mean, that's, TBD, and it's going to be up to Tillis if this is going to be enough to satisfy him that the Justice Department is not, just going to close the probe for a short amount of time in order to get Warsh in and then restart it as soon as Warsh is in. I was just looking at Jeanine Pirro's tweet as well. They're transferring it to the Inspector General of the Fed. DOJ is closing its probe, and like you said, she did reserve the right to reopen the probe. So not fully in the clear yet, and I don't know if that's going to be enough for Tillis. I suspect it probably is. I think they want to get Warsh through. This does sort of feel like an off-ramp, and she's sort of trying to navigate that narrow lane between Tillis and President Trump.
Elliot, as you know, I took one whole class at the Duke Law School, so I feel completely...
Did you finish that class?
Yeah,
By the way,
barely.
I was just there last week, Paul.
Oh, were you?
Yeah,
excellent.
I sent you a picture.
Exactly, yeah. So I feel completely like an expert here. But if I'm advising Jerome Powell, I'm like, I'm not sure this is good enough for you if you're my client. I mean, I kind of want this thing wrapped up, locked, sealed, and it feels like the DOJ still has or the Attorney General still has a route to reopen this.
I agree. And if I'm Jerome Powell or his lawyers, I want some sort of immunity agreement. And to me, that then that would really close the door and would also satisfy Tillis. But it probably would upset the president potentially, which is why again Jeanine Pirro is sort of stuck between a rock and a hard place, I think, right now.
So, Stuart, how are you thinking through how quickly this vote can happen? Well, I mean, if there's a vote that happens immediately, let's just say next week, because it is Friday already, how quickly does that get a Kevin Warsh in as the chairman of the Fed?
If we were to end up getting a vote to end debate on the floor, and then we end up getting a full vote for confirmation, it's all going to be on party lines in the actual chamber. Then Warsh would ascend to the Federal Reserve Board as chair in mid-May. So now we're looking at about 3 weeks. I think that, Paul, you bring up the exact right question, which is dropping the investigation with the option to reopen it going to be enough for Powell to leave? Because even if you get Warsh as a member of the Board of Governors replacing Stephen Myron, and you get him as the next chairman of the board, Powell still retains his governorship, and he can also retain the chairmanship of the FOMC, the monetary policy making portion of the Federal Reserve System, which is really the power center. And so if he's not comfortable with the decisions at the Department of Justice, he could basically stay in that seat on the board, on the FOMC as chair. And that would basically strip Kevin Warsh of any sort of power in driving monetary policy decisions until Powell is effectively stripped of that by an FOMC vote.
Interesting. So
it's an interesting sort of like bureaucratic mess, right?
Here,
so it's an interesting sort of bureaucratic mess where the president gets to decide who he's going to nominate and confirm and hope to have confirmed as the chairman of the board of governors of the Federal Reserve System. But the FOMC, which includes branch presidents, elects its own chairman. Traditionally, and almost always, it's the chairman of the board of governors.
But it doesn't have to be.
But it doesn't have to be. And right now, Chairman Powell is in that seat. And that can continue if there's this standoff between Powell and the DOJ. It's a very tricky situation
so I think
now.
Powell has some leverage.
He does.
He has a lot of leverage,
Yes.
and he can decide how stubborn he wants to be or not, right?
And when we talk about how difficult it then becomes to build a coalition to deliver cuts, it could just come down to a matter of personalities. If Powell is just very firm in his position that until he's given some sort of immunity or until he's given some sort of assurance that the DOJ won't reopen the investigation, it can really just end up being a standoff where you have Chairman of the FOMC, Powell, Chairman of the Board of Governors, Warsh, and they're just sitting there twiddling their thumbs looking at each other, not making a decision about which way they should move rates.
Has that ever happened before, Elliot, where someone is given immunity, full immunity like that?
Yeah, immunity happens in a whole lot of different cases. Never seen it happen, with the Federal Reserve chairman. I mean, this whole situation is unprecedented in many different ways.
So is the next, what we should look for next, is it some comment from Senator Tillis? Do you think that's how it's going to play out?
Yeah, I think that's probably right. Maybe some comment from Senator Tillis. Maybe, I'm sure Powell will get questions about this next week, right? So we'll see what he says about this, whether this is enough for him to, leave the board completely.
He's consulting with his lawyers as we speak, I'm sure.
I'm sure he is. Yeah, I mean, if I'm in his shoes, I want that immunity agreement. But
who's the Fed Inspector General, and how powerful is that office?
I don't know who it is currently.
Mm-hmm. But the role in and of itself.
I mean, the role is powerful in the sense that it can investigate anything related to the Fed, and they'll do a fulsome investigation, and if they find there was wrongdoing in terms of the cost overruns,
then he would refer it back to the U.S. Attorney's
Office?
Office?
If they think there was a crime, I find it very hard to imagine that they'll think anything related to the cost overruns was due to criminal conduct.
So in the legal community, Elliot, has this whole process been perceived as frivolous investigation or credible, but probably, I mean, how's the legal community viewing this?
I mean, I think most people view it as the president going after his political enemies, right? Yep. It's not just this case, it's a whole number of cases, including against Letitia James, James Comey. I think that's how it's viewed. Occasionally, it's not necessarily mutually exclusive that you go after a political enemy and that there's a crime or not, right? I mean, you could have both, but so far we've seen a lot of these cases not even get to an indictment by a grand jury, which shows you how weak they are.
Is there any indication, Stuart, that Jay Powell will just be tired of this and say, you know what, I don't want to deal with this anymore?
It's very possible. I think that as we think about next week, what sort of signs can we look for from the press conference? And the thing that I'm going to be listening for is if Powell says anything about having a certain respect for tradition, his expectation that Warsh will take over for the board, and he has no intention of sending mixed messages by having different leadership structures. So I think that we're just going to have to stay tuned in for that to get a feel for how Powell then wants to proceed in making his own decision about resigning his governorship.
Have Powell and Warsh ever worked together before? Because Warsh was formerly on the Fed.
Yeah, I don't think they overlapped. I think that Warsh was out about 3 years before Powell ended up making it to the Board of Governors. Powell ended up making it to the Board of Governors, interestingly enough, as a sort of a spoonful of sugar to help Jeremy Stein get to the board. They were both Barack Obama nominees to the Board of Governors, and Obama appointed basically a Republican and a Democrat to get them through a closely contested confirmation process. And this is going to be a similarly interesting and difficult process. It's going to be strictly party lines. If we think about what it looks like when Powell ends up resigning, he's going to have a governorship that extends to 2028. So that ends up opening up another spot where where President Trump could fill someone to put him on the board, but it's going to end up being difficult perhaps after the midterms. Markets are pricing like a coin toss for control of the Senate. You could end up having another situation where Warsh gets through, but you need a little bit of a spoonful of sugar, someone that's palatable for Democrats to fill the vacancy that would be created by Powell eventually.
And just recall, again, the next Fed meeting is April 29th, next Wednesday. The statement comes out, as it always does, at 2 p.m. Wall Street time. Press conference at 2:30. Michael McKee from Bloomberg will be there as well.
New layers to this press conference.
I think it's going to be packed, standing room only, because you're going to want to get a feel for how Chairman Jerome Powell feels about this ruling. And so we'll see how that...
From a legal point of view, Elliot, what questions do you think reporters should be asking Jay Powell next week?
Well, I would ask him if he's going to demand an immunity agreement from the Justice Department, or if he's even been offered one. I would ask him if, this tweet by Jeanine Pirro was sufficient comfort for him to leave the board without, fear of being prosecuted later down the road.
Are tweets official statements?
They don't effectuate, the closing of a probe. I think there's more machinations that have to be done than just a tweet.
Fair.
So what do you expect? If you're Tom Tillis, the senator here, you're kind of the next step here, Elliot. Is it his prerogative to ask for, no, I need something stronger to protect Jerome Powell, or is he just looking to just get that investigation closed so that we can move forward with a vote for a chairman that most people feel like is credible?
Right. Yeah. That's really going to be up to Tillis. He may have the same concerns that Powell does, that an investigation is only being closed temporarily in order to get Warsh in. So he may want more assurances, just like Powell would. But that's really up to Tillis, I think.
When did Tillis decide that this was the thing that he was going to, die in the hill over?
January 11th. January 11th, he tweeted out that he would oppose any nomination until the investigation, the probe of the Fed's expenses, construction costs, and the subpoenas were resolved. That was his. Since then, he's been basically trying to walk it back a little bit. Instead of saying that he would oppose any nominee, he would say, I cannot support any nominee, which opens the door for an abstention as opposed to a no vote. It's sort of an interesting path that he's wandered. I do expect that he would vote with the rest of the GOP to confirm Kevin Warsh, both in committee and then on the floor. It's interesting. He had offered an off-ramp for the Department of Justice during the nomination hearing, saying, DOJ, if you turn the investigation over to the Senate Banking Committee so that we can conduct the investigation, then we can just call this matter resolved, the standoff resolved, and we can advance Warsh. It sounds like Pirro is turning it over to the Fed's IG, who Powell, we know, has a lot of respect for. He's been using the Inspector General's office at the Federal Reserve to investigate other financial impropriety, including, trading on, material non-public information by Federal Reserve officials. So Powell has a lot of respect for the Office of the Inspector General, and it could also be a little bit easier for him to stomach that as opposed to, let's say, a congressional investigation. So it all seems like this might be the least worst scenario maybe for Powell. One thing that I'm always a little bit interested in is I imagine that the Federal Reserve is covering his legal costs right now. If he were to leave and if, another investigation were to come up in the future, would that be coming out of his pocket? So it all becomes a sort of curious calculus that he has to make. So again, it goes to whether he's going to end up being given any sort of assurances.
So the General Counsel of the Federal Reserve represents Jay Powell right now, essentially.
I imagine that the Federal Reserve is basically covering his legal expenses and any sort of cost that he bears in dealing with this subpoena, correct?
Yeah, no, that's right. And the Federal Reserve itself is a defendant in
Right.
In
Right.
case.
Okay. So
Oh,
the
is that
General,
right?
Yeah.
Okay.
It's Jay Powell and the Federal Reserve.
Right.
So what does that mean for? So are other members at the Federal? Are they exposed here?
In theory, yes, but in practice, Justice Department is.
It's the institution.
It's really Jay Powell that the Justice Department and that President Trump want out of there, right? And that's why this is going on.
Interesting. So Stuart, but at the end of the day, whoever we get in there, with oil at $90 and all the economic ramifications of that, there's not a whole lot the Fed can be doing here, right? I mean,
no, the Fed's going to be staying on hold for a while. Right now, global energy shock creates two-way risk, where obviously inflation expectations becoming unanchored is a problem, and you don't want to cut into that. Of course, when you have spending getting crowded out by high energy price, that creates downside growth risk that the Fed would want to at least try to mitigate. So when you have these issues that are created by an energy supply shock, they just don't want to move. They don't want to do anything. Kevin Warsh is a hawk to the bone. He's been saying that he would be open to cuts.
Right?
Exactly. It's curious. He's been open to cuts when the option to ascend to the Board of Governors is waved in front of him. But for the past 20 years, we've known him as a hawk. I can't imagine that he'd be excited about cutting rates at this point.
What happened, by the way, to the Lisa Cook Supreme Court?
I was just about to say, we haven't even talked about the Lisa Cook case.
I mean,
let's go to there.
We're waiting still.
We're still waiting for the Supreme Court to rule on that. That was argued January 21st, I think. It looks, by all indications.
Can you just reset what the story is?
I know, because there's so many different
So,
things.
right, before we had the Powell subpoena, right? And this is all about trying to control the board, right? The president has been able to successfully fire commissioners from all other agencies, but the Supreme Court told us last year that the Fed's a little different. It's more like a quasi-private institution. And so you do need cause to fire a Federal Reserve Board governor. And so the Trump administration accused Lisa Cook of fraud related to mortgage applications and indicating
something about like a second house being a primary
right,
residence.
indicating that vacation homes were primary residences in order to get more favorable mortgage treatment. And she contested. So the president tried to fire her based on those accusations. She sued to contest her removal. She won in the lower courts. It went to the Supreme Court, and the issues are, what constitutes cause? Does there have to be some sort of procedure around it? Who determines what cause is? And it looks like, from the oral argument in January that the Supreme Court would side with Lisa Cook, but it sort of is unclear exactly to what extent that's going to look like. Will they, clear her completely, or will they send it back down to the lower courts to have further proceedings?
And just to be clear, she is still serving as a Fed governor.
Yes.
She is still voting in all the policy meetings. I mean, life goes on right now as we await the Supreme Court decision.
All right. Stuart, Elliot, you guys don't go anywhere. But we want to bring in Jeff Mason, White House correspondent for Bloomberg News. He is actually at the White House as we speak. Jeff, have we heard anything from the White House about this tweet from U.S. Attorney Jeanine Pirro about dropping the investigation into Jay Powell and the FCC?
Well, first to clarify, I'm not at the White House right now, but I am in Washington, and no, they haven't commented yet on this change, but I would offer a little bit of analysis on it, that this is a blow to what the president was hoping to achieve, or at least the point that he was trying to achieve in his attacks on Fed Chair Jay Powell. And it's another example of what many would say was weaponization of the Justice Department, but it got throttled or upset by Senator Tom Tillis, who would not help confirm President Trump's new choice to lead the Fed until this until this case was dropped.
So in terms of this case being dropped, Jeanine Pirro would not have done that without the explicit okay from President Trump, right?
I mean, I don't know that, but I think that's a logical conclusion. You can either make that conclusion, or you can make the conclusion that they didn't find anything in their probe. And the DOJ, pardon me, I believe had said that they would be making a decision on how to move forward shortly based on whatever evidence they found. So, but in general, the president has not backed down on this, and so I those are questions that still need to be asked. But I do think it's a fair question, and perhaps a fair assumption that she would not have made this decision without an okay from the White House. But I don't know.
Jeff, do we expect to hear from the White House, whether from the secretary, the press secretary, or some other means? Because presumably, I can't think this is, with all that's going on for the president in this administration, I can't believe this is really a top of the list issue here. Do we expect to hear from the White House?
Hard to say. The president doesn't have any public events today where he's expected to speak, but that can change pretty quickly. So who knows? There may be an opportunity for reporters to ask him questions, but today, at least on his schedule, there isn't. Same with the press secretary. Nothing on the schedule, but that doesn't normally keep them from weighing in if there's something they want to weigh in about.
Is this something the Federal Reserve, the hearing for confirmation hearing for Kevin Warsh, is this something that the president weighed in on this week at all?
I didn't catch the first part of your question.
Is the Kevin Warsh nomination hearing that we got earlier this week, the hearing that took place without a vote, is that something that the president weighed in on at all? I'm just curious how focused he is right now on the succession at the Federal Reserve compared with the other things he needs to juggle.
Well, President Trump juggles a whole bunch of things, and he's willing to weigh in on virtually everything. He has certainly talked in recent days again, I think just as recently as yesterday when I was in the Oval Office with him, about Jay Powell and considering Chairman Powell to be too late on interest rates.
Gotcha.
But he has also said before that he wasn't worried, as I recall, about delaying the confirmation hearings or process for his choice of Kevin Warsh.
Jeff, what's the feeling within just D.C. in general about this whole thing with the FCC? Is it perceived as a credible issue? Is it perceived as a threat to the independence of the Fed? How much do people pay attention to it? Because here on Global Wall Street, it's kind of a big deal.
Oh, I think it's a big deal here, too. The fact that Senator Tillis, a Republican, was willing to hold up the nomination process for Kevin Warsh because of his concern that President Trump and his Justice Department were going against Jay Powell in a political way is a pretty good sign that that concern has crossed over partisan lines. Certainly Democrats were concerned about it. And I can give some politics 101 here, but it's the last year and a half has largely not been a exhibit A of Republicans standing up to Trump. It's also interesting that Tom Tillis, as I mentioned, who is standing up to Trump, is retiring. So that's given him a little bit more leeway to do what he's doing than some other Republicans who want to stay in President Trump's good graces and perhaps get his endorsement or get his support for their own future political aspirations.
Elliot, you want to jump in?
Yeah, well, I couldn't hear what Jeff said, but I had a thought just in terms of timing and assurances for Powell.
Yep.
The Justice Department has not appealed Judge Boasberg's decision to quash the Justice Department's subpoena of the Fed. The time to appeal expires, I believe, early June, which is 2 months from when the Justice Department's motion to reconsider that ruling was denied. So if they don't appeal it, that decision stands, and that may give Jerome Powell some more assurance that the Justice Department really doesn't have an avenue to pursue the same investigation that it's been pursuing.
Yeah, it's interesting. I mean, Jeff, do you think, one of the questions here has just been simply, is this decision by Attorney General Pirro, is it enough for Senator Tillis? Is it enough for Jay Powell and his attorneys here? Is there any thought on that from the White House's perspective?
Good question, and just a small correction: she's not the Attorney General.
Yes, U.S. Attorney.
She's
yes.
leading this.
Yep.
Right, she's leading the probe here, and her role as U.S. Attorney. And it's hard to say if that's enough. It's certainly a huge step, and it would answer a few questions if we get more details from her office on why the probe was dropped. But you're right to raise the question about how Jay Powell will react to this. He has indicated he's not going to leave the Fed even when his term as chairman is over, and until or unless this investigation is over. And clearly President Trump is ready for him to be out the door entirely. So this could be an avenue for that if Chairman Powell is satisfied that the institution that he believes in and the independence of that institution is not threatened, or is less threatened enough for him to feel like he can go.
All right, let's get a little bit of a reset here. The news this morning, U.S. Attorney Jeanine Pirro says she's dropping her controversial investigation into building renovation cost overruns by the Federal Reserve, presumably freeing up the Fed to move forward on Kevin Warsh as Fed chairman. I'm looking at the markets here, Scarlett. The 2-year Treasury is in about 4 basis points, now 3.78% on the 2-year Treasury. That is the most interest rate sensitive to the Fed out there on the short term. We're joined by Stuart Paul, Bloomberg Economics, and Elliot Stein, a Bloomberg Intelligence financials litigation analyst, as well as Jeff Mason in Washington, D.C.
Yeah, you look at the 2-year intraday chart and it looks pretty dramatic, but then you look at it over the last, say, 3 months, and we're very much stuck in a range here for the 2-year yield, for the 10-year yield. Stuart, how would you explain the market's interpretation of what's happening? I mean, the 2-year yield dropped, but it's not like anyone thinks a rate cut is coming anytime soon.
No, I mean, there are still just about 10 bips of cuts priced for the end of the year. So I think that if anything, there's an expectation that perhaps Chairman Warsh could end up leading additional cuts in 2027 as we get closer into 2028. That's plausible. But again, the operative factor here is not who's in the Fed chairman's seat. It's what it's what happens in the Middle East. It's really what ends up happening with energy prices. That's the thing that's going to end up deciding Fed policy more than the personalities and more than political pressure, frankly, at this point.
Elliot, does this experience with Fed Chairman Jerome Powell and the White House, does that suggest that maybe, I don't know, appointed officials, maybe Fed officials in particular, might need some more legal protections going forward? Is that something that
That's a good question.
people think about at all?
I haven't really heard any discussion of that.
But I'm not. You don't want them to be immune from oversight, or
right?
anything
Yeah,
like that,
I'm not sure what that would look like in any event, right?
I mean, the Supreme Court is looking at some of these other firings of other positions,
right?
And the courts have looked at it.
And exactly, exactly. Everything eventually will go to the courts if it gets challenged. If any of these terminations get challenged. So, the way I see it is most public officials rely on the courts, still trust the courts, and that's sort of the backstop.
And a legal precedent for what constitutes cause for removal from office will be helpful. And relative to where we are today, I imagine it'll offer some protection so that folks aren't facing what Lisa Cook is currently facing.
Right. Though I could imagine down the road another legal fight going to be because if and when President Trump does, let's say, have a majority of governors on the board, I could see them being more aggressive in terms of trying to remove regional bank presidents who serve on the FOMC. And the Federal Reserve Act for that says they can be removed for cause stated, which is different than just for cause.
That's interesting.
And so I'm just teeing up a legal fight that we may see in about 2 years. And the other thing I would flag is the role of the midterm elections, right? Because if Powell stays on the board, maybe he wants to see what happens in the midterms, and if Democrats win the Senate, let's say, you know, maybe he might be more comfortable in giving up his position as governor, knowing that you know, that his successor would have to go through Senate confirmation with the Democratic-led Senate.
Hey, Jeff, from the White House's perspective, are they comfortable with Kevin Warsh as the candidate in waiting to lead the Fed?
Oh yeah, definitely. I mean, Kevin Warsh was President Trump's pick,
Central
so
casting.
they vetted a bunch. They vetted a bunch of people, and they, you know, the president considered his top economic advisor, Kevin Hassett. He also seemed to really be interested in having Treasury Secretary Scott Bessent take the job, but Bessent didn't want it. So he settled on Warsh, and he wants him in there. Although it's, you know, you could argue that there's a poison pill aspect of it for Warsh too, because if he doesn't get in there and start lowering interest rates right away, as President Trump wants, the president has indicated already that he'll be disappointed in him. And we have seen both during the first term and during the second term that the president will turn on people that he's appointed. I mean, I think it's worth pointing out that Jay Powell was his pick during the first term, who President Biden, in fact, reappointed during his administration. So there's no certainty for a potential Chairman Warsh that he's not going to face the same kind of political pressure that Jay Powell has faced from this president.
In terms of Warsh's relationship with the administration, one thing that's going to be interesting is his relationship to Scott Bessent, the Secretary of the Treasury. Both have worked with Stan Druckenmiller. Both have worked, you know, in sort of Soros-adjacent investment circles. So both will have similar understandings of how manipulating the front end of the curve affects long-term interest rates and financing costs for the government. Bessent is going to understand that a swift and inappropriate reduction in policy rates will lead to a selling off of the back end of the curve and higher long-term financing costs for Treasury. And so we know that Warsh is going to be as attuned to those risks as Bessent. They're going to be on the same page. If we don't see Warsh deliver the sort of interest rate cuts that the president wants, I at least expect that somebody like Scott Bessent will understand that is for the point of maintaining stable inflation expectations and for maintaining relatively low long-term rates.
So does that mean that Bessent is then in the position to have to explain to President Trump why Warsh is making the kinds of decisions he is?
It'll probably fall in his lap. That'll be his responsibility, is explaining to the president that fast interest rate cuts, fast policy rate cuts don't necessarily translate into lower long-term financing costs.
Yes. Very good. That's basic economics.
That's great insight.
It is. So good luck, Mr. Bessent. So Jeff Mason, thank you so much. We appreciate that. Jeff Mason, he is White House and Washington correspondent. Elliot Stein, Bloomberg Intelligence litigation analyst. He covers the financial space. He knows this stuff cold. And Stuart Paul, Bloomberg Economics, giving us some thoughts here and some value add on kind of how these markets are reacting to it. And you know, it just takes the attention away from maybe just the Iran narrative a little bit.
At least for this hour. Right. And if you're just joining us, let me just recap what happened in the past hour. The U.S. Attorney for Washington, D.C., Jeanine Pirro, said she is dropping her investigation, the DOJ investigation, into building renovation cost overruns over at the Federal Reserve. Remember, this investigation targeted Jay Powell, the current chairman of the Federal Reserve, and the central bank as well. And it's all kind of part and parcel with President Trump's effort to see him gone as quickly as possible so he can get his guy, Kevin Warsh, his nominee for the Fed chair, in sooner rather than later. We have a Fed meeting coming up next week, Tuesday to Wednesday. The decision comes out on Wednesday. Jay Powell makes the announcement. Well, the Fed makes the announcement at 2 p.m. and then Jay Powell comes out to the lectern and speaks to the press at 2:30 p.m. And I bet you can guarantee that this will be on reporters' list of questions.
Right, and we'll have that all on Bloomberg Radio and Television starting at 1:30 p.m. with Tom Keene and the surveillance team. Watching the Fed here, so that'll be a must-watch next week. Michael Regan joins us here. He's a managing editor for U.S. Equities. We just want to get Mike's thoughts on how you think the markets are digesting this. I mean, it's probably, at the very least, it's, I guess, removing a little bit of uncertainty as it relates to maybe Fed transition, Fed policy. That would probably be a good thing.
Yeah, I think that's right, Paul. I mean, you know, from a theoretical basis, this
investigation had really alarmed investors. You know, the notion that the president could, you know, sort of mess with the independence of the Federal Reserve because their policy is not to his liking. And, you know, that was the assumption, that this was a politically sort of motivated investigation into Powell. That said, you know, I'm not sure it creates any instant market reactions. I mean, it's more of sort of a big picture theoretical thing that you want that central bank to be independent. I think in the months since the investigation was announced, investors have sort of grown comfortable with the checks and balances in the judicial system, that this was unlikely to really go anywhere. So, you know, I think it's a win for sort of that checks and balances system that investors, you know, can sort of breathe a sigh of relief on, even though it's not something we'll see a huge market reaction to today.
What will you be watching for? We've quoted the 2-year yield moving down today, at least in this past hour, as a big market mover. But, you know, over the past 3 months, it's really just within the range that it's been stuck in.
Right. Yeah, I think 2 years is probably the best thing to look at. You could look at Fed funds futures too as well. You know, what happens next, obviously, with Iran could sort of reverse that move in the 2 year pretty quickly. So I do think, you know, people see Kevin Warsh as you know, getting seated a lot quicker than would have been the case if this investigation had continued, and his influence will be you know, as he's made very clear, to lower rates more aggressively than the current Fed wants to. But still, you know, there's the other members of the Fed who get the vote. And it's, I think, going to be sort of, you know, a feeling out period for the market when they see how much influence Warsh will be able to have on the rest of the voters.
So, Michael, I guess stepping back here, do you think the Fed's independence has, in fact, been tarnished here? If you're just kind of at the global Wall Street looking at the U.S. Treasury, how do you think, has that changed at all, do you think?
I think, you know, you sort of opened a Pandora's box where a president, you know, has really broached the subject of, you know, removing a Fed chairman because of policy he doesn't like, you know, you know, when you think of Jerome Powell's job, you know, tracking the costs of renovations of an office building, you know, I'm guessing was not very high on his priority list. You know, obviously President Trump comes from a real estate background. He's much more in tune to that sort of thing. So, you know, whether or not it was just an excuse to sort of put some pressure on Powell, which is pretty much how it's universally been interpreted, or whether Trump really was alarmed at these cost overruns. You know, put it this way, if everyone in the government who's overseen a project that's seen a cost overrun was to get criminally charged, I think we'd have to build some new jails, you know, that would cost more than this Fed building. So I think, you know, long term, there is a question of, you know, how independent really is the Fed. But I think today, sort of the checks and balances of the system and I think realization probably from the government, from Jeanine Pirro, that this case wasn't going anywhere, kind of allows people to exhale a little bit.
Who would have thought at the start of this week that when they announced this confirmation hearing that we'd get movement on this? I mean, maybe that was the plan all along, to have the confirmation hearing, which would kind of push someone in some direction, right?
Yeah, and again, it's just at the full discretion of the president whether he wants to green light this thing or not, and apparently we're making that move here. So, Mike, are you just stepping back from this news of the day here? What's your take on these equity markets that have seen a sell-off when the war started, but boy, the rebound and the snapback for equity indices has been substantial, led by the SOX and all what's happening in this chip space?
Yeah, it's been pretty wild. And if you look at it globally, I mean, we're seeing the reemergence of the U.S. equity market leadership, which was really been trailing the rest of the world, you know, even before the war started, and for all of last year, basically. I think, you know, a lot of it has to do with how people are thinking on any given day about the AI trade. You know, is all this CapEx, all this spending on these data centers going to be worth it? For a while there was obviously a lot of doubt and a lot of concern that maybe they were overspending and that the return on investment would eventually not be worth all this spending. But I think, the Iran war, the oil price shock has sort of reset all expectations. And on balance, when you look at it, everyone's back to sort of square one, where really AI is the future in a lot of people's minds. And these huge, super strong balance sheet, mega cap tech companies, are almost a haven in that Iran uncertainty, because at the end of the day, however long this war lasts, that AI spending is going to keep going, and the efficiency that it's going to bring about, and the sort of revolution in the entire economy that it's going to bring about, will be coming regardless.
All right.
Yeah, we see that in markets reflected this week, right? The Nasdaq is up for the week, up 0.9%. The Dow is down, and the S&P is kind of little change right now, up only 0.2%. Mike Regan, thank you so much. Managing editor for U.S. Stocks, giving us the market perspective here on this news that we just got, which is, of course, that the Department of Justice's investigation into Jay Powell and the Federal Reserve has been dropped by U.S. Attorney Jeanine Pirro for Washington, D.C., and that presumably clears the path for Kevin Warsh to eventually lead the Federal Reserve. Let's get a reset of the markets right now with our own Charlie Pellet.
Charlie. Thank you very much. And here's what's going on. Bond yields falling as that probe of Fed Chair Jay Powell is being dropped. Got to begin with the 2-year, 3.78% right now. The 10-year, 4.30%. The Dow does remain lower, down 173 now, a decline of 0.3%. Stocks, for the most part, though, higher, with the S&P up 30 right now, 71.38, up 0.4%. All of this on optimism that the U.S. and Iran are moving toward talks a day after, after several days of deadlock, and that is fueling hopes for a diplomatic way out of the war. The S&P up 0.4, Nasdaq up 1% right now, Nasdaq 100 index up 1.4%, and the VIX now below 19. Again, the 10-year 4.30% with the 2-year. Everybody's focused on what's happening with energy. We're looking at WTI 95.36 a barrel, down 0.5%. Barrel of Brent 105.59, up by just about 0.5%. So again, recapping here, the 10-year 4.30% with the 2-year 3.78%. I'm Charlie Pellet. That is your Bloomberg Business Flash.
All right, good stuff. Thank you so much, Charlie Pellet. Let's get a reset on the movers in the market as well. We have Avalon Purnell here with us to talk us through some of the big movers she sees. Avalon, what do you have for us?
Yeah, we can go ahead and start off with probably the biggest one of today, Intel, that's ticker INTC, jumping now about 24% for it is to hit a record high, actually. That's after Intel reported a really big beat last night and also a stronger than expected second quarter forecast. Evercore is actually writing that the company's new CEO really seems to be executing on a strategy that seems to be making Intel back onto the competitive track. And also worth mentioning that this is all basically based on AI. So,
yep. It's been an amazing move here. How about cable and broadband company Charter Communications? We had good numbers out of Comcast yesterday. That stock was up. Not so much for Charter today.
Exactly. Charter, that's ticker CHTR, struggling today to say the least. Down already about 23% for its biggest intraday drop on record. Wow. That's after the cable company, as you mentioned, behind Spectrum, reported weaker than expected first quarter results. Citi writing that Charter's results were mixed as strategic volumes and also that broadband revenue underwhelmed. And also thought it was really interesting because, as you said, Comcast was a basically completely different story.
Yep. And so that set up expectations, I think.
Yeah, let's take a look at Big Pharma.
Yes, Eli Lilly, that's ticker LLY. Also sliding about 4.2% today to hit its lowest intraday level since March. And that's after early prescription scripts data for its long-awaited weight loss pill. Very much disappointed Wall Street. Lilly's fat loss pill, Foundayo, generated just under 4,000 prescriptions in its second week since launching. By comparison, Novo's Wegovy pill got more than 18,000 prescriptions. Wow. Okay. So while it's still way too early to say that this is a good or bad situation, RBC is actually writing that while the comparisons this early into a launch are very much immaterial, Foundayo's uptake this week is likely to be received very negatively by investors, and we're already seeing that in the stock move.
All right, Avalon, thank you so much. We appreciate it. Avalon Purnell giving us that update there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It's time to get an update from Washington, D.C. on the war in Iran. What are next steps here? Michelle Jamrisko, Bloomberg News, White House and National Security Editor. What did you make of the press conference from the Pentagon here this morning? Does that change kind of the view as maybe what the next few days may bring?
Well, it doesn't change too much. I mean, we heard a lot of the usual from the defense secretary there, talking about how successful the administration believes the war has been for the U.S. They will keep up the blockade until they see Iran sort of giving in some respect, or coming to the table for talks to end the war. And they talked a little bit more, Hegseth did, about how they think other allies and partners should be stepping up to get involved. Again, Hegseth claiming, as the president has before, that the U.S. doesn't need the Strait traffic to return to normal as much as perhaps European and Asian allies that should be getting in the game. So a little bit more of the talk that we've heard around trying to bully some other folks to get involved here and trying to reopen the Strait. But also, I think the prevailing theme here is one that we saw yesterday from the president in terms of not wanting to be rushed into ending the war. I mean, this is something where we see the sort of jawboning turning in another direction, whereas we were all expecting that the first round of peace talks might herald some sort of breakthrough or some sort of thought that the U.S. at least would leave this conflict. Now Trump is trying to talk things into the other direction and saying we're not in any rush and you can't rush us to finish the job here. We want to do it right. So we're hearing a lot of mixed messaging on timeline from both sides, but so far no real prospects to see the two sides come to the table again soon.
Okay, so how do we interpret the headlines that Iran's top diplomat is heading to Pakistan, to Islamabad this weekend?
Well, I'm glad you mentioned that, because just before I sat down here, the foreign minister in question, the top diplomat Abbas Araghchi, who was a part of the first round of talks, and who we've heard a little bit of a different tone from more recently, he just posted on social media that this tour that he's taking, which also includes visits to Oman and Russia, is mainly meant for bilateral matters and regional cooperation. So kind of not directly, but at least pouring some cold water on the speculation that his visit could include meetings with U.S. officials. And for the U.S. side, we have asked the White House. We have not heard back, but there are no signs as yet today that, J.D. Vance or anybody else might be headed out that way anytime soon.
Never-ending, fluid situation, to say the least.
That's the best way to say it.
Yeah, fluid situation. So we appreciate getting some of your time. Michelle Jamrisko, Bloomberg News, White House and National Security Editor. Again, just kind of getting the latest on what is happening in Iran and kind of what we may hear from the White House over the weekend. Let's get back to technology. The NASDAQ is up 255 points today, a little bit more than 1%. So it's really been performing well. We want to talk tech. We talked to Dan Ives, Global Head of Technology Research at Wedbush Securities. Dan, I'm guessing the conversations you're having with your clients over the last several weeks are a lot different than what they were kind of late last year as it relates to tech. How do you frame it out for us?
Look, Paul, I think right now it's really about, okay, CapEx, but where's the monetization? Are you starting to see it? Is it starting to actually spread out beyond just big tech? And I think you're starting to see that obviously with Intel, Cisco, and others. Look, and obviously it's been a huge debate, right? Relative to the Anthropic software Ghost trade. We saw what happened this week in terms of ServiceNow and others. So I think I would call it a huge debate. And that's why it all leads to next week really being like huge pieces to the puzzle of the tech trade.
And speaking of next week, a ton of earnings coming out. Wednesday is going to be the high water mark. You've got Microsoft, Meta, Alphabet, Qualcomm, Amazon, all reporting after the close. In total, 13 companies within the NASDAQ 100 reporting on Wednesday. So Dan is going to be very busy on that day. But Dan, what is the market sentiment like right now when it comes to CapEx? Because for a while, if companies reported ended up saying that CapEx would be more than they had forecast, it was seen as okay, and then it was seen as negative. How are investors feeling right now?
Yeah, it's sort of, that's been a hot and cold situation, right, relative to the CapEx. I think now there's almost a consensus view where it's like, okay, CapEx is going to be reiterated by big tech. No big tech company is going to slow down CapEx going into next week. If they did, stock would be down because that would ultimately be a negative in this arms race. I think the big question is going to be with the hyperscalers, specifically Microsoft, Google, Amazon. Do you see accelerations beats when it comes to cloud growth? That's important in terms of capacity. But look, what it really means is the capex is now starting to bear fruit. The monetization's happening. You're seeing it on the software and the hyperscaler side. And look, that's the big piece. That's really the debate. Do you start seeing monetization? I think we start to see it next week. And I think Meta is another one we'll see on the advertising side.
Dan, I know you initiated coverage of Oracle. Talk to us about that company, how you see it participating in this tech stack here going forward.
Yeah, and Paul, I covered it for many years, and the reason I like reinitiate on it here is just because I believe the street is way miscalculating this name. I mean, look, I get the worries about the debt and what they're taking on given OpenAI and what they're going for in terms of the 700 billion that they're going after and the 50 billion of debt. I think Oracle is going to be a tremendously bigger company the next 2, 3, 4 years than it is today. I think investors are way discounting their ability to monetize what's going to be this backlog and really, as more and more companies move to the AI revolution with Oracle. And that's our whole call. I mean, 225 is price target, but this stock ultimately that could double as they monetize AI over the coming years, I think way, way oversold.
I mean, the thing with Oracle is that it needs to borrow so much money that it's got to tap the public markets and the private markets kind of everywhere in order to be able to fund this build out. And we've heard from Moody's warning that private credit funds with a lot of exposure to software and tech face a lot of refinancing risks because there's a bunch of debt that matures starting in 2028. How do you think about that in terms of what that means for these big tech companies' needs to borrow?
Yeah, I think, and look, it's a great point. Obviously, huge debate. Like when you look at things like Thoma Bravo, Medallion, some other things, you can paint them all with the same brush, right? When you look at Oracle, you're talking about a company that the amount of debt that they'll take on is still pretty small relative to their cash flow generation and the overall, what I believe, structure of the business. I think they'll be able to raise, and they've already sort of laid out the 45 to 50 billion, how they're going to do that. Now, look, is it ideal? Because companies obviously free cash flow, you don't want to see software companies take on debt. But Scott, my view is to take on 50 billion of debt to go after 800 billion, that to me is a bet that I want to see them take.
Hey, Dan, let's just switch gears to Tesla. They made some news just yesterday kind of talking about CapEx, and they're boosting their CapEx to $25 billion for AI and for their robot business. Put that in context for us. How do you think is that a good move for this company?
I think it's exactly what they need to do. I mean, Paul, we've always talked about it a lot. It's like the future is about autonomous robotics. I mean, this is a company that, from a physical AI perspective, I view NVIDIA and Tesla, the two best physical AI plays in the market. I want to see them do this step by step, build it, because that's really the next 5-10 years. That's what Tesla's an AI company going forward. This is not an auto company.
Yeah, that's been made very clear. I mean, certainly Elon Musk has been pushing that narrative for a long time now. I'm curious, and this is might be a really basic question, but how does the war in Iran and the uncertainty there affect these big tech companies as they report? I mean, do we expect any kind of mention of the uncertainty, the fog of war, affecting their decision making, their planning in any way?
I mean, like ServiceNow hit it a bit, right, in terms of some of the Middle East deals. Look, I think when you think in terms of a lot of the build outs outside the US, some of the bigger data center, big AI build outs are in UAE, Saudi. But I don't really think that that's something that's going to be a huge thing on the conference call. I think that's much more year and a half from now, 2 years from now. Now, I think the big question is supply, helium, especially through the Strait. We were just in Asia for 2 weeks. I continue to think unless this stalemate lasts past Memorial Day into June, July, like for now, I think it's pretty contained. But look, I think investors want to understand what the demand environment looks like. And these companies, they're not slowing things down in any way,
right,
because of the geopolitical.
Dan, thanks so much. We appreciate it. Dan Ives, Global Head of Technology Research over there at Wedbush Securities, giving us, as only he can do, just kind of a broad overview of what's happening in the broader tech space and nailing down on individual names. Again, he reinitiated coverage of Oracle with an outperform rating and a $225 price target. That's the latest move out of the Wedbush complex. S&P up 32 points. The Dow's down 180 points. The NASDAQ is up 265 points. That's 1%. WTI crude oil a little bit lower here today, sitting right around $95.50. This is Bloomberg Morning.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks higher on optimism that the U.S. and Iran are moving toward talks after days of deadlock. Also, investors keeping an eye on fast-moving developments out of Washington. As we have been reporting, U.S. Attorney Jeanine Pirro says she is dropping her controversial investigation into building renovation costs overruns by the Federal Reserve. Pirro says in a social media post that the Fed Inspector General has been asked to scrutinize the cost overruns. Bond yields fell as that probe is being dropped. The 2-year, 3.79%, with the 10-year, 4.31%. S&P up 35 right now to 71.43, up by 0.5%. Could see a record close today. We've got the Dow down 163, down 0.3%. Nasdaq is advancing 1.1%. Again, the 10-year, 4.31%, with that 2-year, 3.79%. Gold up $31 the ounce to 47.26, up 0.6%. And a retreat for crude, WTI down now by 0.5%, 95.35 a barrel. Earnings news. Procter & Gamble reported stronger than expected results for its latest quarter, driven by growth in the beauty category. By the way, P&G's brands include widely recognized consumer products like Bounty, Charmin, Gillette, Pampers, Tide, and Gillette. P&G shares Procter & Gamble up now by 3.5%. Intel after earnings is surging 24%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's talk municipal bonds, because why not? It is Friday, and that's what we do around here. We can do that with Margot Kleinman. She is head of municipal research at Nuveen. Margot, how's the municipal bond market been performing this year?
Yeah, well, thanks for having me today. It's really great to be here for Munis in Focus this morning. Munis last year, if we're taking a step back, really underperformed the broader fixed income market by more than 400 basis points. And as we started this year, Munis were off to a really good start. We had positive returns in January and February. And of course, along with the geopolitical situation, the war in Iran, higher oil prices, performance suffered in March. But so far, looking in April here, we're off again to some positive returns. April performance has been better, with Munis returning about 1%, up a little more than 1% for the year. And the remarkable thing that we are looking at is how resilient the Muni market has been. When we're looking at inflows into our market this year, we've had money coming into this market, inflows of over $20 billion just for the year to date this year, versus only $5 billion for the same time period last year. And we know that inflows are highly correlated with positive performance in the muni market. So I think investors are really just looking at the high starting yields, attractive spreads, stable credit quality, and really seeing munis as this very stable and resilient place to invest right now.
There was a story published by Bloomberg earlier this week, which was really interesting, about how all these states that are proposing new taxes on the wealthy, Minnesota considering this 1% annual levy on all wealth above 10 million, Maine also imposing a surcharge, the referendum in California, New York proposing a tax on second homes worth more than 5 million. That is going to be a positive for the muni market because it offers a tax shelter for residents in those states. Can you just walk us through and explain why that is? Does that mean that people who are wealthy will just buy more munis?
Yeah, I know it's a great question. And, you're right. Bloomberg has covered this story, and there have been headlines about various different income taxes, surcharges on millionaires, the wealth tax that is being considered for the ballot in California in November. So there are all these proposals out there. And in terms of muni demand, higher taxes are good for muni demand because the asset class offers tax-exempt income. And so to the extent that your taxes are higher, munis are going to be more beneficial for you as that investor. So for investors in the highest tax bracket right now, munis are yielding more than 6% on a tax equivalent basis, just for a broad-based muni portfolio. And when we look at high yield bonds, the taxable equivalent yield is over 9%. And so you're getting those types of tax equivalent yields for stable essential service monopolies with credit quality that is very, very strong. So to the extent that, we continue to see taxes go higher, of course, that is positive for inflows into the muni market. From a credit perspective, we really sit back and say, well, what do these higher taxes, what does that mean for credit quality? What will that mean for demographics in these states? We get a lot of questions about the proposed tax in California. Will that mean that there'll be an influx of people leaving California? And so as credit analysts, we really step back and we're looking at the tax base and behavior of people moving across the country. And there was a really good example. Massachusetts a couple of years ago levied a income tax surcharge on people with incomes over $1 million. And what we saw is that tax actually raised more than was expected, and there wasn't a broad outflow of people from the state. So we tend to believe that credit quality will remain stable even in the face of some of these higher taxes. And you're right, it could be a good positive technical for the market.
Thank you so much for explaining that. I really appreciate it.
I get it.
Yeah, of course.
But you could have bought that general obligation New York City bond a few weeks ago. There's like a $1.9 billion issue. If you lived in Manhattan and you bought that bond, 10.1% tax equivalent yield.
Yeah,
unbelievable.
But you live in New Jersey, so you can't do that, right?
Well, I choose not to. I choose to buy the New Jersey, so I get triple tax-free, federal, state, and local.
Okay, got it.
Beautiful. Yeah, exactly.
All right, thank you so much. Margot Kleiman joining us from Nuveen. She is the head of municipal research and a portfolio manager there, and that was for our Muni Moment. All right, we want to revisit the top story over the past 2 hours, and that is once again that the Department of Justice has dropped its investigation into Jay Powell and the Federal Reserve regarding its building cost overrun. Let's bring in Michael McKee, our Chief International Economics and Policy Correspondent. Mike, this is something that should smooth the path for Kevin Warsh, President Trump's nominee for the Federal Reserve Chair, to become Fed Chair, doesn't it?
It smooths the path, but whether the path gets taken or not, we don't know yet, because we don't know whether the agreement to have the Inspector General continue a probe into the buildings, and we don't know whether that includes Powell, which Pirro had included, but we don't know whether that's enough for Tom Tillis to say, okay, let's have a vote. He has not commented, and everybody's madly watching his Twitter feed and et cetera to see what he thinks. That would be step one. And then step two is getting the nomination to a vote in committee and getting it out to the floor. There isn't a lot of legislative days left, but they can make things happen if they want to. So it is, odds are a little better now, shall we say.
We're talking in the studio to Elliot Stein. He's a litigation analyst for Bloomberg Intelligence. He's a lawyer. He said if he were advising Chairman Jay Powell, he would say, you need to get an immunity agreement.
Yeah.
I mean, that's a big move. I mean,
that's been my thought all along, because Inspector General's reports, and they were talking about also the Banking Committee maybe doing an investigation. Well, congressional investigations, both of those can lead to criminal referrals to the Justice Department. So the question is, obviously they could find that Jay Powell had his hand in the cookie jar, which I very, very much doubt. But there could be just some pretext in the IG's report that Jeanine Pirro would seize on again once Kevin Warsh is in as chair, and then go after Powell because Trump wants revenge. So I think that it's not going to satisfy the Fed chair unless he has some kind of immunity agreement.
Mike, dumb question. How does this change the FOMC meeting, the deliberations next week? They begin on Tuesday, and they come out with their decision Wednesday at 2 p.m. You will be, of course, announcing it for us here on Bloomberg Television and Bloomberg Radio. And then Jay Powell takes the lectern at 2:30 p.m. to hold his news conference.
I don't think it changes much at all. It's not going to be a factor in the decision